a statement that would obviously have to be refuted by Iran, that is currently discussing that mechanism with Oman to reopen the Strait of Hormuz. The latest we know from Al Jazeera, citing a Qatari foreign ministry spokesperson, is that negotiation is in advanced stages. We still don't have a lot of clarity about just how exactly that mechanism would work, and if it were to open the Strait of Hormuz immediately and fully. We understand that it might reopen the Strait of Hormuz for a temporary basis and not at a full capacity. Ships and vessels will still have to seek Iranian permission. But the reason I note that distinction is because the reality on the ground is that ships are still stuck in the Strait of Hormuz, either deciding to go with their lights switched off or deciding to hold and wait and see and seek permission from either side. And then the latest we know is that ships are not just prone to Iranian attacks, they're also now prone to American attacks. The latest, again, from overnight, a U.S. Navy helicopter hit a Panama-flagged ship overnight for going through the U.S. naval blockade or trying to go through to Iranian ports. And so you're still seeing those hostilities in the waterway pretty much existing. And that is the situation as of now, the physical situation. When it comes to the back and forth, again, we've been hearing it over the past 6 months, Francine, so it's important to just note what actually will be that formal document that will come out between Iran and Oman, and then we can make a better determination on what exactly we will see in the crucial waterway and the impact of that on energy flows and wider crude products, of course.
Abir, thank you so much. Abir Abu Ammar there with the very latest, of course, on Iran. Now, let's dig into these broader markets with Matteo Stibo, Global Head of Tactical Asset Allocation at Goldman Sachs Private Wealth. Thank you so much for joining us. Look, there's just a lot going on. I mean, it's still the two, pillars of like inflation and tech, and then inflation brings us into Iran and the Middle East and all of that. What do you think is a key driver for the markets right now?
No, absolutely. We do think that the markets will be keenly focused on today's CPI report because it will ultimately help the market gauge what the Fed's next move will ultimately be. Now, clearly the market is still pricing in hikes, but we actually disagree and believe that the Fed will be on hold for the foreseeable future. And the key reason for that is because we think that sequentially inflation should moderate in the second half relative to the strong pace that we saw in the first half. And there are really 5 key reasons for that. So first, you are seeing the temporary impact of oil prices, as we just discussed, but also the World Cup and tariffs pushing inflation higher, but they should moderate in coming months. Second, you're seeing very limited signs that inflation is broadening out. Third, methodological changes that will be introduced in September will actually lower measured inflation. Fourth, shelter inflation should continue to moderate given the trends that we have been seeing in the housing market. And then finally, we don't think the wages will be a key source of inflationary pressure because the U.S. labor market is far from booming. In fact, if you look at the last 3 months, the U.S. economy generated only 20,000 jobs on average per month, and wages grew at an annualized pace of only 2.3%. So when we put all of that together, again, we think the Fed can afford to wait and watch the data before acting, but we fully acknowledge that the risks are tilted towards hikes, especially if the next few inflation prints surprise on the upside.
So, Mateus, maybe let's unpack a little bit of what we saw in the labor markets, because for me it's surprising that you see that that amount of people just dropping out of labor force, so stopping to look for work, and no one can really get to the bottom of it.
Yes. No, absolutely. We have seen the unemployment rate has come down, but it has been due to the wrong reasons, to your point, because the labor force participation rate has declined. So there has been some contribution from the foreign-born population, so immigrants in the U.S., because they have been leaving the country or fewer immigrants have been coming in, so there has been an impact of that. But even if you look at the native-born population, the labor force participation rate has also declined. So to your point, people are still trying to figure out exactly what is going on there, but I think it just reinforces the point that the U.S. labor market seems to be in an equilibrium where you're seeing there's no hire, no fire labor market.
Mateus, overall, when you look at inflation, I mean, you're expecting it to, for all the 5 reasons that you laid out, to slowly come down or certainly not get accelerate. Is that on the basis that we have a deal between the U.S. and Iran? Because we're unclear about, what happens next, what happens to jet fuel. Also, it's quite difficult to replenish some of the stockpiles that had to be used.
No, absolutely. I think no one really knows how the situation in the Middle East will play out. So our base case is that oil prices will ultimately come down, but even if you look at year-over-year inflation, just because of base effects, the contribution of oil to headline inflation should start to moderate in coming months. So that's what we are focusing on, but absolutely, to your point, there's still a lot of uncertainty there.
Where do you go with tech? Because again, I mean, I feel like our live is now combing through some of these tech, stocks, maybe companies that we haven't heard about that much before, just to try and understand whether revenue will match all this capex.
Absolutely. And to your point on the capex, the market is very focused on that because if you look at consensus estimates for hyperscaler capex this year, it's expected to amount to about $800 billion, which is basically double of what we saw last year. And next year, it's expected to rise to above $1 trillion, right? And importantly, the capex will exceed the cash flow from operations for these companies both this year and next. So you can sort of understand why market participants are worried, especially because they're looking for signs that all of this capex can actually be monetized. And there are still some question marks there, but if you look at the backlogs or if you look at the close to 50% growth in cloud revenues by the hyperscalers, there seem to be some signs that they are able to monetize on this. But I think this will be a question mark that will be with us for quite a while longer.
And what does that mean for the broader equity market and the rally that we've seen that's been quite strong?
Absolutely. So while there's been a lot of focus on the tech sector because it has been such an important driver of earnings growth for the S&P, we actually think that if you look at the Q2 earnings season, the story is very broad-based. It's not just a tech story. So if you look at Q2 earnings for the S&P, they're tracking at about 50% growth, which is really extraordinary. Now, it is true that that growth rate is being boosted by one-off gains related to some of the big tech companies' equity investments. But even if you take that out, earnings still grew by 31% in Q2. And importantly, it's been broad-based because 85% of companies beat EPS estimates. 8 of the 11 sectors delivered double-digit earnings growth, and the median company grew earnings by 12%, which is well above the 6.5% earnings growth rate that we have seen in the post-war period. So for those reasons, we actually believe that the U.S. equity market is just a very broad-based story, not just tech.
Yeah, I mean, overall, I know you have quite a lot of analysis on IPO activity as well. Yes. How does that match with these rallies?
Absolutely. So if you look at all forms of equity issuance this year, including not only IPOs, but also follow-ons, the post-IPO lockups are due to expire, all of that should amount to total equity supply of about $1.1 trillion in 2026, which is a record
massive.
high. It's massive.
Which changes everything.
Absolutely. And that number has raised some alarm bells. But we do think it's important to also remember that U.S. equity market cap has risen tremendously over time. So when you look at that issuance as a share of market cap, it should represent about 1.7% this year, which is basically in line with the median over the past 30 years, which has been 1.8%. So in our view, this is more a reflection of the market going back to normal after a few years of subdued activity than necessarily a sign of froth in the markets. But to your point, the last thing I would say is that we have looked at whether IPO activity correlates with the forward returns of the U.S. equity market historically, and we found no statistically significant evidence of that. So that on its own should not be a reason for clients not to be invested.
But Matthias, I mean, overall, how do you look at risk? Because you're navigating these record highs, all-time highs, with actually some really real concerns that you're watching out for that for the moment are not materializing.
Absolutely. And that's a question that we have been getting a lot from our clients, especially those who are still underweight equities, because we continue to recommend that clients average into the markets, but they're asking us, really, at this point in time, with the S&P at a record high and valuations being so expensive, right? But we would say that neither of those facts historically has prevented the U.S. equity market from delivering attractive returns for investors. Because if you look at the S&P and equity valuations, they reached the top decile of their historical distribution back in December 2016. So it's been almost a decade. And over this period, the S&P 500 has made more than 340 new all-time highs and delivered a total return of more than 300% for investors. So if that has stopped you from entering the market, you would have missed out on that incredible return. Now, with that said, expensive valuations do increase the frequency of pullbacks in the market. So we fully expect a decline of 5 to 10% at some point in coming months. But that, in our view, just reflects normal equity market volatility and should, again, not be a reason for clients not to be invested.
Matthias, when you look at earnings, are you surprised at how strong the season has been so far, especially that it's not really about buybacks or even cost-cutting?
Absolutely. If you look at sales growth, it came in at 15%. So it's not just an earnings or margin story. Sales growth has also been remarkably strong. And if you think that there is historically a relationship between sales growth and nominal GDP growth, what we saw last quarter far exceeded that, right? So absolutely. But what we always tell our clients is that investors consistently underestimate the resilience of the U.S. economy and U.S. markets. And we are seeing that resilience play out again this year. So that just reinforces our view that clients should have the bulk of their equity allocation really in the U.S.
Mateus, thank you so much for joining us today. Mateus Debo, the Global Head of Tactical Asset Allocation at Goldman Sachs Private Wealth. Now, coming up, we discuss the implications of the latest U.S. executive order on childhood vaccines. That's coming up next, and this is Bloomberg.
Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
For next year, while exact details are difficult to specify, we estimate the investment amount could range from roughly 600 billion South Korean won on the lower end to over 1 trillion South Korean won on the higher end.
Korea operates multiple state investments when it comes to these innovation technology sectors. So how do you make sure that this new account doesn't overlap with other projects?
Yes, you have raised a very important question. It is true that various funds led by government agencies are currently operating, and we are actively seeking ways to differentiate from those. For example, the National Growth Fund, which has been operating and investing since last year, aims to invest around 150 trillion South Korean won. Its main focus is centered on loans or indirect investments through funds. In contrast, when we speak of this sovereign wealth fund, we plan to invest primarily with long-term patient capital and directly make equity investments rather than simple indirect investments, which differentiates it. Rather than solely focusing on differentiation, we are also actively considering co-investing together. If necessary, we use the term relay investment, where we actively consider taking over positions when major public funds seek to exit.
Does that mean that it would actually include the possibility that, given the funding is going to flow into stocks initially for this entity, that you could see actually buying, say, chip makers like Samsung, SK Hynix, or contributing to projects that some of these companies are involved in?
Rather than investing in large enterprises like Samsung or SK, our interest lies in companies beyond the very early startup stage, what is typically referred to as Series B. Series B refers to companies whose business models have been somewhat validated and are at a stage ready to scale up. Among such companies, we are considering relay investments to support them when early-stage funds linked to public institutions exit. As for companies like Samsung and SK, rather than government investment, we understand that many international firms are already interested in them, and the government currently has no plans to directly invest in large conglomerates like Samsung or SK through the Sovereign Wealth Fund.
Well, that was the South Korea's Deputy Minister for Innovation and Growth speaking exclusively to Bloomberg's Sherry Ann. Now, turning to health, and President Trump has signed an executive order that would break up and space out the delivery of childhood vaccinations over a longer period of time. Now, this change risks more children missing immunizations at a time when vaccine uptake is already falling. Splitting up routine vaccines, such as the MMR jabs, also poses a challenge for pharmaceutical manufacturers who do not currently make separate versions of the vaccine. Well, joining us now, Sam Fazeli, our senior pharmaceutical analyst at Bloomberg Intelligence. Thank you, Sam, for joining us. So what exactly is this new, executive order aimed at overhauling vaccinations for children in the U.S. really about?
Yeah, I think the undercurrent here, Francine, is that the president and the head of the HHS, Senator Kennedy, Secretary Kennedy, worry about, in their view, what could be the risks of giving all these vaccines to children in terms of creating, autism is one of the things that they keep referring to. And there's some loose data that they refer to in terms of the incidence of autism and when vaccination started, etc., which of course is association, is not causation. It's everything we talk about here. So that's where the basis is, I think. And they have that agenda, and they're driving that agenda forward. Yeah. And as you rightly said, splitting this up is not trivial. You have to remanufacture. And I also wonder whether you have to maybe do some retests. But the whole thing continues to undermine confidence in vaccines, which is not a good thing.
But I mean, is it based on science? Because again, there was also here quite a lot of talk about, vaccines being linked to autism that I thought then was debunked, was considered fake news. So does this just put children at risk, or is there some truth? I mean, it's unclear how to read it, frankly.
The data that suggested that autism is linked to vaccinations or vice versa wasn't fake news. It was awful science. And it was made up. Yeah. That paper was retracted. Andrew Wakefield was the scientist years ago. Okay. But it started the whole process on that conversation. If you want data, you want analysis, go and do the research and the analysis. You can't just pick stuff off the internet or whoever said something and say, here's proof. Go and do the study if that's what you really want to do. Splitting this vaccination at a time where in 2026 already, even with what we have, number of measles cases in the US now have already surpassed what we had at the end of total we had in 2025. And just imagine what's going to happen when this is split up and you make your child, they're trying to reduce the number of vaccinations, but you're just increasing it.
We also have a study on new research on long COVID. Mm-hmm. What does that tell us?
Yeah, it's a very good paper, actually. It was published in probably, if I'm guessing right here, you're referring to this latest Nature paper that was published. Very interesting study. A couple of drawbacks, but I'll tell you what the end result was, is that they're finding that people who get infections with COVID as a result of SARS-CoV-2 have a reactivation of other viruses in their body. Herpes viruses and anelloviridae, which is another group of viruses which you never hear about because they don't do anything. And this is not causation. This is, again, in hospitalized COVID patients, not people who had it.
Sam, thank you so much. Sam Fazeli there from Bloomberg Intelligence.
my old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francie Lacqua here in London, and these are your top stories. Strong earnings from technology companies lure investors back into the artificial intelligence trade. CoreWeave surges as booming AI spending boosts sales growth. Oil is set for its longest winning streak since April as traders remain uncertain on the prospect of a deal on the Strait of Hormuz. Plus, U.S. inflation in focus will preview today's crucial CPI print. So oil prices climbing for a sixth day on continued skepticism about prospects for a deal to restore energy flows through the Strait of Hormuz. For more, we're joined by Will Kennedy, our EMEA news director. Will, thank you for joining us. What exactly are the markets making of the lack of progress towards this U.S.-Iran deal?
Good morning. Yes, we've seen a rally in crude oil this week. I think we're up about 12% from where we were at the end of the week, and I think that reflects a more pessimistic view of how the situation in the Strait of Hormuz is likely to develop. If you think back to the end of last week, there was some optimism about these talks between the Iranians and the Omanis about opening up a route through Hormuz. But since then, we've seen both the US and Iran harden their rhetoric, and we've also seen sporadic action against shipping in the Middle East. And yesterday we saw the US attack an Iranian ship to enforce its embargo on Iranian oil exports. And you put that all together and there isn't a huge amount of optimism that we're going to see a big uptick in flows through Hormuz in the near future.
The IEA has warned also today of this oil supply deficit, and that could be set to double. What are the actual implications of that?
This will be an increasing concern the longer the situation goes on. The global oil market, as we've discussed, has managed remarkably well through a combination of drawing down reserves and workarounds around Hormuz, which are still ongoing. But the longer the situation persists, the more danger is that we'll have to continue to draw down on those inventories, and we will see a tightening across the whole oil complex.
And well, just to make sure I understand, I mean, you know, there's a crude oil, but then there's also the refined products, which is why we're so worried about jet fuel, because, you know, you can replenish the stockpiles when it kind of reopens, but it's very difficult to refine the end product quickly.
Yes, that's exactly right, and perhaps we should focus more on the prices of diesel and jet fuel and gasoline. Diesel especially remains very elevated. That's very good for refiners who are making very strong products, but obviously means that it's still painful for the global economy. Part of that is that we focus very much on crude oil coming out of the Gulf, but there are some very large oil refineries inside the Persian Gulf which are unable to operate and export. We're seeing a real tightness in that refining capacity around the world, and hence not much relief for what people are paying, especially for diesel, which powers so much of the global economy.
Well, thank you so much, Will Kennedy, there, REMEA News Director. Now we'll get on to U.S.-Iran in a second, but these are the results that we've been waiting for all day because they just give us an overview in terms of AI spending from one of the biggest companies in China. So Tencent coming in with net income of 56 billion yuan. That actually fell shy of estimates. So sales were slightly a beat. So overall, look, there's a couple of things we need to watch out for. So first of all, we just need to see whether they say anything on weak consumer sentiment in China. You know, it's very clear from the numbers that China is facing a consumption slump this year. If you look at some of the other things that we're looking out for is, of course, e-commerce. It's been one of Tencent's disadvantages in the AI era as China's chat box apps keep adding agentic functions like shopping to attract users. So they're saying they're stepping up procurement of compute, that they're continuing to enhance existing services. And then overall, look, if you look at revenue, it's a slight beat. If you look at net income, it's just shy of estimates. So if you look at Tencent overall, I think the share price is pretty much unchanged in post-market. Prosus is another way of looking at it. They're slightly higher after the Tencent result headline. So we'll get on to Tencent and we'll get back to AI a little bit later in the program. But Pakistan's defense minister says the U.S. and Iran are close to some sort of arrangement over the Strait of Hormuz. Now, the latest demands from President Trump and the reiteration of Iran's request have dimmed hopes of a quick deal. So let's discuss the latest situation and, of course, geopolitical consequences with Nega Anga, visiting fellow at King's College London. Nega, thank you so much for joining us. There's a lot going on in this. It's unclear if the two sides can even come to an agreement in the short term. Are you optimistic? What are you optimistic about, actually?
Good morning. Thanks for having me. So I'm optimistic when the negotiations are happening, both sides are talking. At least it keeps the conflict to a warm sort of bubble on the stove and not overheating. And I think that's what we're going to see through the next several weeks. I think all sides want to keep the tensions down. The rhetoric is going to be fluctuating. You're going to see intensity from President Trump. You're going to see intensity from the Iranian side, really trying to enforce their demands. But I don't see a grand bargain anytime soon. And we'll have to see what happens over the next couple of weeks in these discussions with Oman about the Strait of Hormuz access points.
Nega, you're also former senior advisor at the U.S. Department of State and National Security Council under the Biden administration. So you know this firsthand. When President Trump, is on a tarmac or is in a plane and says words that are dismissive or hurtful, does that, take us away from trying to find a solution, or can the Iranians look past that?
I think both sides are playing with sort of this rhetoric bargaining style. I think some of it is intended for the Iranian regime. And on the other side, it's, some of the messaging that he's putting out is for the U.S. domestic audience. You have to bear in mind the November midterm elections are around the corner. No U.S. citizen wants to be in another forever war in the Middle East, and this is giving that sense. Even if they're not paying attention to the war, they're paying attention to prices. And so that is essentially the concern, that he's trying to put the messaging out that under President Trump's sort of leadership, there's still a strong American presence. We're not going into a war. And that's kind of the messaging he's trying to relay. For the Iranians, what he's trying to essentially say is that we're not going to roll over. We're going to continue to negotiate. We will negotiate the same way you're negotiating. The unfortunate part is neither side have built the confidence-building measures you need to have a real negotiation, which is why I'm saying I don't feel like we're going to have some grand bargain to resolve 40-plus years of conflict in the next couple of weeks.
Nega, what do we know about the leadership of Iran? Are they on the same page? Are there a lot of factions? Like, who would you look to give us an idea of what they're planning next?
I think, we're continuously reading the tea leaves because of the change of parties and systems. So you obviously have your diplomatic corps, you have your foreign ministry, you have your Pezeshkian who's going to the negotiating table. But the reality is Khamenei Sr. was more risk-averse. Khamenei Jr., who's now the supreme leader, is starting to put people in power that are not risk-averse, that are ready to go into conflict. Right now, the head of the Supreme Supreme Council is a former commander, right? He was a commander during the Iran-Iraq War. That means they're going to weather this storm, whether it's through conflict or any other economic strain. The other reality is that you are seeing sort of, again, a game of chess domestically inside Iran. Who's going to have power? They want to ensure that no single person, even within the inner circle, is going to have that kind of strength and power. So there's a lot of sort of messaging coming out that the new commander is essentially going to sort of be either co-leading this effort with Ghalibaf or is going to have some sway in terms of where Ghalibaf plays. So we're going to keep seeing this play out over the next few weeks, and that's just the reality of the Iranian domestic sort of power play, irrelevant to the United States.
I mean, who's in control of the Strait of Hormuz right now?
Well, the reality is that if you think about it, the negotiations are with the diplomatic front, the foreign ministry, but who calls the shots and who's able to enforce the military conversation is the IRGC, and has been the IRGC from day one, and that hasn't evolved. They are ready to go to war. They may not be able to compete with the United States' military strength, but they are able to play with very cheap and dirty tactics, and they're going to continue to do that. And I think the new Supreme Council's sort of leader is very clearly part of that apparatus.
And again, and they're able to be paid, because this was one of the concerns was actually what's the source of revenue. So is it Chinese money because they're paying as the tankers go through Hormuz, or do they have enough funding? And if the U.S. were to say, well, look, we relieve the sanctions and the Revolutionary Guards get paid more, does that make a difference?
It does make a difference. I mean, look, at the end of the day, Iran knows how to survive. After 40-plus years of sanctions and economic blockades, they know how to survive, and they're going to survive, I think, for the next few months. Economically, they're strayed. The Iranian public cannot buy a bag of chips easily. It's a luxury at this point in time. But they're going to weather the storm for quite some time, whether it's IOUs, whether it's creating some sort of additional set of relationships. They did have, sort of negotiations in place with the Chinese, and they're able to survive. But they're going to go through their reserves to as long as they can, because from the Iranian mentality, they have essentially planned that they're going to play this out until the end of the Trump administration. So they're looking at 2 years. They're not looking at this in weeks.
Nega, what about the citizens? Because again, we started the year in thinking that there would be some kind of change of regime coming from within, because there was too much crackdown on the protest reforms, deaths. And has something changed because of the way that the U.S. acted?
I mean, look, at the end of the day, the Iranian public, we know this, has not been a monolithic kind of society, right? So you have many who support the Iranian regime, who are tied to it economically in some way. And then you have a large swath of them who are still against the regime but are tired. They don't see a way out of having to cope with the regime, and they want peace and security. Many of them were quite frustrated and scared throughout the first half of this year. And so right now they just want peace. They want life to go back to normal. They're just surviving. Again, as I said, being able to buy a bag of chips is a luxury for the average Iranian citizen right now. So the idea of having to live through this even more with very little sort of hope that there will be a potential change, it's about surviving and having a peaceful life.
Nega, thank you so much for joining us. That was Nega Anga, visiting fellow at King's College London. Now, Russia's overseas crude shipments have dropped to the lowest since May, with key ports operating well below capacity. The governor of the Krasnodar region says hundreds of drones struck a key oil hub overnight, and wheat prices have jumped after drone attacks on a key Russian grain facility. So let's bring in Anthony Halpin, who leads our Russia coverage. Anthony, thank you for joining us. Starting with oil, we're seeing Moscow importing gasoline from as far away as India. How much damage is Ukraine doing?
Yes, good morning. Well, I mean, that's a very stark example of what's happening to Russia's ability to generate its own domestic fuel to meet its people's needs. Ukraine has been striking quite extensively refineries across Russia. They hit 5 last week, at least 2 this week, and that follows a campaign over the last couple of months which did inflict widespread fuel shortages and caused a spike in Russian discontent with the war. So it's certainly something that the Kremlin and Vladimir Putin has to contend with, and one of the things they're trying to do is look to places like India for more supplies.
So reports also of a massive drone attack on a Russian grain port has sent wheat futures rising. How significant could disruption to wheat supplies be to this conflict?
Yes, this is the Novorossiysk port on the Black Sea. It's a key terminal for Russia, not only for oil but for grain exports. The Black Sea has been severely contested between Russia and Ukraine going over months. Both sides have been striking each other's capacity to export wheat. Ukraine's agriculture ministry, for example, today reported that exports so far this August are down 75% on the same time last year. Russia is also exporting far less grain than it did last year, both last month, and it's expected to do the same this month. And that's clearly impacting. Traders are worried about the effect on grain prices and ultimately prices that consumers are going to pay in the shops for their food worldwide.
The Kremlin seems very confident, or at least confident, of the deal to secure access for the military to Syrian bases and ports. Why is it important, so important for Russian forces to maintain a president in Syria?
Yes, that's right, Francine. This is a sort of sliver of strategic good news for Vladimir Putin. Russia was very concerned that it would lose those bases. There's a naval port in Tartus, which is its only Mediterranean port, and an air base at Khmeimim, which it uses and did use to support its operations in Africa. There's a lot of Russian support for countries in the Sahel region, in places like the Democratic Republic of Congo, through both troops and mercenaries. And the Syrian base was essential to maintain that influence. It seems from this agreement that the Kremlin is content that it can continue to use the bases for its military needs and therefore has come to some arrangement with the new Syrian authorities which allows it to remain in the region and to extend its influence far and wide.
Anthony, thank you so much for joining us. Tony Halpin there, who leads our Russia coverage. Now, coming up, a fresh test of the direction of U.S. politics as voters head to the polls in the latest midterm primaries. We'll have more on the results next, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Well, the U.S. midterm primary season continues with some big races going on in South Carolina, Minnesota, and Wisconsin. The latest contests come after progressive Abdul El-Sayed won the Democratic Senate primary in Michigan last week in another victory for the party's left over its more moderate wing. Well, let's get more with Bloomberg's Rosalind Matheson. Ros, so good to speak to you. So what are these primaries telling us about U.S. politics ahead of the midterms?
Well, obviously, it's a chance to check the mood of voters through the midterms, and for the Democrats to work out what kind of campaign to run then into the presidential election. I mean, bread and butter issues are obviously front of mind for voters. We can see that around jobs, prices, the impact on energy from the war in the Middle East, the impact on consumers from Donald Trump's tariffs. And the question for Democrats, again, is do you meet those voters where the Republicans are, or do you opt for candidates who are very much from the progressive wing of the party, the far left wing of the party, to really try and differentiate yourself? Or do you go for more moderate candidates to try and pull those swing voters away from the Republicans? And we can see that shaping up in some of the races so far. And for the Republicans, the question for some candidates is, do you really strongly align yourself personally with Donald Trump? Do you really push that relationship that you've got with Donald Trump? Is that a selling factor with voters? Or perhaps in some states, is it something that could count against you?
Yeah, exactly. And so which races stand out to you?
Well, very interesting to see what's happening in Wisconsin. There we've got the Democratic primary and what looks to be a very tight result. So projections showing that a moderate candidate, David Crowley, has by the thinnest of margins edged out the Democratic Socialist, Francesca Hong. So on the one hand, that shows, again, perhaps that caution about going too much towards progressive candidates. Does that just give Donald Trump lots of opportunities to use the word socialism and socialists throughout, to say that Democrats are out of touch? But the margin looks to be very, very close. So it also shows perhaps that Francesca Hong could pull a fair amount of Democratic support in a state like Wisconsin. So that's a very interesting race. Obviously, in South Carolina, we've got on the GOP side a runoff coming when it comes to a Senate seat currently occupied by the sister of Senator Lindsey Graham, the long-running senator who died recently. And she's a political novice, and she's leaning on her relationship with Donald Trump, touting that very much. He, in turn, strongly endorsing her, saying he might even come and campaign for her. So interesting to see if that helps her, or not, because over in Minnesota, where we've got a GOP primary going for governor, we've got a strong, staunch, overt Trump supporter, a 2020 election denier, Mike Liddell. It looks like in that case, he might actually lose.
So meanwhile, President Trump deflected criticisms about decision to secretly fly him out of Turkey on a different aircraft during the NATO summit. I mean, that's all everyone is also talking about. What more do we know, Roz?
Well, he has acknowledged this did happen, but he's very scant on the details. So as you were saying, he flew in on the Qatari-donated jumbo jet. He was ostensibly flown out on the older Air Force One alongside journalists, White House staff, government officials, but it turns out he'd been moved to that third plane, the military plane, and he's acknowledged that happened, but he says it was because it was demanded by the Secret Service and by the military, and he just does what he's told. Probably the first time he's actually said it was in response to their demands, to unspecified threats. He says he gets a lot of threats, so he didn't give us any further detail about what that might have been specifically related to, and again just says it was in response to those security concerns that were put to him by the Secret Service and the military. But interestingly, in all of that, it seems it was still deemed safe for some quite senior U.S. officials. The New York Times says Marco Rubio, Scott Bessent, and others to travel on that old Air Force One at the same time. So was it about the safety of the president or the safety of the plane? That's unclear. But as you say, really sort of busting some precedents there and some accepted protocols.
Ros, thank you so much. Rosalind Matheson there from Bloomberg. Now, the data highlight of the week is coming up a little bit later. July's U.S. CPI print, it's a big day of inflation, is expected to show that energy-related pressures have eased after intensifying in the months after the Iran war started. Let's bring in Ven Ram from our MLive team. So, Ven, thank you for joining us. What sort of market reaction could we see to the data later today?
Morning, Francine. I expect an asymmetric reaction function from the markets today, simply because, the markets have been extremely short on treasuries, particularly duration, heading into this data. 10-year positioning in futures is near the lowest we have seen in decades. The 30-year is similar as well. So, and then we juxtapose that with what has happened with yields. If you look at the 10-year and the 30-year yield, we have done 25 to 35 basis points higher this quarter, which is pretty significant. So if you combine the two, what you get is a market that is ready to take profit on the short positions. So I think that if we get a softer print today, that will allay the market's fears about inflation, and that will cause the markets to take profit on the short positions. So I expect an asymmetric reaction if there is a softer print. If there is a beat, I think that the markets will not sell off as much, because we, as I said, we have already done about 25 to 30 basis points higher in yields.
Would a soft inflation print be enough to ease the pressure on bonds, then?
Well, I think there's the short-term story, Francine, and the long-term story. The short term, for the reasons I just explained, yes, I think there is a case for a tactical rally in duration. But I do think that once those short positions are flushed out, I think that then we'll build towards new short positions, because the market is going to be episodic in its sell-offs, because, the U.S. Federal Reserve is not addressing the inflation concerns. They are not raising rates. And at the same time, the Treasury is not addressing concerns about deficit. So those two problems don't fundamentally go away, and therefore the long-term trajectory is very different to the short-term trajectory.
Meanwhile, Ven, we're seeing more yen weakness. So what's driving this?
Well, I think that, we are getting reports of the differences between the treasuries and the Japanese government here. The treasuries want the BOJ to be raising rates, which I think let's leave aside the question of autonomy, central bank autonomy to one side. But if you look at what is happening in Japan, given what is happening with inflation, I think they need to be raising rates at a quicker pace. They are nowhere near neutral, and the first stop that they need to get to is neutral, and they need to do it as of yesterday, not as of tomorrow, and that's why the yen is feeling the pressure.
Then could we just see more intervention?
Well, I think that they have shown that they have the appetite to intervene more, but I don't think the Treasury has got the FX reserves to intervene more. But I think Japanese officials certainly have appetite. And if the yen goes back to 162, 163 levels, I think we will see those interventions. But I think the point of this is that, the Japanese government is seeing very little in terms of the reward for all the interventions. They have done intervened to the tune of about 150 billion over the past 2.5 years, and they've had very little to show for that. So they need to ask themselves the questions, what are they throwing good money after?
Ven, thanks so much. As always, a terrific briefing and thoughts from Ven Ram from our MLive team. Now, the Norges Bank Investment Management Chief Executive Nikolai Tangen also joins Surveillance a little bit later today at 11:30 a.m. UK time. Now, Norges Bank did come out with earnings a little bit earlier on, and they usually have a really good conversation, of course, on AI. In fact, Norway's fund, that is worth $2.3 trillion, posted its best quarter since 2020. Up next, Bloomberg Brief, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up
I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. CoreWeave and Supermicro jumping on strong forecasts as the AI boom bolsters infrastructure demand. Those results helping stock futures higher as investors await the latest inflation print. And the International Energy Agency says global oil inventories may tumble faster than previously thought as the Iran war drags on. Let's get a check on markets around the world now in the session. Let's get straight to Winnie Su in Hong Kong for the latest from Asia. Winnie.
Yeah, good morning, Bonnie. A pretty positive session in Asia today, supported by those solid earnings from the likes of CoreWeave. Now, you can see that Korean stocks really a big standout today, up almost 4%. Also followed by a report that Singapore State Fund is considering investing in Samsung Electronics and SK Hynix. Now, the drag today, though, is in the shares, specifically tech shares in Hong Kong, as we kicked off the earnings season for the internet names. Now, we have Tencent reporting today, and we are very closely following that earnings throughout this evening. So far, we are hearing revenue beating estimate, while net income coming in as a miss. But the core thing to focus on is to see if this AI monetization path is really able to offset the capex spendings. Now, flip aboard a very quick look at Japanese assets as Japan coming back from holiday. We see bank shares leading stocks higher, as well as JGBs under a bit of pressure today, given the bets that the Bank of Japan will have to move earlier, while we continue to see the Japanese yen hovering just below that 160 level against the dollar.
Yes, a trepidatious time. Winnie, thank you so much. That's Winnie Su in Hong Kong. Now let's get a look at the European session. For that, we'll go over to London and Justina Lee. Justina.
Good morning, Bonnie. Now, I keep saying this, but it really does feel like this is the time of the month when all of Europe is on vacation. So if we look at European markets today, it's essentially flat. But of course, underneath the surface, we're seeing some big losses today in a lot of those healthcare names, such as Roche, Novo Nordisk, Novartis. So pretty big fall for the healthcare index here. Now, in terms of the bond yields, they're pretty flat today despite those gains in oil. But what I find interesting in fixed income markets lately is that if you flip the board here, we can see the spread between the long end French bond yield and the German bond yield. And we can see that it has risen to the highest since the end of 2025, and that's because investors are already looking ahead to those budget talks in France coming in the fall ahead of next year's presidential election. And it's expected to be a big fight given that France is struggling to meet its deficit goals. So it's interesting that clearly traders are already looking ahead here, Bonnie.
Justina, thank you so much. That's Justina Lee with a look at your European session. Well, not too many are on vacation here in the United States today with the CPI data coming out later on. It could be the next major catalyst for this market, particularly in terms of the macro outlook. In terms of the micro outlook, well, you can see it in front of you. CoreWeave and Supermicro really cheering investors on that AI trade, and NASDAQ 100 futures are pointed higher once again today. This after a drop-off yesterday for these two indices of about 1/3% apiece. The SOX, though, was up 0.9%. We have the Russell 2000 also jumping back today. This even as diplomatic conflicting signals continue about the Iran war. Let's take a look at yields, because we're off our highs still, but we are up about a basis point or two. In fact, we've switched now. We are pretty much unchanged on the 2-year for 2074. We're actually down a basis point now on the 10-year for 67.61. And that 30-year yield, while still elevated, down more than a basis point. All eyes will be on the strength or weakness of that CPI report later on and what it might mean for the FOMC trajectory. All right, let's get to some individual stock movers now. For that, we'll go over to Tokyo and Alice French. Alice.
Good morning. Yes, and look, it's all about AI-related earnings this morning and the pre-market winners. As you mentioned there, CoreWeave up more than 17% at one point after a very strong 2Q. Of course, that is a cloud computing service provider and really getting a boost from that big AI spending. Similarly, Supermicro, again, posting a better than expected forecast, seeing a boost too. And then elsewhere in the AI space, we see Lumentum, that opticals provider, really getting a boost there, again, from a strong fourth quarter. Its peer Coherent, which is also set to report results later today, having a very strong pre-market. And then away from the AI space, we see Carver, right, that restaurant operator, posting some very strong sales, partly driven by demand for their pomegranate glazed salmon, and that's helping the stock in pre-market today.
Alice, thank you so much. That's Alice French for us there in Tokyo. Coming up in this hour, a countdown to that CPI data with Andrew Hohenhorst of Citi. Shares of CoreWeave and Supermicro extending gains after giving forecasts that beat the street's estimates, both benefiting from booming demand for AI infrastructure. Joining us now is Bloomberg's Neil Campling. Neil, it feels like everybody wants to start losing faith in the AI trade, but results keep knocking it out of the park and saying, no, you can't lose faith. It's still a very strong trade.
It certainly is, Bonnie. Good morning. And I think what we're seeing here is the hyperscalers last month were telling us there were big capex coming through. And we're seeing that now in the numbers. If you look at the stock's reactions after hour, then CoreWeave ticked every single box in terms of revenue, in terms of losing less money than was expected, in terms of the bookings. Their bookings number is over $105 billion. It's twice the size of its market cap. Quite phenomenal. Now, 23% of those costs that the company has is NVIDIA chips. 65% of the revenues is from Microsoft. So this is a neo cloud, so pure AI compute power, delivering on all of those numbers. So it's certainly positive as far as the AI capex and the AI spending trade for these neo clouds to benefit from.
Still well off its highs, though, and the stock is so volatile. It sometimes trades like a meme stock, it feels like. Neil, I want to ask you about Supermicro. Are all of its problems behind it now?
Well, obviously they had the accounting issues previously, so I think that the positive from them is that they were able to focus on the actual underlying business, and that was very strong. If you look at the guidance, it's about 25% above street expectations. So volatile in nature, as both these companies had been, and it's quite a large short interest in both of these stocks, actually, CoreWeave and Supermicro. So that's going to put some pressure, I think, on those short sellers today as well. So, but certainly the fundamentals are positive.
All right, well, we'll continue to see how they trade. Now, if we move over to other parts of the world, Tencent sales there actually topped estimates. A WeChat ad surge, apparently. Also, resilient gaming. What can we tell about the future of the Chinese mega conglomerates from Tencent's earnings?
Yeah, so Tencent has underperformed many of the other tech bellwether stocks. The core really is that the key businesses here, especially on gaming and WeChat, delivered above expectations. So that's important. And then on the earnings call, there's going to be a big focus on how they play catch up on the AI build out, if you like, because they had been seen to be behind some of the other Chinese AI companies. So that's definitely a focus in terms of those that conference call coming up in a couple of hours.
Yeah, it has been lagging and the share is down about 2% at the moment. Cognition is in early talks for a new funding round. It would boost the startup's valuation to maybe $40 billion at least. What is Cognition and why should we care?
Yeah, so, well, for one thing, this is coming after recent fundraising on the code, and it's a AI coding company. Coding is the most important part of the AI ecosystem, if you like, after you've got the chips being built out. So coding is where there's a lot of attention, and we're looking at a valuation here that could be sort of, as you mentioned, a 50% increase from where it was just 3 months ago in the last round of funding. So one to definitely watch for.
And then in terms of sovereign investment in AI companies, we now have Singapore's Temasek planning to invest in Samsung and SK Hynix. It's boosting shares today. Is it a good thing for both of these companies longer term, Neil?
I think we can take that, certainly, because Temasek is one of the highest regarded, I think, sovereign wealth funds in the world. Have had a very long, very positive track record over decades of investing in the TMT complex. So that's going to be seen as a positive, especially, as you say, these stocks have been very volatile recently. And now we're getting more focused on potential shareholder returns. So to see Temasek sort of potentially coming in here is a positive sign for the AI chip trade and the memory trade for sure.
All right, and then the spread between Samsung and SK Hynix getting a little wider. What's that all about, Neil? I thought they basically did the same thing, or roughly the same thing.
Yeah, so actually, they're both in the memory complex. Samsung is actually the biggest memory company in the world in terms of the market share they had, but they also had the logic business, so making the advanced AI chips themselves, and they have a leading edge fab in the US as well. So they have something that is sort of additional to the memory side of things, which Hynix don't have. So Samsung really is sort of a leading edge logic company in the same way as we regard TSMC. So that's the differentiation there for Samsung.
All right, well, we'll continue to watch that spread. Neil, thank you so much. All across the tech complex around the world for us today. That is Neil Campling in London. Markets awaiting the CPI data coming in just more than 3 hours. Let's bring in Bloomberg's Ven Ram for more. Ven, how much does this have the potential to be a market catalyst today, and a big one?
It'll be a big market catalyst, no doubt about that, Vonnie. Positioning going into this data is extremely short. Long duration treasuries, 10-year and the 30-year. The 10-year in particular positioning is the most negative it has been in decades, is near the most negative, I should say. So I think that, and we have seen yields climb up 25 to 30 basis points on the 10-year and 30-year segment. So here's a market which is extremely short on duration. Juxtapose that with a market that has already sold off heading into this. What do you get? What you get is a market that is willing to take profit on their short positions. That'll mean that if the data is actually softer than forecast, or even meets expectations, the market may be more inclined to take profit on those short positions. Therefore, I expect the reaction to be asymmetric today.
Whatever we get today, will it cause Fed speakers to come out and clarify how important CPI data is relative to other inflation data all of a sudden now that Kevin Warsh is at the head?
Well, I think that they will emphasize that, but I think that the point is the FOMC as a whole on the aggregate, are they going to be able to do anything on rates? That's the immediate question. And I think, is there a quorum for a rate hike? It doesn't look so. I mean, 3 members voted for a rate hike. We know that, but I think that, we want to see more proof that other people on the board, on the FOMC policymaking committee, are willing to commit to higher rates. And my fear is that they may use the pretext of the lower jobs report, that weaker jobs report that we got last week, as an excuse to hold off the rate hike. And that's my biggest fear.
Yeah, I'm sure the market is wondering about that as well. Can I ask you about whether today's report has the ability to disturb equities, because they've been on their merry march higher all week with nary a care in the world, weak jobs, no weak jobs? Well, AI is going to save us all.
That's true. AI is going to save us all. We'll see that. But the problem is, as I was saying, I mean, today the markets are asymmetrically placed, meaning the biases for treasuries to rally tactically after the data. If that pans out, then I think equities will heave a sigh of relief. But if the actual data is much stronger than expected, then I think that treasuries may not sell off as much as they have been because they've already sold off heading into the news. So I think that will still buy them a respite. But the longer term equation is what matters here. And in the longer term, I think equities, AI narrative led by CapEx is going to be tested by these persistently higher yields we have seen at the longer end of the curve.
All right, Ven, thank you so much. Ven Ram there for us in Dubai. Now to other top stories trending on the terminal this morning. First up, Bank of America has unveiled a $250 billion initiative to invest in critical infrastructure across the U.S. over the next year, joining its peers pushing for innovation across the country. The investment is intended for projects including data centers and compute power, renewable power generation, and critical minerals and mining. Next up, Norway's sovereign wealth fund has posted its best quarterly return in 6 years. The world's largest sovereign wealth fund returned 11.5% in the second quarter, helped by gains from its large holdings in global tech companies. That's its best result since the second quarter of 2020. And situational awareness bought shares in server components maker Taiyo Yuden in late June and built up its stake to more than 11.6%, according to multiple filings. Taiyo Yuden's stock rose as much as 6.7% Wednesday after the fund notified Japan's finance ministry about the stake in the company. Coming up, President Trump claims control of Hormuz as escalating rhetoric dims hope for a deal. We'll get the latest. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersachi in El Ola, Saudi Arabia, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Trust Iran. Why? Are you saying I trust Iran? I'm the last person to trust Iran. They've lied to me constantly. We have total control over the Hormuz Strait right now. They don't have control. We have total control. We own it. And at some point, maybe they'll do something and then they get blown away.
President Trump speaking yesterday as escalating rhetoric between Washington and Tehran dims hopes for a deal. Let's go to Bloomberg's Abir Abu Omar in Dubai for the latest. President Trump claims complete control over the Hormuz Strait. I would imagine the Iranians would disagree, Abir.
Absolutely, Vani. The Iranians do disagree and have disagreed throughout the course of this war. The latest remarks, of course, from President Trump, you heard there him saying essentially that the U.S. has full control. That is a claim that Iran would stand to disagree with, just because what we know on the ground, there is a distinction to be made between these back and forth claims that we're hearing, not just from the U.S. side, the Iranian side as well, and then the physicality of what is actually happening in the Strait of Hormuz. And that is a two-sided story. One is the U.S. naval blockade that is still in place. As a matter of fact, we heard from Central Command overnight saying that a Navy helicopter had attacked a Panama-flagged vessel for trying to go through the U.S. blockade into Iranian ports. And then we heard from the Iranian side, of course, the negotiations that are taking place with Oman, Vani, and that is to develop some kind of mechanism to get a trickle of movement through the Strait of Hormuz. The latest we know about that from Al Jazeera, for example, saying that those negotiations are in an advanced stage. They were citing a Qatari foreign ministry spokesperson about that, and it falls in line with the reporting that we have as well about those talks being in a good place, in a final stage, but still we don't have a formalized draft with that agreement or what exactly it will entail, if it will mean an immediate reopening of the Strait of Hormuz, if it will be temporary, if it will allow ships from all countries, or if Iran is going to stick to its line about, for example, tolling ships that it deems are from hostile nations. So all of that is still unclear. We still don't have a lot of details about what exactly will happen. But what we have is from Pakistan, one of the main mediators, saying that the wider negotiations are in a good place, that they're alluding to a more peaceful resolution. This is the defense minister saying this to reporters in Islamabad. But overall, the situation remains very unclear as of now, Vani, and ships and vessels are still very much prone to those attacks by both sides in either Iran or the United States, really.
Absolutely. Abir, thank you for that update. That is Abir Abu Omar in Dubai. Oil edging higher. We're close to $90 again on Brent. Skepticism remaining about a potential deal to restore energy flows. This as the International Energy Agency sees global oil inventories tumbling faster than previously expected this quarter. We're joined by Bloomberg Energy reporter Anthony DePaula. Anthony, obviously the Strategic Petroleum Reserve in the United States is 40-year lows at this point, and the IEA is now coming out and expressing more concern. What is the prompt month price actually telling us right now?
Good morning, Vani. Yeah, the prices are telling us that people are not really banking on this positivity around a deal right now. They don't see a deal in the offing. People are still skeptical about it, but it's not screaming energy crisis either. But we do see some of those warning signs coming through with that information on the stockpiles. I mean, those are finite resources. As those get run down, that flexibility that the oil market has enjoyed because those stockpiles have been released on the market, that's helped calm prices. That's helped keep the market supplied. And that's going to run out at some point. On top of that, there's also the fact that China has really reduced purchases, cutting their imports by about 5 million barrels a day, and that's also been a major factor in allowing the market to react to that lack of supply coming out of the Persian Gulf as Hormuz remains at least partially blocked.
So ADNOC seems to have worked out a workaround, at least for Iraqi producers. Tell us what the Abu Dhabi National Oil Company is offering.
Yeah, so crude has been flowing through Hormuz. As we say, it's not fully blocked. There have been some barrels going through, and ADNOC and the UAE has been using this Omani route kind of towards the southern part of the Strait of Hormuz, where they've been crossing through under the cover of darkness with their transponders switched off. In the parlance of the industry, that's called going dark, so that they can't be seen on satellite, and also with some military escort. So they've been doing that throughout. the war to export UAE crude, UAE oil products. What they've started doing now is also taking some Iraqi crude and taking that out of the Gulf and selling that. ADNOC has been buying Iraqi crude for their own refineries before, and now they're getting it onto the wider markets. That's helping supply get to market.
Well, it's all very cloak and dagger and dangerous, I'm sure. Anthony, thank you so much. Anthony De Paula in Dubai. Coming up, results rolling in for U.S. primaries. Some big races going on in South Carolina, Minnesota, and Wisconsin. More on those results and a look at what else is making headlines in your front page news. This is Bloomberg.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
And it's time now for your front page news. We have mostly primaries covering the front pages. The Washington Post here with David Crowley, the top elected official in Milwaukee County, seizing a surprise win for the Democratic nomination in a rare defeat for the progressives, Francesca Hong. We also in South Carolina have Darlene Graham, the late Senator Lindsey Graham's sister, going to a runoff.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. CoreWeave and Supermicro jumping on strong forecasts as the AI boom bolsters infrastructure demand. Those results keeping futures positive as investors await the latest inflation print. And the International Energy Agency saying global oil inventories may tumble faster than previously thought as the Iran war drags on. Getting a little market movement just in the last few minutes. We have treasuries rising, oil falling. We have the 10-year yield at 4.66 now, down about 3 basis points. As you can see in the futures picture, futures were already positive on some of those AI earnings that we got after the close yesterday. This, of course, after the equal weight S&P hit a record yesterday, but the S&P 500 and NASDAQ 100 were both down about 0.3%. The SOX index, though, was up 0.9%. Some positive news out of Korea and Asia as well today, helping events. And then let's move to those yields because, as I say, we are getting a little move lower in treasuries and it's picking up a little bit of steam just in the last few minutes. It could be oil, although oil hasn't been moving that much. We are close to $90 on Brent. We're around about 85. Actually, we're more like 82.77 now on WTI. So we'll see what headlines are coming out. But let's take a look at the yen because it's actually impacting the yen as well. The yen with a big strengthening just a few minutes ago. It is almost breaking the 159 mark, as you can see. About a half a big figure there in strengthening. All right, let us get to some individual market movers. For that, we'll go over to London and Justina Lee.
Good morning, Vonnie. Now, starting with some AI names, as you mentioned earlier, CoreWeave jumping 17% in the pre-market after forecasting stronger than expected earnings. Now, it is considered to be a bellwether names for the sector, and so no wonder we're seeing a lot of gains all across these tech names. Also rising is Supermicro, also after strong results. Now, kind of if we flip the board here, we can look at some optical equipment makers, starting with Lumentum, which also forecast very strong numbers, and its peer Coherent is reporting earnings later today, and it's also rising ahead of that. Now, moving away from AI onto a completely different sector, Cava, the casual restaurant company, gaining very strongly today after reporting earnings that were better than expected because it turns out Americans are going out there and spending money on those higher priced proteins such as a pomegranate glazed salmon, and also they're piling on a lot of those extras such as pita chips apparently.
All right, Justina, thank you so much. We'll keep an eye on those stocks throughout the day. Well, just 3p hours away now from 3p. the July CPI report. That's how much is on the brain. Joining us at the desk is Andrew Hollenhorst, Chief US Economist at Citi. And it is really an exciting day for this particular CPI. We wouldn't normally be this excited about inflation data, but it could have the potential to really move the needle here.
Absolutely. In terms of where it's coming in the calendar and where it's coming in the context of other data, we're coming off a softer jobs report for the month of July. We also had softer inflation data in the month of June. We surprised lower on CPI, on PPI, PCE inflation. Now, at that time, when the Fed met a couple weeks ago, they were saying it's just 1 month of data. Well, if we get a cool reading again this month, and we think that we will, well, then you have more of a trend towards cooling inflation. And that's just a very, very different story than what we've been hearing from some Fed officials.
Andrew, are you convinced we'll get cooling inflation data today? I know that you think that we're seeing a downward trend in all of the other inflation data.
Yeah, I think we will see this, especially in this core CPI measure. And that's what's so interesting is the divergence that we've had between different measures of inflation. Really important that Chair Warsh told us that he's looking through a broader lens, which we would interpret as looking at a variety of different underlying inflation metrics. A few months ago, you could look at core PCE. That looked very high. That looked like it was accelerating. That is certainly concerning. But then you could look at some other measures like trimmed means and medians, and they looked a lot less concerning. They really seemed to show that underlying inflation was maybe still slowing. Now you don't have to look at these kind of esoteric trimmed means. You can look just at core CPI. Core CPI came down to 2.6% year on year in the month of June. In the July data that we're going to get out today, we think, and consensus thinks, will be at 2.5% or below on a year-on-year reading. Historically normal core CPI runs at 2.3% year on year. So if you look at that core CPI metric, again, this is not a strange, bizarre underlying inflation metric. This is just familiar core CPI. It's going to be very close to target this morning.
It could go back up again, though, for the next month, right? I mean, particularly we've seen some elevated oil prices again recently.
Yeah, I think this morning is a reminder of just how tied we remain to oil prices. We can talk about the domestic determinants of inflation and the domestic economy, but external events have just been a huge factor in markets this year. We have to acknowledge that in thinking about market pricing. Now, in terms of do these higher oil prices actually pass through broadly into consumer inflation in the U.S., we've seen higher gasoline prices, of course. We've seen higher airfares. Beyond that, we really haven't seen much pass through. And that's true not just in the U.S., that's true overseas as well in other developed market economies. So I'm hopeful that we're not going to see a lot of this higher energy prices passing through into core inflation. You'd want a couple more months of data to see. Again, it kind of brings us back to the report today. We'll be looking to see if we see any signs of that.
It does show you how everything is interrelated, though, because you have to look at inventories now and you have to look at the comments from the IEA. If we do get elevated oil prices again for a period of time, is it not more serious this time around, given that inventories is so low?
I think you have to watch what's going on in oil markets, of course, watch what's happening with inventories and what the expected price is for oil and energy, but also watch the domestic economy. And you have to do these two things at the same time, which is difficult. There was a concern a couple months ago when we kind of kicked off this conflict and oil prices were rising that we might reach some kind of critically low level of inventories and we would have a non-linear spike in oil prices, right? Not just going to $100, $110 a barrel, but going to $150 a barrel or above. And there were some forecasts to that effect. We haven't seen that materialize. I think that's made a lot of us feel more comfortable that, yes, we may have oil prices a bit higher, a bit lower, but they're kind of in a familiar range that wouldn't cause me a lot of concern about do we get passed through into broader prices in the U.S. economy. But if you take more hawkish Fed officials, and we already had 3 officials who dissented at the last FOMC meeting, certainly higher oil prices are going to keep them more hawkish.
Yeah, and I mean, we haven't been anywhere near $100 a barrel since the first blush of war, right? I know you were looking for a weaker jobs report last week, and you continue to look for more weakness in the labour market in the months to come, which would potentially cause the Fed to actually lower rates. Some have pushed back and said last week's jobs report was not actually that much of a sign of fragility if you looked at the unemployment rate or the supply of labour, for example. What do you say to that?
I do think that's going to be the kind of median Fed official read on that report. So if you go back 2 months ago, 3-month moving average job growth was up at 188,000 jobs per month. That looked very strong and really was hard to reconcile with other things that we saw going on in the economy. In this report for July, we're showing about 20,000 jobs per month on average being created. This is a very low pace of job creation, but to your point, and I think what Fed officials will say, is still stable unemployment rate. So maybe it's just that the labor supply is increasing so slowly that this is actually a stable pace of labor market growth. Now, I would question that because I would look at the participation rate, and we've had a really sharp drop in the participation rate, and some of that is probably just statistical noise that's going to mean revert. When that mean reverts, then the unemployment rate would come back up, and it may look like we're running a bit below the replacement rate. But right now, where we are with the data, I think Fed officials will conclude it's a stable labor market. There will be differences about how fragile that stability is, and I would see it as quite fragile stability. But you would actually need to see that unemployment rate rising to get the Fed to think about cuts.
Andrew, what would it take for these Fed officials who have only really come out to talk about hikes, right, to actually flip the script and start thinking about cuts before Christmas, which is what you're still looking for, right?
That's still what we have in our base case, and you need two things to happen. One, I'm quite confident we're going to see evidence of this morning, which is core inflation that by a variety of metrics looks like, if anything, decelerating, not that far away from target. So some increased comfort around inflation. We should see that in the data today. And then it has to shift from a stable but slow pace of job growth to a belief that we actually have a concern in the labor market, and that has to be rising unemployment rate. So the inflation data, I think we're seeing that. We saw that last month. I think we'll see it again this month. I'd be looking in coming months for, do you get that unemployment rate rising? That's what you would need to see to actually shift this Fed towards cuts.
The PPI data tomorrow, which will then feed into the PCE, core PCE, how important will that be after today's data?
Really important, and it's the little details of PPI that end up combining with CPI to produce that forecast for PCE. When we put those numbers together in terms of our forecast, we think we're going to come out at 0.20% month-on-month core PCE. That would follow 0.13% month-on-month core PCE. Why am I talking about these, multiple decimal points for the monthly reading? These monthly annualized readings are running around 2% core PCE inflation. So the year-on-year figure is still going to be quite elevated, up above 3%. But we think on a monthly basis, these reports will look cooler, and that should also go towards more Fed comfort around inflation.
And Andrew, your current base case?
Current base case is for the Fed to go back to cutting rates. We think they can get there by October if that unemployment rate rises.
All right, Andrew Hollenhorst of Citi, always love hearing from you. Thank you so much for joining us in studio. Now to other top stories trending on the terminal this morning. First off, Norway's sovereign wealth fund has posted its best quarterly return in 6 years, the world's largest return, 11.5% in the second quarter, helped by gains from its largest holdings in global tech companies. It's its best result since the second quarter of 2020, and Nikolai Tangen will join Surveillance in the next hour. Next up, Bank of America unveiling a $250 billion initiative to invest in critical infrastructure across the U.S. over the next year, joining its peers, pushing for innovation across the country. The investment is intended for projects including data centers and compute power, renewable power generation, and critical minerals and mining. And the Securities and Exchange Commission preparing to roll out 2 major crypto initiatives as Congress struggles to advance the Clarity Act. The SEC planning to unveil details of its long-awaited innovation exemption for tokenized securities as soon as Friday. The agency is also considering a new framework for certain crypto asset investment contracts. Coming up, a U.S.-Iran deal hanging in the balance as the White House prepares for the midterms. We'll get the latest next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is
Indeed, recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Trust Iran. Why? Are you saying I trust Iran? I'm the last person to trust Iran. They've lied to me constantly. We have total control over the Hormuz Strait right now. They don't have control. We have total control. We own it. And at some point, maybe they'll do something and then they get blown away.
President Trump speaking yesterday as escalating rhetoric between the U.S. and Iran casts doubt on any immediate deal. You just saw oil turn around in the last few minutes, lower now, Brent at 88.43. Joining us now is Bloomberg Washington correspondent Tyler Kendall. Tyler, the president seems to be convinced that the U.S. controls Hormuz, but as Abir Abu Omar told us a short time ago, Iran would not agree with that statement.
Right, Vonnie, at this point, we're getting conflicting statements from both sides as they continue to at least publicly dig into their positions. As you mentioned, President Trump maintains that the U.S. has this control over the critical waterway, and we have seen the U.S. military continue to enforce its naval blockade, including yesterday firing at a Panama flag vessel that appeared to be trying to reroute around the U.S. military. And we got this update from the U.S. Energy Secretary Christopher Wright, who said that at the moment, the 7-day average is 9 million barrels per day are making their way through the strait, though that is higher than what most traders believe to be the actual number of barrels that are getting through. There's been very little indication that Iran is willing to let up its grip, not just when it comes to Hormuz, but global shipping at large. As new this morning, we got confirmation from Yemen's government that 6 people have died in the first known deaths related to an attack by the Houthis in the Red Sea. So, Vonnie, at this point, it feels like we are pointed toward additional escalation, though in what was considered to be one positive sign relatively for diplomacy. We did get confirmation that Pakistani officials were in Iran yesterday for another round of negotiations, but what sort of potential breakthrough this will lead to at this point remains unclear.
Tyler, turning our focus to the midterms now, the president is considering calling for capital gains tax cuts as a midterm boost. Where is this coming from?
Well, this is according to a conversation between the NEC director, Kevin Hassett, and Larry Kudlow of Fox Business, who, of course, had served under the first Trump administration. Kudlow had said that he had spoken to President Trump about indexing capital gains, meaning taxes would be applied on gains adjusted for inflation. He also suggested exemptions for sales on homes worth $2 million or less from capital gains, adding, quote, "The boss is very interested in those ideas." You have to keep in mind here, Kevin Hassett went on to say that Republicans are going to be putting out even more potential proposals as we get closer and closer to November, and we know that the party is facing headwinds when it comes to voter dissatisfaction with the economy. The context, though, is that you need Congress in order to pass any such tax-related proposal like these. So the idea here is that they're trying to help Republicans maintain their majorities when it comes to both chambers. Vanya, I'd point you to a recent Fox News poll that shows for the first time since 2010, Democrats are leading Republicans when it comes to voter confidence in handling the economy, of course, an issue that Republicans have traditionally polled better on.
What were the key takeaways from the primaries? They're not even fully over. There's a runoff in South Carolina, Tyler.
Yeah, so I guess there's two sort of threads that we can pull on, Bonnie. On the Democratic side, it's that the intra-party fighting is still not over. We were closely watching that Democratic primary for the gubernatorial contest in Wisconsin, where a Democratic Socialist candidate, Francesca Hong, did lose her bid after failing to secure some of the most prominent progressive endorsements in the party, like Senator Bernie Sanders. With that said, though, she narrowly lost. You'll see on your screen there, she was facing a candidate, David Crowley, a more moderate candidate. This will give establishment Democrats a little bit more of a boost going into the midterms. But then there was another closely watched race in Minnesota where we saw a progressive candidate, Lieutenant Governor Peggy Flanagan, win her race there. So there still remains this divide. Vani, you mentioned South Carolina. That is for the open Senate seat from the late Senator Lindsey Graham. His sister, Darlene Graham, failed to secure enough votes to just win the primary outright. This now goes to an August 25th runoff. She is endorsed by President Trump. She will face Congressman Ralph Norman, who has, let's just say, a much more complicated relationship with this White House. So that could be a test of the president's, backing power here, though broadly we should say President Trump has a pretty good track record when it comes to endorsements so far.
And that's scheduled for August 25th. Bloomberg Washington correspondent Tyler Kendall, thank you for all of the updates. Turning back to tech now, CoreWeave and Supermicro giving outlooks that beat analyst estimates. Bloxham of Bloomberg Intelligence joins us now. So CoreWeave back in the favorite books again, Matt. This is a stock that has had such volatility. Does it have any moat versus the other neoclouds?
Maybe perhaps not so much against other neoclouds, but I guess the moat they have is that they have actual compute capacity right here today that the big hyperscalers want and need access to, and so that's kind of really underpinning the slightly better than expected sales growth and also the positive outlook on their order book. I think for me, to be honest, what was more significant was the positive guide they gave on the margin outlook, and actually their margins in the quarter were good too, and that's largely reflective of pricing power, and that reflects this this big disparity between demand for AI compute capacity and supply. They have that supply and they've got pricing power, so I think that's encouraging for them.
And Supermicro's problems all seem to be behind it, and it's on the up and up again. Should we continue to expect that stock to rise?
Yeah, again, a massive mismatch here today in terms of where the market was expecting the next 12 months sales to be and what their guide is, a significantly higher guide relative to market expectations. And again, just reflecting the fact there's just a huge amount of spending going on to build out AI infrastructure, and they are incredibly well placed to deliver those servers with NVIDIA chips into the market. And we've seen lots and lots of companies increase their capital spending budgets this year, and so I think what we're seeing with Supermicro is that spending coming through to them in the form of demand and revenue, and the kind of next 12 months looking very rosy for them.
Tencent, Matt, if we go across to China, sales topped estimates there. We've been waiting for a while, or the market has been waiting for a while for Tencent to sort of pick itself back up again, right?
Yeah, and I think there's still quite a long way for them to go to kind of convince people that they can close the gap on their AI business. But the new Work Buddy product they have out there has got a great initial reception, and actually what we saw in the numbers today was a better than expected performance on ad revenues, which suggests that actually their AI tools are helping brands to better target their advertising and therefore want to spend more money with them. And they also saw a very resilient gaming performance. So I think those kind of core foundations of the business really holding up well, and some signs that the momentum is shifting in a positive direction on AI. Obviously, continuing to spend a huge amount of money on AI infrastructure to kind of compete with the likes of Alibaba. So I think there's still work to be done, but the signs are getting more positive that they're closing the gap on AI.
Matt, another funding round for Cognition. Tell us a little bit about this startup and why we should be perhaps taking note of this funding round.
Yeah, so this company very much in the sweet spot of the AI story right now, which is around agentic AI. It's got a very specialist agentic AI solution around engineering tasks. And I think so many big companies, particularly hyperscalers, looking to boost a capability in the agentic space, either through organic developments or through acquisitions. Saw the SpaceX deal to buy Cursor. So I think it's kind of very much in the right spot right now. So not surprising that this kind of funding round potentially valuing the company at $40 billion. And so agentic is really going to be a big theme for the coming 12 months, I think.
And it could be another candidate for an IPO at some point. Matt, thank you so much. Matt Bloxham of Bloomberg Intelligence. Coming up, CPI data front and center in your day ahead next. This is Bloomberg.
Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now let's get a look at what's ahead today. The main event, of course, is July CPI data coming out at 8:30 Eastern Time. We also have the U.S. Treasury auctioning off $42 billion worth of 10-year treasuries at 1 p.m. The 3-year went off well yesterday. And Cerebras, Cisco, StartupPal all set to report earnings after the market close. Some big movers this morning. CoreWeave shares soaring after its outlook really was boosted by AI demand, up almost 20%. Coherent up more than 5% ahead of earnings after the market closed today. And we have Kava Group up almost 13% as well. Pomegranate glazed salmon apparently boosted their sales. Here is your macro outlook for the day ahead of CPI. We have Brent crude just higher once again and the 10-year yield at 4.66.
Today, Wayfair sees immense potential in brick-and-mortar stores.
When we got into physical retail, our view was that, even if the market continued to grow for e-commerce, probably a large chunk of the market in the space would stay offline.
Kate Gulliver showed me around Wayfair's new 150,000 square foot Atlanta flagship store.
When customers who have seen us online come into the store, they're generally a bit surprised by actually the breadth of what we offer. Often if you're going online, maybe you're looking for something particular. But when you come into the store, you walk in, you see the market square, you see all these pillows, you see the decorative accents. So what we're seeing actually is that in store, we do really well in some categories that online are, less a percentage of the total.
How does technology help in kind of making it seamless online to store?
I think
and vice versa.
The biggest thing is for the customer on the front end, that she can be in the store, that she can actually shop here, go back home, complete that purchase. And if you look at these sort of price tags and everything, they're all these digital tags. That's because they're the exact same prices they are online. So you're not going to be surprised that you saw something in the store and then you decided to purchase it online, that it's somehow different and that the offering is different. It's actually very consistent, but when she's here, she can have her app open and everything that she's doing here can be very similar to what she's doing at home. And I think that consistency is quite important.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
All of our macroeconomic signals are very bullish on the U.S. economy.
Inflation expectations are very benign.
As long as we get these benign readings, that does still give the Fed some breathing room.
The data may not support an immediate rate hike in September.
September sitting at roughly 50-50.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome to Bloomberg Surveillance. Stocks looking to break out of a two-day losing streak, with CoreWeave and Supermicro renewing confidence in the artificial intelligence trade. Oil rising for a fifth straight day as the IEA warns of tumbling global oil inventories. And traders girding for that key U.S. inflation data coming out in less than 3 hours, with essentially a chance of a coin flip about what it means for the Federal Reserve.
Right, and how high is the bar for the Federal Reserve now, or the CPI report for the market to start pricing in hikes because of what happened last week in terms of a little bit more of that dovish, softer payrolls report, which is why this is really the data point, not just of the week, but it feels like the summer. It's going to set the tone, potentially what we hear from Kevin Warsh at the end of the summer when it comes to Jackson Hole, and of course, ahead of September's Fed meeting.
I like how you put that. How high is the bar? Because ultimately the expectation by economists surveyed by Bloomberg is that core year-over-year inflation is going to fall to 2.4%, the lowest going back to March of 2021. This isn't exactly runaway inflation, and yet the concern is that this is a low point, especially given what's going on with oil prices and the new normal that's creating this difficult backdrop.
Absolutely. We're still seeing this conflict continue. The president says the U.S. has complete control of the Strait of Hormuz. Yes, the United States has a blockade, but we are not seeing the levels of oil go through and transit through the Strait of Hormuz that we were before this conflict. So we have higher oil prices, and as we discussed yesterday, and I think today when you look at what's going on with CoreWeave, Supermicro, the AI build-out and that trade, incredibly robust. It remains incredibly hot.
Yeah, the fiscal stimulus that's coming from the likes of NVIDIA and Wall Street firms, from Apollo to KKR. A question here about how much it really is assuaging people's concerns when we get the likes of Supermicro and CoreWeave coming out, delivering bigger pipelines than expected. Their shares popping by more than 18% for CoreWeave. A similar type of move on Supermicro. Does it really alleviate some of the worries about how much debt, how much equity they're selling, how much they have to raise money to finance this type of move?
Well, what says is that the demand is there for these companies to have the build out. Do they need more capital to do that? And that's what both of these earnings reports really showed. Also interesting, the one big piece of all of this AI build out that we don't have yet, the piece of the puzzle, is NVIDIA. The end of the month, but both of these companies are incredibly important to NVIDIA and really a bellwether for NVIDIA. So you can imagine they are going to also have a showstopper report.
Well, and you can imagine that they're trying to get ahead of it with this kind of financing arrangement where more details are sort of coming out over the past couple of days. Right now in markets, you can see that inflection upward in equities across the board, led by big tech following those two earnings reports from CoreWeave and Supermicro, not to mention Tencent out overnight in China. You are seeing the NASDAQ leading. Over in the bond space, an interesting picture where you've got the push-pull of what we're going to get for the CPI print. Pretty high expectations of overheating inflation and, frankly, to be surprised to the downside, short positioning when it comes to treasuries, as well as what's going on with oil. Yet yields are down across the board. Only a basis point. That two-year yield still around that 420 point. The 30-year yield notably down 2 basis points as well. 10-year yields, watch this space because at 1 p.m. we do get an auction. $42 billion of 10-year notes. And then, of course, in the oil space, not much action. Nonetheless, kind of the stalemate emerging that raises the specter of this being the new normal with spiking oil prices given what the IEA has had overnight. Coming up, Keith Lerner of Truist as CoreWeave and Supermicro breathe new life into the AI trade. Norges Bank CEO Nicolai Tangen as Norway's sovereign wealth fund posts a record half-year profit. And Veronica Clark of Citi as Wall Street awaits fresh CPI data. We begin this hour with stocks climbing, with upbeat tech easing some of the AI jitters. Keith Lerner of Truist writing, earnings remain our North Star. We remain long-term tech bulls, continuing to see AI as the dominant secular theme driving this market cycle. Keith joins us now for more. Keith, great to see you. How much did CoreWeave and Supermicro tip the needle to optimism from skepticism about financing?
Well, I guess for one day it has, but I really think the broader story is going back during this whole earnings season. You know, what happened a few weeks ago is what we saw this really strong rebound after tech had corrected double digits. And the big story to me was that we were seeing revenue growth of 20% plus from a lot of these hyperscalers, and especially in the cloud business. So that was, I think, eased as far as, you know, the question around, are we going to monetize all this spending? And a lot of the bigger companies were saying, yes, we are seeing that transformation. And then I think, as you said, overnight, this is, you know, another positive, saying that there is some monetization. But I would also just be clear that I do think we're in this stage where there is going to be, you know, much more winners than losers. We have a gauge of correlations for the S&P, and that's the lowest we've seen in 30 years. So I think that's likely to continue.
When does cash flow matter? I mean, it sort of mattered vaguely for Alphabet. And then when you see what happened with CoreWeave, on one hand, they beat expectations on sales, but their cash flow was much more negative than people had expected, given some of their borrowing and spending plans. I mean, it just sort of highlights how it depends on the day how much this actually matters.
Yeah, we talk about the kind of love-hate relationship with tech, with investors in tech. And I think a lot of times it matters where you're at in the cycle. And you know, back off the March lows until June, you know, the market, tech was up 47%, semis were up 90%. So then you come out with earnings, there's negative cash flow that, you know, that puts some initial, you know, selling pressure. But I think, listen, zooming back out, I mean, we had this once in a generation build out, and you would expect that there's going to be a lot of spending. And then, there's almost a little bit of, faith that these companies will figure it out and turn a profit. So that's why I think you're just going to see this kind of really high volatility back and forth not over the next couple of months this year, but probably over the next few years, because that cash flow for some companies that have other businesses likely comes sooner than others. But we ultimately think, and again, given the AI bull market, the benefit of the doubt, that these big players will figure it out. They have a history of doing so.
Keith, when you say that the potential is going to be some of these cash flow concerns and questions swirling around cash flow, is that why you think the second half of the year is going to be bumpy, or are there other risks on the horizon that could potentially be annoying for the bull market run?
Yeah, I think there's a lot of the things that we've been talking about. I want to be focused that the primary trend is in place, supported by fundamentals. Valuations this year for the S&P are down about 10% because we've had these earnings overwhelm the PE contraction and these higher rates. But I think there's things we're talking about. Oil prices bouncing around each and every day. We still have uncertainty around the new Fed chair, and we often talk about how the new Fed chair gets tested. There's uncertainty around inflation. We got the midterm elections. Historically, just seasonally, that tends to be a bumpier path overall. But again, even though we think it's going to be a bumpier path, we still think the destination is still higher based on the weight of the evidence, as far as an economy that still is relatively resilient, even in the face of all these things I just discussed. We have earning estimates continue to move higher. This earnings season, every earnings season beats estimates. We know that. But this one, we have 85% of companies beating estimates. We have revenue beats at 75%. And the forward earning estimates for the S&P, for small caps, for mid caps, emerging markets keep moving higher, going back to that North Star phrase that I mentioned earlier.
Earnings, earnings, earnings. So when you look at today and the inflation print, how important is it to you?
It's important for the next 24 hours. I mean, right now, I think you mentioned at the front of the show that the Fed funds futures for September is pricing in basically a 50-50 chance of a rate hike or staying pat. But I'd also remind investors that we have, Jackson Hole in August. We have another PCE report. We have another CPI report before the next Fed meeting as well, and then another employment report. What's also unusual is, the employment report, was negative on the headline. And again, there's a lot of factors behind that. It probably was overstated, but it would be very unusual for the Fed to raise rates historically when we've seen a negative print within 2 months of a Fed meeting. But again, there was some distortion. So I think that next employment report will be saying, like, this is the most important employment report of all time, right? So again, to your point, in the near term, what rates do and the reaction to it, but there's a long way to go between now and the actual Fed meeting.
This is an increasingly data-dependent market, given the fact that there's not a lot of forward guidance coming from this Federal Reserve Chair. I am curious whether you think the pendulum has shifted back to fixed income. For a while, it seemed like equities were very much in the driver's seat with respect to returns. At this point, though, yields have gone up significantly, and there are more questions about perhaps being surprised to the dovish when it comes to both the Federal Reserve as well as some of the economic data. Are you leaning into bonds a little bit more?
So we're still overweight equities overall, but we would be leaning into bonds here as well for fixed income investors. And I think maybe just as a starting point, with that higher income or that carry that we're seeing really provides quite a buffer for investors. We kind of stress tested and say, okay, let's just say that yields move up another 50 basis points on a 1-year forward basis, on a total return basis for fixed income investors, say buying the 10-year U.S. Treasury, you would still have a positive return. It would be somewhat small, but if instead the market or the interest rates are flat to down, then the upside becomes a lot more attractive. So in our mind, the risk reward is actually improving for fixed income here. We still think, listen, if we have a dovish number, that would probably be better for equities as far as the overall return. But I think we would be leaning into fixed income, at these levels.
Really quickly here, Keith, how much are you watching Japan to understand just how disruptive things could get in the bond market, given the fact that the currency has basically given up a significant part of the intervention, and we're not getting a clear signal on whether either fiscal authorities or monetary policy authorities in Japan will take action on their end?
Yeah, I think it's important. We're also seeing this kind of global yield story, so I don't want to be myopic by just looking at the U.S. And I mean, I think it was a couple of years ago where we saw in August the yen cause at least a short-term hiccup in the market. So I think it is important. I think it can certainly add to some swings in the market. I don't think it's the main factor for the overall market. I do think that if it gets if we see some jitters there, I think that we'll see not only Japan, but also the U.S. step in to kind of cool that down. So I think it's going to come ultimately back to earnings and then obviously this Fed meeting in September.
Keith Lerner of Truist, thank you so much for being with us this morning. And AMH, there was a story this morning about the relationship between Scott Bessent and Sanai Takaichi over in Japan. A question around at what point the U.S. will stop bolstering some of the efforts in the currency over in Japan if there are not commensurate measures with hikes potentially from the Bank of Japan sooner and potentially some financial constraints on the fiscal side.
Right, and this prime minister wants to definitely see a growing, productive economy, probably a little bit nervous for the BOJ to potentially hike those rates. But there was a story in Japan over the past 48 hours that it was conditional for the United States, and this is according to their report of Kyoto, conditional for the United States for them to intervene, that the BOJ would have to lean in and saying it was a possibility that potentially as soon as September we could see rate increases.
I wonder how hard the resolve is going to be if Japan truly does start selling down some of their $1.1 trillion of treasuries. Right now, let's get you an update on stories else for this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Good morning, Lisa. CoreWeave shares surging in the pre-market after its earnings showed strong demand for AI infrastructure. The company reporting its fifth consecutive quarter of record revenue and a sales backlog of $104 billion. The International Energy Agency estimating oil inventories will fall at more than twice the rate previously expected for the quarter. The agency's latest report saying crude markets face a shortfall of 1.8 million barrels a day as fighting in the Middle East and shipping disruptions undermine production. And President Donald Trump confirming a report that security officials ordered him to secretly switch planes after the NATO summit in Turkey because of a threat to his safety. The threat triggering an elaborate ruse that saw the president hiding in an airport catering van before being transferred to a different military aircraft. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, claiming control over Hormuz.
Iran is going fine, going just absolutely fine. We have total control over the Hormuz Strait right now. They don't have control. At some point, maybe they'll do something and then they get blown away.
Former Deputy National Security Advisor Victoria Coates joins next. This is Bloomberg Surveillance.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Equities trying to snap a two-day losing streak with optimism coming from the AI sector. You're seeing that lead coming from the tech area. In the S&P, futures up about 0.3%, getting a reprieve. Broad-based earnings seeming to triumph over concerns about the Middle East. With oil prices, you're seeing oil prices fall just a touch, but still highly elevated, as well as concerns about what the Fed can do. You're seeing 10-year yields down 2 basis points, helping to alleviate those concerns. 4.67% ahead of an auction at 1 p.m. and ahead of that CPI data coming out in about 2 hours' time. Meanwhile, the dollar kind of meandering here. Key focus on the yen after the intervention. When you take a look at the optimism coming from risk assets, CoreWeave and Supermicro really illustrating just how much people are getting enthusiastic about the demand coming for some of these services. CoreWeave in particular, a neocloud being serviced or being rented out to a number of hyperscalers and other companies looking to expand their sales by more than double and expand their services. It's clear, Emery, with their shares up almost 19% in pre-market trading, people not exactly writing this kind of story off.
Oh, definitely not. And I think two of the most important numbers, the backlog that everyone looks at, that was at $104 billion at the end of the quarter, and they inked more than $25 billion in new customer commitments after this period ends. So the rest of the year is looking, at least next quarter, is looking pretty bright for CoreWeave.
And this gives to the optimism despite the uncertainty ongoing in the Middle East. Under surveillance this morning, claiming control over Hormuz.
Iran is going fine, going just absolutely fine. I'm the last person to trust Iran. They've lied to me constantly. We have total control over the Hormuz Strait right now. They don't have control. We have total control. We own it. And at some point, maybe they'll do something and then they get blown away.
Here's the latest. Brent crude whipsawing after 5 days of gains as the diplomatic standoff between the U.S. and Iran dims hopes of a deal on the Strait of Hormuz. Bloomberg's Tyler Kendall joins us now. What's the latest in this area?
Hey, Lisa, good morning. Well, there are some signs that diplomacy is underway, but at least publicly, the two sides are digging into their positions. As you heard, President Trump says that the U.S. has control over the Strait of Hormuz as the military does continue to enforce its naval blockade. We heard from the U.S. Energy Secretary Christopher Wright yesterday, who said that the 7-day average for flows out of the strait is sitting around 9 million barrels per day, though that is higher than most traders' estimates. As new overnight, and you mentioned at the top of the program, we heard from the International Energy Agency saying that global oil inventories will tumble this quarter more than twice the rate previously estimated. Because at this point, there's been very little indication Iran is backing down from its threats to global shipping, not just in Hormuz, but new today, we got confirmation from Yemen's government that at least 6 people have died in a Houthi attack in the Red Sea. That includes 3 Pakistani nationals, as we also got confirmation that Pakistani officials are in Iran to continue these negotiations, but we've got very little indication on what a potential breakthrough will look like. Lisa, a senior U.S. official, does tell us that at this point, President Trump is not in a rush to make a deal, saying that he is confident that economic pressure as well as factions within the Iranian government will ultimately lead to the country tipping its hand.
Tyler, I'm also curious, just briefly, the story that seems to be gaining steam about President Trump sneaking out of Turkey onto a plane that was not Air Force One on a food delivery truck. What the significance is of this? Yes, it would make a great scene in a movie, but on a broader level politically, why is it gaining so much steam?
Lisa, there's so many threads that we could pull on this, one including that it underscores the threat assessment that the U.S. government currently has when it comes to President Trump's safety amid ongoing threats from Iran as the conflict continues to drag on. We did hear from President Trump yesterday deflecting criticism about this remarkable reporting that Air Force One, filled with White House officials and journalists, was essentially used as a decoy to help get him out of Turkey after the NATO summit, coming just days after the U.S. decided to continue to strike Iran amid attacks on shipping in the Strait of Hormuz. I grabbed the quote. President Trump told reporters, quote, "I do what they say," in reference to the Secret Service and the military that essentially demanded him to swap planes. Lisa, we should add, Bloomberg has not confirmed the details of the Post reporting, though it is raising these broader questions, including the safety features on that Qatari jet that President Trump would like to use as his main mode of travel.
Tyler Kendall, thank you so much for that. We'll see you in a bit. To build on welcome this conversation. Former Deputy National Security Advisor Victoria Coates writing, I think there's every reason to believe that Iran will blink first for the simple reason that they're running out of money. This isn't about them feeling pain. They're well past that stage. Victoria joins us now for more. Victoria, thank you so much for being with us. I want to start on that story of President Trump getting snuck out of Turkey on a food delivery truck. What do you make of this in light of some of the threats on the president's life, as well as some of the unprecedented nature of some of the moves that his security staff have taken?
Well, good morning, Lisa. Good to be with you. No, this is a very obviously sobering story, and it does, as Tyler was reporting, it sort of has every element of drama in it. So of course people are talking about it, but the fact of the matter is, whoever leaked this is, essentially committing treason to try to make the president, look like he's in danger, look like he's weak, and he's not. It's not that this sort of thing happens all the time, but it does happen. And just one technical point, that plane is no longer Air Force One if the president isn't on it. Whatever plane the president is on is Air Force One. So that plane no longer was. The idea that it was decoy is also sort of ridiculous. When you work for the president or when you opt to travel with the president, it is made very clear to you that your safety is secondary to his. And it is an honor to be able to have those opportunities. But it's very clear that the priority of the military and the Secret Service is going to keep the president safe. And that's what they did. And I'm glad for it. But it also is a very stark reminder of who our enemies are and that he is constantly in danger.
So I'm not sure if it shows that he is weak. It shows that there was likely a credible threat in his life. Do you agree?
Oh, absolutely, Emery. Yes. This whole thing, he ducked into a catering truck. It's all over. Former Biden administration officials are sort of tweeting about this and how it makes him look old and foolish and weak. It doesn't. This is a very professional organization, the Secret Service, and their priority, as I said, is to keep the president safe. And I'm glad that they did it.
If the threat of his life was so severe that he had to do this, is it appropriate for the President of the United States to put his staff and other Americans, the press corps, and other individuals like members of the Secret Service, staff of Air Force One, in danger?
Well, I don't think he put them in danger. I think if they were in danger, the Iranians put them in danger. And as I said, Emery, and you know this, you've traveled with the president, everyone makes it very clear to you that your safety is going to be subordinate to the president's.
But traveling with him, we know where he is also at all times. The press was not briefed on that.
Necessarily true.
Well, you see him enter a plane, you see him exit a plane. The press were told specifically that they need to shut their blinds during this.
Oh, right. I flew into Baghdad with the president in 2018. We kept our blinds down from Germany to al-Assad. That's not unusual.
Victoria, I am curious about the state of play right now, what we're seeing in Iran and what the stalemate is that people keep talking about. Do you see anything emerging that is a path to evolve out of this stalemate, or is this an acceptable kind of new normal to bleed the Iranian economy, given what you were saying before, which is they're well past the point of just feeling pain?
Right. And I think it's really important, Lisa. Nobody should have any illusions that the Iranian regime cares one iota what is going on in the country in terms of the pain to their people. So, when we think in the United States about, gee, we really don't like people paying $5 a gallon for gas, we're going to take action to try to mitigate that. Nothing like that's happening in Iran. They don't care. But what they do care about is their ability to keep paying the IRGC, that 1/3 of the Iranian military that's particularly loyal to the regime. They want to be able to keep paying the Basij, which is their security force in country, Chinese trained essentially, to keep control of the Iranian people. When they start to run out of money to do that, they're going to have a real problem. They're already cutting back on food subsidies, energy subsidies, and that's going to cause a lot of unhappiness among the Iranian people. But the core thing is they're being able to keep paying their control apparatus. If they run out of money to do that, and that's where they're headed at this point, then they really might lose their grip on the country. And I think that's what everybody really would like to happen, to have a sort of systemic leadership change in Iran, hopefully a managed process, a little bit more like a Gorbachev process, if you will, rather than another 1979 chaotic revolution. But that, make no mistake, that's what's happening to them. And there's really nothing they can do to reverse that, absent significant assistance from the outside.
Former Deputy National Security Advisor Victoria Coates, thank you so much for being with us this morning. A real question about the battle of which potentially will be the pain point that gets hit first, either what's going on with Iran or the barrels of oil that are getting depleted from some of the stockpiles globally.
And when it comes to negotiations, I was reminded recently there's a reason why the JCPOA took 20 months, and not all of it was because the material was so hard to negotiate. Give the Iranians an inch, they take a mile.
Coming up, we're going to be talking with Norway's Nicolai Tangen as the country's sovereign wealth fund posts record returns. That's coming up next. This is Bloomberg.
How do you see AI changing gaming and game development in the future?
Look, I think the biggest thing that I'm thinking about is how do we just make sure it's solving problems. On the game development side, I've gone to a lot of our studios, whether big and small, and I'm blown away with how they're using AI in the production pipelines, how they're using it for iteration and prototyping. That's not production ready, there's still work. And so, 30% of game development is software, and so there's the traditional applications that we see in enterprise. At the same time, I do not think AI will replace AAA games. I think it's entirely possible, though, that AI represents a new category of games and a new type of development and enables more people to create and participate. And we'll keep an eye on that, and we'll see how we best serve that.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Regaining momentum on the heels of better than expected tech earnings. We're seeing that pop really come through the tech-heavy NASDAQ index in particular, up now 0.7%. We're seeing up 30% on the S&P and 0.2 on the Russell 2000. Some of this optimism is also coming from the bond space, 2s, 10s, and 30s, seeing a bid into bonds, with some people saying maybe this has gone too far. Yesterday, we actually did find a buyer for 30-year treasuries, so maybe that was a sign of what's to come. Down 2 basis points on the long end, 1 basis point on the front end, ahead of what we're going to be getting at 8:30 a.m. Eastern time, which is that U.S. CPI print. More importantly, though, what is going to happen with oil? Because right now it is quiet there. quiescent when we get this sort of sense of a stalemate. That could change, as we saw yesterday morning, very quickly. 3 hours away from the cash open, here are your morning movers with Vonnie Quinn. Vonnie.
Well, Lisa, there's a common theme with all of our movers today, and that, of course, is the massive and robust AI build-out. So let's start with Supermicro Computer, up more than 8% in the pre-market. It delivered strong and gave a forecast that beat estimates. A huge mismatch between what the street was expecting, what investors were expecting, and what Supermicro actually delivered. And as you can see, getting awarded today. Now, Supermicro obviously in a great position to be able to deliver NVIDIA-powered servers into the market right now, which is very, very cheering to this market. If you look at our next company, we also have a neocloud. CoreWeave, it's one of the few neoclouds that are publicly traded in this market, up 18%. Now, obviously, this is a massively volatile stock. Sometimes it trades like a meme stock. But for 5 quarters in a row now, it has beat revenue estimates. The only thing is, the previous 4 quarters, the stock actually plunged after the earnings report. This time, investors are rewarding this company. It's back on an upswing, having had several weeks of being on the downward slide. And it seems to have just really gained investors' trust once again. Expect a halo effect on some of the other neoclouds after that. And then we look across to South Korea, and as you can see, ADRs already trading higher. In the Korean session, SK Hynix was up 5.5%. I know you're speaking with the Norway Sovereign Wealth Fund CEO, Nikolai Tangen. Well, in Singapore, Temasek, which is also quite well regarded, reports were that they are planning to invest more in SK Hynix and also Samsung. Bloomberg News got in touch with Temasek, and it said it already invested in some of these companies 2 years ago for the first time, and it doesn't actually look to the South Korean government for any advice on when to invest in SK Hynix or Samsung. But certainly, we're at levels now, having had that sell-off in South Korea, that SK Hynix was at last back in May or even April, so it might be a good time for the Sovereign Wealth Fund to get in, and of course, that's causing the stock to rise as well, with lots of trust in this company, Lisa.
Thank you so much, Bonnie. On our radar this morning, CoreWeave shares surging. The computing company boosting its outlook and reporting a backlog over $100 billion. That's in addition to more than $25 billion in new commitments for the third quarter. Global oil inventories plunging at more than twice the previously estimated rate. The IEA's monthly report finding a 1.8 million barrel per day shortfall, driven by the recent flare-ups between the U.S. and Iran, not moving much on the crude space. President Donald Trump confirming he covertly switched planes last month, departing the NATO summit in Turkey.
I go by Secret Service and the military. They wanted me to go on a different flight, a different plane, equal safety, but they wanted me to do it, so I do it. I do what they say.
The president making the switch from the new Qatari-gifted Air Force One to the original model after assassination threats from Iran, being transported from plane to plane in the airport's food catering truck.
There's a lot of questions surrounding this. Also, if there was a real credible threat on the plane that the president did go up the stairs for before he was snuck out, then why wasn't individuals on that plane alerted? And why potentially did that plane even take off? As you can imagine, the Democrats in Congress want answers. I imagine some Republicans too. Senate Democratic leader Chuck Schumer said the Senate should be immediately briefed on the Iranian threats against the president, the extraordinary measures taken to get him out of Turkey, any risk posed to U.S. personnel, any threat to the homeland. We also need to understand how serious is the credible threat to the president's life right now by the Iranians, because this story is not going away.
Yeah, and something that clearly is simmering given the stalemate conversations that people keep having. This is the backdrop as you see oil prices kind of hovering near people's minds as they look ahead to the CPI print at 8:30 a.m. amid otherwise a really optimistic feel in markets. Norway's $2.3 trillion sovereign wealth fund posting a record first half of the year with a return of more than 9%, gaining $185 billion. The results following a stark warning from Nikolai Tangen, the CEO of Norges Bank Investment Management, which supervises the fund, that its entire value could potentially vanish in a future market crash. Nikolai joins us now for more. Nikolai, are you feeling good after a quarter, after a half of a year like that? Or are you feeling more bearish that potentially this is luck and could potentially all disappear with the snap of a fingers?
Well, it's a combination of the two, I guess. The first half was very, very strong results. Actually, the biggest in monetary terms we ever had. And of course, after a rally like that, you are a bit more nervous, a bit more conscious about all the dangers out there.
At the same time, are you seeing sort of peak returns right now, given some particular risk that you're worried about in the second half of this year? Not necessarily like a catastrophic market disruption, but just whether it's inflation, whether it's concentration risk. Is there something on the horizon that's giving you pause about just how good it can get going forward?
Well, it's a combination of several things. I mean, the fund has had an extraordinary backdrop for the last 30 years since it was set up. It's doubled over the last 4 years, right? So these are just incredible return numbers. And we are seeing a lot of reasons to be really cautious. We are seeing, AI valuations. We are seeing geopolitics. I think there are a lot of reasons to be cautious going forward.
Almost 55% of the fund is now focused on U.S. investments, and a lot of people have raised concerns about diversification risk. You've said that there are limited options to really deal with this concentration risk. However, on the margins, are you looking for ways to diversify, concentrate more significantly in Asia, or offset some of the risk tied specifically to the United States in a more significant way?
Well, it is very interesting. The concentration risk is now such that the largest 10 holdings only account for nearly 25% of the value of the fund. And so we've never seen a concentration risk like that. We also saw, for instance, in the first half, the 10 biggest contributors to the gains. Of those, 9 were related to the chip sector. Then there is an ongoing kind of process taking place now in Norway where they are looking at potentially diversifying the fund, and so there is a process going on there, and we'll see where we end up.
You said in the past 24 hours, I want to contribute to our mental emergency preparedness by asking the question, can the oil fund disappear? What are you preparing for potentially? You basically are saying the entire value of this fund could vanish if the market crashes.
Well, it's interesting. It's just that when you look at history, no national wealth has ever lasted. Big accumulations of wealth, they always disappear. And we just need to be prepared for a day where the value of the fund is lower. And so expectation management is an important part of what we do, and that's what we're doing now.
Right. So as you prepare that portfolio for potentially this, maybe a black swan event, what you're concerned about, how are you hedging?
Well, so that's the thing. When you are a very large fund like we are, we own between 1% and 2% of all the equities in the world. There are limits for how you can hedge this out. And also, of course, over time, a very good place to be invested is to be broadly diversified across the world. And so that's what has been the reason for the success historically, and is how we're going to run going forward. But when you are fully invested like we are across the world, you also need to be conscious of the fact that, things go up and down, and it's important to signal that to investors and the other stakeholders of the fund in Norway.
Nikolai, you said that you're conducting a review for how to diversify potentially away from U.S. concentration as well as AI concentration. What are some of the options on the table?
Well, there are a whole range that you can diversify. I mean, as I said, this is a process taking place now, and one of the reasons why the fund has been great is because the main decisions are broadly anchored amongst the political parties, and this is then a process that has been started, and we'll see what comes out of it.
One thing that you've been really vocal about is the deployment of artificial intelligence within the fund to help with decision-making, reviews of QSIPs, given the fact that it's a $2.3 trillion fund. It's quite large, and I imagine that you can benefit significantly from the efficiencies of scale. How significantly has it changed the way that you do business and, frankly, the returns, just the capital expenditure that's required for portfolio management?
Oh, it's been huge. It's been incredible. I mean, we have a podcast where we interview the leaders of the main companies in the world, and we very early on had the leaders in the AI industry, and we realized just what an incredible thing this was. And so we 3 years ago started big time implementing it with pressure from the top, the people we recruit, an ambassador system, force training, central AI team, and so we are all over it. And I think we, over the last year or so, have increased productivity by roughly 20%. It has helped us decrease trading costs and so on. So it's just amazing what it's done to the way we operate.
Nikolai, does that make you more optimistic about the returns from some of these artificial intelligence-related companies, investments, even just the broader market based on the efficiencies they could also reap from this technology?
Yes, for sure. I mean, it has led to a deeper understanding of what this technology can do. We can see why these companies are performing really well, because there is such a big part of society which hasn't even started on this transition. So that's for sure very optimistic. And I also think it is a deflationary force which will be positive for markets and has been positive for markets.
When do you think we'd actually see that deflationary force come into play? Because right now, in the short term, a lot of people say this is incredibly inflationary.
Absolutely. It is inflationary now. I think it will be deflationary as you get more knowledge for free, you get just efficiency in your workforce. And then, of course, you have the humanoids and the robotics coming in, over the next few years. I think it's going to be fantastic. I mean, just look at all the boring stuff we do every day. I mean, what is leading to divorce? Who is going to empty the dishwasher? Who is going to take the rubbish out? All these kind of things. We are just not going to discuss it anymore.
Okay, so AI potentially is very good for also individuals' home lives. But when you say potentially it's deflationary in the long term, do you think then central banks around the world could potentially wait it out?
I think that's a very important question, and it remains to be seen whether they are going to wait it out and accept more kind of temporary inflation, waiting for this or not. I think it remains to be seen. It will be very interesting to see what the various central banks, how they're handling this.
I do think that probably people will still argue about who does the dishes and potentially who takes the rubbish out. I am curious, though, about whether your belief, this being disinflationary, to build on what Anne-Marie was talking about, is enough for you to feel more okay with the glut of debt being sold to the long end of the yield curve, not only from governments around the world, but also some of these hyperscalers. Do you want to be a buyer of that, or does it start to concern you?
We have, for a long period of time, been concerned about the high debt levels in society among some of the larger countries in the world. It is a real worry. You never quite know when enough is enough, but at some stage there is a danger that people suddenly would want to be more compensated for taking on more of this debt. And so that's another of the things that we are really looking at.
To just sum up, Nikolai, do you ever expect a half of a year like the one that we've just seen with respect to returns for the Norwegian Sovereign Wealth Fund?
No, I think this is as good as it gets.
Nikolai Tangen, thank you so much for being with us this morning. Nikolai Tangen, Norges Bank Investment Management Chief Executive Officer on how artificial intelligence will save marriages worldwide.
Right. So I think you're right, though. Potentially, people would just argue about who is going to tell the robot to take out the rubbish, etc. Interesting point there at the very end. As good as it gets, he thinks that's where we are right now. Maybe in terms of the earnings, but maybe he's seeing it can get even better when it comes to things like your relationships.
Well, the irony here is for a long time, people were saying markets are not the economy. Markets are not the economy, and markets were far ahead of where economic growth was when it came to just the average rank and file. Is that switching? Are we seeing maybe the momentum in equities lose steam in favor of the economy catching up? And at what point do we end up seeing that dynamic take hold?
Well, I think that's the big question, especially when you talk about, as Nikolai was saying, about this disinflationary impact of AI. When is it? When will you actually start to see it?
Great conversation. I think I should really think about that robot. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, Bank of America announcing $250 billion in an initiative to invest in critical infrastructure across the United States. The investment is intended for projects including data centers, renewable power generation, and energy storage. It aims to support energy security, job growth, and economic competitiveness. In Wisconsin, moderate Democrat David Crowley is projected to win the gubernatorial primary. Decision Desk HQ says Crowley has 39.8% of the vote, compared to his opponent, Socialist Democrat Francesca Hong's 39.38%. Now that's all with more than 95% of the expected vote counted. And Decision Desk says 2020 election denier and MyPillow founder Mike Lindell is projected to lose Minnesota's Republican primary for governor to State House Speaker Lisa DeMuth. His loss follows an endorsement from President Donald Trump. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, depending on the data.
The Fed has some time to assess the next move, so one data point alone isn't going to be enough. The reality is the market is going to continue to price in hikes for now.
Veronica Clark of Citigroup, not one of those, and she joins next. This is Bloomberg Surveillance. Good morning.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Just 1 hour and 42 minutes away from the key data point of the week, CPI in the United States. Right now, markets seeing some room for optimism with both potential for disinflation on one side, with also the potential for some really good earnings from tech companies. S&P futures up 0.3%. We're seeing right now yields lower by 2 basis points on the 10-year, which is notable, 4.67% rounded up. A real question heading into the $42 billion of 10-year notes being auctioned today at 1 p.m. Eastern, and Brent crude getting a little bit of a breather, but still a real rally over the past couple of weeks as we've seen the conflagration continue to simmer under the surface. Right now, we are about to get that data just less than 2 hours away, with a real question about what it means if we do get core inflation coming in at the lowest rate since March of 2021. Under surveillance this morning, depending on the data.
It is an economy that's overheating to the extent that the Fed needs to be taking aggressive action. Inflation expectations are very benign. The Fed has some time to assess the next move, so one data point alone isn't going to be enough. The reality is the market is going to continue to price in hikes for now.
Here's the latest. Boston Fed President Susan Collins telling the Financial Times she would back a rate hike next month as long as inflation remains high. Traders pricing in a roughly 50% chance of a hike ahead of today's CPI data due at 8:30 a.m. this morning. Veronica Clark of Citi writing, upcoming CPI releases should make it clear that inflation measures continue to ease and are not far from levels consistent with the Fed's 2% target. Veronica joins us now for more. Veronica, great to see you.
Good morning.
The alphabet soup, it actually matters right now because when we talk about disinflation, it's coming in certain areas more than in others. And in the Fed's preferred measure of core PCE, even if this is a weak reading, we could potentially get hot components going into that. How are you looking at today's CPI print?
Yeah, it's a really interesting one because we have seen a lot of disinflation in CPI for a while already. I think it's 14 of the last 15 readings have been at or below consensus for core CPI. But yeah, you're not seeing that in PCE. Of course, we'll take all the details and add it all up and see what we get for PCE. But I do think it's true, and it has been true for a while, that core PCE is a bit the outlier. Even if you look at some other measures that use PCE data, the trimmed mean, the Cleveland Fed median PCE, those are all pretty consistently slowing. They're not far from where they were in 2019. And then we do have to remember that PCE is going to get some big revisions in about a month. And so I do think it's important to take with a grain of salt the signals that we're taking from core PCE right now.
Yeah, which some people are raising some issue with. Does it matter where inflation's coming from?
Yeah, of course. And it is interesting, this divergence between PCE and CPI. And the fundamental way you can kind of read that is CPI are the goods and services that people are spending on out of pocket. So if that's telling us something about consumer demand, we're not really seeing the inflation there. The sticky elements of PCE are the things that might get revised. They're the imputed prices. They're things like medical services, which the government or insurance pays for. So if you're trying to see what are those consumer demand pressures on inflation, CPI is maybe your better measure, and you're not seeing it there.
When it comes to the oil aspect of all of this, a lot of people thought potentially we would have a reprieve. We wouldn't still be in this conflict. At one point, does this really start to become entrenched?
Yeah, I mean, we've obviously seen the energy prices, those input costs rise. What we haven't seen yet is that passed on to the final consumer prices. You see it in some things like airfares. You do see inflation expectations that stay relatively anchored, certainly market-based measures. So I think that's a positive for the Fed if you started to see those rising. But I think for now, the dynamic is that you do see real income growth slowing. People are obviously spending more on gas and whatnot, and that means less to spend elsewhere. And so you're not really seeing it entrenched in those other prices yet.
What about the fact with the AI build-out, we are seeing higher energy costs, higher construction costs, higher component costs when it comes to chipflation?
Yeah, those are actually some of the components that are going to get revised in PCE, right? So we have to see what that happens. In some of the details of this CPI data, I am looking for computer prices, if those are higher. We had some recent announcements of some price increases there, but that's not really indicative of this broad-based inflation. That demand is too strong relative to supply kind of inflation that the Fed should care about.
It seems like we've reached some sort of stalemate over in the Middle East. That could change, but right now that's what we're hearing around the edges. And it seems like people are expecting oil prices to remain around here, maybe inflect a little bit higher, potentially even going as high as 150 at some point, but not to the point where you end up seeing the demand destruction that was kind of the curtailing factor earlier in the summer. How do you price that in? Does that change your view if this is the new normal?
Yeah, it's really hard to know. I mean, we have not seen the pass-through yet, right? What I'm ultimately focused on is what does that do to final consumer selling prices? And yeah, we have not seen that pass-through yet. Maybe it just takes more time, and if people come to expect that prices remain high, then they will pass on more of that. But businesses, as much as they might want to raise prices, it does depend on their ability to, and the ability of consumers to pay more. And I think that's what we have not seen yet. You see that in some survey data, which is even very different than last year.
At the same time, we have seen the pass-through when it comes to airlines and the fares there. We have seen pass-through when it comes to all of the hotels and cruise lines, and everyone has been reporting who've been able to offset the increases in base costs. I'm looking right now at diesel. It's at $5.36 right now on average, still incredibly elevated. I mean, isn't it possible that this actually does have an ongoing effect that takes away what we saw in the prior reading?
It's absolutely possible. Yeah, we might just have to wait longer. Maybe it's that businesses have to draw down the inventory that costs less to ship, and the more expensive inventory at some point starts to show up on shelves. That's kind of what we saw with the tariff effects. But so far we haven't seen that, and I do think what we can say about airlines, right, airfares for instance, is this is a very different pass-through than say even 4 years ago, right? Consumers just much less positioned to be able to withstand those higher prices now.
Veronica Clark, wonderful to see you. Thank you so much for being with us today. Veronica Clark there of Citi, and this is sort of what people are looking at, is if this is the new normal, the inputs at some point will either bite or people will stop buying as much, and that will lead to a slowdown in growth.
Boston Fed President Susan Collins was talking about this with the Financial Times, especially in her region. Of course, higher crude prices means higher heating oil. That is incredibly important for the winter in New England and also potential electricity demand. So she is saying she is seeing those rising costs right now, and it's businesses and consumers that are coming to her and saying inflation is just too high.
At the same time, we did see the NFIB Small Business Optimism survey come out yesterday at an 11-month high. So the push-pull continues. The higher oil prices definitely hitting more in Europe, with yields that have been climbing significantly more. And the reason why an increasing number of people still are looking at the U.S. as the place to be, simply because the offset is greater in terms of growth. This is a much bigger problem with Europe, especially with the heat, especially with the drought. And now everyone's talking about the solar eclipse.
Yeah, yeah, everyone is talking about the solar eclipse. I'm not sure if that's a problem right now exactly for Europe, but they are definitely more vulnerable when it comes to higher energy costs.
Yeah, well, the solar eclipse, it prevents them from getting solar energy for a couple of hours, or at least a couple of minutes. Coming up in the next hour, less of that, more of this. Eddie Arteni of Arteni Research, Jessica Taylor of the Cook Political Report, Amanda Lynham of Goldman Sachs, and former Philadelphia Fed President Patrick Harper. This is Bloomberg Surveillance. Good morning.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
At any point in your tennis career, did you say, I've had enough and I'm just going to retire at the top? You ever worry about that problem, staying too long?
It's a great question, and it's one that I think every athlete finds a different answer to. Mine came a little bit later than when I would have liked. I think stubbornness was a great quality that shaped a lot of my victories, but in the end of my career, I think it became a flaw because I was so stubborn to get healthy, for my shoulder to recover. I was also at an age where just my body didn't recover as quickly. And so for a year or two, that stubbornness got in the way of other great things in my life.
What would you say is the thing you're most proud of having done as a tennis player? Was it winning Wimbledon? What was the highlight of your tennis career?
I'd say consistency. I think consistency is, you can have results and they could, come at various times in your career, but I was consistent for many years, and you have to show up. You don't just show up to play first round of the finals, but you have to show up for press conferences before every match, before every tournament, and just the consistency and the mental wear and tear of showing up week in, week out. So I felt like I consistently showed up for my team, for my sponsors. As I look back, I'm proud of that.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Sorry.
Seeing this really concentrated growth, really concentrated investment in AI.
AI is a place you need to be selective.
It's not just the Max 7 and the hyperscalers that are driving the market.
Volatility is relatively muted.
A lot of the momentum in July has come back into the market.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to the second hour of Bloomberg Surveillance, with stocks holding on to gains as corporate earnings continue to deliver. Oil the sticking point. Prices fluctuating this morning in the face of a potential stalemate in the Middle East. Questions about who holds it right now in terms of the power. And the U.S. CPI report due in about 90 minutes, with traders pricing in the chance of a September rate hike, is essentially being a coin flip. And frankly, the view on exactly how important this inflation read seems to also fluctuate guest by guest.
That is very true, but it's also because we're going to get a number of other data points before the Fed meets in September. So we really need to see by the end of the summer, and after, of course, we hear from Kevin Warsh at Jackson Hole, which I know you'll be at, then probably understand a little bit more of what the September Fed meeting actually looks like. But it was another day when you heard from another Fed official when it comes to Susan Collins having this concern about what consumers and businesses are telling her and individuals in her district about just that they are concerned about inflation and prices are just too high.
On the other hand, we're expecting core inflation to come in potentially at the weakest going back to March of 2021. People are talking about how, depending on the metric, we are getting closer to the Fed's target. So here comes the question. Is it just a matter of time that we're running out of it to get back to that target after more than 5 years? And that is going to be enough for Fed officials to really make a move in September, especially given the ongoing pressure coming from the oil space.
And as you mentioned the last hour, what the IEA had to say in terms of the inventories being drawn down around the world. If this continues in terms of the conflict, and we are losing those barrels every single day coming out of the Strait of Hormuz and relying on those inventories, potentially you're going to see higher prices.
I love that chart. CPI, PPI, PCE, CPI, PPI. It's hard to do. It's good nursery rhyme. Right now in markets, you can see a sense of optimism coming through after what we got yesterday with CoreWeave and Supermicro, led by that tech sector, up 0.7%, up 0.25% in S&P futures. In the bond space, interestingly, that disinflationary hope and dream coming to play a little bit, although fading throughout the morning, a bid into bonds, even at the long end ahead of the auction later today. 10-year yields 4.67, 30-year yields 5.22, that 2-year yield hovering around the 4.2 level. And in the crude space, blink and you'll get another direction this morning. It seems to be hovering, fluctuating between gains and losses, $88.98 on Brent and $83.36 on crude. Coming up this hour, the biggest bull on Wall Street, Ed Yardeni of Yardeni Research, as stocks look to snap a 2-day decline. Amanda Lynham of Goldman Sachs, NVIDIA eases AI debt concerns, and former Philly Fed President Patrick Harker looking ahead to today's CPI report. We begin this hour with stocks gaining as the AI spending boom lifts CoreWeave. Ed Yardeni of Yardeni Research raising his year-end S&P 500 target to 8,400, remaining the most bullish on Wall Street, writing, AI demand looks real to us, but its skyrocketing growth will decelerate eventually. When it does, investors will likely stop pricing AI as one trade. Ed, I am so glad to say joins us this morning. Ed,
Thank
great
you.
to see you. So let's start there.
Sure.
This is something that we were struggling with a little bit with Nikolai Tangin in the last hour, where on one hand, he's bullish AI and seeing a lot of productivity gains.
Sure.
On the other hand, he's saying this is as good as it gets when it comes to market returns. Do you feel the same way?
No, I think the market's going higher, and I think it's going higher on earnings. As a matter of fact, I felt the need to coin a new acronym, which is FEMO, Fabulous Earnings Momentum. We all know about FOMO, which is kind of, it's nice while it works. FOMO is fear of missing out. We saw that in the 1999 melt-up situation, is don't bother me with earnings. I just have to be in this internet concept. And this time around, the valuation multiples kind of stuck around 20. That's not low, but it's not terribly high as long as the economy is growing. But it's earnings that have really been phenomenal. And some of that has been mark-to-market capital gains on SpaceX for Alphabet and Amazon. But take that out, and you basically have 25% increase in earnings in the second quarter, and about the same in the third and fourth quarters. So yeah, I've been bullish on earnings, but not bullish enough.
That seems to be.
Analyst, you said I'm not really the bull on Wall Street. It's all these analysts who talk to companies, and the companies are bullish.
So the companies are the big bulls on Wall Street, not Ed Yardeni. I am curious, though, about what we have seen with performance of the equal weight versus the market cap weight. And that has been a shift this year versus previous years, where the outperformance has come from the broader market. We were talking before about how the market seemed to be outperforming the economy for a number of years. Is that shifting, or now we're going to see the economy, the rest of the economy, outperform the market?
Well, there's sort of a view that the stock market is not the economy, but it is, because it's PE times E, and E is earnings, and earnings are driven by the economy. And so I think the resilience of the economy, the strength of the economy has been demonstrated in the earnings, and the earnings are driving the stock market higher. So with regards to your point on, I call them the impressive 493. You know, you have the Magnificent Seven that did very well for quite some time, and now they've actually, so far this year, significantly outperformed the impressive 493. And I think it's because people have AI fatigue. It's like, oh God, I can't really figure this out anymore. You know, these stocks go up 20 bucks, down 20 bucks. And so I think people are just kind of taking an index approach to AI, not knowing exactly which stock to buy. And meanwhile, they say, well, who's the sure beneficiaries? And I think they're finding lots of ideas in financials and healthcare and industrials that are very, we understand their businesses, and we also know that there's a good chance that AI could help.
When you talk about going up $20, going down $20, this is exhausting, this sort of single name volatility. Is that part of a problem with respect to the amount of leverage that's being used in specific sectors and specific funds? And I'm wondering, even just with the debt profile and the investment that's going on, a lot of this is coming with leverage. Does that worry you?
Not terribly, in the sense that this is not a new development. We've always worried about margin debt. We're always worrying about credit, and rightly so, because the credit markets tend to see problems before the stock market, and we saw that certainly in 2007, 2008. So the debt is always an issue. Especially if it goes bad and you have a lot of defaults, and then you get a credit crunch, and then you get a recession. I don't think that the problems in the debt markets, we're seeing the hyperscalers bond yields of the spreads over treasuries have widened a bit, but they're still able to raise money. And now NVIDIA came up with this idea that let's call in all these top financial people from the Hamptons, put them in the Hamptons jitney, bring them in, and talk about $500 billion of financing. So, NVIDIA basically said, okay, you're worrying about financing? Watch what we have to say about how we're going to do $500 billion. I don't know, it was a little hype. I mean, it was, it was all done with a memorandum of understanding, and we know how well those things are going these days.
I love that you think they came in via the jitney, but what's funny about this is that if you think that is hype, and that's basically just NVIDIA trying to basically quell some of the concerns out there in the market. Then does that make you a little bit nervous, actually?
Well, I think that AI is a fundamentally important technology. It's not a revolution, it's actually an evolution of the digital revolution that started in the mid-1960s with IBM mainframes. And the whole point of the digital revolution is to process as much information as we possibly can, as fast as we can, as cheaply as we can. AI is just the latest progression of that. Next will be quantum computing mixed in with AI. And there's a lot of positives in all that. There's negatives. Some companies will flourish. I mean, for a while there, people thought, cybersecurity is software, let's get out of the software, let's get out of cybersecurity. And then all of a sudden they come right back in, realizing that as AI gets quote unquote smarter and smarter, we're going to need more and more cybersecurity protection.
You say in your note that you've been bullish on earnings, but not nearly as bullish as the recent consensus of industry analysis, and that's what you said to us as well this morning. So is your price target even high enough for you? Do you think you're going to have to come back and reprice?
It's possible. I mean, look, I was thinking that the market would be discounting $375 a share at the end of this year for next year. Now I've raised that to $415 a share for next year. And so by the end of the year, if the analysts are still talking about something like 415 for next year, and they're already talking about 408, so we're getting there. 415 times a little bit over 20, and you get my new target of 8,400. Now, I did keep my 10,000 for the end of what I call the roaring 2020s, by the end of 2029. Even I get kind of confused about the decades here, but we're in the 2020s. It's gone well, and I think by the end of the decade we should be looking at 10,000. I'm not raising that, but I might.
How much is inflation a constraint? And by inflation, I don't just mean the CPI print that we get in about an hour and a half, but also what that does to bonds, given all of the spending globally.
Well, look, the CPI is widely expected to be, on a core basis, up 2.5% year over year. It's important to realize that the consumption deflator, which the Fed tends to watch more closely, according to the Cleveland Fed's now inflation forecasting, that's expected to run like 3.3%. So the Fed chair, Kevin Warsh, came in and in June said, I am committed to price stability. We've had inflation too high for too long, over 5 years. In July, he said it again, and the bond market seemed not particularly satisfied with that, because it's like, what are you waiting for? So maybe he's waiting for the CPI, maybe he's waiting for as you said, there's a lot of data that's going to come out.
Yeah, I am curious, though, about the bond vigilantes, which you coined. Yeah. Are they back when it comes to the 30-year note?
In Japan.
Well, they're coming back globally, given the fact that...
They're coming back globally to a certain extent. You know, I don't really get freaked out by bond yields between 4 and 5%, the 10-year between 4 and 5% in the U.S. And the reason for that is, people keep talking about higher for longer, implying that the rates should go down at some point, that they're too high. This is normal. 4 to 5% is where we were before the great financial crisis. It's where we were before the inflation of the 1970s. I think it's a testament to the fact that the economy is doing well, and 4 to 5% is an indication of that.
Ed Yardeni, wonderful to see you as always. I can speak with you all morning. Ed Yardeni of Yardeni Research here in New York. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. President Donald Trump says the U.S. has total control over the Strait of Hormuz and that Iran would get blown away if they took action. Trump's comments coming after Pakistan's defense minister told reporters in Islamabad that the two sides were close to some sort of arrangement over Hormuz. Shares of Tata Motors falling in Indian trading. Tata Group's chairman announcing he'll step down when his term ends in February of 2027. The decision follows a nearly 12-month boardroom battle with Noel Tata, who wants his son to play a more prominent role in the company. Supermicro shares up more than 8% in the pre-market. The company forecasting quarterly revenue that beat even the highest analyst estimate, also raising its full-year outlook, citing continued demand for AI infrastructure and its NVIDIA-powered servers. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, gearing up for November.
I have been telling you that this campaign was about the many versus the money. Well, guess what? The many just won.
Jessica Taylor of the Cook Political Report joins next. This is Bloomberg Surveillance. Good morning.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
After speaking with Ed Yardeni, it seems like everyone's getting a little bit more of a boost in the equity space. What we're seeing right now, a lift snapping a 2-day spree of losses. Right now up about 0.25% on S&P futures. Seeing yields lower down by 3 basis points almost in the 10-year, 4.66%, as we do get that data coming out in about an hour and 15 minutes, U.S. CPI. The expectation is that core is going to come in at the lowest level since March of 2021. But to quote Nikolai Tangen, is this as good as it gets for now, at least for the Fed? Over in Japan, it is quiet, at least for the moment, hovering around that 159 level on the dollar versus the yen. At what point do we get more action potentially from the Bank of Japan or from the Takaichi regime over there? And Brent crude fluctuating this morning, $89.04 on Brent. Under surveillance this morning, gearing up for November.
I have been telling you that this campaign was about the many versus the money. Well, guess what? The many just won. We are going to fight the corruption, whether it's in the White House or in the halls of Congress, because the grift has to stop.
Here's the latest U.S. primary election results shedding light on what's to come in November. Progressive Democrat Peggy Flanagan soaring to victory in the Minnesota State Senate primary, while moderate David Crowley is projected to win Wisconsin's gubernatorial primary in an upset over Democratic Socialist Francesca Hong. Bloomberg's Tyler Kendall joins us now for more. Tyler, can you give us a sense of what we've learned over the past 24 hours heading into November?
Well, Lisa, one of the things that last night's results tell us is that the intra-party fighting for Democrats is far from over. These, of course, were two separate races, but Francesca Hong's loss in Wisconsin does mark a halting in the momentum for Democratic Socialists after a string of victories in recent weeks. But we have to keep in mind, Hong failed to secure the endorsement of some prominent progressive figures in the party, like Senator Bernie Sanders, amid reported concerns about her viability as a candidate come the general election. Meanwhile, Lieutenant Governor Peggy Flanagan in Minnesota did secure those key endorsements, and there's now big implications on how both parties take last night and translate it into messaging ahead of the midterms. Flanagan, for her part, says that she will focus on the economy as Republicans face headwinds of their own. President Trump has a pretty significant and solid track record when it comes to endorsements, but we saw his preferred candidate in the Republican primary for the gubernatorial race in Minnesota lose his bid. And then, Lisa, of course, last night we were closely watching that South Carolina primary for the seat held by the late Senator Lindsey Graham. His sister, Senator Darlene Graham, advanced to a runoff, but she failed to secure the majority of a vote. And she, of course, is endorsed by President Trump, so there's going to be questions about his endorsement power there, because she's set to face Republican Congressman Ralph Norman, who has a much more complicated relationship with this White House.
Well, Tyler, just to build on that, what are we learning from that particularly heading into November? Is every single one of these local elections really bespoke, or is there a larger message about incumbency and the establishment in both political parties?
Well, it depends which side of the aisle we're talking about, because, Lisa, last night we saw an incumbent Democratic House member in Connecticut lose his bid at re-election, marking the 7th Democrat so far to fail to advance beyond the primary stage, despite defending a seat that they have held for, at this point, years. So there are questions here about this idea that Democrats want to see some new energy in the party, some new ideas in the party. On the Republican side, it's a little bit different, including when it comes, of course, to this key seat in South Carolina. It's interesting because we're expecting this seat to play into Republican hands. This is a solidly red state, but when you have President Trump diving into the race supporting Senator Darlene Graham, it does raise questions about the president's power when it comes to his base, considering Ralph Norman is one that's actually clashed with the White House on a few different occasions, including when it comes to some of the president's signature policies and the idea of being perhaps one of those more fiscal hawks on Capitol Hill. There is so much to watch here as we get closer to the midterms, but both parties are really zeroing in on the economy as it continues to remain that top issue for voters. Lisa's, very quickly, I'm sure you saw last night the reporting that NEC Director Kevin Hassett, as well as in a conversation with Larry Kudlow, had floated this idea that we could see some more tax proposals from the administration as we get closer to the midterms and they try to hone their strategy to get voters back on their side.
Tyler Kendall, thank you so much for that. Jessica Taylor of the Cook Political Report joins us now to build on the conversation. Jessica, just want to start with, what's your takeaway from the past 24 hours in the local elections, the primaries that have come through?
I think it's the candidates and campaigns matter. You saw in Wisconsin that Francesca Hong really ran a shoestring campaign and didn't even run ads in the general election. And this really mattered. I think that the electability argument did ring true when she was going on there and doing so much media, when she was talking about potentially canceling Thanksgiving. There was just a raft of opposition research that Republicans were going to use against her. And I think it shows us that issues still matter too. In Minnesota, you had the ICE raids there earlier this year and the killing of 2 citizens that really resonated in that race, especially in a state that was really savaged by Metro Surge. And so you had Angie Craig that had voted for the Lake and Riley Act. Peggy Flanagan really attacked her heavily for that. And so while this was a more traditional progressive versus centrist fight, I think it had a lot to do with issues that were also very germane to the state.
So for the Democratic Socialists, is this just a hiccup or is this a real pivot going into the general?
I think that Francesca Hong was a unique candidate and unique in not great ways. As your reporter mentioned, Bernie Sanders, Alexandria Ocasio-Cortez did not endorse her. She did not have the candidate skills that we saw of an Abdul Sayed last week, and it should be clear that Abdul Sayed does not identify as a member of the Democratic Socialists of America, while Francesca Hong does. But of course, they're all progressives and will be painted with that broader brush. But it really, I think it comes down to the fact that Crowley, this was a really topsy-turvy primary, gubernatorial primary. You had the more moderate frontrunner, the lieutenant governor, that had to get out of the race for campaign mismanagement. The sitting governor, Tony Evers, appealed to David Crowley to get back in the race. At this time a month ago, he wasn't even in the contest. And then you had Mandela Barnes, the former lieutenant governor, that dropped out just a couple of weeks ago. So this made this race really hard to poll. So again, I think there were some really localized issues, really kind of that made this race hard to gauge. But I think it really speaks to, I do think the electability argument in a state like Wisconsin, that is the quintessential swing state that is so critical to Democratic hopes in 2028, did break through. But I think that Hong hurt herself by going on such a media tour and really saying things that felt outside of the mainstream, I think, even for progressives.
I'm glad you brought up polling. Going into this race specifically, Marquette University had hung up 25 points, State Navigate had hung up 29 points, Public Policy plus 20. Why was the polling so off?
Those were a little bit, this race was moving so fast. As I mentioned, you had at the end of the month in July, Mandela Barnes got out, so their polling still included Barnes. Crowley had just gotten in at the middle of July again. I think it was just hard to sort of measure that late surge. And I do think some of the polling, particularly in primaries, oversamples because of the way that it's reaching younger voters. It oversamples younger voters and I think undersamples older voters, particularly voters of color. And those were voters that both Haley Stevens last week in Michigan did better with, and that David Crowley did better with in Wisconsin as well.
Taking a step back, what does all of this say to you for the midterms in November?
Well, Democrats are much better off with a candidate like Crowley atop the ticket. They want to take back the state assembly and the state senate in Wisconsin, and they have some key House congressional races that they're also trying to flip. Minnesota doesn't, it's a competitive state, but not as much so as, it's not a state that Democrats, it factors into the majority control of the Senate. So I think it just matters. What it says to me last night is that candidates and campaigns matter. You saw Flanagan run a really aggressive grassroots campaign, and both candidates were on TV with advertising. Hong, she didn't run a traditional campaign. She didn't have consultants. She didn't have polling. She didn't run television ads. I think that in a state like Wisconsin, you have to have just the building blocks of campaigns. So it's not vibes that you should go with. It's, I think, candidate infrastructure and campaign infrastructure matters.
Jessica Taylor of the Cook Political Report, thank you so much for spending the time this morning. And one thing that Tyler was flicking at earlier was this capital gains tax and removing it as one of the proposals from the President Trump camp. What did you make of that in terms of who they're trying to cater to? Because that isn't necessarily popular among the traditional Trump base.
No, and I'm not actually sure that's going to be able to get through Congress ahead of a midterm election when you can see, and these candidates we saw last night, but you could see this even with individuals that are up for re-election, they want to focus on everyday kitchen table issues, higher gas prices, higher grocery prices. this is all what is going to be the biggest driver, as well as AI and data centers, into the midterm elections.
Yeah, which is the reason why we keep watching oil prices and what's going on at the pump. Coming up in the next segment, Amanda Lynham of Ms. Goldman Sachs as NVIDIA eases AI debt concerns, at least for now. Plus, Vonnie Quinn with your morning movers, CoreWeave and Supermicro results, giving the tech trade a boost. This is Bloomberg Surveillance.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
A bit of optimism after 2 days of declines in equities. Right now, you're seeing a lift pretty much across the board, led by big tech after last night's earnings from CoreWeave and Supermicro. More on that from Vonnie in just a minute. Up 0.25% for S&P futures. Nothing on the crude front, which maybe is giving some people some relief. The idea that you're not seeing much action, $88.92 on Brent. Yields lower. This is notable. Watch this space. Are people finally seeing value in real yields, particularly at the long end ahead of a slew of auctions? led today by the 10-year note. 10-year notes right now currently yields 4.66%, 2 hours away from the cash open. With tech very much in focus, here are your morning movers with Vonnie Quinn. Vonnie.
Yes, Lisa, another quarter of record revenue for CoreWeave. And while the last 4 times that happened, the market sold the stock off, this time it's rewarding CoreWeave, right? So we're up almost 20%. It is a volatile stock, and it has been on a little bit of an upswing after a couple of months of a downturn. But certainly, customers and investors much cheered by the fact that it's also broadening out its customer base and that the AI build-out continues apace. That's the same story for Supermicro, which seems to have put all of its accounting problems behind it at this point. It's also broadening out its consumer base and is very, very well positioned to deliver NVIDIA servers to its customers, which puts it in a better position than some of its peers. Again, that stock is higher in the pre-market. Let's move to some other types of companies that are also seeing gains in what could be a very cheery market today, at least until we get the CPI data. H&R Block up more than 12%. It hit a bottom back in February when we had all of those software stocks sell off. Well, it's been on the rise pretty much ever since. And this quarter, it delivered a beat and a raise. It also raised its dividend by 9.5% to 46 cents a share. Experimenting, its international and domestic and DIY revenue beat expectations. And then for a little dessert, let's look at Kava, which is also really reaping the benefits of a beat quarter. So Kava really just keying in on the protein obsession. Apparently there was an inordinate amount of pomegranate glazed salmon sold this quarter, which does sound particularly tasty, I must say, but also consumers adding on. So we heard that from Starbucks as well. The add-ons really add up. In Kava's case, particularly sumac flavored pita chips. Lisa.
Thank you so much, Vonnie. And pomegranate salmon is something that Emery has on a regular basis.
Yeah, I'm kind of, Vonnie made me hungry, but I also wonder, is Kava gaining? Because a lot of people are deciding we're not going to go to Sweetgreen because of what is going on.
That's true. They cook their food, so it's not necessarily the
exactly.
raw
Maybe it's a little
lettuce.
safer for this quarter for all the finance bros in Midtown Manhattan.
Maybe that could be the case, or it could just be trendier because it's sort of a phase, right? Whether it's south of the border or east of the border, which one is the sort of popular cuisine? On our radar for this morning, less of that, more of this. Shares of CoreWeave soaring in pre-market trading. The company reporting faster than expected sales growth and inking more than $25 billion in new customer orders as AI spending continues to grow. Vonnie was just talking about that with those shares surging this morning. President Donald Trump doubling down on the Strait of Hormuz.
We have total control over the Hormuz Strait right now. They don't have control. We have total control. We own it. And at some point, maybe they'll do something and then they get blown away.
The U.S. and Iran hardening their stances as negotiations remain deadlocked over the waterway. And finally, President Trump weighing a cut to capital gains taxes and an exemption for certain home sales.
He wants to hit people with the things that are promises that we're going to do if the Republicans have power in the future. And so you can expect a lot more policy between now and the midterm.
Most tax changes require congressional legislation, as Anne-Marie was just mentioning, making it unlikely before the November midterm elections. At the same time, I think the takeaway from this is sort of interesting in terms of who are the constituents that President Trump is targeting, considering that capital gains taxes and eliminating some of them would be more likely to help the upper end of the K.
Right, the top of the K, and really when it comes to midterm elections and potentially where the president is not polling well is on kitchen table issues in terms of where the economy is. You see that in terms of gas prices and grocery prices. So potentially going to have to tweak exactly where they mention these policy proposals, because these are just going to be proposals. This is not going to actually be able to tangibly happen before the midterm election. And if the Democrats have a good night in November, then I don't see this happening, you know, and for years.
Yeah, but I wonder if it's drawing a distinction between some of the socialist policies and saying, no, we believe in capitalism, you know, regardless of some of the criticism that people have been talking about with respect to taking stakes in companies, deciding which ones, et cetera. You can make a lot of arguments, but nonetheless trying to draw that distinction.
And potentially the home price one might resonate with individuals. They suggested exemption for sales of homes worth $2 million or less from capital gains tax. You have Kevin Hassett saying the boss is very interested in this. Housing has been a priority for this administration. And I remember during the president's State of the Union speech earlier this year, potentially he was going to say that the United States was in a housing emergency, a housing crisis. This is why he is so obsessed with where interest rates are, because he wants to see mortgage rates come down.
Yeah, and mortgage rates might not be facilitating sales of houses. We are seeing lots of sales of other things, including chips and all things things related to tech. Speaking of tech, NVIDIA easing Wall Street concerns after clarifying its limited exposure in its $500 billion plan to finance the next wave of AI infrastructure. The plan is the latest among tech giants tapping the debt markets for its AI ambitions. Amanda Lynham of Goldman Sachs writing, we see scope for private markets to play a larger role in financing the AI build-out as the multi-year issuance cycle extends. That said, this will likely come at a higher cost of capital. Amanda joins us now for more. Amanda, great to see you. Thank you for being here.
Thank you for having me.
So we've already seen this in terms of the higher cost of capital with spreads on AI-related debt expanding more than elsewhere. How far could it go? I mean, in other words, as someone who's a buyer of this, how much more money do you want?
Right. So I think, good morning again. So I think it's important to note at the start that we're not really concerned about access to capital for this theme across a range of markets and structures. There's a fair amount of capital that I think is very excited about putting money to work here. But what we do expect is that as this multi-year issuance cycle extends, there will be more nuanced conversations from investors about where to take this exposure and at what price. One of the key kind of misconceptions that I hear from cross-asset investors is an understanding or an expectation that the U.S. IG bond market will do almost the entirety of the heavy lifting here. And for a variety of reasons, we don't expect that to be the case. You've already noted the spread widening that we've seen in the typical traditional credit markets. We think that can extend more broadly when we're referring to a higher cost of capital from private markets. It's really driven by their recognition that they provide certainty of financing and execution, and they get paid for it. So we see that in private credit. There's a difference between private credit and where a loan would price in the syndicated market. We're expecting the same with the AI build-out, but importantly, the access to capital is there. It will just be more nuanced as this issuance cycle extends.
And in some ways, the NVIDIA agreement kind of solidified this exact point, that the capital is there. To have a memorandum of understanding tied to $500 billion of financing going forward is a way of saying we have the ability to tap this if we need it. I just wonder about the acceleration of the amounts needed in every single year. It seems to be accelerating this year and accelerating next year. It seems to always be more and more and more. When is it peak requests for financing? When do we see the end of this build-out cycle?
Sure. So without commenting on any one transaction, I think really our view on this is that given the delay between investment and monetization, we're expecting 2027 to be the peak year of the highest level of CapEx that will be debt financed. These companies have guided towards a delay of anywhere from 3 months to 2 years between when they invest and when they start to monetize. Of course, it's possible that it could be quicker than that, but that is our base case, is that 2027 will really be the year where the largest share of CapEx, we estimate 35%, will be debt financed. So that implies $400 billion in our view of direct issuance from the hyperscalers. We're expecting $300 billion additional of project finance issuance outside of that. And then it's important to keep in mind, it's not just the hyperscalers, it's the broader AI ecosystem that is looking for capital. So 2027, we expect to be an active year across markets and structures and currencies for the AI build out. And then the private markets, as this multi-year cycle goes on, will likely play a bigger role there.
You mentioned in your note $4.5 trillion in dry powder. Is that going to AI directly? Is it going to the infrastructure you just mentioned surrounded it, or just is that basically earmarked for other items?
Right. So what is most interesting that we've noticed is that historically we were expecting infrastructure and real estate to play the largest role in financing the digital infrastructure build out. What we've seen is a bit of a blurring of the lines across private markets. There have been some financings that were classified as venture debt. We've seen private equity play a role. So that $4.5 trillion figure that you noted, that's total dry powder across global private markets. So private equity, credit, infrastructure, real estate. But we're less focused on the amount of dry powder within each silo, because really what matters to a bondholder is how much dry powder is available for lending capacity across the private ecosystem. Because again, all of these categories have been participating. So that's what we're most focused on. It won't be the entirety, but just reading what alternative asset managers and a wide variety of financial market participants have commented on, they're all very excited to take exposure to this theme. So I wouldn't expect the entirety to be dedicated to AI, but that's what gives us confidence that the capital is there. I would say the other point to raise is that our conversations with market participants are really bracing for CapEx revisions higher in 2027. That's something that I hear a lot from clients, is almost baking in an expectation that these numbers could move higher. And so I do expect the capital markets will be a key role in financing this build out, and we see a larger role for debt markets in particular.
Is there still as much demand for long-term debt, for 30-year, 40-year, 100-year tech-related debt, which is beneficial for them to lock in financing for that long? but potentially becoming more of a constraint on the investor side.
We are seeing a bifurcation between AI-related issuance and kind of everything else. To your point on longer end debt, we are seeing steeper curves, which suggest a bit of wider spreads at the long end. The reason for that is somewhat mechanical. When these companies are issuing such large bond deals, they have to be spread across the curve. In general, there's still a fair amount of demand for long-end credit, but it's been episodic. It's fluctuated with the rate backdrop. We actually posted a piece a couple of weeks ago on this, which we kind of outlined the demand backdrop across credit broadly. It's pretty solid. Foreign demand and fund flows, kind of trading activity across the street. And so the support mechanism is there. It's part of the reason why index level spreads have been holding in so well, because while tech has been widening, everything else has been kind of holding in more than you would expect.
Is there a threshold for yields at which point it curtails issuance?
I think that bar is very high. I think the binding constraint in our view is index issuer concentration constraints and market capacity constraints, as opposed to a higher cost of capital deterring CapEx spending.
So in other words, yields could go a lot higher and still the total volume will continue.
We are positioning for wider spreads, yeah.
Thank you so much. Amanda Lynham, always great to catch up with you. Amanda Lynham of Goldman Sachs here in New York. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Bonnie Quinn. Bonnie.
Lisa, Senator Darlene Graham advancing to a runoff election to replace her late brother as the Republican nominee for Senate in South Carolina. With 33% of the vote, Graham will face Representative Ralph Norman, who had 25%. It'll be an August 25th runoff. The winner will face off against Democrat Annie Andrews. Boston Fed President Susan Collins says businesses and households in the Northeast are being squeezed by inflation. In an interview with the Financial Times, Collins saying the Iran war is squeezing lower-income Americans. Collins adding inflation risks are greater than mixed labor data. Shein is planning to take investor orders for its Hong Kong IPO as soon as next week. The South China Morning Post citing anonymous sources saying the fast fashion retailer may seek a valuation of $35 billion. The report also saying the company aims to complete the process by the end of August. And that is your Bloomberg Brief. Lisa.
Thank you so much, Bonnie. Up next, bracing for the inflation impact.
This week's inflation number is going to be very important.
The results of the CPI and PPI numbers will be whether or not the Fed will make a move, before the end of the year.
September sitting at roughly 50-50.
Former Philly Fed President Patrick Harker joins next. This is Bloomberg Surveillance. Good morning.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg. Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ula, Saudi Arabia, and this is Bloomberg.
The wall of worry continues to be climbed as a result of earnings, which are exceeding all expectations, coming in at some of the fastest pace that we've seen going back to 2021, particularly in the tech space last night, which is a reason why the NASDAQ futures leading the charge, up almost 0.7% this morning. S&P futures up a little more than 0.25%. Similar move on the Russell 2000, also coming with a bid into bonds, the sort of nirvana that people have been looking for. Everything rally continues, particularly at the long end of the yield curve. Yes, you're seeing a 2 basis point move at the front end of the yield curve, 4.19%. But even that bid into the 10-year, look at that, 4.6578%, if you're going to extend it out to the fourth decimal place, ahead of a $42 billion auction at 1 p.m. Eastern. A question about whether this could all change come 8:30 a.m. Eastern, given the CPI print that's coming out. Will it be enough if it comes in, AMH, at the lowest level going back to March of 2021?
Well, that is why the bar is pretty high for the CPI report today. And as you've been mentioning, it really is literally a coin flip for whether or not the Federal Reserve hikes interest rates according to the market in September. But we have to remember, we have a lot of other prints to come out as well. Plus, I was just seeing a Bloomberg Opinion columnist on Twitter say, feels like everyone's just waiting for Jackson Hole. How much will we learn as well when we finally get a speech from Kevin Warsh after the press conference that some people felt was a bit fumbled?
Yeah, there's an issue about CPI and the actual data, and then the reaction function from the Federal Reserve to said data. Under surveillance this morning, bracing for inflation impact.
This week's inflation number is going to be very important, more important than what we saw on Friday's payroll.
The results of the CPI and PPI numbers will be just more, trying to tilt the balance towards whether or not the Fed will make a move, before the end of the year.
September sitting at roughly 50-50.
Here's the latest. Boston Fed President Susan Collins adding to the debate over a possible interest rate hike as soon as September, telling the Financial Times inflation is too high ahead of today's CPI report due out in less than an hour. Former Philly Fed President Patrick Harker writing, watch core, not headline. Core, and specifically shelter, is what decides September. Patrick joins us now for more. Patrick, great to see you. Really appreciate you taking the time. How much is core going to really make a difference if it still is above 2%, given the fact that we're hearing a degree of impatience about it being more than year 5 that we've been above the Fed's target?
That's right. So thanks for having me. If core is above 2, significantly above 2, I think you're going to see the Fed raise. Now, I think they have to at this point. As you said, we've been above target for over 5 years. So the Fed has an issue of credibility. They have to act. They can't just talk about being tough on inflation. They actually have to do something about it.
At this point, though, Patrick, some people would argue that we're seeing inflation come in, particularly when it comes to shelter, that the expectation is for core to be at the lowest level at 2.4%, potentially going back to March of 2021. Is that enough?
I don't know. I mean, the committee is very split, as you said. And we're seeing a lot of people, not only the dissenters, the people who are voting, but the non-dissenters speaking out. So they are clearly signaling that some increase, whether it's this meeting or next meeting, is in the cards.
You said that the Fed has a credibility problem at this point. Would that be true regardless of whether the Fed chair was Kevin Warsh or if it was still Jerome Powell?
Yeah, I think if you just miss your target, you don't do your job for 5 years, people start to question whether you can do it at all. And so I do think the Fed's going to have do something to prove that it really is serious about inflation.
It just feels odd because now we are actually see inflation get softer. Where was the Fed in the last 5 years? Do you not think they acted appropriately?
No, I think that we are looking, I was there, right? So, yes, we waited too long to start raising rates after the pandemic. I think that was clear. And we were early in Philadelphia wanting to raise rates. But given that, and given all the supply shocks we've seen, the Fed has been in this holding pattern. But these supply shocks, the textbook says look through them, right? But they keep coming, and they're strategic. They're not just acts of nature, acts of God. We have to really look at these now as something that is more sustained. And I hate to bring up the transient word, but these supply shocks aren't so transient, and particularly with respect to Iran.
So you think there's a potential that higher oil prices, it's bleeding through the supply chain, and those prices are becoming entrenched?
Yeah, I do, because do you see an end to this war? I don't. I hope to God that we have an end to this war, but I don't see it. So this is going to continue. The on-again, off-again opening of the strait will just continue to create this uncertainty in the markets, particularly in the energy markets.
But as a former Fed official, is it the Fed's job to start pricing in potentially when a war may end?
No, its job is to get inflation under control. And because of the war and other circumstances, I mean, remember tariffs. Tariffs are still working their way through the economy, and now we look like we're having a new round of tariffs. So those are also inflationary. Those also are supply shocks. But we keep getting supply shock after supply shock. It's hard to keep looking through those. You have to act.
Patrick, are you on one of the task forces that are going to be potentially releasing some results? No? I am curious, though, do you think that it's appropriate to start looking at the way that we evaluate inflation and to potentially look for an overhaul 2.0 about exactly how the Fed is conducted?
You know, there's lots of ways of looking at inflation. The academic community and the business community have developed all kinds of metrics. And your job as a policymaker is to look at all those, not one single number. So the idea, the hope that somehow we're going to do this work and we're going to come up with the magic index, I just don't believe. We'll never have that.
One thing that I know you were really out front about with respect to inflation was sort of a vibe. It's not a vibe issue, but with respect to anecdotes and how important that was in factoring into your calls when you were the head of the Philadelphia Federal Reserve. What's your sense as you go around and you talk to people, and I understand you're no longer at the Philadelphia Fed, do you have a sense that people still are preeminently concerned about inflation, that the economy is in an incredibly solid otherwise position?
Yeah, they're clearly worried about inflation. That's still on their list. But also the softening of the labor market is on their list. They're concerned about particularly the bottom of the K in the K-shaped economy, that you're seeing credit card defaults going up. You're seeing all kinds of softness in the consumer side. So it's all of those things they're worried about as well.
Isn't this a key debate at the Fed right now? If they hike interest rates, it's only going to hurt the lower K.
But what's causing the softness in the labor market? It's not just the interest-sensitive sectors. In fact, if you look, manufacturing's been adding, there are other issues. Some of those are related to immigration policy, tariff policy, and so on. Mark Zondi from Moody's has a great piece out right now looking at native versus non-native workers in the economy. And the story is pretty simple, right? If you lose those immigrant workers, then non-native workers also lose their jobs. And so these are policies that the Fed cannot control, immigration policy, but they deeply affect the labor market.
How will raising interest rates 2-3 times reduce inflation given this backdrop?
Well, what's driving a lot of the inflation right now, not all of it, clearly energy can't do a whole lot, but I know your previous speaker, your guest, was talking about AI and the AI build out. that's clearly having some inflationary effect. We don't know exactly how much, but look, they're buying lots of stuff. They're buying all kinds of things. They're looking for contractors, plumbers, electricians. So that's bidding up prices. If that slowed down a little bit, it would help the inflation story.
Former Philly Fed President Patrick Harker, thank you so much for being with us this morning ahead of this CPI print at a time where we've been talking about how a Fed rate hike is essentially a coin flip right now. Interesting to see how AI is such a pivotal part of the conversation about what's driving AI, what's driving inflation, and potentially what a rate hike could do.
Because that's why between oil and AI, you're seeing inflation on both the supply and demand side of this story. But the issue is, if you were to hike rates, are the hyperscalers going to stop spending? Potentially not. So then who do you hurt? And I think this is why this is a huge conversation right now at the Federal Reserve and why they are so split.
It's a huge conversation here on Bloomberg Surveillance, which we'll keep having ahead of that CPI print. Coming up in the next hour, Alex Altman of Barclays, Jim Bianco of Bianco Research, Tiffany Wilding of PIMCO, and David Kelly of JP Morgan Asset Management. You're watching Bloomberg Surveillance.
You're going to see disruption in certain job functions. I don't see how that's not possible. And I don't see how anybody can look people in the eye and say that's not possible.
What percentage of customer service gets displaced?
It can be a large percentage of customer service. I think that function, I forgot my password, what's my billing amount? Those are all simple and easy things for an agent to go do. Like what we're seeing in our customer service right now is the rote stuff can be done by agents. More complex is a combination of an agent and a human working hand in hand to be able to satisfy that customer much better than either of them could do alone. And so I think you'll see all of those things happen, but I'm going to lean heavy, as I think all of my colleagues will, all the Fortune 100 will lean heavy on AI. You cannot be a part of this age without understanding the technological revolution. We have a responsibility to put serious money, resource, and effort into training not just our employees, not just people that are impacted, but the communities we serve as well, because that's the age we live in.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
All of our macroeconomic signals are very bullish on the U.S. economy.
Inflation expectations are very benign.
As long as we get these benign readings, that does still give the Fed some breathing room.
The data may not support an immediate rate hike in September.
September sitting at roughly 50-50.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to the third hour of Bloomberg Surveillance. Stocks ticking higher with good tech earnings and ample financing, assuaging concerns about profligate spending. Oil putting pressure on risk assets with global oil inventories rapidly being depleted this morning. Prices just inching upward, and the clock is ticking less than a half an hour away from U.S. CPI, with inflation becoming the key indicator for Federal Reserve policy.
It's one of the most important data points we're going to get this week, and actually this summer, ahead of Jackson Hole's speech from Kevin Warsh. And we just heard from Patrick Harker, former Philadelphia Fed president, and he's talking about that we've had shock after shock when it comes to tariffs, what's going on in the Iran conflict. He asked us, when do you think that you're going to see an end to this war? So that is why he thinks it's becoming entrenched when it comes to inflationary pressures, and he thinks the Fed is going to be forced to act, also to shore up their credibility.
Yeah, well, this is why a lot of people are viewing this as a coin flip right now, a 50% chance that the Fed is going to hike rates or stay on hold. We don't understand the reaction function, though, and that's really the key question. The expectation is for inflation to come in, core CPI to come in at 2.4%, according to Bloomberg Economics, which would be the lowest going back to March of 2021. Yet we don't understand exactly what that will mean going forward for the Federal Reserve, because we don't understand how much consensus there is on this committee.
Which is why Jackson Hole is becoming ever so important. At the same time, according to people close to the matter, told the Financial Times last week that when it comes to Kevin Warsh and how he's viewing everything, if we were to see hot CPI, potentially that would warrant a hike. But to your point, if it comes in and it's still on the downtrend when it comes to inflationary pressures, then potentially the Fed could just look through this once again.
Ultimately, everything is an AI trade, whether you're on the Federal Reserve and you're looking at inflation or whether you're looking at markets. And right now, you're seeing the optimism coming from the CoreWeave and Supermicro optimism from earnings last night, the sense that earnings keep beating expectations with pipelines building, giving some feeling of momentum, even with ongoing skepticism about the financing, et cetera. Right now, it seems to continue to surprise to the upside.
Right. So this week, NVIDIA came out and said, you worried about financing? Well, I have a bunch of rich individuals and their companies backing this with a pool of money. And then you have Supermicro and CoreWeave, which are also bellwethers ahead of NVIDIA's earnings report at the end of the month. And both are showing that this build-out, when it comes to AI, is incredibly robust.
And today, you're seeing tech lead the way once again in futures, with NASDAQ futures up now almost 0.8%. S&P futures up nearly 1/3%. You're also seeing a bid into the bond space, 2s, 10s, and 30s ahead of that CPI print. Interesting to see the outperformance coming from the 10-year space ahead of the auction later today. 2-year yields 4.19%. 10-year yields down 3 basis points at 4.66%. That $42 billion auction of 10-year notes at 1 p.m. 30-year notes still the sort of loser in all of the sell-off over the past couple of weeks. Today getting a little bit of a bid, 5.21%. And then, of course, what you see in oil is that churn, a question of what a quagmire looks like in the crude space. It means there still are a lot of questions hovering at these elevated levels, $89.12 on Brent. Coming up this hour, Alex Altman of Barclays with stocks looking to snap a 2-day slide. Jim Bianco of Bianco Research on why he's all for the Fed getting rid of forward guidance, and Tiffany Wilding of PIMCO breaking down inflation data. We begin this hour with stocks inching higher again ahead of the latest read on inflation. Alex Altman of Barclays writing, everyone expects a quiet August post-CPI. Everyone? Somehow, I don't think it will be that easy. The market may still be vulnerable to rotational shocks. Alex joins us now for more. Alex, do people really expect this to be quiet? Because so far, this summer has been anything but.
Well, I would use the word hope. Good morning, by the way. I think people are hoping that they get a little bit of respite. What has been a pretty frenetic summer. And obviously we've had this massive rotational shock that happened whilst I was away, so that was annoying. But the point being is that, we had this enormous drawdown in momentum over the course of July, something that we had sort of been advocating for and warning about for several weeks, really as early as May. And now that it's transpired, basically all of our data would suggest that, yes, we've had a little bit of froth coming out, a little bit of leverage coming out of the system, but at the end of, we're still vulnerable to shocks, and we're still vulnerable, I think, to those rotational shocks, especially within momentum, and obviously that's tied very much to the AI trade.
I'm just crying for you that you are in somewhere that gave you this lovely tan instead of experiencing the rotation that we all lived through. I am curious, though, do you think that the leverage has built back up, that there still is this sense not of overvaluation, but exuberance in certain pockets of the tech trade that have been brought back to the market after the sell-off and then bounce back post-situational awareness?
So we know that the re-risking did happen pretty violently last week. And in the context of, we're talking about relatively small changes. Holistically, it's not like suddenly the whole world has suddenly turned mega bearish on AI. And I think one area to sort of focus on in terms of just measuring that yardstick of re-risking rather than thinking about net leverage within the hedge fund space, which has gone back up, is obviously the levered ETF space as well. And a lot of people use that as a barometer for how much leverage is moving in and out of the system. And if you actually look at the shares outstanding rather than the actual AUM, which is vulnerable to price changes, the shares outstanding has still gone up. So it's not like you've suddenly taken a huge amount of leverage out, quite the opposite. Korea, however, has seen a huge amount of deleveraging. So I would say a bit of a bifurcation into the core-centric AI theme. I think there's still a lot of exuberance there.
And you think the market is still vulnerable for rotational shocks?
I do, yes. And so,
what will be the catalyst for that? Because we've seen non-stop catalysts for this market, and somehow it continues to bounce back.
Well, so I think you need to sort of slightly delineate what's happening with the market and what's happening below the surface. So we've obviously seen a massive momentum unwind, and during that same period, you actually saw a significant bid to quality. And I really want to focus on quality as a factor for a second, as a stylistic rotation, because if you recall, in 2025, high-quality stocks got beaten to death. It was the third largest drawdown that we saw in that factor since over the past 20 years. And so it was around about May of this year that we began to sort of observe that quality was looking extremely cheap. And just to illustrate this point, quality and value as two sort of stylistics should be quite separate to one another. It's rare that you get to buy quality stocks at a low valuation. Right now, we're seeing the highest correlation between those two factors basically ever. And if you actually look at a backtest of that, it's telling you want to be buying quality stocks. And that's exactly what we've seen. So we've seen quality as the best performing factor since May, at the expense mostly of momentum and residual volatility and all these other things. So you can see a continuation of that. This is a medium-term trade. This is not something which you're just going into and out of over the couple of weeks.
If you think quality is now the rotation trade, how long is it going to stick?
I think it's going to stick for a while. If you think about it, the peak of fiscal tailwind is behind us. We've got a question mark around what's happening with interest rates. We've got a question mark around what the future of the employment is going to look like. We've got a question mark around credibility. In this kind of environment, this should be the perfect setup for investors to go to high quality businesses, especially because you'll be able to get them at a valuation discount now. So I think this is a theme that's going to run basically for the rest of the year, and we're only really in the first innings of it.
Where does CPI come in, given what this means for the Federal Reserve and the potential for some sort of carry-on with respect to yields?
Sorry, so the question is...
CPI, where does CPI factor in?
I think the CPI at the end of the day is one of many factors. I don't think it is exclusively the factor, but I mean, at the end of the day, we polled a bunch of guys going into this report. I don't think anyone really had a particularly strong view on where it's going to shake out. If it's low, then you've got a bunch of Wall Street that's telling you you're basically going to have the Fed on a pause well into next year, and you've got other sell-side firms that are calling for 3 hikes still this year, basically every meeting between now and the end of 2026. So I think at the end of the day, this isn't just about CPI. I think there's a lot of other factors that go into this, whether it's the trajectory of growth, whether it's AI financing, so many things that are really sort of playing a role.
And I think that's the reason why I'm kind of struggling as I look at CPI, because the direct read-through for markets is what it means for yields, right? And there's a question about if the Fed were to hike rates, would that be a positive, but it might potentially even create a bid to the long end of the yield curve and create sort of a tailwind for equities versus if they remain on hold and there's inflation and you see that long end of the yield curve continue to widen. Could that potentially be one of those disruptors in markets that you potentially are looking for?
It could be, but then at the same time, what are other factors determining the long end of the yields? What's happening in Japan is clearly a factor, but also AI financing, the crowding out. I mean, these guys are issuing hundreds of billions of dollars of debt, and a lot of it's getting turned out to the long end of the curve. So that is creating like almost a competition for capital. And we wrote about this. We've never seen an environment really in history, going back for the past 30, 40 years, of modern capital markets where we've had high interest rates and this amount of issuance across the capital stack, so across equities, IG, and obviously the government needs to go cap in hand as well. So between all three of them, this crowding out effect is contributing collectively to where yields are going.
Do you think it's better for companies to be issuing equity or debt right now?
That's a loaded question because we wrote exactly on this. So the fact that equity risk premium is negative is in itself indicative that companies should at least consider the equity channel. And we are seeing that. We've obviously saw another high profile sort of at the money offering, was it end of last week or beginning of this week? We had obviously Google. There's plenty of reports that other hyperscalers are going to potentially come and actually issue more equity supply come after Labor Day. And that's something which investors have in terms of a bit of an amber light when thinking about markets going into the autumn ahead of midterms. So as far as we're concerned, it actually does make sense to tap the equity channel, especially when you consider not just the negative risk premium for equities, but also the fact that you've actually already issued a lot of IG.
You don't think that's going to be a diluting factor that could potentially pressure valuations?
I think it could be. So the good news is that the hyperscalers obviously delivered some phenomenal earnings, and I think that's enough to probably allow them to carry and issue near term without any sort of significant effect from an investor base. However, it's not universal. We know if you're the first to go, you generally get rewarded, but then if you have a series of companies after that, I think it becomes more problematic. Not to mention, we obviously still have a very large IPO that's coming ahead of the midterms as well.
I hear that that's on tap, and they're trying to make themselves look pretty ahead of that. Alex Altman, thank you so much for being with us today. Alex Altman of Barclays joining us here in New York. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Bonnie Quinn. Bonnie.
Lisa, thank you. President Donald Trump says the U.S. has total control over the Strait of Hormuz and that Iran would get blown away if they took action. Trump's comments coming after Pakistan's defense minister told reporters in Islamabad that the two sides were close to some sort of arrangement over Hormuz. A federal judge blocking key parts of President Donald Trump's mail-in voting overhaul nationwide, ruling that the executive branch has no authority to regulate elections. The ruling prevents the administration from changing ballot mail rules less than 90 days before the November 3rd midterms. The Knicks will have some special company as they raise their championship banner on the NBA's opening night. They'll be hosting LeBron James and the new-look Philadelphia 76ers as part of the league's three-game slate to tip off the season on October 20th. And that is your Bloomberg Brief. Lisa.
Thank you so much, Bonnie. Up next, the morning calls, plus Jim Bianco of Bianco Research saying Fed Chair Kevin Warsh has taken too much flack. That's coming up next. This is Bloomberg Surveillance.
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
I think the market's going higher, and I think it's going higher on earnings. You basically have 25% increase in earnings in the second quarter and about the same in the third and fourth quarters. So, yeah, I've been bullish on earnings, but not bullish enough. It's all these analysts who talk to companies, and the companies are bullish.
That was Ed Yardeni of Yardeni Research with an 8,400 price target on the S&P 500 for the year end. And this is the head of all the calls out there from Wall Street firms with optimism abounding. And frankly, no one can really poke holes in it right now, because even though there are these sort of switches back and forth, as Alex Altman was just talking about, the bottom line is the earnings are coming in at the fastest pace going back to 2021.
And that's where Ed said he's taking his cue, seeing from the analysts and these executives that are coming out and talking about how good the environment is right now. And it's not FOMO anymore. It's all about earnings momentum. And that is what is guiding his light. And he almost leaning into the fact it doesn't feel like he's bullish enough when you look at what analysts and executives are saying.
Right now, markets taking their cue from that kind of tone, seeing an inflection upwards following CoreWeave and Supermicro's earnings, 0.7% gain on NASDAQ futures, S&P futures up 0.3%. In the bond space, a bid led by the long end, interestingly enough, ahead of an auction later today. The 2-year yield pinned around that 4.2%, the 10-year yield 4.66%, and in the oil space fluctuating around, not getting a real read in terms of directionality, still staying above that level that is comfortable, $89.24 on Brent crude, a huge surge over the past week. Time now for the morning calls with two stocks in focus. First up, JP Morgan raising its price target on CoreWeave following the company's upside report on margins. Those shares up more than 18%. Next up, Baird raising its CoreWeave price target, saying the bullish demand environment supports growth. A lot of demand. You're seeing that come through in some of their pipelines. And finally, Citi raising its price target on Supermicro following its stronger than expected earnings and well above consensus sales outlook. Investors counting down to fresh inflation data just ahead. The print set to provide a strong signal on the Fed's path for policy. Jim Bianco of Bianco Research with some words of encouragement for the Fed chair following the backlash that he's received. He writes, the criticism for not providing forward guidance or a reaction function is misplaced. We applaud Chair Warsh for sticking to his guns and getting rid of this practice. Jim joins us now for more. Jim, thank you so much for being with us. I want to start with this idea of forward guidance and reaction function and the distinction between the two. Do you think that there is a distinction between the two, or do you think that people have made too much of this?
Well, there is a distinction, but I do think that they've been conflated together as the same thing. The forward guidance is simply tell us where you're going to go next. And I do think that the Fed should get rid of that. It has caused more problems than it has solved over the years, because whenever the Fed gives forward guidance, it's viewed as a promise, and then the Fed's kind of stuck, because if the data changes, they either disappoint the market, and we've seen some wild moves because of that, or they follow through on an incorrect policy, think transitory inflation. Reaction function is the rules of the road. And what are you going to do based on if this happens or that happens? Now, the problem with reaction function with this Fed right now is I've been arguing that this is more of 12 independent voters, and it's not really the Fed chairman telling the other 11 how to vote. So we really need 12 reaction functions. And we've already seen that. We've gotten 3 dissents at the last meeting. So we already have 3 different reaction functions from those members. And you could argue last week, Lisa Cook, with her speech in Anchorage, Alaska, is possibly a 4th dissent towards a Fed rate hike And we wait Chris Waller, who might be another one. And so we're getting a lot of reaction functions all over the place with this Fed, nothing consistent.
We haven't gotten a reaction function, though, from the person at the top of the Federal Reserve, Fed Chair Kevin Warsh. Do you think that's a problem?
I think in long term it is. He should at least give us his reaction function. Now, I sort of understand what he's trying to do. He's got all these task force that are going to look at inflation, and they're going to look at data, and they're going to look at a lot of communications and a lot of other things. So he doesn't want to give us a reaction function and say, yeah, but in 90 days this might change, or in 4 months this might change. So I think he's trying to hold out until he gets set with what the committees or the task force come back with, and then maybe hopefully he'll give us his reaction function then. He does owe us at least that.
But through people familiar with the matter, did we not understand a little bit more about how Kevin Warsh is viewing this economy and a little bit of his reaction function through that Financial Times report?
Yeah, we do. I mean, he's a big AI bull, and he does believe that AI will eventually be somewhat deflationary or at a minimum disinflationary over the time period. So you could argue that he is looking at the inflation numbers that we've seen elevated for the last, and I'll go for the last several years. We've had 64 straight months of it being above 2%. And he's thinking that AI might come in and help to push that number down. And now I agree with him, but I don't think that's happening like this year or even maybe next year. But eventually that productivity that you would expect from AI might evolve over a longer period of time than, say, the next 12 to 18 months. But before we get there, I think what you're going to see with AI is it's just going to lead to a lot of squeezes with data center builds and everything else. And it might actually, in the short term, being the next year or so, be somewhat inflationary rather than deflationary.
The fact that AI in the short term is inflationary, do you think that's a reason for the Fed to hike interest rates?
I think that the Fed, let's remember that back to 24, the Fed has cut rates 175 basis points. And if you go back to September of 2024, the 10-year yield is up about 95 basis points since the Fed started cutting. There's been no other experience in the last 50 years where we've had a major long-term cutting cycle and long-term yields have gone up. So I think this, for starters, this is the market signaling that it disagrees with the policy, that long yields have been going higher. So I've been arguing if you want to see a peak in long-term yields, the Fed should panic a little bit and raise interest rates. That will calm down the long end of the curve and bring those yields down. All you're doing is reversing some of the cuts. I don't think we could really say that we're going to be pushing off into restrictive territory because of the cuts we've seen over the last 2 years.
Jim, this is a really important point. Some people are arguing the same thing that you are, that if the Fed hikes rate, that actually will ease policy on the long end of the yield curve, which could help the housing market and a whole host of other metrics. That said, it's not coming from higher inflation expectations that the long-term yields are rising. It's actually coming from the term premium. How related is this, or is this really a function of just how much debt is being issued by AI-related players?
Well, I think the debt by AI players is a big part of it. The term premium that we all look at is the kind of the residual leftover that we can't really explain. We could look at inflation expectations. We can look at the forward curve through the short-term interest rates on out, and we could make an approximation of where interest rates are supposed to be. And then we look at where they actually are, and that difference is the term premium that we can't explain. Sometimes the term premium can have embedded into it some of that inflation expectations. Look, I've been arguing that we are in a 3% inflation world, maybe as high as 4, but not like an 8 or a 10 or a 12% inflation world. So if we're kind of stuck in 3% inflation, and like I said, 64 months being above it, maybe some of that term premium is being confused with inflation expectations, because a lot of the measures we use for inflation expectations, like tip securities, don't have a good track record at predicting where inflation is. So it might actually be that. But nevertheless, what the term premium and everything else is telling us is if the Fed wants to run easy policy here, the risk is that the market will continue to go higher in yield, and maybe that inflation fear will continue to percolate under the surface.
We're about a little bit more than 6 minutes away from the CPI print. What are you expecting, and how does that relate to your understanding of inflation? In other words, is this a leading indicator or a lagging indicator of a monthly blip of improvement in the inflation backdrop?
Well, inflation's always been a lagging indicator, but I also would point out that Chairman Warsh in a lot of his speeches has said, you know, we have a dual mandate of inflation and employment, and he said the inflation data matters more right now because he seems to have more confidence in that data than he does with the employment data. He calls it echoes of the past, which is only good on the third revision, which is 18 months later. So this is going to be very important. But I think in this environment with a 50-50 chance that the Fed's going to hike, anything that you would call consensus or a slight beat is going to be enough to keep us into the game of a rate hike coming in September. It would have to be an unmistakable miss with much lower numbers to really start questioning whether or not the Fed would hike in September. And then we'd have to see what the reaction in the long end curve is. Does the bond market, after an initial reaction, say today or tomorrow, start marching higher because the Fed is not going to give that little bit of panic about the higher rates by raising their rates so the bond market could calm down?
Jim Bianco, Bianco Research. Wonderful to get your view. Thank you so much. As we count down to that CPI print, about 5 minutes away, the expectation is the economist surveyed by Bloomberg is that core CPI year over year will increase by 2.5%. CPI headline level year over year, 3.4%.
And this is going to be an incredibly important result, as you've been talking about, this report, when it comes to how does the Fed think about September? Because it is so split evenly in terms of it's split on the board and it's split in the market on whether or not they are going to hike interest rates, the bar has become ever so high as well, considering what happened last week with jobs.
The bar in markets has been lowered a little bit given how short people have been, particularly on long-term treasuries. Potentially some of the action that we're seeing in bonds this morning is people right-sizing that positioning ahead of this print. Coming up, we will break those numbers down. Plus, Tiffany Wilding of PIMCO will join us to react. From New York, this is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Seconds away from that key inflation read. Here are the scores heading into that. You see a lift in equity markets pretty much across the board, led by big tech, building as the morning grows. S&P futures up 0.4%. Yields lower now by 4 basis points. 10-year yields 4.64%. Brent crude a little bit elevated, just up 0.3%, but really key heading into an inflation read that could tip the scales for the Fed. Let's head over to Michael McKee with those numbers.
Well, we're just getting the numbers in, and it looks like we're pretty much spot on. The economist forecasts CPI on a month-over-month basis up 0.1, the core up 0.2, which puts us at 3.4% for year-over-year on the headline, and for the core, 2.5%. Both of those a tick lower than they had been. Let's take a look at some of the categories here that we have seen move. Food up 0.1%. That's down from 0.2 in June. It is also food at home decreasing 0.1%. Energy decreased 1.5% in July after falling 5.7% in June. The gasoline index down 2.9%. So there is the war effect. The memorandum of understanding did send gasoline prices down for a while, so the averages worked out. In terms of the core, owner's equivalent rent, 0.3%. Now, that is higher than it has been, and the lodging away from home index down 2.8%. So we're seeing some areas in which there is still inflation. We're going to have to check the super core number, which I'll see if I can pull up here very quickly if it has been updated. Not yet, but I'll get that for you in just a second. That's what the hawks on the Fed are looking at.
Mike, we'll let you take a couple minutes to look at that. Thank you so much. Let's take a look at what's going on in markets in response to this. Not a huge change, although people marginally pricing out some of the rate hike probability for September. You're seeing now 30-year yields continue with the decline. At the front of the yield curve, also withholding some of the shift. You're seeing 2-year yields continue declining as well, but just down now basis points, 4.2%. This, to me, really indicates, yes, nothing has really changed, but to the degree that this would have given a disinflationary surprise that would have caused some sort of flushing out in the short positions, not necessarily the clearing event. If you take a look at what's going on in equities, also seeing the same kind of positivity, not really a game changer considering the fact that this is exactly in line. That said, not necessarily a hot print, giving a little bit more of a rise to the tech wager, 0.9% rise for S&P, for NASDAQ futures. And then when you take a look going forward, the key to me is going to be some of the core PCE factors, given the fact that ultimately it's now kind of a wash when it comes to the overall averages.
This is in line, bang in line. So pretty much what the market was expecting. Maybe some individuals thought we would even see a softer print. Shelter costs, interesting, seeing that headline come through, rose 0.1%, accounting for 2/3 of the overall increase. This is going to be, quite frankly, a very big political issue, but you can see that is one of the biggest drivers when it comes to what is making up the inflation print today.
If you are just joining us, we did get an inflation read bang in line with expectations. Core CPI coming in at 2.5% year over year. If you look at just the headline CPI figure, 3.4%. The monthlies also the same, 0.1% increase for core CPI, and core CPI coming in at 0.2%. Tiffany Wilding joins us now from PIMCO. Tiffany, what's your first read on this report?
Yeah, well, I mean, I think you guys hit the nail on the head. This one was just bang in line with expectations. I think 22 basis points month over month inflation unrounded on the core. I think the threshold that that we and other market participants are thinking in terms of what constitutes quote too hot on the inflation readings is about a 0.2. Of course, this is the CPI, and it'll also be important what the core PCE inflation reading will be later this month. But I think overall, this plus the softer CPI print last month, has to be a little bit of a relief for Fed officials. Good news for them. At the same time, though, some of the more hawkish members on the committee, we doubt it really changes their minds. So, I don't think this really resolves a lot. I think our lean is still that the Fed remains on hold in September. We'll have some more data releases between now and the meeting that'll also be important, another payroll report as well as another CPI, and we'll just have to keep watching and waiting.
Is any of the disinflation that we're seeing right now coming through this data, just based on the month-over-month levels, does any of it seem like it has staying power to you based on the components that are driving it?
Well, I think if you look at, the shelter categories, they certainly are, they have a lot of what economists call inertia. They tend to have trending qualities, and it does seem to us like the shelter categories are continuing to disinflate. When we look at market data in the housing market, rents look pretty stagnant, and it'll just take some time for the government data to catch up with that. And I think on the services ex-shelter side, a key piece of some of the acceleration that more recently has been airfares, which adjust to higher energy prices, higher jet fuel prices. I think once again, airfares were a little stronger this month. But as you have energy prices overall that moderate, if they continue to moderate, you should see that also moderate. So, I think overall this is a pretty good report. Suggests to us that you have inflation, still running above the Fed's target, but good news relative to what we got earlier in the year, which was much higher readings.
It feels like this print also benefited from the fact that we did have that memorandum of understanding when it comes to the conflict in Iran. Tiffany, how vulnerable and sensitive is the August print going to be to what is happening in Iran right now? And we actually saw an increase in oil prices.
Yeah, so the headline inflation numbers will definitely fluctuate with retail gasoline prices. So we've seen retail gasoline prices certainly come down in June. They came down a little bit more in July. But you're absolutely right. Looking forward, it does look like they could increase a little bit in August. But I would just say that, as we have retail gasoline prices that remain under the peak that we saw, kind of during the height of the Middle East conflict, then that's ultimately good news. And the other point to keep in mind is again, this is a price level adjustment in energy prices. Certainly that's not good for anybody that's going to the gas station to fill up their car. But just from an inflationary perspective, unless you have retail gasoline prices that are continuing to rise dramatically, the inflationary effects of that one-time price adjustment will wear off. And that's important for next year, because we are getting a boost on headline inflation this year, but next year, actually we'll see, some potential tailwinds in the case that you don't have energy prices that are continuing to rise. So you have to kind of look through some of these more temporary bursts in inflation. We think, again, this is why the Federal Reserve is remaining in a cautious stance here, ready to hike, but not necessarily in a hurry to do so, waiting to see more data.
Tiffany, stand by for a minute. We're going to go back to Mike and get some more details on what this report had, some of the components. Mike, you've been parsing through this. What stands out to you?
Well, what stands out is one of the things that Tiffany mentioned, and that is airfares. They're up 2.2% in the month after just a 0.2 gain the month before. So obviously, the jet fuel price increases are feeding through into that. There are some other areas that do show some inflation. Used cars and trucks up 0.4 after declining the month before. Apparel prices are up 0.1, but they had declined 0.6 the month before. Medical care services also up 0.6 after declining in June. So there are some areas that are peeking through that do show some inflation. And then the super core, which is basically services X housing, is up 0.2% on a rounded basis, and that is changed from the 0.2 decline we saw the month before. And this becomes important because the hawks on the Fed are not just saying that the energy price shocks are a reason to be able to raise rates, or a reason you need to raise rates, but the underlying inflation is a problem. And they're looking at these supercore kinds of numbers and saying, yeah, there's still some stubborn inflation in the services areas that we have to keep an eye on. So it probably isn't decisive one way or another. We've talked about that because, of course, there's another CPI before they meet again, but this is not unabashedly good or bad news.
Mike, thank you so much for this. Tiffany, what's your take on that some of the components that really reflect consumer discretionary spending power, some of the components that reflect heat in the underlying economy did show inflationary pressures, even with some of the disinflation coming from oil, et cetera?
Yeah, I mean, I think on the retail inflation side, I mean, I think you have to be a little bit careful. I mean, any one or two reports can be noisy. Of course, we got Prime Day discounting in June this year, and therefore, you have probably a little bit of snapback in prices, after those, after those discounts in June and July. So I think smoothing through the sort of noise in core goods prices, I think it still looks to us like you're seeing, some good news there. Certainly the elevated prints that we saw across core goods categories last year and early this year from the effects of tariffs and higher costs related to those tariffs. We think that's kind of fading right now. And then looking across some of the quote AI impacted categories, so those categories that are having to deal with the higher costs of chips and other things like that related to the AI build out, those categories also are looking a bit more contained here as well. So the software category, which has been important for PCE inflation because of the higher weight, that came in a little softer this month. So again, overall, I think you have to take this in the broader context that we do think you see some disinflation in the back half of this year. Again, in this report does not really change that view meaningfully one way or the other.
Do you think there's anything in this report that can change the minds of individuals we've heard about from the Federal Reserve, like Austin Goolsbee, or overnight to the FT? We heard from Susan Collins in terms of how they view inflation going into the September meeting.
Yeah, I mean, so no. I mean, I don't think this is going to change a lot of people's minds either way. I think the broader issue now of just taking a step back is what is the inflation data telling us? We clearly know that we've gotten a series of supply shocks that has impacted inflation / one-off sort of price level adjustment type of shocks. You have energy, as we talked about. You have the tariffs that are fading, and some of this AI so-called chipflation, indirect effects from that. But on the other side, so that's if that's driving inflation, those are sort of temporary factors. Monetary policy works through long and variable lags. The Fed will want to be careful. But on the other side of that, we also know that we are seeing some wealth effect in the U.S. economy that's boosting demand and keeping U.S. growth resilient. So if you're seeing inflation that's being supported more by this resilient demand growth in the U.S. economy, then that's more concerning for Fed officials. We've seen inflation that has been above target clearly for several years now, and they will want to get it back to target. And so if this is really demand-driven inflation, then that does require more of a policy adjustment. But again, I think there's some uncertainty around what's exactly driving this, and Fed officials will want to see more data. I think the other thing that's important to note here is just that the labor markets, sort of looking comprehensively at labor market data, at wage data, labor markets are clearly not the source of inflationary pressures here. So as I mentioned, that the sort of resilience in the economy is more related to a wealth effect that's happening as opposed to that labor market overheating.
Tiffany Wilding of PIMCO, thank you so much for being with us this morning as we break down these numbers. CPI coming in at bang in line. The details a bit interesting. Right now we are seeing in equities a surge up, a sort of pop up in equity futures. Michael McKee back with us for a final note. Mike, you've been parsing through Well, what's the latest?
A couple of little interesting things here, Tiffany, and you were just talking about AI and the rising expenses there, and we do see a big jump in the price level of computers, smart home products up 3.5% on the month. Computer software up another 0.5%. So we've got some AI impact in there, perhaps. We also have toys up 0.8 after a 2.5% rise in June. And this is when companies are ordering toys from China to get them here in time for the holiday season. So that might play into some holiday price increases. And finally, whiskey at home up 0.9. Whiskey, one of those areas that has been tariffed. So maybe there's a tariff impact there.
Michael McKee, thank you so much. Right now in markets, we are seeing a lift in equities, more of a reaction actually in equities and even bonds, with the S&P 500 now up about 0.5% and the NASDAQ up in the pre-market trading up more than 1%. Up next, David Kelly of JP Morgan Asset Management as markets take the inflation data in stride from New York. This is Bloomberg Surveillance.
How do you see AI changing gaming and game development in the future?
Look, I think the biggest thing that I'm thinking about is how do we just make sure it's solving problems. On the game development side, I've gone to a lot of our studios, with big and small, and I'm blown away with how they're using AI in the production pipelines, how they're using it for iteration and prototyping. That's not production ready, there's still work. And so, 30% of game development is software, and so there's the traditional applications that we see in enterprise. At the same time, I do not think AI will replace AAA games. I think it's entirely possible, though, that AI represents a new category of games and a new type of development and enables more people to create and participate. And we'll keep an eye on that, and we'll see how we best serve that.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
this plus the softer CPI print last month, has to be, a little bit of a relief for Fed officials. Some of the more hawkish members on the committee, we doubt it really changes their minds. So, I don't think this really resolves a lot. I think our lean is still that the Fed remains on hold in September. We'll just have to keep watching and waiting.
That was Tiffany Wilding of PIMCO. If you were looking for a clear answer from today's CPI data, well, unfortunately, you do not have one. And we are back to clear as mud when it comes to the trajectory going forward, with people saying that this is a one-off blip, other people saying that we will get some sort of protracted disinflation. Either way, it has been positive for equities, with NASDAQ futures up almost 1%, S&P futures up 0.5%. You could see in the 2s, 10s, and 30s that bid into bonds continuing, although fading just a bit from earlier this morning, although notably at the front end, that is where the rally is currently. Two-year yields lower by almost 4 basis points, 4.18%. On the long end, also still lower by about 3 basis points in the 30-year to 5.21%. Counting down to the opening bell, here is the trading diary for the week ahead. 1 p.m. Eastern, the U.S. Treasury auctioning $42 billion in 10-year bonds. Thursday, PPI data, jobless claims, the 30-year auction, followed by Fed speak from Beth Hammack and Tom Barkin. And on Friday, we get retail sales and the University of Michigan Consumer Sentiment Survey. If you are just joining us, we got a bang-in-line CPI print. Headline CPI year-over-year 3.4%. Core coming in at 2.5%. David Kelly of JP Morgan Asset Management joins us now for more. David, wonderful to see you. Thank you for being here. So what's your take on this bang-in-line CPI print? You can see under the hood, there's disinflation coming from energy, and there's some inflationary pressures coming from housing and elsewhere.
Well, first of all, when you look at an employment report or a CPI report, the truth is CPI is almost always what the analysts think, because we have a lot of data going into it, which just makes it very hard to have a big surprise. So not surprised that we're not surprised. Having said that, I think there is a clear disinflationary trend. There are a lot of cross currents, a lot of cross waves in the data this morning. Things like airline fare is up, but tobacco prices, not moving as much as it did last month. Differences in medical commodities and services. But beneath it all, I think there are a few things to bear in mind. One, we're going to have lower tariff costs going forward than we've had a year ago, because the new tariffs are not going to fully replace the IEEPA tariffs. Second, I do think that eventually oil prices will come down, because eventually there's only one solution to this thing, and everybody's always got to get out of the Strait of Hormuz, and I think it will. But the biggest thing to me is this is the 4th consecutive month in which wages have gone up by less than CPI inflation. 3.2% year over year in wages, 3.4% on CPI. And what that tells me is American workers can't get a raise. And if they can't, you cannot have sticky inflation. We've essentially got Teflon inflation in America. It won't stick, and it won't stick because you've got this, you can't get a price-wage spiral going if the wages won't react.
We haven't seen inflation coming from the labor market for a while, though. Yeah. This has been coming from one supply-side shock after another, and there have been many consecutive ones. At a certain point, when does it stay sticky? Like, how do you define sticky? It's been more than 5 years, and so it really hasn't been led by that.
Well, it's been more than 5 years on a year-over-year basis, but it takes about a year to fix a year-over-year problem. That's the first thing. So if you actually look on a 3-month basis, there have been plenty of periods where inflation has fallen below 2% over that 5-year period. It's just on a year-over-year basis. As you say, we've had one supply shock after another, but they've been, COVID and the policy response. We had Ukraine. We've now had the Iran war. We've had tariffs. Most of this is actually, most of it, apart from the Ukraine war, is policy decisions. I mean, the inflation we have right now are policy decisions on immigration, on tariffs, on the Iran war. If we back off, and I would even think that with more divided government next year, quite possibly, we will back off on these things. I think inflation will gradually come down. I think the wise thing for policymakers to do here is just let it happen. It's going to work slowly, and that's just how it's going to be.
When you say policymakers, you mean Fed officials. You think that the Fed should stay on hold?
Absolutely, they should stay on hold. And I actually think they will. I mean, I noticed just after this report, we just saw a further slight decline in expectations for a Fed rate hike. And every confirmation that we're on a downward path. I know it's not coming down as fast as anybody would like, but you can do no good by trying to hurry this process. There's it's like an injury. It just heals slowly. And if you try and speed it up, you're just going to mess everything up. So we have an inflation problem, which we're going to heal slowly here.
Right. And if the data is coming in either bang in line or a little bit softer like it did last month when it comes to inflation, then why do you see more Fed officials becoming more hawkish?
Well, I think they want to sound hawkish, but ultimately, I think they have a real communications problem. I think that they are on entirely the wrong track by saying we're going to communicate less. And so I think right now there are various.
Well, it's only one. That's the Fed chair.
Well, yeah, but I think it's important that the Fed chair try to reflect the consensus on the committee and tell markets about it. So I think the Jackson Hole speech that Kevin Warsh is going to do at the end of this month, that's very important, because I think at that point he's going to have to back off a little bit from his very aggressive rhetoric and say, admit that and acknowledge that there's some progress in inflation. It's not as fast as we'd like, but there's some progress, and there's a cost to everybody in raising rates if you don't need to do this and if it's healing on its own.
Do you think that if the Fed did raise rates, that would actually take control of the long end of the yield curve a bit more, that will create a better financing environment because it could suppress some of the concerns about Fed credibility and longer-term inflation taking hold in the system?
I think it's a close call, because the other thing is that if they do that, then what's to say they won't also then start attacking the balance sheet? And the one thing that's going to push up the long end of the yield curve is if you try and pull down that balance sheet. So I think that would be a kind of mixed message. Ultimately, I think the most important thing in deciding inflation expectations is how long does it take us to get to a settlement in the Middle East, some sort of settlement that allows traffic resumed there.
Does it really matter whether the Fed hikes rates by 25 or 50 basis points? Because pretty much everyone who we've talked to say that the fiscal stimulus that's coming from all the AI companies that keep doing all this CapEx spending is insensitive to where the Fed funds rate is.
It doesn't matter for the economy. It does matter for markets, because there's a lot of leverage in the system. There's a lot of leverage bets in financial markets right now. You increase the cost of leverage, that could help the markets, hit a peak and come down. So I think it could, and I'm not saying I think the markets are too frothy, but again, there are other things we probably should be doing to try to rein that in rather than just raising interest rates.
So you think that it really is a financial market response to the rate hikes that could potentially be problematic because of how much leverage there is in the system?
Absolutely, yeah. And if you do hike and you've got higher short-term rates, then the temptation is to move to a little bit more safety, and that could take some of the wind out of the market sails. So that's where I think you'll see the response. Interest rates matter for financial markets. Honestly, they don't matter that much for the economy anymore.
David Kelly, wonderful to get your thoughts. David Kelly of JP Morgan Asset Management joining us here in New York after we got that CPI print. It was the incredible, important print before we get that September meeting. And the read is, this is all in dovish. As we were just hearing from David Kelly, we now have below 40% chance getting priced into Fed funds future of a rate hike in September. So in line means potentially a reprieve from some of the rate hike bets.
Now the August CPI just becomes a lot more important. And then to David's point, what Chair Warsh says at Jackson Hole.
Yeah, coming up tomorrow, we'll be speaking with Max Kettner of HSBC, Erica Najarian of UBS, Goldman Sachs Vice Chair Robert Kaplan, and Francisco Blanche of Bank of America, taking a look at the oil sector, given what we're seeing with respect to a stalemate in the Middle East. This was Bloomberg Surveillance. Good morning.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions.
a poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years when I first became a congressman. It takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Policymakers exhale an inflation print in line with expectations. 30 minutes until the start of trading. I'm David Gura.
And I'm Vonnie Quinn. Matt Miller and Danny Berger are off today. Bloomberg Open Interest starts right now.
Coming up, a tame inflation report gives the Federal Reserve some breathing room on rates.
Upbeat earnings from CoreWeave and Supermicro reigniting the AI trade.
And oil wavers as President Trump once again escalates his rhetoric over the Strait of Hormuz.
Well, let's take a look at some of those stocks to watch today then, because it feels like it's going to be an up day no matter what else happens, thanks to CoreWeave and Supermicro, NVIDIA, and all of the related companies. So Supermicro and CoreWeave raising their outlooks as demand for AI infrastructure products shows absolutely no signs of letting up. It is potentially alleviating fears around circular financing from that $500 billion fundraise plan by NVIDIA with major Wall Street players, David.
Looking at Kava this morning as we look at the health of the consumer, Kava's quarterly sales topped estimates, even as cyclospore and salmonella outbreaks weighed on demand from other restaurant chains. Kava customers also spending more on premium proteins and add-ons than expected. We see those shares up in the pre-market 17%, Vonnie.
Well, we're just half an hour after that CPI report. Let's get a closer read on this morning's inflation data. We have Michael McKee, Bloomberg's international economics and policy correspondent, with us. Michael, is it fair to say that all in all, a fairly benign report? Is it likely to change any hawkishly inclined minds?
I don't think it'll change anybody's minds either way. It is a fairly benign report. I don't even know why I'm here, because it's exactly bang on with what economists had anticipated. 0.1% rise for the CPI on a monthly basis, and that drops the year-over-year number to 3.4%, and 0.2 for the core, and that puts the year-over-year at 2.5%. So those are declines, and that is good news. A little bit of disinflation, but when you look at what's under the hood in terms of what moved, we did see some prices still rising. Gasoline prices were down 2.9%. That's no surprise with the course of the war. But core goods and services both up 0.2%, and airfares up 2.2%, used cars up 0.4%, computers up 3.5%. So maybe there's an AI effect there. But what it tells you is basically that we are looking at a, if anything, very slow disinflation trend. We're sort of back to where we were before the war started, but that's not going to be good enough for the hawks on the Fed, who were upset at that point that inflation wasn't farther down. And this chart I just wanted to show you here, this compares the level with the monthly changes, and the economists and the Fed looking at the blue line, the level, the monthly changes, and Americans are looking at the white line, and you can see what happened. That is over the last 5 years since we had the first inflation increases under Joe Biden, and they've continued under Donald Trump. And that's why Americans are upset, because the level doesn't go down, and it went up sharply, and they're still seeing prices at those levels.
Noting here lettuce down 16%, maybe because of the cyclospora outbreak,
that's
perhaps?
Probably. There's less demand.
Less
so
demand for lettuce.
Probably a lot more supply. And the only thing, the administration can take a little credit if they want to fudge. Eggs were up 0.4 the last 2 months, but then last month they were down 0.5%.
I do digress. Let me just ask you quickly the way that Fed policymakers are looking at this. You and they getting ready to go to Jackson Hole the next meeting in September, as Endicott put it. This is one piece of the jigsaw puzzle. More pieces to come between now and September.
More pieces to come. We get the PCE for the month of July at the end of August, and that should probably rise a little bit, unlike CPI, because some of the categories that come from CPI in here into the PCE, like airfares, were higher. But we'll see what we get tomorrow with the PPI. But then we get another CPI, another PPI, another jobs report before the next Fed meeting, which is another reason I say this isn't definitive for anybody.
We are glad to have you here, even if the numbers are in line with expectations. Mike McKee, thank you very much joining us here on set in New York. And we mentioned CoreWeave's upbeat outlook leading the AI trade higher this morning. I want to get some more details now from Bloomberg Tech host Ed Ludlow. Ed, we were talking yesterday with Carmen Reinecke about this company's problems with quarterly earnings, often disappointing over these last 4-5 quarters. It was a different story yesterday. What explains it?
Yeah, it's not just the sort of beat in the quarter gone or even the forward-looking data. It's essentially evidence that the AI infrastructure build-out is probably accelerating rather than cooling. The backlog is growing. They had $25 billion of new commitments going into this quarter. And, you know, very simply, CoreWeave is in the same environment that everyone else is, where demand is outpacing its ability to supply. Typically, like, that's an enviable position to be in. In the quarter gone, revenue more than doubled year on year, $2.58 billion, slightly above consensus. But if you look at their guide for the current period, sales are $3.45 billion to $3.6 billion. Even the bottom end of that range is pretty healthily above street expectations. So lots of signs that they have momentum and that they're executing on it. So, like, you were right to flag, historically, quarterly earnings can be disappointing. CoreWeave, in its case, has always been a sort of like, you guys haven't done a very good job of taking that demand and moving to meet it.
Yeah, is this good for all the neoclouds, Ed, or is this a particular story to CoreWeave that its fundamentals are strengthening?
No. Would note that some of the other neoclouds, but neocloud is just data center or cloud computing capacity dedicated to AI, right? But those operators seem to be, you know, having similar success. You guys said right at the top of the program, NVIDIA pushing higher, and, you know, the thing that CoreWeave has in common with those other neoclouds or a Supermicro, for example, on the supply chain side, is that they all house NVIDIA GPUs inside their gear, and so that's a pretty positive sign.
All right, Ed Ludlow, thank you so much. You'll see him on Bloomberg Tech at 11 a.m. Let's discuss how the inflation print and AI earnings are impacting market momentum now with Bloomberg macro strategist Michael Ball. Michael, it feels like equities were going to do their own thing one way or the other today, right? With all of these stocks powering higher just based off of Supermicro and CoreWeave today.
Yeah, again, a continuation that the AI trade is getting a renewed momentum after sort of the sell-off we saw in July. Everything seems to be lining up as far as the whole stack, and basically there isn't any weakness. And you're getting a lot of commentary, too, saying that we've been searching throughout July from, you know, analysts all the way to strategists to PMs I speak to for any weakness in actual, you know, on-the-ground kind of reporting, and none of it's really showing up. So people then are rebulling up, and a lot of people have got underexposed. A lot of people deleveraged, underexposed to this trade, and now they're rushing back in. And you're seeing that in the option markets now. Call skews shooting up again, and people are chasing.
Michael, it's been about 36 hours since we got news of that NVIDIA financing deal, and I wonder sort of how you're thinking about it in a broader sense. I think there were so many open questions at the beginning of it. How is this going to be structured? Who's going to be the investors in this? What does it mean for the AI trade? How are you thinking about that?
Yeah, I think it's a positive. Obviously, we all have our kind of concerns with the circularity. This alleviates some of that. It spreads the pie out. The concentration in cash flow into just a few names is a problem for the overall pie to grow fast enough. Obviously, there's on-the-ground constraints to that growth, but the actual financing constraints then sort of are alleviated more. So I think it's a positive. I'm, dubious in some ways, like most, because we'll see how this plays out. But it is sort of another way of just expanding the financing avenues, and that's what we want to see, because it is ramping quickly, and this is going a lot faster. Every quarter we get these CapEx numbers growing. We know capacity is even more constrained than we thought prior. So again, we need to make sure that this sort of straw becomes the pipeline, and this is part of that.
I'm mesmerized by the amount of charts you have up on your Bloomberg terminals. 18 at least, right?
Yeah.
I'm curious, going into this inflation print, we had yields grinding higher, right? We're at 10.60.
Yep.
64 on the 10-year, but we haven't really moved. Do we continue to grind higher now after this inflation report,
well, again,
or hold steady?
Yeah, I think this was in line, like we just said. Mike hit it on the head, and basically now that's taking the pressure off. We're seeing what we'd expect: a weaker dollar, yields falling, and equities taking a relief. But we're still all watching oil. It's very unsettled in the Middle East. Oil's sort of in this sweet spot. The vol component of that's come off. So remember, we went from like 70 back up to 100 in short order. That rate of change really spooked the real rate market, and we saw rates come up. And effectively, now that we've had oil trading in a tighter range, although the situation hasn't by any means been clarified, it is at least calming the risk sentiment across asset, and that's a big important thing. So again, we go back to watching oil for a while into Jackson Hole. Jackson Hole, we're looking for Wars to clarify basically his reaction function, not necessarily anything more.
Yeah, if he does. All right,
if
Michael,
he does. Big
thank
question.
you so much. Yeah, our guest Diane Swong saying it's going to be crucial as well. She'll be joining us in a little bit. Let's take a look at those markets then. Michael mentioned oil. We do have it lower now, but it's been wavering all day on various headlines. Right now, Brent just below $89 a barrel and WTI at 83 or just short of it. It looks like we're going to have a positive day with the neoclouds, the chip companies, really everything AI-related rallying today off the back of some results. The NASDAQ 100 futures, as you can see, pointing to a gain of 1%. But S&P futures also higher. We had the equal weighted index hitting a record yesterday. And that 10-year yield going nowhere after the inflation data, which might be a relief to some, at 464 at 96 right now. All right, let's get a look at some other movers on our radar with Bloomberg's Hema Palmer. Hema.
Thanks, Vonnie. Let's kick it off with some breaking news. Home Depot CEO Ted Decker is taking a temporary medical leave of absence. He had been in the role since 2022. The stock is down slightly as traders absorb the news. Goldman Sachs will buy ETF provider Neos Investments in a $2.3 billion deal. It's Goldman's latest moves as it amps up its push into the ETF universe. The deal will boost the bank's ETF assets to a whopping $130 billion. Stock up a little bit in pre-market. And from Wall Street to Main Street, consumers are hunting for bargains, and Chili's is cashing in. Its owner, Brinker International, reported steady sales growth as its value meals drew more traffic nationwide. Everyone loves a good deal.
Emma, thank you very much. Appreciate that. Coming up here, primary results are in with mixed signals for both parties. We're going to break down the key takeaways next on Bloomberg's Open Interest.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC. Africa CDC is the leader in terms of public health in Africa.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Now to high interest, to look at what's making headlines around the world. London's white-collar exodus may accelerate. New analysis by the recruitment company Robert Walters estimates that 90,000 jobs could shift to other UK cities over 5 years. Manchester expected to be the biggest winner, followed by the Midlands and Yorkshire. The exodus being driven by London's high costs, the rise of hybrid work, and a government push to shift economic power beyond the nation's capital. Goldman Sachs doubling down on ETFs, agreeing to buy Neos Investments for up to $2.25 billion. Neos manages about $32 billion, largely in options-based income ETFs. The deal will lift Goldman's ETF assets to roughly $130 billion. And moderate Democrat David Crowley projected to win Wisconsin's Democratic gubernatorial primary, narrowly defeating Democratic Socialist Francesca Hong in a race that tested the party's ideological direction. Crowley now advances to face Republican Tom Tiffany in November in a key battleground state. On Wisconsin, as they say. Let's get the latest from Bloomberg Washington correspondent Tyler Kendall. Help us understand what's happened here. So after Michigan, I think there was a lot of caution, Tyler, in terms of what should we take away from the Michigan results? Does it signal that the kind of progressive branch of the Democratic Party was in the ascendancy? What can we take away kind of broadly from those results in Wisconsin yesterday?
Well, David, it's important to put into context some of the nuance here because, if anything, these results from last night, including the race in Minnesota, do tell us that those intra-party tensions in the Democratic Party still remain. Because, yes, Francesca Hong's projected loss in the Wisconsin primary does mark a setback for what really has been momentum behind Democratic Socialists after a string of wins in recent weeks. You have to keep in mind that she had failed to secure the endorsement of some very prominent progressive figures in the party, like Senator Bernie Sanders, amid broader reported concerns about her viability as a candidate when it comes to November and the general election. But then compare that to what happened in Minnesota, the Democratic primary there for the open U.S. Senate seat. We saw Peggy Flanagan, the lieutenant governor, who is a progressive win there. So that was a progressive win last night. But Flanagan had, of course, secured those more progressive endorsements from some of those big players in the party. So it does go to show us that there seems to still be a dichotomy here within the party. Whether or not Democrats use what happened in Wisconsin to help the more establishment candidates move forward remains to be seen. But it's very clear that both parties are going to be looking at what happened last night as they try to inform their messaging as we get closer and closer to Election Day.
And then, Tyler, President Trump had something like 13 endorsements across the various primaries yesterday and a couple of losses also in South Carolina, and an inconclusive result there.
So we should mention that President Trump's endorsement track record for the primary season so far has been pretty significant and pretty strong. But last night, as you're alluding to, Vani, we saw at least two of his endorsements fall short of perhaps expectations. One was in the Minnesota gubernatorial Republican primary. That was Mike Lindell, the MyPillow founder. He did not secure that nomination despite having President Trump's backing. And then the race in South Carolina, that critical Senate seat left vacant by the late Senator Lindsey Graham. His sister, Senator Darlene Graham, does advance to a runoff. She secured President Trump's backing, but she did not secure enough votes to clinch the majority, which then would have given her the nomination. She now faces Republican Congressman Ralph Norman of South Carolina, who I think it's fair to say has a rather complicated history with this White House, so that potentially could expose some cracks when it comes to President Trump's support and sway among his base.
He famously obviously backed Nikki Haley. Nikki Haley saying she's going to back him in that runoff. Tyler, let me ask you about Iran before I let you go. A breakthrough still seemingly very elusive here as talks continue. I gather not between the U.S. and Iran, but with these intermediaries and Iran. What's the latest you can tell us about where things stand as we see oil again climbing higher on this Wednesday morning?
Well, David, we actually have new reporting out on the Bloomberg terminal that Iran's military is restructuring to take a more aggressive posture amid what has been a flurry of new military appointments confirmed just yesterday. We heard from a top IRGC official telling Iranian state media that this new confirmation of appointments marks a, quote, offensive doctrine compared to what he says has been a defensive posture so far in the war. This is really the first indication that we've gotten about the strategy behind Iran's military appointments in recent days, coming from this IRGC official who was speaking on behalf of the supreme leader. That does seem to signal that escalation is here on the table, as at least publicly both sides have been digging into their positions. We can say that mediators from Pakistan are in Iran today, so the idea that diplomacy is continuing is at least in the backdrop, but really no indication on what a potential breakthrough could really look like at this point.
Tyler, is there going to be more fallout from the story that emerged that the president has now acknowledged that he was taken in a catering truck to a different airplane and that basically the American public and many senior officials wouldn't have known where he was for several hours?
Well, Vani, there's a few different threads that we could pull on here. President Trump yesterday publicly confirming that this covert operation did happen, but he did deflect back against that criticism, saying that he does as he's told and that the Secret Service and the military had instructed him that he needed to change planes. It raises questions about, one, the threat assessment when it comes to Iran's threats against the president and his safety and making sure that he's able to move freely and safely. This, of course, happening just days after the U.S. decided to bomb Iran amid disruptions to commercial shipping while the president was overseas at the NATO summit. It is also raising those questions about how the intended plane that President Trump was believed to be on was carrying other White House officials and journalists on it. And then lastly, the thread that we can pull on are questions about that Qatari gifted jet that we know President Trump would like to use, but reporting indicates there could be a lack in terms of the safety features on that specific aircraft carrier, which didn't allow him to take it overseas.
Yeah, gone for a tune-up apparently. Tyler, thank you so much. That is Bloomberg's Tyler Kendall in Washington. Coming up, Cava's pomegranate glazed salmon is a hit, apparently, as diners spend more on high-protein options. More on the sector next. This is Bloomberg Open Interest.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Shares of Cava are soaring pre-market thanks to a 9% jump in sales. Brinker, parent company of Chili's, reporting steady sales growth. Let's get a read on the sector with Michael Halen, senior restaurant analyst at Bloomberg Intelligence. Swimming upstream, I think, is probably the right metaphor for Cava, right? Because it was basically sales of salmon. Is this the protein obsession?
You know, this is interesting because steak was the hot item last year. Salmon seems to be even more impactful, and I think the real reason why is there's not really good or many options for seafood in fast casual, right? And so this is novel, something a little bit different, and it's really it has really driven strong traffic in the first half of this year.
What can we take away here about the health of the consumer? I guess an insatiable hunger for pita chips with sumac and other seasonings here. What explains the success in light of what we've really seen here, which is a lot of pressure on consumers, even though they've managed to kind of spend their way through it?
They've been resilient this year, right? And a lot of that has been the higher tax refunds than the year before. I think that's a good piece of it. But we're actually surprised at how strong they've been, you know, over the last couple months, despite all the inflation we've seen at the pump and with food prices. So a resilient consumer is what we're seeing.
And it's because of the add-ons too. So David mentioned the pita chips. They're add-ons apparently at the last minute. We heard this from Starbucks as well. Customers are more inclined to just take that little extra treat. So is it the ingenuity of some of these, you know, offerings, or is it really that the customer just has plenty of disposable cash?
No, I think, you know, what we see in our business is that, you know, there's a wide divergence between winners and losers, and Cava's winning because they're providing guests with a good value for their money, with a good experience, right? Like the value equation, which is what you get for what you pay, is being hit by places like Cava, Chili's, right? Where we're also seeing places like Wingstop and some other chains that we cover struggle mightily right now. So there's really a big divergence between winners and losers, and so it's hard to discern, you know, consumer spending overall based on one chain's results.
Gotta get to Brinker, and I know you gotta make the sales pitch to Vani to go to Chili's for her first time ever, but let me ask you about Cyclospora. Cava not affected by this, but it brings this broader question about how companies that haven't been have to navigate a perception or a fear that it might be something that consumers have to contend with.
Yeah, it's interesting. There was a little bit of impact on Cava, but sales have rebounded to the mid-single digits. You know, I think part of it is how much lettuce is on your menu, right? And that's kind of been what a lot of these chains have been battling. Sweetgreen obviously sells a lot of salad, so that's been most impactful for them. But these problems, salmonella as well, haven't been due to the chain's food handling procedures. It's really been about supply and in the supply chain. And because of that, we think they're going to be generally short-lived.
Talk to us a little bit about Chili's. So also, you know, nice positive trends there. What's Chili's doing that's so attractive?
Oh, the management team's phenomenal. You know, best-in-class marketing. The marketing team has been great. This year, a lot of it, you know, better operations was early on in this turnaround. This year, it's been about improving the food quality. They continue to invest in improving the quality of the food, improving different popular menu items, and you know, it's really driven stronger same-store sales there.
So are we going to see more sweet fruits paired with proteins for next season?
For Cava, for sure, I would expect.
Look for a mango, something or other. Did they give us any hints?
Yeah, I think they did, but to be honest with you, it escapes me. It's been a long earnings season.
Whatever it is, I'm sure it'll be delicious. Michael, thank you so much. That is Michael Halen of Bloomberg Intelligence. Let's get a check on these markets now. 4 minutes before the opening bell, it's going to be an update for the NASDAQ, pointing to gains of more than 1%. Another update for the S&P. We might even see a record after 2 days of very small declines. And then no trouble really in the 10-year yield at 465.57. Remember, we have that auction at 1 p.m.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Mere moments away from the start of trading. This is Bloomberg Open Interest. I'm David Burr. Let's get a check of those futures. Of course, we were waiting with bated breath over the course of the morning for those CPI data. They came across in line with expectations, and we've seen futures reacting, as you might expect, with some exhalation here. They were not as bad. They were as softer as we expected they might be. Let's take a look at a few companies here. As the bells begin to ring here, let me turn to the New York Stock Exchange. We've got Lundy & Wasson. This is the largest manufacturer, I learned this morning, of copper foil. It's celebrating its IPO at the NYSE this morning as we see the opening bell ringing there. Let me pivot over here to the NASDAQ, where we see a lot of applause for Kodiak. This is a company, Kodiak AI, that's in driverless technology. This is a company that went public almost a year ago to the date. And Kodiak has 35 autonomous trucks now, if not on the road, getting there, ready to be tested. So the AI story in driverless vehicles on full display at the NASDAQ Market Center. Bonnie.
physical AI.
Physical AI, the future.
AKA robots.
Yes.
All right, let's take a look at some of the stocks that are powering not just the physical AI, but everything else AI related. CoreWeave and Supermicro just powering ahead today. CoreWeave and all of the neo clouds are going to get a boost from this. Really blowing away estimates, up 21% in the pre-market, and we'll see how it happens to trade after the open. Supermicro Computer also, there we go, we have opened now. Supermicro up almost 9%. Investors really just encouraged by these companies' results. Their outlooks raised as demand for AI infrastructure products shows absolutely no signs of letting up, and potentially putting to bed some of the, at least, fears surrounding the circular financing and NVIDIA's $500 billion platform fundraise with various Wall Street firms, David.
Yes, and Kava's quarterly sales, as we were just discussing here on the show, topping expectations, even as Cyclospora and Salmonella outbreaks weighed on demand for other restaurant chains. Kava customers also spent more on premium proteins and add-ons than expected. We see Kava up here with 12.5% on this Wednesday morning. Well, speaking of the consumer, July CPI came in line with estimates, which is still above the Fed's 2% target. Joining us now is Naveen Chief Investment Officer Sarah Malik. Sarah, great to have you with us. And let's start with those data that we got this morning. Your reaction to them, both the headline and what you saw under the hood, and sort of what it means for markets going forward.
Today's CPI print puts the bar for a Fed hike much higher than the bar for a hold. The Fed has no reason to raise hikes at its next meetings. What I liked about the CPI number was the rent number was much softer than expected, which was positive. Right now, markets are pricing in a 35% chance of a rate hike at the September meeting, but I think that number will continue to decline. I don't think the Fed will hike at the September meeting, and this gives them permission to stay on pause for a while because this CPI number follows a soft payroll number. The number I will be watching to perhaps change my mind will be PPI tomorrow, particularly watching non-housing within PPI, but that likely will not be enough for the Fed to raise rates at the September meeting. They can stay on pause until they see hotter inflation data or labor market data, and right now, that is not what we're seeing. We're seeing some nice soft prints and inflation trending closer to that 2% Fed target.
Is the Fed chair's wish coming true, Sarah? It seems like the market is actually waiting on each next incremental piece of data and then reacting to it, which is what the Fed chair said he wanted to happen.
Well, markets are becoming much more data dependent than dependent on the Fed. Every one of these data points, ranging from CPI to PCE to payrolls data, is going to be highly scrutinized for the markets. I think what the Fed and Warsh is also getting is tamer inflation. Perhaps that is due to some productivity gains that we're seeing from artificial intelligence. So that, I think, that trend is what the Fed wants to continue to see because it allows them to remain on hold with interest rates. And also, yields should back off today, but we had seen some tightening already happening in the markets because of higher treasury yields. So markets were kind of doing its job with tightening already, but now we're going to see all of that back off as we should be in a camp where the Fed stays on hold with interest rates for the time being.
Sarah, let me stick with that relationship between AI and productivity gains. And, you keep hearing from economists it's still too early to kind of divine what this is going to mean for the economy more broadly. But as you've been going through earnings over the course of this season, are you seeing sure signs of the fact that this is having an increase or a productivity boost here for some companies?
We're still seeing earnings growth driven by artificial intelligence and spending on hyperscalers and CapEx in that area. In 2026, we expect to see about $750 billion spent on hyperscaler CapEx. That's all continued. Now, the question for the markets has been, when are we going to see the return from all of this spending? We're not seeing significant gains from the spending yet. We're hearing companies talking about it. I can't say that there's huge quantifiable gains across corporates in terms of what we're seeing. But eventually, what we hope to see is more of a productivity boom from all of this spending on AI. The good news is, though, earnings is what drives stock markets higher, and technology stocks and AI-driven earnings are still continuing to be the leader in terms of growth. But what we also expect is markets to broaden, because if you look after technology earnings growth, you're seeing growth in other areas like materials and industrials. All that's very positive for the markets to broaden, which would lead to a healthier market.
Well, that's what I was just going to say, Sarah. With all these AI headlines, basically taking over the narrative, right? What are we missing about the rotation trade that could be very consequential, given that we literally yesterday just hit another record on the S&P equal weighted index?
I think that's because of the earnings growth we're seeing in other sectors. So as inflation pressures ease, that's positive for materials companies. As the economy continues to remain pretty strong, it's good for industrial companies. You know, interest rates movements can be positive for financials, and regulations are getting easier for financial companies. All of that's positive for the non-tech trade. So while tech had a very strong first half, took a bit of a breather after that, and has been reasonably strong recently, I think what you're going to see in the second half is more broader market participation. So if I'm looking at equities, it's not just about owning U.S. growth stocks. Global equities look more attractive to us because that lets you keep one foot in the ground and one foot in the tech side of the trade, but also get to benefit from the rest of the world, international developed markets, emerging markets, which are also performing quite strong year to date.
On the subject of circular financing, I'm curious if you breathed any kind of sigh of relief when that news release landed a couple of days ago about that NVIDIA deal, if it had the kind of desired effect you think on the market here of assuaging investors who might have been worried about that, to see these 6 major firms lining up with NVIDIA on that financing agreement.
It was positive for NVIDIA, which has been, kind of a laggard recently. Circular financing in terms of these tech stocks is definitely a concern. You're seeing a lot of companies do deals with each other, sort of funding each other's deals, and that's becoming a bit of a concern. So it is promising to see less of that and more of companies definitely, broadening the economic growth for technology and the sector, and not so much relying on each other for their growth.
Sarah, you mentioned international opportunities. Where would you be looking, given that we've seen such volatility in Korea, though that seems now to have settled? Or would you be looking to some of the underloved plays, maybe India or somewhere else?
Well, Korea is definitely more of a tech trade. It had such a strong year last year that not surprised to see it give some of that back. And it can be very dependent on what technology is doing in the U.S. and in the rest of the world. So if you're looking for areas that are more cyclical, you'd be looking at more European sectors, European material stocks, European industrials. Those would be areas that would be playing off a global cyclical recovery, playing off perhaps rates that aren't increasing as strongly as people expected. European financials can be very strong. Those are areas that we'd be looking to get more of a cyclical flavor to our portfolios rather than being so dependent on tech, which the U.S. and parts of Asia like Korea are.
All right, Nuveen Chief Investment Officer Sarah Malik, thank you so much for joining us today. All right, let's get a check on the stock market now. We were anticipating an up market, and indeed, we're getting about 212 stocks higher, 289 though still lower. As you can imagine, it is the optical plays, it is the chip plays, it is basically all of the AI stocks that are leading us higher today, and that's why we're getting sort of more of a movement to the upside than the downside in spite of fewer stocks being higher. But obviously, NVIDIA, one of the best performers in terms of weighting, but you have all the chip stocks, Broadcom, Micron. You've also the optical stocks that are doing extraordinarily well, although you're not seeing them on this immediate board. And obviously the memory stocks. On the downside then, some of the ones that have been doing well up to now, so some of the pharmaceutical stocks, for example, they had their day a couple of days ago. Apple continues to decline just by gradual increments day after day. It was at a record though, so don't think stockholders are too worried. Same with Berkshire after the earnings. And Meta Platforms also continuing to decline there. So some of the underloved stocks continuing to be underloved. Tesla as well, still at 330. Let's take a look at the sectors that might give us a little bit of a better picture. As you can see, it's infotech that is leading all the way up, more than 1%. And energy, which was one of the leaders yesterday, on the decline thanks to oil prices being a little bit lower, though that could change on a dime as well. Real estate suffered yesterday, up a little bit today. Perhaps that's off the back of the potential or the less potential for a September rate hike that could be helping real estate stocks and utilities as well, of course, if rates don't actually move higher. David.
All right, going to talk about consumer real estate here in a little bit as well. Coming up, the AI trade gets fresh momentum as sustained demand overshadows circular financing fears. This is Bloomberg Open Interest. Stay with us.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the skill set that you would advise every aspiring CFO to develop?
Psychology.
I think analytical skills are important. Obviously, you need to like the numbers. If you don't like numbers, then don't go into finance. It's sort of like a recipe for disaster if you don't like numbers.
Not only for the CFO, but also the company's management. That's a communication and the collaboration.
I spend a lot of time figuring out how to take the complex and make it simple, and then finding a way to be able to communicate that both internally and externally.
I think it's relationships, whether it's working with investors, bankers, with the senior management team, with the board. Having your head down is one thing as a finance person, but keeping your ears open is super important as well. And I think that all of that is what kind of builds out being a successful CFO.
Watch Chief Future Officer only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
Time now for our top calls. Here's Bloomberg's Hema Parmer with some of the analyst action in focus this morning. Hema.
Thanks, Vonnie. First up, William Blair is downgrading sneaker maker On Holding. They're worried about rising inflation and heavier promotions and that it could eat into sales and earnings over the next year. Next up, we have Barclays downgrading Gap. They're pointing to a crowded apparel market and pressure on lower income shoppers. And they say the delayed turnaround of its Athleta brand isn't helping matters either. But finally, some good news to wrap things up. Analysts are bullish on CoreWeave. Remember, this is a bellwether for the whole AI data center boom. Citi points to strong demand and improving margins, and JP Morgan says the real excitement is in the company's long-term outlook. Those are your top calls. Vonnie?
Thanks so much, Hema. Well, those upbeat results from CoreWeave and also Supermicro reviving the AI trade following concerns of circular financing from that platform that NVIDIA put together with several Wall Street firms. Let's discuss now with Bloomberg Equities reporter Carmen Reinecke. So CoreWeave has some advantages in that it has NVIDIA-powered servers at the ready, right? And it also seems to be just having its fundamentals improve. What else is happening with CoreWeave?
Yeah, this was really the quarter that investors were waiting for. I mean, we talked about it yesterday. The stock had fallen after each of the last 5 earnings reports. And this one, we're finally seeing the stock jump. It's up more than 20%. It's a really great day. Some green on the screen for CoreWeave. What investors were really looking for was that all of this demand that we're seeing for compute here would be moving into revenue. And CoreWeave delivered. They had solid revenue in the quarter. They have a solid backlog. They also showed that they're expanding their margins, which is something that investors were really looking at. And on top of it, they said they're seeing even more demand than previously thought. So a lot going in this company's swim lane right now.
I look at the sales projections. I look at the backlog that you mentioned a moment ago, $104 billion at the end of the quarter. How should we look at this? Is that the most important metric here when you think about the health of this company, the level of demand is manifest in that?
That's a great question. I think that there are a few really important things here. So the level of demand, I think people actually, it's just assumed at this point. We know there's so much demand here. I think what's more important is really the revenue and then the margin. So the profitability of these companies, we know that there's demand. Can you get it online? Can you actually make money from it? I think it's also important to point out that Nebius, one of the other neo clouds, is also up. It had it reported its own earnings today. Shares are up today, also on a solid revenue.
Yeah, but it wasn't just the neo clouds, right? It was also the optical companies, Lumentum, and that has an effect on Coherent and several other optical companies today, and also Supermicro, which not that long ago had a lot of accounting problems that sent that stock into the basement.
It did. It's been all over the place. That company is such an interesting story. It was an early AI winner, right? Also tied to NVIDIA, using their GPUs in its servers. But what we're seeing again is that the revenue is good. People are paying for these products. So we're seeing sort of the pendulum swing back to these AI infrastructure names, which even just a few weeks ago, we were getting a little bit of rotation out of. So the earnings here are solid. Investors know this is the place that they want to be, and so we're seeing these stocks get more shine.
Let me return to a word that Hema used, that's bellwether, and I'm curious about the bellwetherness of all of these companies. Should we be looking at them in that way? I mean, we see other stocks rising in concert with them. Are we kind of seeing investors just kind of grab for any positive indication that they can get here of the AI trade?
I mean, there are so many different pockets of the trade. I think if you're thinking about neoclouds, like CoreWeave is really the one that people are looking at. It was sort of first to market and is sort of considered ahead of its peers in the space. But then looking at the entire ecosystem, it's so large and there are so many little pockets that there are a lot of choices, and I think that's a good thing.
Yeah, I mean, we're even seeing just the regular old chip makers higher today, right? And NVIDIA, among them. NVIDIA, I guess, is still the poster child for AI, right?
I would say so. I mean, nothing has really come to sort of take that crown away. It's obviously in such a different space than a lot of these other companies, right? I mean, it's 3 years into a major expansion. Those results coming up next, I think that's the one I'm turning my focus to.
That might be the next catalyst for this market.
There you go. Carmen, thank you very much. Great to see you. That's Carmen Reineke joining us here on set in New York. And coming up, Bank of America put in $250 billion behind AI, energy, and U.S. infrastructure. We're going to have more on that story next. This is Bloomberg Open Interest.
The most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
Bloomberg Open Interest. I'm David Gura. Take a quick check of stocks here a few minutes into the start of trading. Starting with the S&P 500 up about 0.4%, the NASDAQ up 1.1%. Markets breathing a sigh of relief after that report, the CPI report that we got this morning showing that inflation was in line with expectations, giving the Fed a bit of breathing room here going into the Jackson Hole speech at the end of the month, the next meeting which takes place in September. I want to look at oil here if we could. Brent, down slightly. This has been wavering over the course of the morning as we continue to follow the story about whether or not there's any progress toward a deal that would open the Strait of Hormuz. The president had previously been optimistic that was going to happen. Oman was in talks with Iran. The latest indication is that Iran is kind of consolidating its leadership, raising a lot of pessimism among those who are watching this conflict. There's going to be a deal anytime soon. We were talking about this just a moment ago. Supermicro and CoreWeave looking at these neo clouds, as the neologism is, performing much better than expected. Those earnings reports from both those companies coming in much more positively than a lot of folks expected here. As Carmen Reinecke said a moment ago, there had been such expectation in light of past earnings from CoreWeave in particular that have been kind of disappointing, that we might see that once again. In fact, that is not the case. And we see CoreWeave up here 17% here. And I want to go to Goldman Sachs lastly here, that major bank, which was involved in that financing deal that we've been talking about over the course of the week with NVIDIA. Goldman Sachs entering into a deal here with NEOS, the ETF provider, a $2.3 billion deal, expanding Goldman Sachs asset managers' reach in the actively managed ETF market. Now I think worth $130 billion volume.
Yeah. Fascinating. And for more on that Goldman deal, David, we're joined by Bloomberg finance reporter Catherine Doherty. Is this considered a win for Goldman, or is Goldman just putting itself out there with potential risk and riskier products just coming to market now as well?
So I actually think that this product is intentionally meant to manage the risk. It's giving some upside, but it is capping at the downside. So this acquisition is giving them access to options-based ETFs. This has grown organically. NEOS is one of the biggest providers of such product. So for Goldman, they had the choice of either to build their own in-house organically or do what they did today, which is acquire an established player and add into their now expanding offering within their asset management business of ETF products. So that's what you're seeing with this $2.25 billion acquisition.
Sizable, no doubt. Let's step back here. What does it say kind of directionally about the tack that Goldman is taking right now?
I do think that there has been a shift, especially that Goldman has shown with its pocketbook, to ETF products. So again, we have a lot of asset managers, even outside of Goldman, that are looking at ETFs as an attractive product because you can get substantial upside, but also with certain products like this one, you can manage the risks of the downside. So you get exposure, but it's not just direct exposure to stocks or to indexes and major fluctuation that could occur if you are in individual performers. So today, when you are announcing a big acquisition like this, Goldman is just adding into what it can offer to both its clients and institutional partners.
So what does NEOS specialize in? Why did Goldman go for this particular ETF provider? Was it the only one for sale? I mean, I'm sure not, right? If the price is right.
They are specializing in options-based ETFs. And this has some yield that they can take advantage of. They're bringing in their team. The executives at this company are going to join Goldman's partnership, and they're going to remain on. So presumably their leadership and their advice is sought after. The Goldman is not just acquiring this to add in the assets. They also really want to have the expertise from the leadership as well.
I remember reading Lloyd Blankfein's memoir, and he talked about how he was at J. Aron and it was brought into Goldman, and it was an uncomfortable and uneasy integration of that company into Goldman. Has it gotten better at this, acquiring companies and kind of finding a kind of cultural unanimity that works?
I do think so. Late last year, they acquired another ETF provider, so this is not the first time that they have done this. It seems like in naming, again, their leadership to Goldman's partner list, they are embracing the outside, you could say. So I think that does signal, at least from an outside observer's perspective, an embrace rather than resistance to change.
A word on this Bank of America $250 billion initiative on infrastructure, obviously something JP Morgan had also done a little while back. Is it Infrastructure Week again?
Yes. So we have seen Bank of America today with their $250 billion pledge. That's through July 4th of next year. JP Morgan, you brought up, Morgan Stanley similarly have a $1.5 trillion pledge. That's over a decade, so a 10-year period. Across the board, all of these banks are signaling that they want to be supportive of the build out of data centers, of products that are going to really improve the infrastructure of the United States moving forward. So they're doing this by both financing, using their own capital, but in many ways it's also advisory and other ways that they can, as a bank, support the growth without just pledging their own capital, but they're still putting money and having their own clients put money to work as well.
The symbolism very apparent there. $250 billion on the 250th anniversary of the signing of the Declaration of Independence. Very quickly here, is this done in concert with the government in any way, or they're kind of they're prioritizing these investments that are kind of in line with general domestic priorities as well?
They are prioritizing. I will also say that the banks in many ways have been doing this already. So this is a pledge, it's a commitment, it's a verbal commitment that they are making, and it is around the 250th birthday, but they're saying that this is about the country and putting politics aside.
Yeah, Brian, not completely in President Trump's favor, right? This might change things a little bit.
I think that they're all just there to support the growth of the country, and this is their way of putting their dollar signs out there.
Diplomatically put. Catherine Doherty, thank you very much for joining us here in New York. Coming up in the next hour, Diane Swank of KPMG, and her reaction to those CPI data. That's coming up.
Famous dogs. You have they look like balloon kind of figures to some extent. How do you make those?
In the case of the balloon dog, I blew up a balloon dog. So I had this balloon, which is kind of like a latex type of piece, molded it, cast it, and then blew that up in scale and put it into a clay, and eventually had that transformed into stainless steel.
So when you have a balloon dog, let's say, a regular size one or then a big one, did people say, Jeff, you're crazy? Were you shocked that people were willing to pay very high prices for this?
When I was making my first balloon dog, one of the purchasers was Eli Bro. And originally I thought I could make a balloon dog for around $300,000 that I could manufacture. It's a large piece, over 10 feet long, or 12 feet long, 10 feet high. But it turned out that the fabricator came back to me and said, you know, Jeff, I can't do it for $300,000. It's going to be $650,000. But eventually, then they raised the price again. And they finally brought it up to $1.6 million. And I told Eli that this is the reality of it. I showed him everything, and he ended up paying for the production costs.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Sherry Preston. A new report out on inflation shows consumer prices jumped another 3.4% last month from a year ago, and wages just aren't keeping up. Here's ABC's Jim Ryan.
Inflation, as measured by the Consumer Price Index, rose 0.1% from June to July. Compared to last year, prices are 3.4% higher, a slight slowdown from last month. Troubling to economists is that inflation is still pacing ahead of wage growth. In other words, rising prices, but stagnant paychecks.
Gas is averaging $4.04 a gallon nationwide, 16 cents higher than a month ago, according to AAA. A win for the establishment Democrat in the Wisconsin primary for governor. David Crowley defeating Democratic Socialist Francesca Hong in the race for governor.
The primary was a nail-biter, Crowley only beating Hong by a few thousand votes, even as polls showed Hong with a comfortable lead. But many of the country's top progressives distanced themselves from Hong, who previously called to defund the police, and in a 2020 since-deleted social media post wrote, "Cancel Thanksgiving," saying it promoted colonialism. She's since said her views have changed.
ABC's Jay O'Brien. In Minnesota, 2020 election denier Mike Lindell, the founder of MyPillow, lost the GOP primary for governor, but he is not conceding.
When you're favored 3 days ago by 9 points, this is mathematically, it looks impossible.
Senator Amy Klobuchar won the Democratic primary for Minnesota governor. In Colombia, people continue doing all they can at debris sites where victims may be trapped in the rubble. ABC's Faith Abube is there.
I mean, a lot of people are here not because they have relatives who are trapped, but they know the feeling of losing someone or not knowing where your loved one is. So they've dropped everything, grabbed whatever they can, and they're here to help dig through this debris of steel and concrete. There are also people here who have bottles of water, and they're giving them out to rescuers.
You're listening to ABC News. ABC News can report that during a conference scheduled for federal court this week, it's expected that prosecutors and defense lawyers in the Luigi Mangione case will discuss a possible plea deal in the killing of United Healthcare CEO Brian Thompson, according to sources familiar with the matter. New York City police say major crime is now nearly 7% down citywide, with the fewest murders, shooting incidents, and shooting victims in recent history. 3,000 guns, police say, have been taken off the streets. At least 700,000 power customers across the Midwest are in the dark this morning following a line of strong storms. ABC's Sophie Flay.
Wind gusts in Columbus reaching 82 miles per hour.
It was like a freight train, just like people say.
In the town of Roseville, floodwaters submerging cars. Authorities say one person was killed. In Chicago, the Midway Air Traffic Controller Tower had to evacuate amid tornado warnings. At one point, nearly 1 million customers in Indiana, Illinois, Ohio, and Kentucky were without power.
Pennsylvania is suing TikTok, the attorney general accusing the social media app of not protecting young people. Retired Royal Air Force pilot Andy Green reached a new record high speed, 406 miles an hour. He did it at Utah's Bonneville Salt Flats in a 32-foot car powered by 2 hydrogen combustion engines. You could buy one if you win Powerball tonight. The drawing has now topped $1 billion for the jackpot. Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they perform.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant?
Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. This is the Bloomberg Intelligence Program. Scarlett Fu off today. Stacey Vanek-Smith sitting in for Scarlett, so we are in good hands for the next couple of hours. Coming up, we're gonna check in with Tyler Kendall, Bloomberg News Washington correspondent. Get the latest on the Mideast news. There's lots of different cross currents of news out there. We'll try to get a sense of where we're going here. Mira Pendit, global market strategist at JP Morgan Asset Management, get her thoughts on these markets. Sam Fazeli, Bloomberg Intelligence, he covers all the healthcare stuff for Bloomberg Intelligence from London. We'll get the latest on what's happening in the world of healthcare. We had some good tech numbers last night, some good results coming out of those tech players out there, giving a little bit more, I think, oomph to this AI trade as if it needed it. Woo Jin Ho, Bloomberg Intelligence senior hardware and networking analyst, talks about Cisco, Supermicro devices, lots going on out there. Restaurants are starting to report some of their numbers. Mike Halen, he covers the restaurants for Bloomberg Intelligence. He's going to be in studio breaking it down for us. We got a lot coming up on earnings front. We had some eco data this morning, showed some benign inflation. That's a good thing. The markets are trading a little bit higher here. But let's kick things off here. We will go to Alexis Christoforous for a Bloomberg Business Flash.
Thanks very much, Paul. And stocks have turned mixed here in recent trading despite a tame inflation report for the month of July. The S&P 500 in the green by about 18 points, but the Dow Jones Industrial Average giving up an early gain, now down about 17. NASDAQ Composite up 150, and the NASDAQ 100 gaining 272 points, or about 1%, being led higher by CoreWeave. That stock up 18.5% on stronger than expected sales at the cloud computing company, while Supermicro up 13% after its revenue forecast topped estimates, and that's lifting shares of other companies tied to the AI trade. Lumentum, Marvell Technology, Coherent, all higher here this morning. Coherent, by the way, out with earnings after the closing bell, along with Cisco and StubHub. Taking a look at the oil pits, Brent crude is down 0.5% at 88.48 a barrel. West Texas Intermediate crude down 0.7% at 82.62 the barrel, and the Bloomberg Dollar Spot Index down 0.1% at 1201.57. We have got yields lower across the board. The 10-year yield down 2 basis points to 4.66%. And Home Depot's CEO Ted Decker, he's going to be taking a temporary medical leave of absence, with 2 longtime executives stepping in to steer the retailer through this lackluster housing market. Once again, NASDAQ 100 up 272 points. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous, and that's a Bloomberg Business Flash. Back over to you.
All right, Alexis, thank you so much. We appreciate that. Stacey Vanek-Smith sitting in for Scarlett Fu today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. All right, folks, you can now be a part of the show. Submit questions for the experts and guests on our show. Visit Bloomberg.com/AskRadio. It's an exclusive feature for Bloomberg.com subscribers and terminal clients. Visit Bloomberg.com/AskRadio to join the conversation. We got red and green on the screen here. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Carmen Reineke. She is Deputy Team Leader for U.S. Equities. Carmen, what are you looking at today?
Yeah, so the first thing I'm looking at this morning is shares of CoreWeave. So this is ticker CRWV. The stock is up about 18% right now. The company reported earnings last night. This was an important one because the stock has actually fallen after each of the last 5 earnings reports. So this is the first one where we've seen the shares jump. It's a really nice jump. Investors saw what they wanted to see. The company gave a solid revenue outlook. They also said that they're seeing margin expansion, and they have a larger than expected backlog because there's just so much demand for AI compute. So that's lifting that stock today. And it's also lifting shares of Nebius Group, NBIS.
Okay.
Also had results today, just another neocloud in the space.
All right, what else are you watching this morning, Carmen?
Yep, so another earnings mover today is Supermicro. This is ticker SMCI. Shares are up 13% right now. Intraday, this is the most since the end of July here. So the stock also gave a solid revenue forecast. The topped analyst estimates. We're really just seeing that all of the money that we're spending, all this heavy CapEx, is benefiting sort of the AI companies on the other side of the table there. So the AI infrastructure names. So Supermicro seeing a little bit of a bid here after a pretty volatile first half of the year.
Yep. Yeah, really underperformed some of its peers.
It did.
Like Dell and Samsung and those types of things. We're going to have Woo Jin Ho from Bloomberg Intelligence on later this morning. We'll chat with him and break down the SMCI numbers. How about Lumentum.
Yeah, so this one is super interesting. Also had some earnings this morning. This is ticker LITE. Shares are up about 7% right now. The fourth quarter results beat expectations. Outlook was also above consensus. I also wanted to flag, so we've seen these optoelectric stocks really surge this year. It's been sort of one of the key momentum plays within sort of the AI infrastructure trade. My colleague Ryan Vostelka has a great piece out on sort of this group of the market today, the optical stocks. So highly recommend reading that. We're seeing the whole group.
Never heard of this company before. $78 billion market cap, 10,000 employees, based in San Jose. There's just so many tech names out there that are tangentially being touched by AI.
Well, and who knew that really the breakdown here is copper versus this sort of electrical, this kind of wiring?
I would not have thought of that.
Who knew?
But I guess if you're a scientist, or that's the kind of stuff you look at. Carmen, thanks so much. We appreciate it. Carmen Reinecke, Deputy Team Leader for U.S. Equities there. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. A little bit back on the geopolitics front. I mean, there's so much news flow back and forth. I don't know if anybody's talking to each other as opposed to just talking past each other. So, Stacey, I don't know where we are here.
It seems like conversations are happening between people, but then also between those people and the media.
Yeah, and it just doesn't seem to be pushing the ball further along here. And who should we pay attention to? Tyler Kendall, for better or worse, it's her job to figure this stuff out. She is the Washington correspondent for Bloomberg News. She's down in Washington, D.C. Tyler, President Trump is claiming today that the U.S. has, quote, total control over the Hormuz Strait, yet we're not seeing any ships kind of going through the strait here. Is there any news today?
There's been a few different headlines, Paul, today. If we stick on the Strait of Hormuz, yes, President Trump maintaining that the U.S. has control over the waterway as the military does continue to enforce its naval blockade. We got some new numbers yesterday from the U.S. Energy Secretary Christopher Wright, who said that about 9 million barrels per day have been moving through according to the 7-day average, though that is higher than most traders' estimates. He went on to say that if you combined in other bypass routes like pipelines, then it's about 15 million barrels per day. That tracks with what he told Bloomberg Television about 2 weeks ago. He says that makes up about 2/3 of pre-conflict flows. But at this point, there is still this heightened risk when it comes to commercial shipping, and that is why we are still seeing ships transit through with their transponders off, these so-called dark transits. Bloomberg News was able to pick apart some of the satellite imagery, and which showed us that there is this uptick in what is known as shuttle routes, where essentially some of these ships make the journey through with their transponders off, and then they offload their cargoes to ships that are waiting just outside of the strait to then pick it up and keep going forward. But to your point, Iran hasn't let up its grip when it comes to global shipping, not just in the strait. A new headline out this morning, Yemen confirmed that at least 6 people have died in a Houthi attack in the Red Sea, just further showing us how this conflict has really spilled into the broader region.
Just a red headline, unrelated, crossing the Bloomberg terminal here. Josh Kushner and Bob Iger to buy the Los Angeles Lakers for $12 billion. That's according to ESPN. We'll have more reporting on that coming up.
Really quick question. We obviously got some inflation numbers out this morning. Inflation doesn't seem to be moving a lot, but obviously oil is a big factor in prices of all kinds. How are we expecting to see, I guess, this slow movement through the Strait of Hormuz affect prices? Are you expecting to see oil prices go up or down? And how does that spread? How will that spread across the broader economy?
Well, I can tell you from the White House's perspective, at least, that they are definitely hoping to try to make some sort of dent when it comes to energy prices and we get closer to the midterm elections. Look at the Bloomberg News reporting from earlier this week confirming that President Trump had moved to extend that critical Jones Act waiver by another 90 days in order to help critical products like gas, like jet fuel, like diesel make their way across the country and at least a cheaper manner, if you will, if you get into the details of what that Jones Act waiver actually
does. It's something that the administration keeps its eye on very closely here. We're going to have to see ultimately where these flows end up, but there is still this heightened threat when it comes to the Strait, when it comes to global shipping in terms of the Red Sea. We're also seeing refineries in Russia be hit amid the conflict with Ukraine. There was a fire at another refinery in Libya, so there is a lot of risk to the upside here, at least at this moment in time.
Tyler, we know that in this administration, really the only voice that matters is that of President Trump. That being said, do we have any reporting or knowledge that there are, I guess, factions within the administration that are pushing for peace to try to just get something done? Is there any movement within the administration on that front?
So, Paul, actually, a senior U.S. official just told us that the president's position at this point is that he's not in a hurry to reach a deal, and that he thinks the economic pressure campaign that the administration has opted for, combined with what is competing factions, if you will, within the Iranian government, will ultimately tip Iran's hand in favor for the U.S. The U.S. has made it pretty clear that at this moment they would like to pursue the diplomatic option. They will continue to ramp up the economic pressure in favor of, say, restarting large-scale military operations. We did have confirmation yesterday that Pakistani officials had landed in Iran. We keep hearing from these mediators that potentially we could be close to some sort of deal to reopen the Strait of Hormuz, but publicly the two sides are really digging into their respective positions, including that Iran is now demanding a compensation for war damages in order to reopen the strait. That's considered to be a new demand since it had been a precondition for talks on potential curbs on Iran's nuclear program, not about reopening the strait. And then, Paul, as you well know, President Trump lashing back, saying that the U.S. would like to see Iran pay compensation to the families of Iranian protesters who have died over the last 50 years, as well as any damages related to conflicts where its proxies operate across the region, like Lebanon, Yemen, and Gaza.
Well, certainly the world has been feeling economic pressure from this conflict. Has Iran been feeling economic pressure? Do you think that is something that might push it to want to compromise?
Yeah, at this point, we're getting the data that is definitely showing it. Bloomberg News analyzing central bank data from Iran showing that year-over-year inflation is at 77%. The IRGC came out today with a statement saying that they are still rebuilding their domestic ballistic missile capacity, but we do know that that has taken a very significant hit. And, of course, the U.S. naval blockade, even as we still see these dark transits. So it's definitely something that the administration has been pretty stark on, that they're going to keep that economic pressure up. And as I mentioned, our latest reporting is that they are really banking on that tipping Iran's hand when it comes to the negotiations. If you also look at the demands that Iran is asking for, including compensation for war damages, sanctions relief, the ability to sell their crude to market freely, that would also give us indications that it is the economic relief that they would be looking for. Though, keep in mind the context here, the U.S. had granted that to some effect when the ceasefire was in place, and that wasn't enough to keep Iran at the negotiating table.
Last one, Tyler. This war is not polling well with voters. We have midterms coming up. To what extent is the administration concerned about the war and its impact on the midterms?
Well, if you ask the president this question directly, which he has been asked a few different times, he would tell you that he's not concerned about the impacts. He thinks that his messaging that this will prevent Iran from securing a nuclear weapon is a popular one. It is more the economic trickle-down effects that are going to impact Republicans as we get closer to November. A new Fox News poll showing that for the first time since 2010, Democrats are polling better than Republicans when it comes to voter trust in handling the economy, an issue that Republicans have historically pulled better on, and that is going to be something that you're going to start to see the administration talk a lot more about. We had the NEC director, Kevin Hassett, out yesterday seeming to confirm that the administration is looking at putting some more potential tax proposals on the table that Congress could maybe get done after the midterm elections if Republicans keep their majorities. The economy, of course, is always front and center, but you may start to see the administration a little bit more on defense, putting out some new ideas in a bid to spur voters to the polls as we get closer to Election Day.
Tyler, thank you so much for your reporting. Appreciate it, as always. Tyler Kendall, she's a Bloomberg Washington correspondent. She is based down there in Washington, D.C. I want to get back to this news that just crossed the tape here. The Los Angeles Lakers are being sold to Josh Kushner and Bob Iger, former CEO of Walt Disney Company, for $12 billion. This is according to ESPN. They're citing multiple sources. This Iger-Kushner group pivoted to make an offer to the Lakers from Mark Walter, who purchased a controlling interest in the team last year. Let's get some more reporting on this. I was not really expecting this deal at all, but that's a big number.
That's a lot of money.
It's Randall Williams.
It's a great team,
he's used to big numbers. I mean, Randall Williams, he's the business of sports. He knows what's going on out there. Randall, talk to us about this deal. I didn't know the Lakers were necessarily for sale.
So before we begin, if you see me texting, it's because I'm learning details.
Okay.
Breaking news.
But it is absolutely huge news. It's a shock to the sports world to see a franchise like the Lakers turn over. I believe they sold in 24. I don't think it was last year, but to see them turn over twice and add $2 billion in valuation is absolutely shocking. I've also confirmed that they are being bought. Of course, Joshua Kushner owns a stake in the Miami Heat as well. That will need to be divested. And he also had an interest in NBA expansion, specifically in Las Vegas. That is obviously going to be abandoned now as well.
What about, apparently Mark Walter owned the LA Lakers before now. Did he want to sell, or is the number just really big? What happened?
That's a bit unclear right now. I mean, I think there's a DOJ investigation into Mark Walter. There was another report that I saw that said he had health issues as well. But it's unclear as to why Mark Walter, who just bought the Lakers for $10 billion, would flip this prized asset as quickly as he did.
He did make $2 billion.
Yes, he did make a nice
It's
profit.
not a bad deal.
That's a good trade. Where's the money coming from? $12 billion is a lot of cash.
It's a good question. I mean, obviously, Joshua Kushner has money that I don't know about. Bob Iger has made a pretty penny, being the Walt Disney CEO, but the exact financing is to be determined. It's just that an agreement has been reached. The Board of Governors of the NBA still has to approve of this. And so the financing is a bit unclear, but if they say that they've struck a deal, and there's no way that Mark Walter would sell to somebody who didn't have the cash, is what I'm trying to say.
Yeah.
So he must have it.
Yep, that's amazing. It's the Lakers, one of the prized franchises in sport globally, I would argue. $12 billion is monster. The #2 media market in the U.S. gets your attention. Kushner and Iger are names that get your attention. So extraordinary story. We'll look forward to learning more about this going forward. Randall Williams, thanks so much for joining us on short notice there. Randall Williams, the business of sports for Bloomberg News. All right, let's go back, get a little bit of a roundup of what's going on in the market. We can do that with Alexis Christophers.
All right, thanks a lot. And this Bloomberg Business Flash is brought to you by IBKR. For the past 3 years, Interactive Brokers' individual clients averaged 24.3% annually, beating the S&P 500. Lower costs and access to 170-plus global markets matter. Visit ibkr.com/performance. We have got stocks higher across the board here. S&P 500 up 21 points. Dow Jones Industrial Average up 42, and NASDAQ Composite up 155. NASDAQ 100 up 260 points, and this is on the heels of a tame inflation report for the month of July. We have got Brent crude at 88.62 a barrel, down 1/3%. WTI crude down more than 0.5% at 82.73 a barrel, and the Bloomberg Dollar Spot Index at 1201.67. Want to call out shares of Cava up 13%. The Mediterranean restaurant chain reporting store comp sales for the second quarter that beat the street. Analysts again note positive trends for its pomegranate glazed salmon. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christophers, and that's a Bloomberg Business Flash. Stacey and Paul.
All right, Alexis, thank you so much. We appreciate that. Stacey Vanek-Smith sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. We want to welcome to the studio Mira Pandit, Global Market Strategist for JP Morgan Asset Management, joins us here in studio. Mira, thanks for coming in on a hot summer's day. Boy, the market's, another high today. How do you guys position broadly this AI trade? We had some tech names last night report numbers, CoreWeave, talking about big numbers. I mean, how do you guys position that? Because it's changed a little bit over the last several years.
Absolutely. If you look at the top line S&P 500 numbers, we've had a really good year so far, but we're getting whipsawed around underneath the surface around the AI trade that continues to rotate. And I'd say it's a story of fatigue versus fundamentals, where the fundamentals have remained really strong all year, and in fact, in some cases, improving. In other cases, like free cash flow, maybe less so. But overall, the fundamentals are very solid. It's just the fatigue around certain names in certain areas that has markets moving. So you look at the second quarter, for example, where it was the quarter of the semi. And now you look so far at this quarter and you've seen software up almost 30%, while semis are down almost 6%. So it's going to be this trade-off. And I think about it almost like stocks and bonds or US and international, large and small. Any areas where you're looking for diversification, you have to diversify within that trade because not everything's going to work all the time like it did a few years ago. Now you have to play the overall solid fundamental foundation with some of the tactical moves as this trade does continue to garner different sentiment reactions.
What about the U.S. economy right now? Obviously, the inflation numbers came out this morning. They're not bad, but inflation's hanging around. Jobs numbers, obviously not great either. How do you take that into consideration at a moment like right now?
It's also been a little bit of a toss-up between reacceleration versus AI mirage. And I don't know that there's genuine reacceleration. A lot of what we have seen from a growth perspective has been some of those really nice numbers around equipment and intellectual property spending that has helped to boost GDP on the margins. But that being said, between the first and second quarter, you saw a nice acceleration in the consumer, that rate almost doubling. So you still have that upper income consumer holding on. So overall, when we think about growth, it's in a decent place. But inflation continues to be the area where on a print by print basis, it's starting to improve. We have a bit of a downshift in terms of that improvement this time versus last time. But nonetheless, the trend is there. The question is not, is inflation easing? It's how fast and where does it get to?
So what does that suggest, do you think, for the Federal Reserve here? What are you guys at JP Morgan thinking about how we should discount what the Fed's going to do?
If we think about this inflation report plus the jobs report, which was much weaker that we got last week, if this were the old Fed, that would certainly imply with the data dependency that they would be on hold. The challenge with the new Fed is that this persistent inflation overshoot seems to be garnering quite a bit of frustration among Fed members, and you had the Fed chair vociferously arguing that they were going to tame this inflation. And yet, if I think about the trajectory we're on, probably still a hold this year because we have midterms coming up. Perhaps doesn't make sense to start a new hiking cycle right before that happens. So that pushes you out to December. And then you think about the composition of the overall committee. Yes, there were 3 dissents, but only 3 dissents. So you need to see that start to tick up a little bit if they're actually going to get a hike in this year. And then next year, those dissents thus far have been some of those rotating board members who won't be around. So you might have more of a hold. The center may truly hold as opposed to the hiking rhetoric that we've heard.
Although the Federal Reserve is a little different in another aspect as well. There's a lot less forward guidance, a lot less transparency, which means that there's just a lot less information that you have to deal with on what the Fed is thinking. How are you handling that?
You go into every meeting and it's live. So that does create some uncertainty for markets and some volatility on the margins. But at the same time, the reaction function is unclear in both directions. It's not necessarily that they're reacting to the data because the chair said, well, last time's weaker inflation didn't really play into why we didn't hike rates. On the other hand, he named 4 big, meaty existential questions that'll take a long time to answer as part of their reaction function. So I do think we have to continue to try to read the tea leaves piece by piece. And ultimately, when we think about how that impacts our investing, yes, you're going to see bond yields go up a little bit, bond yields come down a little bit, but they've still been within a relative range here. So if we think about the bond market here, it's not a bad entry point for duration, might not work tomorrow, but you have that portfolio insurance. And yet in the near term, staying a little bit shorter because of this volatility. But overall, your income has been really solid in so many parts of the market, as also a reflection within spreads of a non-recessionary environment and a healthy growth backdrop.
In global equities, I'm looking at the U.S., the S&P, up kind of 13%. But I get some pretty solid returns outside of the U.S. How do you guys think about U.S. versus rest of the world global equities?
It used to be the easy diversification play because you genuinely get cyclicality outside of the U.S. I think the challenge now is you're getting that earnings coming through from international markets finally after years of really lagging the U.S., and yet that AI theme is so concentrated even abroad. So you think about emerging markets, it's not the India-China story of the past. It's the Taiwan, Korea's, just a handful of names. So that becomes a challenge when we think about diversification. However, there are areas like Europe and Japan where you still get hints of AI in there as well, but you also get the defense, the industrials, the banks, that genuine value that you're not even finding in U.S. value at this point. So that's where you find a bit of that diversification.
And then real quickly, how about emerging markets? Because I'm hearing more and more and more over the last 12 to 18 months.
I think you just have to be mindful that this is going to be a very volatile trade around Korea, Taiwan, because those are the big drivers. Yep. That's where all the earnings growth is coming from. So we need to be mindful that you have these double-digit moves in a given day because there's so much uncertainty around this AI bottleneck story that at some point will crest, and we have to be prepared for that day.
Mira, thank you so much for joining us. Really appreciate it. Mira Pandit, she's Global Market Strategist for JP Morgan Asset Management, joining us live here in our Bloomberg Interactive Broker Studio. Appreciate that. Let's switch gears to healthcare here. And we're going to check in with Sam Fazeli, Bloomberg Intelligence. He's a director of research over there, covers a bunch of stuff, including the pharma and biotech space. You know, Sam, I'm seeing some news once again about childhood vaccines in this country, autism. I thought we'd put that to bed here. Where's the science here? Because, again, parents are looking to, figure out, do they need to get their kids vaccinated and to what degree? What's the science telling us these days?
Yeah, so hi, Paul. The science hasn't changed in the past 3, 4, 5, 6, 10, 20 years that we've been talking about this. The original research from Andrew Wakefield has been debunked. The paper has been withdrawn. The associations that were found to be superfluous. You can never be 100% certain that something isn't linked to something. The only way you can do this is by looking at the data and following the data. And the data does not seem to show causality, even if you can show some type of association or, something happened at the same time as something else, right? So that hasn't changed. Where we're at now is that the changes and the pressure conversations that have been having, the U.S. has been having as part of CDC, as part of HHS, as part of the administration, has clearly had an impact on vaccination rates. As you can see, the rates of measles already this year, we've had more cases than we had the entirety of 2025, which was already bad. So we're in a tough spot here.
What is the rationale for breaking up the shots? And I guess what are the implications of breaking them up?
I don't know what the rationale is. I can't think about what the rationale is. I mean, your human body, you walk out of your house, you are bombarded with X number of antigens, especially as a child who's never seen them. Forget about vaccinations. You send your 6-month-old, 1-year-old child to nursery or creche, or I don't know what they call them there. And you end up with a child that's got a runny nose for 3 years, right? I remember this. I don't know, maybe Paul, sure. We all remember, we know this, right? Their system's being educated by natural phenomena. What we're trying to do with vaccination is to give them an ability to fight the ones that are really bad, right? We don't vaccinate for rhinovirus. We don't vaccinate for, at least for most of the coronaviruses and a whole bunch of other viruses. So it's not a problem seeing a whole bunch of, antigens or things that are foreign to your body at once. That's what the immune system is made for. So I don't understand the rationale.
All right. Aside from that, Sam, as you're talking to your institutional investor clients around the world, what's kind of the hot topic these days in your world?
Oh, gosh, the hot topic, let's take biotech and healthcare and pharma. I mean, some of that, as we talked about a couple of days ago, some pharma names are at close or at all-time highs. So that trade in terms of a switch to more defensive has happened. Some of it's to do obviously with the GLP-1 story. In the biotech world, the XBI, which is an index of the S&P 500 biotech ETF, that is the barometer of how biotech's doing, is doing very well. It's at least twice what it was at its bottom about a year ago. And there's IPOs happening everywhere. So there's a lot of excitement in the sector with a whole bunch of new science coming. The question everyone's beginning to ask is, how long is this good times going to go on, particularly for the biotech sector? I'm hopeful for another at least 6 to 12 months, unless something random
excellent. Thanks, buddy. Thanks, Sam, for joining us here. Sam Fazeli, Director of Research, and he's also the pharma and biotech analyst for Bloomberg Intelligence. He's based over there in London, and some good performance has some of those healthcare names, as Sam was saying. But we'll keep on top of the news there. It's all about the new drugs. It's all about if you can't come up with the new therapeutics, the new drugs in the lab, you go out and buy it. And that's why we get these merger Mondays in the healthcare space when they're out there buying all these biotech companies. Looking at the markets, S&P's up 17 points, the Dow's up 20 points, and the NASDAQ, that's where the action is today. It's up about 140 points. That is about 0.5%. Yields coming in slightly, a couple of basis points on the 10-year, 4.66%. WTI crude oil, a little bit lower, but still just below $83 a barrel. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
10:40 on Wall Street. I'm Alexis Christophers from the Bloomberg Interactive Brokers Studio. We have got the NASDAQ 100 up nearly 300 points after upbeat earnings from CoreWeave and Supermicro revived the AI trade. CoreWeave up 17% on stronger than expected sales. We've got Supermicro Computer rallying 15% after its revenue forecast topped estimates. Meantime, the Dow Jones Industrial Average is up just about 26 points. The S&P 500 up 22. This is on the heels of a tame inflation report for the month of July. We've got shares of MSG Sports up more than 5%. Now, this could be on news that Josh Kushner and former Disney chief Bob Iger are buying the LA Lakers for $12 billion. We know that MSG has been thinking about spinning off the New York Rangers and the New York Knicks. Shares of Tencent higher today after revenue beat estimates, strong advertising and resilient gaming providing a cash cushion for its AI push. And Goldman Sachs will pay as much as $2.25 billion to buy the ETF provider Neos Investments. The deal's going to add a fast-growing ETF issuer to Goldman's roster of offerings. Neos commands some $32 billion in assets. Brent crude 88.75 a barrel, down 0.2%. WTI crude down 0.4% at 82.86 a barrel. And that is your Bloomberg Business Flash. Back over to Paul and Stacey.
All right. Thank you very much. We appreciate that, Alexis. We got Stacey Vanek-Smith, Paul Sweeney, live here in our Bloomberg Interactive Brokers studio. Scarlet Foo's out today, reportedly back on Friday, so that's a good thing here. On the earnings front, as Alexis was just reporting, Supermicro, the storage company, the hardware company, they reported some really strong results last night, and the stock is up 14% on the news today, up 23% year to date. Let's check in with Woo Jin Ho. He is Senior Technology Analyst for Bloomberg Intelligence. Wooj, talk to us about Supermicro Computer here. What did you learn with the results?
Yeah, hey, Paul. So, look, the bogey for me, at least, was $60 billion in the guidance for fiscal 2027. They blew that away. They're guiding to $65 to $72 billion. And it just means that the AI infrastructure build-out is really going well, and Supermicro is a big beneficiary of it.
What about Cisco? I know we're all expecting Cisco earnings, I believe, come out after the bell today. They are expected to be a huge market mover. I think the stock is up more than 60% this year. What are we expecting to see from them?
Yeah, hey, Stacey. So I don't know how if it's going to be a huge market mover, quite frankly, because it's actually made a stellar move over the year to date. There's a couple of things. They are going to lay out fiscal 27 guidance tonight. Streets, I think, at around $69 billion. The hope is that they're going to beat that $70 billion, come in around $70 billion on the sales side. And a lot of it is going to be AI driven, quite frankly. $6 billion in AI revenues that they guided to last quarter. I'm not quite sure if they'll raise the guidance there because of some supply constraints. But look, all the AI momentum is behind Cisco right now.
So, Wooj, with your networking, storage, all that kind of, those companies you follow, what's the feeling amongst them about how much longer this AI spending, CapEx, should continue?
Yeah, look, we have to put this into two buckets, Paul. One, you got the hyperscale cloud as well as the, I guess, the neo cloud bucket. And then the second bucket is the enterprise AI spending, right? So on the hyperscale and the neo cloud side, I only have visibility up until 2028. I think that there's going to be good runway of growth in 27 and into the early parts of 28. And you're going to have larger deals and, lower margins, quite frankly. So you have good sales momentum there, and then the earnings tailwinds will follow over there. The enterprise AI really hasn't started to ramp up yet, quite frankly, Paul. And this is where Cisco and the Dells and the HPEs really start coming along. And it is a better margin business. And you could start seeing a second cycle starting to begin later this year and into 27.
What are the parts of AI? Because I know now we're looking at different parts of the industry and which parts of the industry are doing well or seem to be doing well and have the brightest future. What do you see right now when you look at the different parts within the AI industry?
Yeah, so from my vantage point, we've got the if we call the picks and shovels play.
That's data centers.
No, well, it's more GPUs. Let's just say, right? That's powering the AI, but more so than GPUs, the optical names have actually been one of the better performing areas. If we look at Lumentum, my colleague Jake Silverman covers that name. They reported last night, and they reported some stellar numbers and stellar growth expectations. And that whole optical layer that's trying to speed the data across data centers as well as across the country, that whole segment is going to actually blossom through the end of the decade. Companies like Corning, Ciena, even Nokia are going to be beneficiaries of that.
So I don't know about you, Woj, but when I buy a PC, Stacey, I don't know, I might buy a PC that lasts, 5 years.
At the most.
Maybe.
You can't do anything on it by the end of the 5 years.
I don't know, but I'm thinking, on these AI CapEx, if I buy a chip or I buy a GPU or TPU or whatever it is, how long does that last? Are these companies going to continue to invest at these much higher levels for, I guess, going forward?
Yeah. So if we, well, look, we're talking about, the raising of equity, the raising of capital to help fund this, right? And when is the ROI? And I believe Nebius reported today, and they expect to get the return on capital or invested relative to the data center investments that they're making in a span of 1.3 years, right? Which is down from 2 years. And the longevity or the asset life is supposed to be a 5-year depreciation cycle. So, just like your computer, Paul, 5-year depreciation cycle for the AI. And if you think about it this way, right? Even though you have the next generation NVIDIA chips coming online, those older, the H series or the A series, they're not obsolete. They can actually be, sold to other people who just don't need the higher power models out there. And the rental prices, and you can look at the Bloomberg SD B200 and the H100 index, right? They're actually rising primarily because the demand for these rentals are just so high.
There do seem to be some potential snags or obstacles in the way of AI growth, one of them being data centers, political pressure. Is there anything that you think could derail this or anything you're watching out for, or is this train just going too fast?
Yeah, I wouldn't say the train is going too fast, but I do think that there are some regulatory risks out there, Stacey. Look, nothing is going to go up and to the right to perpetuity. Nothing has. If it did, I'd be a very rich man. But the fact of the matter is that you are going to see bumps in the road. Whether it's going to be regulatory, whether it's going to be supply chain, and that is going to be, intermediate term risk to numbers.
So for the companies you cover, what's the China risk/opportunity? How do we think about that?
Well, for the companies that I cover, the China opportunity is zero, right? Yep. Because the China sales exposure is relatively slim to none, and China has their own providers there. From a risk perspective, at the end of the day, it's going to be supply chain, Paul, right? We still source quite a bit from China, whether it's going to be components and subcomponents. And I'm not talking about chips per se. I'm actually thinking more along the lines of substrates and even the lowly PCBs, right? The green cards or green boards where the chips are soldered onto, right? So that is a risk for me. Going not only to the AI-related hardware names, but also to the PC vendors.
All right, Wooj, thanks so much for joining us. Appreciate that. Woo Jin Ho, he is Senior Technology Analyst, part of one of the best technology research teams on global Wall Street. He's with Bloomberg Intelligence, based down there in Princeton. Now we're just, Stacey, you're kind of holding on to some light gains. It's another quiet August day, I guess I would put it.
Yeah, which is pretty good considering I was a little worried inflation numbers were coming out and everything seems to be hanging on.
I think what I've seen most notably on some of the research notes from Wall Street as it relates to this CPI print was benign. That's kind of the word I've been seeing.
Benign is good.
Benign is good here.
We'll take it.
Yields coming in slightly, stocks up modestly. It's a quiet day here, so we'll take it. WTI crude oil right below $83 a barrel. This is good.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Stacey Vanek Smith sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Earnings front, we're getting some of the restaurant companies coming up with some numbers. So let's start with Michael Halen. He's the senior restaurant and food service analyst for Bloomberg Intelligence. All right, one place I haven't eaten, my kids tell me I have to, is Cava. They reported some numbers. What'd you learn?
Cava does a nice job. You know, you should get over there. I get there once in a while. Over there in Wayne, New Jersey, we have a Chick-fil-A and a Shake Shack next to Cava. So I'll go to Cava.
It's very competitive.
And my son will do the Chick-fil-A or the Shake Shack.
Nice.
You know, but they do a great job, and they've crushed it in the first half of this year. Same-store sales over 9%, traffic over 5% here in the first half of the year. Mainly being driven by new pomegranate glazed salmon. And
that's what Alexis has
that
been
does
reporting
not
all
sound.
morning.
Am I wrong? Have you tried this?
I have not tried their salmon. I tried their shrimp, which was excellent. It was in test, but I have not tried the salmon. But they do a nice job with quality, A, and B, not a lot of their competitors sell seafood.
Yeah.
Right. And so we've actually, last year was the year of steak. We've actually seen a much bigger impact from their salmon sales than steak.
What is their trick here? Because from what I understand, this is a really tough time in the restaurant industry, especially in kind of the middle class restaurant section. I know it's gotten really, really, really competitive, and there's cyclospora, and there are a lot of challenges right now, tariffs, all of it. What is Cava doing? What is its secret, other than the salmon, of course?
Well, number one, I'd say healthy Mediterranean cuisine, right? That's people, more and more people are eating healthy, especially with GLP-1s.
It's like healthy fast food.
Right. Yeah. And so that's a big part of it. And really the equation in restaurants is, the value equation is about what you get for what you pay. And people are coming away from the Cava experience happy, right? They had a good, tasty meal, right? In a nice environment, you know, good service with a smile, and people come back. So we're just seeing a massive divergence between winners and losers in the restaurants. And it's been this way now for a few years because of the inflation. People are becoming more discerning. When they have a good experience, they go back. If they don't, see ya.
Red headline crossing the terminal right as we speak, Mike. Triumph Fund Management assembling co-investors for Wendy's bid. This is according to the Financial Times. So what's going on with Wendy's?
Well, Tryon has been trying to pitch their book here. They've been involved in Wendy's for quite some time. There were some rumors earlier this year about them becoming involved. So, since they already have a stake in it, we kind of take this with a grain of salt. What I can say about Wendy's is we're a big fan of their new CEO. Bob Wright had worked at Wendy's for a very long time. So, he knew the business very, very well. When he left Wendy's, he was previously head of international, chief operating officer, I think was his last position. He became CEO of Potbelly, and he orchestrated a very impressive turnaround. Stock went from $2 and change and was bought out at like 16, 17 bucks, right? And so, in terms of myself, I'm a lot more optimistic about Wendy's going forward. I would think that the franchisee base is probably very energized because they know him intimately, right? And he's got a great plan to turn things around. So in general, I think, things are looking up at Wendy's.
Stock's up 10% on this news today. So maybe people are thinking this might be the real thing. I don't know. Brinker reported some results. Remind us who Brinker is and the brands they have and kind of what they're seeing.
Yeah, they own Chili's and Maggiano's. Chili's has been on a tear. I think same-store sales are up, cumulatively about 70% over the last 5 years. We've never seen this out of a brand that's been around.
That's a tough sector too, yeah.
Are they just the right price point, value point for folks?
Well, no, this was a brand that was kind of,
I mean, Red Lobster's been struggling. Like a lot of their competitors have really.
Well, so, there's a few things that are boosting casual dining, but a lot of this is really based around what they've done. Chili's was always a great brand, and it was mismanaged for a very long time. And so they got back to the core of what Chili's was. They also, started with really improving the operations. Then from there, they started improving the marketing, and they have a best-in-class marketing team. So the CEO and the chief marketing officer, they did the Old Spice smell like a man. They turned around KFC with the rotating kernels when they had all the famous comedians, right? So they're phenomenal in marketing. So that's been a big part. And now, more recently, they've been continuing to work on the operations and continuing to spend more on marketing, but now they can continually are upgrading the ingredients and the products on the menu. And, you know, people are going, they're trying it, and they're coming back. They've had tremendous results.
The more I talk to you about your companies and your industry, the more I learn that management's really important.
Oh, so important, man. So
yeah, I mean,
like more than with other companies?
It just feels like operationally there's more things they can do. And
yeah, and you know what it is, I think, in my opinion, is you have tens of thousands of frontline workers that you have to get to buy in.
Yeah.
Right? It's not just a small management, if you're a tech company, a small management team that has to drink the Kool-Aid. I mean, you have to get tens of thousands of everyday regular people to buy in on your plan. Yep. So if you're not a good person with hospitality in your veins, they sniff that out real quick, and they're not going to move mountains for you.
Mike Halen, senior restaurant analyst for us, giving us the lowdown there. We appreciate that. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business App.
All right, very good. We have Stacey Vanek Smith sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Coming up, we're going to check in with Mike Dorning, Bloomberg Deputy Team Leader for our Congress Capital Influence team on the primaries from yesterday. A couple big primary races. We'll get the lowdown there. Anurag Rana, Senior Tech Analyst for Bloomberg Intelligence. We'll get the latest on CoreWeave. They came out with some numbers last night. The market likes that. Walter Todd, President, Chief Investment Officer, Managing Director at Greenwood Capital. He's a good friend of ours from down here in South Carolina. He's going to discuss his market outlook with us as well. Kunjan Sobhani, he is a Bloomberg Intelligence Senior Semiconductor Analyst. We got a lot to talk to him about on the semiconductor side. Jennifer Reed, Bloomberg Intelligence Senior Litigation Analyst. We're going to talk about the California trying to block this Paramount deal for Warner Brothers Discovery. This is big news if you're in the entertainment business, so we'll break that down. Right now, let's get a Bloomberg Business Flash with Charlie.
All right, thank you very much, Paul Sweeney. We got Paramount Skydance up 0.7%. Warner Brothers Discovery also pushing higher up by about 1.6%. The Dow, since our last update, turning around to the downside. Dow Industrials now down by 32 points. That is a drop there of just under 0.1%. S&P, though, continues to advance. Could see a record close today at 77.44 right now, up 16 points on the S&P. That is a gain right now of 0.2%. NASDAQ up 140. For the NASDAQ Composite Index up 0.6%. The SOX, the Philadelphia Stock Exchange's Semiconductor Index, no stranger to big moves, up by almost 3% right now. CPI Wednesday, the 2-year 4.18%, the 10-year 4.67%, the 30-year 5.24%. Gold is rallying 1.2%, 44.20 the ounce. West Texas Intermediate Crude seeing a slight pullback there. WTI 83.10 a barrel, down by 0.1%. Barrel of Brent flat on the day right now, 88.91 a barrel. As for the overall market backdrop, Mira Pandit is global market strategist at J.P. Morgan Investment Management. She was a guest last hour right here on Bloomberg Intelligence.
If you look at the top line S&P 500 numbers, we've had a really good year so far, but we're getting whipsawed around underneath the surface around the AI trade that continues to rotate. And I'd say it's a story of fatigue versus fundamentals, where the fundamentals have remained really strong all year. And in fact, in some cases improving. In other cases, like free cash flow, maybe less so. But overall, the fundamentals are very solid. It's just the fatigue around certain names in certain areas that has markets moving.
Mira Pandit of JP Morgan Investment Management. Speaking of moving, look at CoreWeave shares. They are surging after earnings, up now by 17.8%. Likewise, Super Microcomputer, super gain there, up now by 13%. Cisco, by the way, coming up after the close of trading. And one sports note, sources tell Bloomberg Josh Kushner and Bob Iger are buying the Lakers basketball team for a record-breaking price of more than $12 billion. Shares of Knicks owner Madison Square Garden Sports moving on the news, up by 4.5%. Paul and Stacey, that is a Bloomberg Business Flash.
All right, Charlie Powell, thank you so much. We appreciate that. Stacey Vanek-Smith sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. Bloomberg.com subscribers can shape the conversation on Bloomberg Radio. Submit questions for the experts and guests on our show. Visit Bloomberg.com/AskRadio. It's an exclusive feature for Bloomberg.com subscribers and terminal clients. Visit Bloomberg.com/AskRadio to join in on the conversation. As Charlie was just reporting, we got some red and green on the screen here today. Let's take a look at some of the stocks on the move today. We can do that with Ben Weiss. He's a cross-asset reporter for Bloomberg News. Ben, what are you looking at today?
Yeah, thanks for having me. I think, like a lot of you, I'm looking at CoreWeave, ticker CRWV. It's booming this morning after the company said that its third quarter sales will beat analyst estimates. The company is a key tracker of the AI boom since it specializes in providing the compute that powers all the big AI models. CoreWeave also said Tuesday that it has a growing backlog of contracts, and that's a sign that interest in AI is still surging.
What else are you looking at this morning?
Yeah, so another stock I'm looking at is another AI stock. Super Microcomputer, ticker SMCI. The company is a key tracker of AI demand, and it's surging this morning after projected revenue that topped even the most optimistic analyst estimate. Super Microcomputer sells computer servers and is thriving amid the AI mania, especially since its servers are outfitted with in-demand NVIDIA chips.
All right, how about we were just talking to Mike Halen about this one. Again, a restaurant I have not gone. Have you gone to Cava?
I have been to Cava, yeah.
And you like it?
It's a good airport staple. It's like healthy airport food.
Healthy.
Sorry, that's okay. I hope
Yes, it's healthy airport food. I would say it's a good it's a good like midday lunch. I feel
it's like fast casual. Healthy.
All right, what do you got for us on this one?
Yeah, so shares of Cava, ticker CAVA, are also upped after the restaurant chain saw increased traffic at its more than 400 restaurants. It's because of higher priced proteins like pomegranate glazed salmon and pita chips, partly, and that sales did kind of slow in July, however, because of the big cyclospora parasite outbreak. So.
I mean, I used to do fast food only when I was traveling through an airport. That was like my indulgence. You can't find a McDonald's in an airport anymore. They got all this fancy stuff.
I feel like I find McDonald's in airports.
I know every McDonald's in every airport in the continental U.S. That's how much I traveled. They're gone. Most of them are gone and replaced by a Cava or by
a healthier option.
What about a Dunkin'? Dunkin's everywhere, though.
Yeah, they are everywhere. There, and you know what the one has the most, I think, in the world? Subway.
Yes.
I think they have the most locations in the world. Somebody told me that. So anyway.
Wow.
All right, Ben, thanks so much. Appreciate that. For more conversations like this, you can subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Politics, we're waiting for the midterm elections, but we had some primaries and some races yesterday around the country, and let's get a breakdown of what's going on there. We can do that with Mike Dorning, Bloomberg deputy team leader for Congress and Capitol Hill influence team on these primaries. Mike, what did we learn last night in some of the important races across the country?
Well, the key thing we learned was the limits of the progressive wave. In Wisconsin, Francesca Hong narrowly lost her bid for the governor's nomination against David Crowley, the more establishment figure. So in contrast to what happened in Michigan and in New York, the kind of progressive wave hit its limits in Wisconsin. Now in Minnesota, there was a more progressive candidate that won for the Senate.
How big of a deal are these elections, do you think? Is this indicative of a new trend? Should we be seeing this as predictive of the midterms, or do you see this as more kind of one-offs?
I would say there's kind of a tension within the Democratic Party between this more progressive wave and more establishment. And that's going to keep playing out, and we're going to see it in a big way in the 2028 primaries. And it's something that's similar to what's going on in the Republican Party, where you've got this more populist, discontented wing getting more emboldened.
So, Mike, I mean, a lot of folks would say in these midterms, the table is set for the Democrats here. President Trump has a low approval rating. The war does not poll well. Inflation, I mean, on and on and on. If you can't sweep the table this time, then you guys are really in trouble. But yet, nobody has confidence that the Democrats can do that. What's the feeling in D.C.?
Well, there's a general belief that probably they will at least take the House. And that's because of these factors that you mentioned. The economy is not doing well. There's an unpopular war. People are often discontented in the middle of a presidency. People feel like affordability hasn't been addressed. And even with all the gerrymandering, the House tends to reflect more the mood of the country at the moment. Now, in the Senate, it's more particular. There's only a third of the seats come up. And there can be, depend on the individual races a lot more. It will be more of a stretch, though possible, that the Democrats might win the Senate. One thing that's coming up that we haven't seen is there's going to be a giant wave of Republican money that is going to be beating up all these Democratic candidates in the next few months. So we'll see what impact that has.
Yeah, I mean, the money hasn't been as impactful as expected in some key elections. What do you think is going on there?
Well, I think there's a limit to what money can do, especially when there's a very discontented electorate. Also, you need to motivate your Republican base, and negative advertising by blasting the other side can only do so much. You've got to rev up your base with a positive message.
So if I'm a Republican candidate here in the midterms, am I jumping on the coattails of this president? Is that going to be helpful to me, this race?
It's a tough thing for people to navigate if they're in a competitive district. For most Republicans in more Republican districts, you absolutely need to be behind the president. But if you're in a competitive district, you've got to simultaneously appeal to your motivated Republicans because you really need them to turn out, and they're behind the president. You have to show support for the president. But for these people in the middle, you have to show that you're independent. So on the one hand, you show you're very supportive of Trump, and on the other, that you're very independent of him. And that can be tough to navigate, especially when the people in the middle who came to the Republicans were mainly unhappy about inflation under Biden, and now you have inflation under Trump and all this stuff in the Middle East that's driving up the gas prices.
On the Democratic side, if you are a Democratic candidate, I mean, you mentioned earlier that there's been kind of a split in the Democratic Party between a more progressive part and the more traditional part. Is that something that you expect to play out nationally, or is that more regional right now?
I expect it to play out nationally, and I especially expect it to play out nationally after the midterm election when they're picking who their party nominee is going to be. The presidential primaries are going to be a huge struggle between progressives and moderates, and they're kind of setting the table for that during the midterms.
Mike, thanks so much for joining us. Appreciate your reporting there. Mike Dorning, Capital Influence Deputy Team Leader. I didn't know we had a Capital Influence.
We do.
Cool. Very good. So they know what's going on with down at the halls of Congress. So he's down there, Bloomberg News, our Washington, D.C. bureau. All right, there's this company out there, CoreWeave. I don't really know what they do. They're an infrastructure software company. I hear it a bunch. They offer cloud infrastructure platform that manages the complexity of engineering, assembling, running, and monitoring state-of-the-art infrastructure. So it's a big tech company, and it's called Infrastructure Software. The company name is CoreWeave. The stock's up big time. They reported some big-time numbers last night. People look at this company because it's one of the ways to get a sense of where this AI spending is going, and I guess the direction is up here. Anurag Rana, he knows what's going on here. He's a senior tech analyst for Bloomberg Intelligence. Anurag, do a better job of explaining to our listeners and viewers what CoreWeave does and why it's important in the tech stack, and kind of what we learned on the earnings.
Yeah, it's a think about it as somebody who's just renting out NVIDIA GPUs to end customers. So if NVIDIA makes the products, these guys are installing it in big data centers and letting people rent it out. Now, this is part of a massive boom of a kind of companies called neo clouds. So when you look at the core cloud infrastructure, you have your Amazons, your Microsofts, and your Googles. They do all sorts of things, and then these guys specialize only in renting out, I would say in most cases, NVIDIA GPU chips.
Is this a really exciting growing space, or how does this compare to other parts of AI?
This is arguably the most exciting place to grow for all cloud infrastructure, because this is really what people are using to train their models. After the training, they would need to install their applications and so forth. So, CoreWeave doing well is not a surprise to us, because as we talked about just a few weeks ago, we saw really good numbers from Google, AWS, and Microsoft. This is just a continuation of that trade with CoreWeave and Nebius. Both of them, actually, they are both very close to each other in terms of what they do. And one would expect when Oracle reports next month, it would be very similar with them as well as to their cloud infrastructure doing well as also.
All right, so Anurag, we got this stock up 20% today, up 50% year to date. So what did we learn with their earnings, and what did we hear from management on the call that's got investors all fired up today?
I think the biggest thing to hear from the call is that there is no shortage of demand right now. It's all about AI compute constraints. What is the bottleneck? All about that. It's just a matter of how soon can they get more data centers up and running. But from a demand side, there is no issue, which is actually what we have heard from all the others as well. So the big question is, who does it help? This is part of what I call is the NVIDIA ecosystem. This is really directly involved with all the GPUs and what NVIDIA does. And now that NVIDIA is talking about taking care of some of the financing issues out there, I think the NVIDIA ecosystem becomes even stronger with this particular print.
You mentioned data centers and some of the tension around there and some of the choke points. Is that at all a concern with companies like CoreWeave?
So this is why this is kind of a very seasonal stock in that sense. Once one quarter you see it go up quite a bit, and next quarter it goes down a little bit. And then the volatility is truly driven by this massive expansion of data centers. So if you hear out there that there is a delay in data center buildup, the stock's going to get impacted. If you go out and see that NVIDIA is, having some issue raising, or not themselves raising, but their ecosystem is having issue raising some kind of capital, they're going to have an impact. And the third factor could be if companies or big cloud companies have started to use chips that are different than NVIDIA, that also impacts them. So it's a very volatile stock, but so is the entire space of what we call neo clouds or GPU as a service.
So I'm talking to your colleague Kujan. We are, Stacy and I, in a matter of moments about the semis. Give me one good question I can ask Kujan. Sounds smart.
Tell them that how dependent is everybody just on NVIDIA? What can they do to get off the NVIDIA chips and use their own chips to drive some of this AI infrastructure demand? Because that is really the crux of all the economics. So if you look at a big data center, majority of that money goes to NVIDIA to buy their chips. What can a hyperscaler, or for that matter somebody else, do to de-risk themselves from NVIDIA chips?
I like that. Good one. All right, we're going to stationary. Going to sound smart to when we talk to.
I like that you're outsourcing the job.
Outsourcing,
That's good.
Exactly.
It's really smart.
I figured I hired them all so they still kind of work for me. All right, Anurag Rana, thanks so much for joining us. He's one of the best folks, senior tech analysts out there on the street. He and Mandeep Singh, they manage a team of global technology analysts globally. And I mean globally, they're all over the world domiciled, a lot of them in Asia. Why? Because that's where it all comes from, folks. And you got to have feet on the ground in these markets as you do your data checks. So that's that. So good stuff on the tech front here. Looking at the markets, kind of just holding on to some mixed positions here. We won't make too much about it. I'm going to keep an eye on the NASDAQ. That's up probably the most, up 0.5%. Yields coming in. 10-year Treasury yield coming in a couple basis points, sitting at 4.66%, so keeping an eye on that. WTI crude oil absolutely unched on the day, $83. I don't think the folks in the oil pits, trading pits, know what to do with oil these days.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow lower, the S&P 500 index just shy of a record right now. Higher, we got NASDAQ 100 index, Russell 2000, all advancing right now. An inline inflation reading this morning, spurring gains in both stocks and bonds. The S&P up 15 now to 77.43. That is a gain of 0.2%. S&P record, by the way, 77.57. So close to a record. Right now we have got the Dow down 39, drop there of just under 0.1%. NASDAQ up 0.5%. NASDAQ 100 index up by 0.8%. The SOX, the Philadelphia Semiconductor Stock Exchange Index, that is ripping higher right now, up 3.1% on the SOX. The VIX back below 15, the 2-year 4.18%, the 10-year on this CPI Wednesday 4.66%, the 30-year 5.23%. Gold, meanwhile, up 1.3%, 44.27 the ounce. West Texas Intermediate crude down 0.1%, and we got barrel of Brent down 0.2 right now, 88.77 for Brent crude. Goldman Sachs paying as much as $2.25 billion to buy Neos Investments, expanding its asset managers' reach into the actively managed ETF market. Also, Blackstone and a group of Canadian pension funds buying a 25% stake in Air Canada's Aeroplan loyalty program, price tag $1.8 billion. Recapping S&P 500 index up by 0.2%. I'm Charlie Pellet. Stacey and Paul, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Stacey Vanek Smith, Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube. All right, here's the weird thing today, folks. Since 7 a.m. when I started doing this, I've probably interviewed 25 people today. I'm going to say half, maybe even more, are Wharton undergrads or graduate students. It is something is in the water today. I don't know what happened, but these dudes are all over the place, and they all decided they want to be on Bloomberg Radio and TV today. So I don't know what's going on there. And that includes our next guest, Walter Todd. I don't know what's going on. He is at Greenwood Capital. He's got this really long title, but I'm just going to say he's the boss there. Walter, thanks so much for joining us here down there in Greenwood, South Carolina, one of my favorite parts of the world. What are you telling your clients these days about these markets? We just keep grinding higher, as Tom Keene would say.
Yeah, Paul, good morning. Thanks for having me. Yeah, this year kind of feels like being in a heavyweight title fight, so to speak. A lot of ups and downs, a lot of churning underneath the surface, but it's been a great year on an absolute basis, on a relative basis for us as well. So what we're kind of advising clients and what we're doing for clients is just continuing to be disciplined to our asset allocations and individual strategies. So that requires rebalancing, and fortunately, the volatility underneath the surface gives you the opportunity to take money off the table when certain stocks were up and reallocate that to other names that get hit for no apparent reason on a given day. So we've definitely been more tactical this year than we would typically be, but that's kind of the nature of the market that we're in right now.
Why do you think there's been so much volatility in the market? Like, what are some of the things working for us, and what are some of the things working against us right now?
Yes, Stacey, it's a great question. I mean, I know there's been a lot of, kind of in the news about these levered ETFs and the leverage in the system, so to speak, that's creating some of the volatility. I definitely think when you look at the percentage of trading that's related to retail investment, that's going higher, ever higher, has been doing so since COVID. So that's creating some near-term volatility. You have these 0 days to expiration, options that are out there. So there's, I guess, much more of a short-term focus in the market right now, just because of the structure of the market. So that's creating volatility. I think that's that you're seeing on a day-to-day basis.
Walter, what are you doing in the world of fixed income these days? Because I can sit in a 2-year treasury. I'm pretty sure Uncle Sam's going to pay me back in 2 years, and I get paid 4.2% to wait. Do I just do that, or do I take some credit risk on top of that?
Yeah, I think that's a great question. I think it's a balance of the two. I mean, we have taken advantage of some of the a little bit of spread widening that we've seen recently, but just the absolute yields, not so much the spread. So if you look at the Alphabet deal that was done a week or so ago, after it priced, the spread widened a little bit, but the absolute yield you're getting is around 5% for 5-year Alphabet paper. That's AA paper. We think those absolute yields are pretty good. As you mentioned, Treasuries also yielding, pretty nice yield in the 2-year. But I think, the 2 years kind of telling you, giving a little bit of message to the Fed as well, because it's trading about 50 basis points above the Fed funds rate. So the 2 year, the market's trying to tell the Fed that maybe they need to move, although the recent CPI report this morning and the jobs report last Friday would seem to indicate they're probably not going to do that in September or October.
What about the Fed? Obviously, we have a new Fed chair and a little bit of a new regime and a new approach to being the Fed chair. How is that affecting, I don't know, how you approach looking at the markets right now?
Yeah, I mean, it definitely creates some uncertainty. I mean, you kind of look at history, and new Fed chairs typically get tested at some point. Warsh is kind of going through that process right now. And so I think markets and market participants got used to the Fed kind of holding its hand over the last decade plus since the financial crisis. And Warsh is certainly trying to change that dynamic. I think this Jackson Hole speech is kind of getting bigger and bigger as we get closer to it at the end of August. So it'll be interesting to see what he says there. But it just creates some additional uncertainty because you're not sure kind of how he's going to react to different, inputs. And that creates uncertainty.
Walter, how have you positioned kind of the AI story for your clients these days? I mean, you could sit back and do what a lot of people do, just buy the chips. But I think people are trying to find some additional ways to get exposure to AI, which everybody's telling us is going to be life-changing.
Yeah, no doubt. The old saying, you overestimate technology in the short term, you underestimate in the long term. There might be some overestimation in some of these chip names in the short term, but I think there's a lot of ways to play it. The chips are certainly one, but also the users of AI. So we think software is pretty attractive within the technology space. You go out beyond technology, you look at industrials, some of the Caterpillar and other names like that that are benefiting from the build out of the data centers. You can go in utilities and look there as well. Some financial plays there in terms of the financing of some of these deals. So there's a lot of ways to play it, and that's a good thing because it is a revolutionary technology. But on the other hand, it creates a lot of concentration risk for the market and the economy in general because this AI investment is really growing the economy when you look at the GDP numbers. But it's also probably over 50% of the S&P has some relation to the AI build out. So it's great when it's going up, but it does create some risk on the other side of the coin.
Walter, thanks so much for joining us. We always appreciate getting a few minutes of your time. Walter Todd is the president. He is the chief investment officer, and he's a managing director. Again, he's the boss at Greenwood Capital down there in Greenwood, South Carolina. South Carolina is one of my favorite states. The low country there is unbelievably cool. I just don't find it anywhere else. So great state of South Carolina. Let's get back to the tech, because you know what? You can't stay away from tech too long. We got a company reporting after the close tonight. It's pretty important to this whole tech space. Cerebras Systems on the chip front here. Kujan Sobhani, Bloomberg Intelligence Senior Semiconductor Analyst, joins us here. Kujan, what are you expecting from Cerebras tonight? And why should investors that don't live and breathe tech like you do, why should they pay attention?
Well, one is a scarcity. Look, we have not had a new AI chip company debut in the last decade, and this is the new one, so it gives an optionality. More importantly, look, if you already have an exposure to the likes of NVIDIA or AMD, this again gives you a second alternative to add on exposure in this AI chip and AI accelerator exposure companies. For tonight's earnings, we don't expect anything massively surprising, both on the upside and downside. One key difference about this company is they're not selling chips like other companies do to their customers. They're in fact building their own servers because it's so complex that nobody else can do it. And they're on top of it building their own data centers through which they're selling their capacity. So they're sort of a unique breed, a sort of a vertically integrated player amongst the chip players. So their bottleneck right now is they cannot bring up data centers fast enough, which is impacting their margins and hence the bottom line. So we expect that dynamic to still play out sort of tonight as well.
How important is the building of data centers to the continued rise of AI? Is that something that you are worried about?
It is like for all of my semi companies, right? That's the end product. So if whether Cerebras, whether it's customers like Amazon or whether Google or anyone, if they cannot keep building data centers at the speed that they have promised or the speed the market expects, well, the chip numbers are going to see a miss, right? Because there's a lot of optimism priced into the fundamental estimates. So that's very, very important. As fast as they can bring up, anyone can bring up data centers as fast as they can load them up with the servers that where the chips go into. So it's very critical.
All right, Kujan. Anurag from Chicago writes in, he's got a question for you. He says, it seems like this whole AI thing is just so overly exposed to NVIDIA. Yeah, there's some others, but it's really an NVIDIA world we're living in. Why don't the hyperscalers like Google, Amazon, whatever, why don't they create their own chip and do it that way? Is that a risk to your names?
So they are actually creating their own chips, and in fact, those are the chips from the Google, which is TPUs, the chips from Amazon, which is Trainium, and now Microsoft and Meta are also doing that. In fact, OpenAI is also going to do that. So every major hyperscaler is actually now either has a chip of their own or has a roadmap to create the chip of their own, and they are definitely a risk to an incumbent like NVIDIA. But it's not as binary. Like if they create their own chips, they're going to stop buying NVIDIA GPUs. No, the demand first of all is running way ahead. That nobody has enough chips to fulfill the demand. So they need as many chips, whether their own chips or NVIDIA or AMD. They need a lot more chips. Second, these chips are focused with different use case, and we are still in the early innings of AI. And what I mean is like the use cases, which real use case will be commoditized or will be at large scale, is still indeterminate to some extent. So you still need the merchant chips like the ones from NVIDIA, which are really flexible, which have a longer shelf life. And there's also space for very specific, nuanced, niche chips that the hyperscalers create for themselves.
So this morning we've been talking a lot about chips and we've been talking a lot about oil. Do you see them as similar in some way? Are chips kind of the new oil of this economic moment?
Good question.
They are definitely. I mean, look, people have drawn a lot of comparing them with, oil, comparing sort of the chips as the sort of the tool chest for the, golden rush. I mean, they are the key building blocks, I would say, for the next revolution of AI. Without them, AI cannot succeed at this point or cannot grow forward. What I don't see a difference is there's definitely chips are not commoditized yet. And there's definitely a very clear, important geopolitical aspect here, which is access to technology, which is very limited. It's not like if oil exists in some other part of the globe, you can go grab it if you have the rights to it. Right now, this is very two-horse race concentrated between only two regions. So the future of how this plays out will be quite different than what oil played out.
Kunjan, thanks so much for joining us. Appreciate it. Kunjan Sobhani, he's a senior analyst covering the semiconductors for Bloomberg Intelligence. Again, part of that, what I think one of the best in Wall Street, global Wall Street research technology teams at Bloomberg Intelligence. He's based out there in our San Francisco office, Pier 3. Goes right out into the bay. Awesome offices out there, right down there. Embarcadero. Looking at the markets here, red and green on the screen. Kind of a quiet. It's a Wednesday in August, I guess, Stacey.
There you go.
Are you going to be in there trading? Are you going to be on the beach or on the golf course or kicking back somewhere? I mean, we're here, but I think most people are saying, you know what, we'll take a couple weeks off. I know Europe takes basically the whole summer off, so that's good for them. S&P up 12, Dow minus 19, and the NASDAQ up 94. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. We got the Dow lower right now, down 26, drop there of under 0.1%. An inline inflation reading spurring gains for the S&P as well as bonds. Right now the S&P's up 11 to 77.39, higher by about 0.1%. Record on the S&P, by the way, 77.57. So we're close. Right now we've got NASDAQ up 95. That's a gain of 0.4%. NASDAQ 100 index up by 0.6%. The 2-year on the CPI Wednesday, 4.18%. The 10-year, 4.66%. The 30-year, 5.23%. Gold up 1.1%, 44.19 the ounce. West Texas Intermediate crude flat on the day right now. Little changed at 83.15 a barrel. Barrel of Brent, 88.83. That is a drop of 0.1%. CPI is behind us. We got the PPI tomorrow. Wall Street also looking ahead to Fed Chair Kevin Warsh's speech later this month at the Fed's Jackson Hole Symposium. Walter Todd is President and Chief Investment Officer of Greenwood Capital, and he was a guest earlier this hour right here on Bloomberg Intelligence.
I think this Jackson Hole speech is kind of getting bigger and bigger as we get closer to it at the end of August. So it'll be interesting to see what he says there. But it just creates some additional uncertainty because you're not sure kind of how he's going to react to different, inputs.
Walter Todd of Greenwood Capital, interviewed right here on Bloomberg Intelligence. Eli Lilly is fighting against a black market for retatrutide, an experimental weight loss drug, by filing lawsuits against American businesses that sell it illegally. They're also asking regulators to do more. Recapping, stocks higher, S&P up 12 right now, up 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcast. I'm Charlie Pellet, and Stacey and Paul, that's a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Stacey Vanek Smith sitting in for Scarlett Fu. Today, I'm Paul Swinney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. Lest we forget, there is a $110 billion merger out there waiting to get approved in the media space. Paramount and Warner Brothers Discovery. It's going to reshape global Hollywood. Everybody's approved it. Everybody you think of, except 12 U.S. states, and that's a problem. So we got to check in with Jennifer Rhee. She's Bloomberg Intelligence Senior Litigation Analyst. She's like the only voice that matters now. Nobody's talking to the bankers. Nobody's talking to the consultants. It's all up to the lawyers. Jen, can you frame out this legal case, where we are now and how it may play out?
Yeah, Paul, thanks for having me. I mean, we're really at a stalemate here. I think it's often forgotten that the states can step in just as the FTC and DOJ do and enforce federal antitrust laws in every way, including to try to block mergers, which is exactly what's happened here. So they did sue. They have alleged harm in 3 separate markets, 2 that have to do with theatrical distribution and 1 that has to do with the licensing of basic cable channels. They are in California before what looks like a pretty good judge for them, and right now have a trial date set for March. Based on news reports, it's pretty apparent that Paramount would like to settle this case. They've been talking about settling, and apparently they made an offer on May 12th to settle the case with the states, but the states are just not talking right now. And I think what we're seeing now is a PR campaign on both sides where they're playing chicken. You have the states talking about, we're not going to settle, we want to break up the deal, we're going to go to trial, and you have Paramount now talking about pulling their businesses out of California and moving them entirely to another state. I will tell you, Paul, I do still think, even though they're so far apart, that down the road this matter could settle, and with a settlement, the deal could close.
It's interesting, the threat to leave the state. How big of a deal is that? I know the Attorney General of California compared it to blackmail. Is that fair?
Again, I don't know that blackmail is fair. What I think of with that threat is gaining leverage. Right now, Paramount has very little leverage. Time is not on their side. They have a ticking fee that's going to kick in as of October 1st if this deal doesn't close, as well as additional financing fees that kick in if it's not closed by the spring. And they have really no leverage. So far, all the judges' pretrial decisions have gone in favor of the states. They would really like to settle with just what we call behavioral commitments. These are just promises to conduct the combined business in a certain way, whereas it's pretty understood that the states are looking for something structural, like a sale of basic cable channels, maybe even the sale of a movie studio. And so they're very far apart in that respect. And I think Paramount is doing what they can to try to get leverage. Now, I'm not saying that their threats aren't real. You know, that's up to what the executives in the board are doing and talking about. It very well may be. They've said that it's been approved, and it very well may be that this is something they're realistically thinking about. But in terms of what's going on with the lawsuit, I see it as an effort to gain some leverage in settlement discussions.
You know, I don't know who the attorneys were for Warner Brothers Discovery crafting this merger deal, but they deserve a big pat on the back. $7 billion breakup fee plus a ticking fee that could add $1.6 billion. That's real money, even to the Ellisons.
Yes.
Boy, the numbers there are just huge. Legally, on the legal fundamentals, do you think one side has an advantage over the other if it were to go to trial?
Well, let me first address all those fees. Remember that they were fighting with Netflix for these assets really viciously. Apparently, they've had to fight for these assets the whole way through. So I think they had to sweeten the pot by adding that ticking fee and that big breakup fee in order to win over from Netflix. Now, on the case, Paul, here's how I see it. I think ultimately, the companies probably have the better legal argument. Once all the evidence is fleshed out, once you have economic analyses, and once you've really dug into the markets that have been promoted by the states and what they say the market shares are in those markets, I think probably, now again, it depends on the evidence, which we haven't seen yet, but I still would lean toward the companies winning. But the bigger problem they have right now is this timing issue, because it's not just about the expense, but the longer a deal that's been signed can't close, the riskier it is for the deal, the more likely it is to fall apart. And they also have a June 4th drop dead date. So as of June 4th, if this is not closed, Warner Brothers can walk away and collect that $7 billion fee.
So is this level of drama and trouble typical in a merger this size, or is this extraordinary?
I would call this extraordinary. I think, to me, you can have a lot of drama with a lot of these kinds of deals. I think here the irritation and the drama is added to the fact that you have 65 or 66 global jurisdictions that have cleared it, and the only thing that's standing in their way are 12 states. And I think that's got to be very frustrating. And I also think that these companies probably weren't quite realistic about what was going to happen with this deal when they thought through their legal strategy. You know, the most interesting thing is, Stacey, when I think about the last time that I think of this much drama, was also dealing with CNN and also dealing with Time Warner assets. And that was when AT&T tried to buy Time Warner. At that time, Makan Delrahim was the Assistant Attorney General in charge of antitrust at the Department of Justice. He is now General Counsel for Paramount. And he went to court to try to block that deal, to try to force the divestiture of CNN. When I think of the drama, I think it involved the same assets.
And Jen, having covered these companies for almost 40 years, I know a lot of the players on both sides. I don't think any of them want to go through discovery and have their emails and texts and stuff looked at.
You know, Paul, I completely agree. And that's why I think right now they're very far apart on settlement, that they're both out there with very aggressive stances. But the closer and closer we get to that October date for Paramount, the more incentive they have to settle, and the closer and the more we get into discovery, I think the more both sides have an incentive to settle. So we just may see the temperature change as we go forward here.
Yeah, but on the flip side, if you're the state of California, the state of New York, maybe even Georgia, this is existential to you, because these are real jobs and real heritage in having an industry in Hollywood. So I don't know there. Jen Reed, thanks so much for joining us. Jen Reed, Senior Litigation Analyst for Bloomberg Intelligence. But again, you just think about it. They have two studio lots right across the street from each other, and I'm looking to the guy across the street who has my job at Warner Brothers. I'm at Paramount. Do they need both of us after this merger goes through? Probably not, and that's what these states are worried about. So they've got, real grievances on their side, but I don't know. We'll have to see if they can come to a deal here. But it's a $110 billion deal. You like to think
high
something
stakes
will happen.
in every way.
High stakes in every way. So we'll have to check it out. We got some green on the screen here, folks. S&P up 15 points, and the Nasdaq's up 110 points. There you go. This is Bloomberg. Good morning.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Stacey Bannock-Smith sitting in for Scarfu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube today. Kind of a cool M&A trade today that we talked about a little bit this morning with Tom Keene and Eric Balchunas. Goldman Sachs, they're going to pay as much as $2.25 billion to buy Neos Investment. Who the heck are they? They are an asset manager in the ETF business. So it's Goldman stepping up and increasing its presence in ETFs. I thought it was kind of interesting. So I want to get perspective from Neil Sipes. He covers all the big investment banks for Bloomberg Intelligence, including Goldman Sachs. Neil, I know the total number, $2.25 billion for Goldman Sachs, isn't a crazy number. They do that stuff all the time. But I thought it was kind of cool that they're putting money into ETFs, into active ETFs. Just tell us how Goldman and Goldman Sachs Asset Management thinks about the ETF world.
Yeah, I think what they recognize is what we see and what the marketplace sees is that active ETFs are a new wave of sort of a wrapper that investors and their clients are looking to invest through. And so I think that's what you see with Neos today is a specialized active ETF manager. It's only $30 billion in assets, right? So it's not necessarily a needle mover to the Goldman Sachs franchise that we know today. But I think they see where the puck is moving in terms of client demand. And I think that's why you see them building out this ETF franchise. This follows, maybe 18 or so months ago, they acquired Innovator Capital, which is another sort of active ETF provider of buffer ETFs that provide you capped equity upside exposure, and it caps the downside, right? So they recognize that these sort of specialized sort of solutions-based ETFs are where the puck is moving, are where investors are going, and by the way, where flows are going, right? You've seen pretty outstanding growth across the active ETF space, and so they're sort of positioning themselves to build out that franchise. When you think about active ETFs overall, it's highly fragmented, right? So there's lots of opportunities to take share. One way to do that is buy these really successful smaller managers, and that's what Goldman's doing here.
Is there a reason why ETFs are so hot in this market? It seems like everything's going up. What is the appeal of an ETF?
Yeah, I mean, it comes down to the simple things of lower cost than a mutual fund, tax efficiency, daily liquidity. Investors like that, advisors like that, retail likes that. So there's a natural structural reason why those are winning, particularly when you think about active ETFs. If you were to chart the active ETF flows against active mutual fund flows, you're going to have two lines going in very different directions. So there is a little bit of, you could almost say, cannibalization there for the asset managers, where they see money leaving their legacy active mutual funds in lieu of some of those active ETFs. These deals from Goldman, though, they're not necessarily looking at a large blend active ETF, a sort of exposure-based ETF. These are much more specialized, much more servicing what we're looking for in the wealth channel of where you want sort of personalized solutions.
All right, being a former banker, I ran the valuation. I ran the numbers. I got my HP12C here. $32 billion in assets. They paid $2.3 billion for it, so 7% of assets. Is that rich? Is that cheap? Is that in line with the market multiples? What is that?
So it's in line with what they paid for Innovator, a very similar franchise that they acquired. What is interesting, you noted the 7% of assets. If you look at the broader world of asset management deals over, call it, the past decade, we're hovering around 1 to 2% of assets. Oh. So yeah, 7% is a materially higher number. When you look under the hood, you can understand why, right? We look at the buffer ETFs that they bought with Innovator, these option-based ETFs that they're buying today with Neos. You see average expense ratios 60, 70, 80 basis points, right? When you think of an ETF, right off the hop, you're thinking of cheap beta, maybe less than 10 basis points, right? So we're talking about a different animal here. And when you look at the growth, we just talked about where the flows are going. It's active ETFs. These franchises have been growing, 20, 30, 40, 50% annualized over the past 5 years. And those are being extrapolated moving forward as these products gain more proliferation and they become meaningful flow drivers. So you see that in the valuation that they're paying today. We typically see these 7% or higher, even closer to 10% of assets reserved for private markets, which is, the other pocket, a much larger pocket I'll mention in the asset management world, where fees are higher and assets are growing at a much faster clip than the mutual fund space. So you're seeing some higher multiples paid here.
Why are people migrating away from mutual funds and into ETFs? What do ETFs have that mutual funds don't?
Yeah, I think it goes back again to some of those structural things we talked about. It's going to be a lower cost. It's going to have more tax efficiency, and it's going to have that intraday liquidity, which just makes portfolio management easier overall. So again, those are the structural things, but we're starting to see more creative solutions type products here that Goldman's really getting into. And those are sort of the underlying drivers. Again, you can always point back to the fact that active mutual funds on a broad basis have had trouble outperforming their benchmarks, right? There's always a select few that are, and that's where the flows tend to funnel towards. But when you start looking at the broader universe, it's becoming more challenging to sort of justify the costs. And so you see investors sort of shifting and voting with their dollars. That's really led to the rise of passive ETFs, but there's always a desire for some active and alpha. So here come active ETFs.
Neil, thanks so much. Awesome. Appreciate it. Financials analyst for Bloomberg Intelligence with some good stuff there. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. Stacey, thank you so much for sitting in. Appreciate that.
Thanks, Paul.
Good stuff. We had a good 2 hours there. We got more of Bloomberg coming up right now.
From ABC News, I'm Michelle Franzen. A day after Luigi Mangione appeared at his final pretrial state hearing before the murder trial of United Healthcare CEO begins, defense attorneys and prosecutors are expected to discuss a possible plea deal in his federal case.
Friday's conference comes 2 months after sources said Mangione's lawyers and federal prosecutors had discussions about a plea deal, though no agreement was reached back in June. If Mangione does end up pleading guilty to federal charges, state prosecutors have said they're prepared to lobby the federal judge presiding over the case for a stiff sentence. However, defense lawyers could argue that the state case should be thrown out over concerns about double jeopardy. Mangione has pleaded not guilty in both federal and state cases. He's scheduled to go to trial in his state case on September 8th. Peter Haralambous, ABC News, New York.
Ongoing hostilities with Iran and the U.S. keeping the pressure on Americans when it comes to prices for goods. Inflation cooled slightly by 0.1 of a percentage point from June to July. ABC's Elizabeth Schulze says it was not enough to reverse high prices in many sectors, including groceries, transportations, and services.
This is pretty much in line with expectations. That 3.4% inflation rate is about where analysts thought it would be when you look at kind of across the board prices in the economy. It is not, it's a good thing that we don't see that number going up, that inflation isn't accelerating, but it is still above where the Federal Reserve and overall households want inflation to be.
In Colombia, rescue efforts continuing 3 days after a massive earthquake rattled the Choco region, killing at least 240 people. The city of Cali, one of the hardest hit, where dozens of buildings collapsed. Officials say more than 200 people are trapped, thousands of others still listed as missing. Major hoops news, multiple sources tell ESPN the Los Angeles Lakers are being sold to American businessmen Josh Kushner and Bob Iger for over $12.5 billion, a record-breaking price. You're listening to ABC News. A major university is making big changes to its grading protocol for some incoming freshmen. ABC's Hannah Batal has details.
Beginning next fall, instead of getting an A, B, C, or D, some first-semester freshmen at the University of Michigan will get only a pass or no credit, and neither designation will count toward their GPA. The university says this will allow students to explore a subject that may not come easily to them, or take a course in a new field without the fear that a low grade may have long-term consequences. The school says the goal is to help students start strong and curb the mental health crisis unfolding among college-aged individuals.
The pilot program applies to students enrolled in the College of Literature, Science, and the Arts. New York City officials are touting public safety efforts through the first half of 2026, claiming the past 7 months have been the safest in recorded history. They say new strategies allowed the removal of more than 3,000 guns off streets. New York's Attorney General Letitia James praising the NYPD.
Every illegal gun on our streets has the potential to shatter a family, devastate a neighborhood, and change lives forever. And that is why announcements like this matter.
Officials say major crime is down nearly 7% citywide. Tonight's Powerball jackpot is up to $1 billion plus. That's the game's 8th largest grand prize ever and the largest lottery jackpot offered so far this year in the U.S. Michelle Franzen, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Inflation falls to the lowest pace in 5 years. Welcome to the Wednesday edition as the CPI for July brings a subdued reading for the markets, easing back expectations for Fed rate hikes and giving the White House today something to crow about. We'll look under the hood with Douglas Holtz-Eakin from the American Action Forum. He'll be with us live in just a moment. The Pentagon is telling defense contractors to put the pedal to the metal. We're going to investigate the impact of dwindling stockpiles of munitions with Bloomberg Pentagon reporter Tony Capaccio. He's in studio with us today. And Thanksgiving lives in Wisconsin as progressive Francesca Hong loses the gubernatorial primary to a moderate. I kid. We will review the results from one of the last big primary nights on the trail with our political panel. First, Wall Street. Charlie Pellet standing by live in New York with the latest on the trade on this CPI day. Charlie, how's it going?
Right now, we got the bulls giving thanks on Wall Street, Joe Matthew, with the Dow, the S&P, NASDAQ, all advancing right now. Last update, we had the Dow lower. Right now, looking at a gain in the industrials of 37 points. A volatile day there, up by about 0.1%. S&P 500 index trading close to a record. Right now, we're up 16 to 77.45, up by about 0.2%. If you're keeping track with us throughout the trading day, the S&P record 77.57. Again, right now, 77.45. NASDAQ up 115 points, up by 0.4%. Earnings from CoreWeave up 19%. Super Microcomputer up 14%. That has NASDAQ and the NASDAQ 100 index both surging. NASDAQ 100 right now up by 0.8%. The VIX now below 15. Wall Street's so-called fear gauge. The SOX, the Philadelphia Stock Exchange Semiconductor Index, up now by 3%. Spot gold at $44.21 the ounce, up 1.2%. And the 2-year, 4.18%. The 10-year CPI Wednesday, the 10-year, 4.66%. As we mentioned, underlying inflation did come in subdued in July, easing pressure on the Fed. Reaction to this morning's CPI report from David Kelly, Chief Global Strategist at JP Morgan Asset Management, who was a guest this morning on Bloomberg Surveillance.
We're going to have lower tariff costs going forward than we've had a year ago because the new tariffs are not going to fully replace the IEEPA tariffs. Second, I do think that eventually oil prices will come down because eventually there's only one solution to this thing, and everybody's always got to get out of the Strait of Hormuz, and I think it will.
JP Morgan's David Kelly, he mentioned oil again, WTI 83.16 a barrel. Some of the oil super majors are trading lower right now. Case in point, ExxonMobil down 0.5%. Chevron, little change lower, down under 0.1%. ConocoPhillips down by 0.3%. In the sports world, major transaction underway. Thrive Capital's Josh Kushner and former Disney CEO Bob Iger buying the Lakers for a record-breaking price of more than $12 billion. And by the way, shares of Knicks owner Madison Square Garden Sports, they're moving on the news, up now by almost 5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Lots going on. That, Joe Matthew, is a Bloomberg Business Flash.
I do appreciate it. Everything you need to know there from Charlie Pellet. He'll be back in just about 15 minutes' time with another check on the markets. I know that's not a lot of money for Charlie Pellet, but yeah, that's big money we're talking about. $12 billion. Gosh, I thought there'd be a little more of a bid under this market today following the CPI, but it's definitely a stock picker's world that we are living in here. Welcome to the Wednesday edition. You're halfway through the week, everybody, unless, well, if you work in Washington, you're probably on the Eastern Shore, I don't know, down the Carolinas right now. There's not a lot happening in town as we wait to hear from the president once again, back from the Patriot Games last evening, but we do have a lot to talk about on a national level when it comes to politics. Last night was another important one, and we're going to get to the primaries that made so much news after we touch the breaking news today from Washington. It's all about inflation. Yes, with 83 days to the midterms, and we are counting. We learned that underlying U.S. inflation was subdued in July, and in fact, matching forecasts for what many believed. And if you talk to Anna Wong at Bloomberg Economics, she would have told you. Lowest pace since 2021. I believe it's March of 2021. Remember what was going on then? Coming out of COVID. And so this is making everybody feel pretty good. We've not seen the mission accomplished banner go up on the aircraft carrier. But President Trump, talking with reporters on the tarmac last night at Joint Base Andrews, put a good look on things. Here's what he said.
The country's doing well. The stock market's fantastic. Record. We have 79 records so far in a short period of time. More people are working right now in the United States than ever before, and prices are dropping fast. Iran is going fine. going just absolutely fine. We totally control the Strait of Hormuz. We have control over it. Nobody else, only us. Our Navy is unbelievable.
But here we are at the noon hour. It's the lunch hour on the East Coast, and I'm looking at Truth Social, and he's posting about Trey Gowdy's new book. Where's the post? Where's the statement from the White House here? Seems like good politics if you're running for re-election as a Republican. You've been waiting for a headline like this. Here's what we learned. Consumer Price Index up 0.2 from a month earlier. Now, this is BLS data, which, you know, the White House had called into question, but this is all we've got, right? On an annual basis, up 2.5%. That's what matches the slowest pace since, yes, March of 2021. Energy and gas down for a second month. That makes us a little bit nervous because they've been going up again, and I'll be curious to hear what Douglas thinks about that going forward. We did see a drop in grocery prices, but that was because of the lettuce thing, and we'll leave that to another show. Shelter prices went up just a tick. Services up 2 ticks. We put it together with the president of the American Action Forum. He's the former director of the Congressional Budget Office, and now with us live here on Bloomberg. Douglas Holtz-Eakin, welcome back, sir. It's good to see you. Are you surprised that we're not taking a victory lap here today? This actually seems like pretty good news all the way around.
I am a bit surprised. You know, the White House gets these data the day before. So they got the data yesterday at something like 4 or 5 o'clock, and they've had a lot of time to figure out what messaging they want to surround this, the data release. So to be silent is really odd. I don't understand it. And it falls into this larger puzzle that you can ask the political experts, which is, you know, when are the Republicans going to have some sort of unified messaging heading into the midterms? They want to talk about the economy, but they don't. So I really, I'm confused by that. Having said that, I don't think this is the greatest report in the history of CPIs. You know, yes, it's the best in 5 years, but that was when the core was going up, heading to a height of 5.6%. This is not getting back to 2 yet again. And if you look at the key here, the key is that both in June and July, shelter inflation was extremely soft. And I don't think we want to sort of, you know, bet the ranch on shelter inflation staying as subdued as it has been. So, you know, it's good that it's not going up. Agreed. It still means the prices are going higher, and that means that your paycheck has to cover even more, and wages aren't rising as fast as prices. So that's the horse race that matters, and that's the one that's going to show up, I think, at the ballot box.
All right, well, that's a sober reading on things, Douglas, and somebody's got to do it. So does it change your view on the Fed? Because the market is treating this as good news following that weaker than expected jobs report, because they think it pulls them off the hiking trail here.
It doesn't change my view of the Fed. You know, this is a piece of data. It's an important piece of data. They're going to get one more CPI and 2 readings of the PCE price index before the next decision. They'll see another jobs report. So they've got a dual mandate, inflation and employment. They're going to have to balance those. And we've seen them do a balancing that's different than the market expects. And you can't rule that out one more time.
I know the core is the important number here if you're the Federal Reserve, but oil and gas going back up. Douglas, could a lot of this be reversed by the time we see the next CPI?
Well, one of the reasons we have a core measure is that it takes out the volatile food and energy pieces, and that gives you the best predictor of the overall CPI in the future. But that's the point. Energy is volatile. It could go back up quite easily. And the president's statement notwithstanding, I'd say what's going on in the Strait of Hormuz is far from settled, and the outlook for global oil supply is far from settled. And 83 days is a political eternity. Anything could happen in that.
Really interesting. So how are you feeling about this capital gains story? By the way, I get a kick out of this because there's this banner headline that, you know, Trump is looking to cut your capital gains. This was from like a Larry Kudlow interview in which he referred to a conversation that he had with President Trump. Okay, that said, if Donald Trump pulls this out here, he says he recently talked about indexing capital gains, meaning taxes would be applied on gains adjusted for inflation. Does that actually give you something to run on, Douglas? And I mean, is it good politics? Is it good policy? Because I'm guessing that when you take a look at the line on the ledger there that brings us to deficit spending, you might have a palpitation when we start adding more to this. What's your thought?
Yeah, I'm going to make myself the least popular guest ever on your show.
I love it.
First of all, this is not news. I worked at the White House in 1989, and in 1989, Treasury officials floated the idea of the president unilaterally indexing capital gains for inflation without getting legislation. And it didn't happen for two reasons. Number one, it's never been clear the president has the authority. Number two, it turns out to be devilishly difficult to do, and the Treasury officials ultimately just throw up their hands and say, no, we can't pull it off. So my forecast, capital gains taxation will be the same at the end of this year as it was at the end of last year. And this will be a trial balloon to see if people care about this.
Yeah.
But it's really just a campaign tactic because I don't think they can really get it done.
He's also suggesting exemptions for sales of homes worth $2 million or less from capital gains taxes. He says, quote, the boss is very interested in this idea. Douglas, how about you?
I'm interested in that idea. The Congress decided, and we signed into law, that we were going to have a maximum amount of tax on housing capital gains. We're going to exempt $500,000. It's not indexed for inflation. So at a minimum, you want to raise that and index it for inflation. And in the reality, given sort of the distribution of wealth and home ownership, you could probably get rid of the taxation of capital gains and houses and not have a big impact on the U.S. fiscal situation. And that would be good housing policy when we need it and certainly politically popular.
God forbid you bring a little relief to the housing market. Douglas Holtz-Eakin, are you having a good summer? Like, are you going to the air shows on the mall? Or did you do the UFC fight? You going to IndyCar? You know, they're sweeping out Pennsylvania Avenue for an IndyCar race.
I know. My office is on Pennsylvania Avenue. This is an enormous inconvenience.
It's insane. They're going to be driving 185 miles an hour. Did you see they welded the manhole covers shut, Douglas? You may as well take a vacation for a couple weeks. Yeah.
I plan to attend from far, far away. That's my current approach.
I'm with you. I'll have more on this.
This is not my favorite thing.
Okay, well, this is a tough summer for some people living around Washington. For others, it's a tourist attraction. Douglas, thanks for coming back. Yeah. We missed you. Douglas Holtz-Eakin with us live on Bloomberg. Straight from Pennsylvania Avenue at the American Action Forum. I'm Joe Matthew in Washington, where, they welded the manhole covers shut because the cars pop them open. They also removed the median, and at some point, they're going to tow my car. I've still got it down there parked on the street. Just get me to a good rooftop so I can see that race. We'll have a lot more ahead here on Balance of Power, of course, including Tony Capaccio. He's coming over from the Pentagon to talk to us about munitions, and he's next on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here. Bloomberg gains for the U.S. stock market and inline inflation reading spurring an advance for both stocks and bonds. This morning's report did ease concern about imminent Federal Reserve interest rate hikes. S&P right now up 18 to 77.47. The high, by the way, on the S&P, 77.57. Right now we're looking at a gain of 0.2%. Dow Industrials bouncing around, but up 33 right now, up under 0.1%. NASDAQ is up 133 points for the NASDAQ Composite Index. That is a gain of 0.5%. The Bloomberg Mag 7 Index, so in the red, down 1.1%. The SOX, the Philadelphia Semiconductor Index, up now by 3.1%. The 2-year, 4.18%. The 10-year, 4.66%. And the 30-year, 5.23%. Gold is up 1.2%. The precious metal now at $44.23 the ounce. West Texas Intermediate crude flat on the day, 83.20 a barrel. Brent 88.73, down by 0.2%. We're keeping an eye on a couple of high-flying tech names following earnings. CoreWeave, it's a provider of computing that powers AI systems. It is surging right now by 18.7%. And super microcomputer shares are jumping after the company gave a revenue forecast for the quarter that topped estimates. Right now, Super Micro is up by 13%. Coming up after the close of trading, we'll be hearing from Cisco Systems ahead of earnings. Cisco up now by 1.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That's Joe Matthew. This is a Bloomberg Business Flash.
Okay, Charlie, appreciate that. Cisco's been a killer this year. I'll be awfully curious to see what they come out with after the bell, and you know you'll have Charlie Pellet with you to manage it all. Much more, of course, on the after the bell action on the late edition of Balance of Power. That starts at 5 p.m. Eastern time every day here on Bloomberg. The bills are being racked up at the White House. It's not just the construction site and the legal battle over what's been going on with renovations. You know, they're not just building the ballroom over there, and now that's been, I guess, a court is trying to stop that. The appeals court told them they had to stop construction because they didn't have the proper approvals. But you've got the helipad going in, too, right? Then they had to stop that and pull it all up there. And, of course, the lawn, well, that needs to be resodded. And there's a lot of other stuff cooking. You've got the whole Lafayette Park thing happening on the other side of Pennsylvania Avenue, and well, then there's the columns. What are they putting in? Corinthian? I can't remember. It's all behind that tarp there on the north portico. So the Washington Post actually has been digging through receipts and has a whopper of a number on what this costs. Remember the president, how upset he was about the renovations at the Federal Reserve Building? How does $900 million sound? The administration plans to spend at least that much, according to the Post, for the multiple construction projects underway. The administration, we learn, has pieced together funding from other agencies and private donors and directed it to this little-known slush fund, this little-known account that typically holds a few $1 million for routine maintenance to the White House. They put a lot of money in there, and they're using it for what they're calling modernization projects. Contracts reviewed by the Post open the possibility the work will not move forward as planned, that the money will not be spent. They had issued orders, though, for over $100 million of work to be paid from the White House maintenance account by the end of June. So we'll keep tabs on this for you. The whole campus is changing before our eyes, especially now that the ballroom's coming out of the ground. And you know what he says? They want to build a drone port on top of the ballroom. Is that part of this money, or is that Pentagon funding? Maybe Tony knows. Because we're going to take a deep dive on this story that you've been hearing us talk about and a lot of others, about whether or not our strategic decisions in the Middle East are being based on a lack of weaponry, a massive drawdown in our munitions. Something we talk about on almost a daily basis, and there's been some really good reporting on this, suggesting that our stockpile of THAAD missiles is essentially depleted, that our ATACMS are almost gone. And we know that there are a lot of other forms of weaponry that we have in ample supply, but it's the high-end stuff, the precision long-range weapons that we are talking about. Tony Capaccio has done a great job reporting on this, and we haven't had a chance to talk to him for a while. He is the sole byline on the story. Pentagon asked defense firms to boost production of key systems. Remember the name Steve Feinberg. We talk about Pete Hegseth a lot, but it's the Deputy Secretary of Defense who's trying to manage this. And Tony is with us right now. He made his way over from the Pentagon to sit with us in our studio in Washington. It's great to see you. People have missed you. They said, where's Capaccio? He's back. He's finally back.
You haven't invited me, so.
Well, is that true?
This is true.
It's not true. I always invite Tony.
And Joe, we need to clear the record here. I'm not coming from the Pentagon because we're no longer there.
Well, don't you hang around there? You don't loiter in front of the building or anything?
I don't want to get machine
gunned.
They've
got a great food court over there from what
it's in the Pentagon. I do not want to get arrested.
You can't even go to Long John Silver's anymore.
They don't have Long John Silver's there. That's not healthy.
That's true. I'm sure that was pulled out of there along with your desk. All right. This is fascinating to me when the Pentagon has to pick up the phone and call Boeing, Lockheed, and RTX and tell them to pick up the pace. Set the baseline for us. How badly depleted are these munitions?
Okay, so one thing, the Feinberg memo, August 5th, it was sent to all the defense industry. This has been misconstrued in all the press except what we wrote.
Really?
Yeah, this is not. It wasn't a clarion call for more munitions that were used in Iran. It just wasn't. I've got the thing here. I can read it to you.
Tell us.
It's more interesting though. These are radar systems and enablers basically to make more efficient use of weapons that we have or we're going to build. I mean, one of these things involves building more quickly of a Navy refueling vessel. Those haven't been fired in Iran.
Yeah.
I mean, the only munition they list here is something called the Next Generation Interceptor.
Okay.
This is for United States missile defense against ICBMs from North Korea. Lockheed is the manufacturer of it. They're about 18 months late. That's the only munition. Now, saying that, though, Feinberg's memo lays out, I think, pretty smartly the enablers and radar command and control that are needed to protect U.S. forces and also to use the weapons more effectively. I mean, one on here is something called the indirect fire radar. I'll read it so I get it right here.
I love this. He's got the hard copy.
Excuse me a second here.
Full color print.
Indirect fire protection capability all-around magazine. That's a mouthful, but it's a dynetics system designed. It's basically a mobile radar detection, missile detection system that designed to protect troops in the field, like those in Jordan who were killed.
Yes.
A couple back in July. This is the kind of system that Feinberg wants to accelerate.
So this is responding to a couple of things then, right? This is about force protection, which and the Pentagon's been criticized to some extent.
Good point.
On this, right? But also, is there a sense of urgency behind these technologies, these systems, that would make our current weaponry more efficient? Is it because we're drawing down our supplies?
I think that's the subtext here. Yeah. Less munitions. These are enablers, but some of these are already out there, like the Spy-6 radar. Okay. This is the Navy's top radar on our top line destroyers right now.
Why do we need more?
Well, we need more because we're buying more destroyers, third generation destroyers. Yeah. This is a good example.
So to your point, this is far beyond the theater of combat that we're in right now.
Correct. Yeah. And I'll give him credit for this. Feinberg, seemingly brilliant. He doesn't want to deal with the media or the public at all. So, I mean, but this is a smartly laid out memo.
Is he the man who's really running the Pentagon?
That's my impression too.
Really? I didn't think you'd answer that.
In terms of acquisition and research and development funding, he's the brains behind the operation at this point. He doesn't have any tattoos on him either.
Duly noted. What do you make of the reporting about THAADs, ATACMS? Are we actually depleted, and will it take 2 years to replace them?
It's going to take longer than 2 years. Depleted, definitely reduced. The subtext here is all these stories are based on people who are angry with the way the war has gone, and this is one way to attack the logic of the war.
Interesting. Okay. In terms of leaking out of the Pentagon?
In terms of the numbers that you were seeing from the New York Times and others.
Right.
They're seeing this war was a fiasco, or it has become a fiasco. If it was going a little bit more swimmingly, I think the munitions issue wouldn't be highlighted.
Right.
And then there's a subtext to you taking away from munitions using in Iran. That's going to hurt us in China. The readers our listeners should realize a war with China would involve more than just the United States. It would involve Japan, Australia, allies in the region who have weapons, have their own stocks of interceptors. a big announcement the other day that got minimal publicity was that Raytheon has been put on contract to produce for Japan and the United States a missile called the SM-3 Block 2A. Chew that over. This is one of the best missiles in the U.S. inventory because it can go after long-range Chinese ballistic missiles and those that are coming in from space. So in a conflict in the Pacific, it wouldn't be just the U.S. going it alone. It'd be Japan,
That's fascinating.
Australia. We got to keep that in mind, and even Taiwan. So keep that in mind.
Because the question that always comes up, well, what would happen if China invaded Taiwan tomorrow? Could we manage 2 wars at once? And what you're saying is we're still building the arsenal for that war.
We're still building it, but we have allies.
We're helping them build theirs.
And they have weaponry now. Taiwan's got weaponry. And then there's the whole question of early warning. The United States has got a hell of a good sensor system up there in space. We would see a buildup. It wouldn't be a bolt from the blue kind of an attack. It just wouldn't be. They'd maybe try to destroy the cyber infrastructure, but we'd see a buildup of ships. So that whole construct of because we're running low on munitions because of the Iran, we couldn't fight in China. Just think about that in terms of we wouldn't be fighting alone.
Fascinating. So we're in a pretty sticky situation in Iran, and there are questions about what do we do if this is months more of this, if this is years more of this? How do we cycle 50,000 men and women out of theater to let them go home, to bring boats back to repair them, air crews, et cetera? Will there be a rotation?
There has to be in terms of especially the aircraft carriers.
We're way overdue for something.
I mean, some of the destroyers are already cycling out.
Yeah.
They publicize that when they're cycling out going home.
So how long can we keep this going? Is it indefinite?
I can't answer that. Indefinite. We were in Iran for, remember that one?
In Iraq?
Excuse me, Iraq.
Yeah.
2003.
Absolutely.
We got out of there in December of 2011.
Afghanistan was even longer.
And then we had to go back because of ISIS. So this is it's not a massive footprint because we're not going to leave the region.
Yeah.
But the question of the rotational forces.
Yes, right.
It's already happening with destroyers, and the Air Force has been doing it fairly regularly. They're just doing it under the radar. They're not doing it publicly unless they want to send a message to Iran.
You started by reminding us that you're not allowed in the Pentagon like you used to be. This bias against media, the posturing from the Pentagon has resulted in very little on the ground or on the boat reporting, as it were. There have been a couple crews. I think CNN was out there, maybe News Nation for a minute. Isn't that what's different in our final moment? We're not seeing images and reporting from the theater from our own journalists.
No, we're seeing it from satellite, commercial satellite imagery overhead. But
has this ever happened like this?
No, this is pretty unprecedented. CNN got on I think it was the Lincoln. I don't know about Newsmax. But no, it's an unprecedented cloud of, frankly, obfuscation. They communicate by Twitter.
Yeah, right.
Hexeth and Parnell by Twitter. They don't do news conferences anymore. They throw out press releases with no heads up on all these framework agreements that are going to take billions and years to come to fruition.
Amazing. Well, we're ready to go out there when they'll let us. I think maybe it was News Nation. I don't know what the difference between any of these things. Tony Capaccio is back. Don't tell me we never have him. Pentagon news reporter at Bloomberg. He's the best we've got on this. And congrats on all the great reporting. Don't be a stranger. You're welcome. I'm Joe Matthew in Washington. Our political panel is up next as we reflect on a big night on the primary trail. It's straight ahead, only on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Gains for the U.S. equity market after the CPI report this morning. That inflation report, the inline inflation report, spurring gains in both stocks and bonds, easing concern about imminent Federal Reserve interest rate increases. The S&P right now trading close to a record. We're at 77.50. The current high is 77.57. Looking at a gain right now of 0.3% on the S&P, so close to a record there. The Dow off session highs up 0.1% right now, picking up 37 points. NASDAQ up 144 points, up 0.5%. This is shares of CoreWeave surge 18%. Super Microcomputer up by 13.5%. The SOX, the Philadelphia Stock Exchange's semiconductor index, up 3.1%. The VIX now below 15. The 2-year 4.18%, and the 10-year currently yielding 4.67%. Gold is up 1%, 44.14 the ounce, an advance there of $44 the ounce. And West Texas Intermediate crude 83 even now, down 0.2%. Barrel of Brent 88.60, drop there of 0.3%. The Consumer Price Index, excluding often volatile food and energy categories, increased 0.2% in July from a month earlier. It advanced 2.5% on an annualized basis. Tiffany Wilding is economist at PIMCO. She was a guest this morning on Surveillance.
I think overall, this plus the the softer CPI print last month, has to be a little bit of a relief for Fed officials. Good news for them. At the same time, though, some of the more hawkish members on the committee, we doubt it really changes their minds.
Tiffany Wilding of PIMCO interviewed on Surveillance. Gains are on the menu for a couple of big restaurant chains after earnings. The Mediterranean chain Cava Group sales rose faster than expected due to increased traffic and customers buying higher-priced proteins and extras such as pita chips. Cava up now by 12.3%. And Brinker International higher after earnings. It owns the Chili's grill and bar chain. Ticker is EAT. Shares up now by 8.9%. And just getting word that Apple has tapped American Airlines veteran Nate Gatton as government affairs head. He joins Apple on August 31st. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie. Thank you, sir. Charlie and I have a date. We're going to meet at the Times Square Chili's when I get up there a little bit later on this week. We'll be live from the Fishbowl tomorrow and Friday, right where Charlie Pellet is sitting. If you watch us on YouTube, and I encourage you to consume the show that way, go to YouTube and search Bloomberg Business News Live. You can watch the radio on TV, and you'll see, our cutaway shots. Cece's up there doing magic with the video. She's a ninja on this thing. And they show you you see the cutaway shot, the fishbowl up there with the big ticker on it. That's where Balance of Power will originate tomorrow and Friday, and I hope that you'll join us. As always, it'll be great to be back at World Headquarters, and we've got some surprises in store for you this weekend. It's going to be a working weekend, but I mean, come on. If it's fun, is it really work? Yes, Bloomberg this weekend. I'm going to be holding forth with Carol Massar, and we've got some great stuff for you Saturday and Sunday here on Bloomberg Radio. And if you dare, once again, find us on YouTube. So interesting turnout last evening. How do we draw a trend? That's what we try to do in the media. You look at 6 different states holding elections, and you try to connect the dots so you can put the darn thing into a headline and publish it and go home. But it's just really very rarely that easy. Just like the stock market. It's never one thing that moves the markets, and it's kind of tough to call a trend from last night. Maybe anti-incumbency, with our eyes on old John Larson in Connecticut. But a lot of folks thought it would be the night for progressives. Dare we call them socialists? In this case, they were. Francesca Hong, despite her recanting the idea of canceling Thanksgiving, she lost last night. But then I can't tell you it was a bad night for progressives and socialists, because Peggy Flanagan won in Minnesota, the Senate primary there. The lieutenant governor, anti-establishment, universal health care, higher federal minimum wage. So it's a little bit difficult to start drawing trends when we look at the map from last night. And of course, we've got a couple of unique elections, including the special in South Carolina, which, by the way, did go to a runoff. And that's something. the Trump endorsement of Darlene Graham ran into somebody called Ralph Norman. And we're going to unpack a lot of what we learned last evening here with our political panel, including one of the greatest campaign practitioners in America today, who you get to see and listen to every day on this program. That's Rick Davis, Bloomberg Politics contributor. He's a partner at Stone Court Capital and our Republican strategist. Joined today by Laura Fink, founder, CEO, Rebel Communications, our Democratic strategist. Guys, it's great to see both of you here. And Laura, I'm going to start with you as our Democrat. Whether you thought this was a good night for the mainstream or for progressives, I guess a better thing to ask is, was this a good night for Democrats when it comes to the general election?
I think it was a great night for Democrats. I think you see that there are, we go both ways. I think this sort of build up between the progressive wing of the party and the establishment wing of the party is something that is a great media narrative, but I think what you see in the results is it was reflective of the electorates they were running in. You take Wisconsin, for example, the tightest of swing states, and voters there really responded to the electability argument made against Francesca Hong, and that is valid given the makeup of the electorate of Wisconsin and just how close it is and how important swing votes are. And so I think you see electorates responding to how things are articulated. In Minnesota, home of Paul Wellstone, very used to sort of a progressive ideology as their baseline. They didn't blanch at like someone that called themselves a democratic socialist. So I think you see reflective in the Democratic Party elections how diverse the electorate is and truly how consistent the message is, because whether you're establishment or whether you're a progressive, you are articulating an anti-Trump stance, you're articulating an affordability stance, and really talking about how Democrats might be able to make the lives better of the people who are there asking to vote for them.
With the Wellstone reference, I love it. Rick, let's just seize on Wisconsin for a moment. I'm curious your thoughts on this, because there were polls, and you warned us here, that there was terrible polling in Wisconsin, much like we saw in Michigan. Some of these polls had hung up by double digits, Thanksgiving aside. She lost by like 3,000 votes. What does that tell us about David Crowley, who at one point had dropped out of this race, and about the Democratic electorate in Wisconsin?
Yeah, look, I mean, you would never want to try to replicate the Crowley election. I mean, like on again, off again. But he's a mainstreamer, Milwaukee base, a good place to come from. They were the last ones to vote last night and gave him the election victory. Look, best I can tell, Democrats in Wisconsin chose stability, chose mainstream. There was no question that Francesca Hong had a lot of energy. And she did something that I think should be a lesson for Democrats, because frankly, I think she overperformed her ballot. I thought she'd get beat by more. Is she went around to all these rural counties what Democrats tend to not spend a lot of time in. And I think that actually buoyed her support when a lot of the energy in the initial campaign started to fade. So I'm not surprised by the outcome. And I must say, I think that it's the strongest candidate that the Democrats could have put on the ballot based on what they had on the primary ballot last night.
Well, so now look at the general here, Rick. This is something. Crowley is going to be facing an election denier. Representative Tom Tiffany would be the first person who voted to overturn the 2020 presidential election to become governor of a big swing state like this. How important will the outcome be?
Yeah, we dodged the bullet with the pillow guy in Minnesota, but we got Tiffany, and I'm not a big fan of people who are election deniers, but he's in the mainstream of the Republican Party, ironically, in Wisconsin, best we can tell, and he has an enormous amount of support financially. I think he's got a war chest of in excess of $13 million ready to go for the next 60 days, and so. Look, the biggest problem he's got is not going to be the Democratic Party. It's going to be the cycle. If the cycle continues to trend, Democrat +7 or more, it's going to be hard for any Republican in a state like Wisconsin to get elected. And so all the money in the world is not going to keep people voting against Republicans if they feel like they haven't actually focused on affordability and cost of living. And that'll be the pressure Tiffany's up against, right? Can I go into a cycle with more of an economic message than conspiracy theories.
Well, we should note that at the top of our next hour, we're going to be talking with Brian Stile, the Republican congressman from Wisconsin. Laura, is it possible for an election denier on that level to win the state of Wisconsin?
It's going to be tough, and it's hard to say that anything is a guarantee because Wisconsin is so tight and always is so tight in election after election, no matter what environmental winds are blowing. But I do think that he is going to have a tough road to hoe, not only because of his election denying, but also because he's voted time and again through that election denial to stop funds from coming to the state of Wisconsin. Francesca Hong was actually making a pretty compelling argument that I think should be picked up as we move toward the general, and that is that essentially when you block funding from the home state that could make things more affordable, that could stop the pressure on local governments, if you're able to make that argument that the opponent is in the pocket of Trump effectively through local examples, that's something that's really going to resonate and could put the Democrats over the top in the fall.
Well, Laura, you pointed us to Minnesota, and I want to go back there. This is really interesting. The Democratic Senate primary, Lieutenant Governor Penny Flanagan, this is the progressive in this case, winning, and it wasn't even close. Beat Representative Angie Craig by almost 20 percentage points. And so now we go on to the general. And again, I'm curious your thoughts on this. She's going to face Michelle Tafoya, who was an NFL sideline reporter, who I think most Americans know. She worked for every network with 3 letters or more, I think, at some point in her career. How difficult will it be for this progressive Democrat in the general election?
I think it's going to be tough. I think Minnesota obviously is a little bit friendlier than Wisconsin to a Democratic governor, but I also think, I was going to say earlier that women on the progressive side have been having a particularly hard time. The men have seemed to fare a little bit better, but I think in particular when you don't have a man versus a woman, it neutralizes sort of the anti-woman in power argument that is sometimes made from the right, or the playing into that sort of scary feminist trope. So I think given that that's going to be a neutral for her, she's going to be able to really make the case that she's so successfully made in the primary about lowering costs, in particular around things like healthcare. And so I see her path as a little bit wider than the one in Wisconsin.
Now, Rick, you mentioned the pillow guy. I'm confused here. The Associated Press called the race for Lisa DeMuth last night, right? Almost all the votes are counted. DeMuth was more than 45,000 votes ahead of Mike Lindell, 43.4 to 32.5%. He's refusing to concede. I guess he says there were some irregularities. What do you make of that?
Well, it's the same thing he's said in every election that Republicans have lost. It's not to be unexpected. He was the torchbearer for the 2020 election conspiracy theorists. And so I don't think it's even newsworthy at this point that he would complain about a rigged election. And I think that this may even signal the end of his electoral career, losing at this stage against a woman that wasn't even endorsed by the Republican Party or by Trump. I mean, both of those groups lost out to Elizabeth DeMuth. So I actually think that is going to be her core superpower going into the general election, is the fact that she doesn't carry the burden of the party or the president on her shoulders and can actually go out there, throw some jabs, and see what she can do as a statewide candidate. I actually think the people of Minnesota did themselves a favor by putting her on the top of the ballot.
Is Rick Davis a gentleman? I mean, giving us a serious answer to that question, I absolutely love it. Laura, you were looking forward to that debate with Amy Klobuchar, weren't you?
Oh, I would have loved to see it. Amy Klobuchar is incisive. She is tough as they come, and it would have been wildly entertaining. But I still think there'll be some fireworks no matter what happens. And I also think, for Republicans, it's incredibly hard to disentangle any individual candidate from Trump unless they actually stake out a policy position that differs from his. And we all know that because of the funding and the direction of the politics, that's incredibly difficult for Republicans to do. So they have a yeoman's work in the next 100 days or so.
Really great panel today. Laura Fink, Rebel, Rick Davis, Stone Court Capital. Great to have you both along, and they're going to come back in our second hour to talk a lot more about what's going on here this day after the primaries. Kaylee Lyons is on the way in. We'll welcome our global television audience. And yeah, I like that. Feathers for Lindell, says producer Matt. Stay with us. Much more straight ahead on Balance of Power, only on Bloomberg.
Washington, D.C. This is Balance of Power with Joe Matthew and Kaylee Lyons.
President Trump says we own the Strait. Welcome to the Wednesday edition as the U.S. and Iran harden positions in what has devolved into a stalemate over the Strait of Hormuz. I'm Joe Matthew alongside Kaylee Lyons in Washington. Kaylee, the president's post today on Truth Social that we own the Strait sort of reminds you of the old Pottery Barn rule. Colin Powell, you break it, you own it.
Yeah, well, or control it, as the president is suggesting. Right. He has said this repeatedly over the course of the last few days. He told this to our colleague Josh Wingrove as well, also saying that the Strait already is open, but we know that that is not fully the case. Yes, more barrels per day are getting out, according to the Energy Secretary. 9 million barrels per day was the latest number. We're still nowhere near the levels we saw pre-war, and we still seem nowhere near a permanent end to this war, a negotiated outcome to this conflict overall.
Getting a little forgiveness in the markets today. Oil prices have actually been slightly lower, but we just don't have much news to go on here. Having opened the week with an expectation of a potential breakthrough here, but we are so far away from negotiations at this point, it's difficult to tell. We'll get an update from Tyler coming up at the White House.
Yeah, we also have to talk about the primary results from the 6 states that went to the polls yesterday. Most notably, perhaps, is in Wisconsin, where the Democratic Socialist Francesca Hong did not come out victorious, as polls widely indicated she would. They were wrong. She lost, albeit narrowly, to David Crowley, the more moderate Milwaukee County executive.
3,000 votes.
Pretty remarkable.
Barely, yeah, but it really reminds us of how noisy the polling has been from some important states, including Wisconsin and Michigan. We'll talk with Brian Stile from the great state of Wisconsin, Republican congressman. We'll get his take on some of the results from last night.
Yeah, looking forward to that conversation. But first, we begin, as always, with a look at the markets. And for that, we turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Joe and Kaylee. Right now, we're looking at gains for the U.S. equity market, close to a record on the S&P. The current level is 77.52. The old closing high last week, 77.57 on the S&P. So just about 5 points away right now, looking at a gain of 0.3%. S&P up by 24. Dow higher by 23, up under 0.1%, while NASDAQ is up 175 points. For the NASDAQ Composite Index, that is a gain of 0.7%. The SOX is ripping higher. That's the Philadelphia Stock Exchange Semiconductor Index, up 3.3%. The VIX below 15 now. The 2-year CPI Wednesday. See the 2-year 4.18%, with the 10-year 4.66%, and the 30-year 5.23%. Gold, meanwhile, 44.04 the ounce, up 0.8%. We are looking at crude oil falling as traders, investors keep an eye on developments out of the Middle East. WTI 82.88 a barrel, down 0.4%. Brent right now 88.53 barrel of Brent crude, down by about 0.5%. Lots of earnings to sift through. CoreWeave, a provider of computing that powers AI systems, is surging. CoreWeave is up now by 19.3%. Also out with earnings yesterday was Supermicro Computer. That stock jumping as well today. Supermicro, SMCI on the ticker, up now by 16%. After the close of trading today, we'll be hearing from Cisco Systems ahead of earnings. We do have Cisco Systems up by 1.8%. Major deal, record-breaking deal in the sports world. Josh Kushner and Bob Iger buying the LA Lakers basketball team for a record-breaking price of more than $12 billion, keeping an eye on shares of Madison Square Garden. They're up by 4.6%. MSG is the owner of the Knicks. In the meantime, Mark Walters' firm TWG Global in talks with investors to raise money to help pay down loans on the books of its insurers that have drawn scrutiny from the Justice Department. Again, recapping here, stocks are moving higher. S&P right now up by about 0.3%. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet with the latest on the markets. Thank you very much. I'll bring you the latest now from President Trump's Truth Social feed. As we alluded to, he once again is saying that the United States is controlling the Strait of Hormuz. He says, in fact, and this is a quote, "The U.S. has total control over the Strait of Hormuz. I think we will keep it." This part is written in all caps. I think we will keep it. He says, "Our naval blockade is being called by everyone a wall of steel, and there is nothing Iran can do about it." Of course, this isn't the first time in recent days that we have heard the president echo these claims around total control of the strait. We also heard it yesterday as he was landing at Joint Base Andrews, where he also was touting not just what's happening with Iran, but also what we're seeing in the stock market.
The country's doing well. The stock market's fantastic. Record. We have 79 records so far in a short period of time. More people are working right now in the United States than ever before, and prices are dropping fast. Iran is going fine, going just absolutely fine. We totally control the Strait of Hormuz. We have control over it. Nobody else, only us. Our Navy is unbelievable.
Adding, we own it with regard to the strait, and that Iran's actions will be met with force. Bloomberg's Washington correspondent Tyler Kendall is at the White House right now to bring us up to date on things. Tyler, it does seem like we are far beyond negotiations right now. Is the president accurate that we have total control over the strait?
Well, Joe, at this point, it's very evident that both sides are trying to dig into their positions when it comes to the Strait of Hormuz, but there's very little sign that Iran is going to give up the leverage it has when it comes to the waterway, not just in terms of its grip on shipping in Hormuz, but also, importantly, we should point out the other disruptions to global shipping, as earlier today, Yemen's government confirmed that at least 6 people died in a Houthi attack in the Red Sea, marking the first such fatalities of a Houthi attack since this specific conflict has started. President Trump touting the U.S.'s naval blockade, which just yesterday we saw in full effect as the U.S. military targeted a Panama-linked vessel that appeared to try to get through toward an Iranian port. We're getting different sorts of information. The U.S. Energy Secretary, as we spoke about yesterday, saying that about 9 million barrels per average are moving through the strait per day over the last week. That is, though, higher than most traders' estimates. A few different things that we have to watch here, including the risk for escalation, as now Iran is demanding that as part of any deal to reopen the strait, there needs to be compensation for war damages, keeping in mind that was a precondition when we were talking about talks about potential curbs on Iran's nuclear program, not to ensure the safe passage of vessels.
Well, of course, whether or not the passage of vessels can be guaranteed and energy can keep flowing does have implications for costs here at home. We did see that cooler CPI today as energy costs come down, but there is still a major question of whether or not more inflation pressure and relief when it comes to prices will be coming for the American consumer and voter ahead of the midterms November. And our latest reporting indicates that the president may be looking for other ways to find consumers relief, including looking at potentially some tax relief. What can you tell us about that?
Yeah, Kaylee, this came last night after his NEC director, Kevin Hassett, was in conversation with Fox Business's Larry Kudlow, who, of course, had worked for the first Trump administration. And it was Kudlow who had suggested that he's spoken directly with President Trump about some potential ideas that perhaps Congress could get through, but likely only after the midterms, and that's, depending on what ultimately happens with those elections. That includes potentially indexing capital gains, meaning taxes would be applied on gains adjusted for inflation, as well as exemptions for sales of homes worth $2 million or less from capital gains taxes. This administration, as you mentioned, has previewed that they're going to start to roll out some additional measures that perhaps they can entice the American public with as they do play defense on the economy. Kaylee, I'd point you to a new Fox News poll out last month that shows for the first time since 2010, Democrats are leading Republicans when it comes to voter confidence on handling the economy. This is an issue historically that the GOP has pulled better on, but according to their July polling, Democrats are leading Republicans on this issue by 9 percentage points. We did see President Trump take action earlier this week as Bloomberg News confirmed that he extended that Jones Act waiver by 90 days, which, as you both know, is a bid to make it cheaper to transport some of these critical goods like energy supplies like diesel, jet fuel, and gas across the United States.
All right, Bloomberg's Tyler Kendall live on the North Lawn of the White House. Thank you so much. And on this notion of calling on Congress for capital gains tax relief and on other issues, including the results of the primary in his state of Wisconsin yesterday, I'm pleased to say that joining us now is Republican Congressman Brian Stile of Wisconsin's 1st District. He's also chair of the House Administration Committee. Congressman, welcome back to Bloomberg TV and radio. It's always good to have you, sir. And we do want to talk about what happened in your state last night and what it means for what will happen in Wisconsin moving forward. But just quickly, this idea of capital gains tax relief, do you think that's something that actually could be delivered on by you and your colleagues, if not ahead of the midterms, perhaps in the lame duck session?
Well, I think there's a lot of focus in making sure that we're reducing the tax burden on hardworking families. There's been a lot of conversation for a long time about indexing capital gains to inflation. We saw a massive run-up in inflation, in particular on the backside of the pandemic. So a lot of people who saved up for life events, whether or not that's retirement, a child's education, a wedding in your family, are being hit by capital gains on the backside of that. And so part of the broader package of making sure we're providing relief to hardworking families, I think, is to look at indexing capital gains in that regard. Whether or not that can get done before the election, I'm not sure. But it is something that should be part of the broader conversation, because a lot of hardworking families that are making savings inside the markets shouldn't be punished for the fact that inflation ran rampant, in particular as we came out of the pandemic.
Looks like you have a lot of room there for family on Thanksgiving, Mr. Chairman. I need to ask you about some of the results of the contest last evening here. You were at the Tom Tiffany party, I understand. Were you disappointed when the race was called for David Crowley? I'm making the Thanksgiving reference because, of course, Francesca Hong had to recant her idea of canceling the holiday, and it did not help her last night. While she came close, she did not win, and I know a lot of Republicans were hoping she would.
Well, in many ways, Wisconsin elections are almost always close, in this case, in the Democratic primary. But I think what Wisconsin voters will see in the near future is actually that David Crowley and Francesca Hong are in many ways two sides of the same coin. As the lights became brighter, and people started to understand what Francesca Hong stands for, she became less popular. I think now people are going to focus in on David Crowley and actually recognize that they share many of the same policy goals. David Crowley raised taxes as he was county executive, in particular on the sales tax. You had Francesca Hong, who wanted to make Wisconsin the highest taxed state in the country. You have a series of mismanagement in Milwaukee County by David Crowley. We can't allow that type of mismanagement in Washington. And so he opened up his speech today by saying, let me introduce myself. That tells you Wisconsin voters don't really know who David Crowley is. Many of them, I think, voted against Francesca Hong and rejected the radical socialist policies that actually David Crowley supports himself. And so I feel good that at the end of this election, in 83 days, Tom Tiffany will be elected governor of the state of Wisconsin. I think voters writ large are done with the radical policies of the left, are looking for common sense reforms. And I think that's what Tom Tiffany will bring to our state.
Well, Tom Tiffany, by one metric, has been called the most conservative congressman in the Wisconsin delegation. He also denied the results of the 2020 election. Is that not radical?
I think what people are going to look at in particular is kitchen table issues, or Thanksgiving table issues, if you will, and look at the record of bringing down costs. We're going to look at what Tom Tiffany and I supported about reducing taxes, for example, on overtime, on Social Security, making life more affordable. Our work to unleash American energy, all the more important during this time of international turbulence. And so there's going to be a lot of back and forth. Wisconsin campaigns are always heated, always competitive. This will be a close race. But I think as people learn more about David Crowley, they'll recognize that his positions are extreme and that Tom Tiffany is bringing common sense reforms to our state that are needed at a period of time where families are struggling to make ends meet.
Well, it is not lost on us that Tiffany would be the first person who voted to overturn the 2020 election in Congress to become governor of a state like Wisconsin. Congressman, have you chosen to look through that for the sake of his other policy positions, or does it just not matter anymore?
Well, I think there's opportunities here to enhance our election integrity. I think, broadly speaking, the country recognizes and knows that. That's why I've been a forefront leader in making sure that we are verifying citizenship and that we're also using photo ID. And so I think what voters want to see is what policy is moving us forward. I don't think there's going to be a massive look back into 2020. I think voters want to know, what are you doing for us today to bring costs down and make life more affordable? And the contrast between Tom Tiffany and Republicans against the radical Democrats and David Crowley could not be more stark in the state of Wisconsin.
Well, Congressman, I'd like to ask you as well about the business that will be before you and your colleagues when you return from recess, or what may not be before you, which is a Senate-passed version of the Clarity Act, which obviously you and your colleagues already got through the House some time ago. The Senate did not take any action on that before they broke for 5 weeks. And I wonder if you expect that this digital asset market structure bill actually is going to be able to find life post-recess before the midterms, or whether it can in the lame duck once the elections are over, if this is just an effort that's going to be put to bed until the next Congress comes around.
The currency of the Senate is floor time, and so I thought it was actually a really positive move that Senate Majority Leader Thune has called that the clarity, market structure legislation, and digital assets will have time on the floor. This is the chance for the Senate to address the bill head on. It's so important that this legislation passes. The U.S. needs to remain the world leader in the financial markets, in particular in the digital asset space. The United States has been the innovator in financial services for now over 100 years, and our economy across the board has benefited from this. Consumers deserve to have protection in this space. We need to make sure innovation is happening in the United States, that we're outcompeting countries like China, and it's a positive move that the Senate is bringing this up for floor time. Floor time is the limited currency in the Senate. Putting the focus on this into the home stretch before we hit the election, I think, is a really big win. I'm optimistic the Senate gets this done and the House is able to pass the Senate version that comes out.
Interesting. How about your stock trading ban? Mr. Chairman, that's what we were talking about. I think last time you were on Bloomberg, and there were big congrats for you when it passed the House. The Senate pushed this to the side for now, at least. Are you disappointed, and do you have any assurances that they'll take this up as well?
Well, it was really positive. The House passed my bill to stop Insider Trading Act to prevent members of Congress from being even in the position to benefit off of any inside information they may gain while serving in Congress. The Republicans in the Senate brought this up for unanimous consent. This should be a no-brainer piece of legislation. I was frustrated when Democrats objected to passing that legislation outright. Again, time in the Senate is all driven by floor time. And so I'm hopeful that this bill makes it to the floor, that it is considered, and that it passes. These are the types of common sense reforms I think the American people deserve. I was proud to see it pass the House, but the job is not done until we get it across the line in the Senate.
Finally, Mr. Chairman, given your chairmanship of the Administration Committee, you also see issues like security, not just for members, but pertaining to the Secret Service as well. And I wonder what your reaction was to the Washington Post reporting in the last 24, 48 hours or so about the president getting off of Air Force One, the old Air Force One, onto a catering truck and alternate aircraft to leave Turkey after the NATO summit, leaving Air Force One and the many press and administration officials on it as decoys. Do you find that maneuver is appropriate? Do we not need to know where the president is? What if one of those aircraft had gone down?
Well, I think it's important that elected leaders are following the advice of security professionals. In this case, the President of the United States appears to have been following the suggestion and advice of the Secret Service based on a credible threat. Of course, Turkey shares a border with Iran, roughly 200 miles of border. There was apparently information provided by our Israeli allies that there was a direct threat on the President of the United States. The President of the United States, I think correctly, is relying on his security advisors to make sure that he's protecting him. We want to make sure the Commander-in-Chief is safe and secure. The positive news is that this plot, to the extent that it existed, did not materialize. That's a good thing. But often our elected leaders are left to rely on security professionals, and here the Secret Service was doing their job to keep the Commander-in-Chief safe.
Yeah, pushing him into a catering truck, Congressman. It's great to see you. Thank you for coming on. As always, Brian Stile, the Republican from Wisconsin's 1st District, chairs the House Admin Committee. We'll assemble our political panel next. More results to pick through from an important night on the primary trail. Alongside Kaylee Lyons, I'm Joe Matthew. This is Bloomberg TV and Radio.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing. The Dow higher, barely up now by 1 point, little changed at 53,792. S&P at 7750, the record 7757 right now. S&P higher by 23. That is a gain of 0.3%. NASDAQ Composite up 170. Higher by 0.6%. NASDAQ 100 up by 0.9%. All of this with the SOX, the Philadelphia Stock Exchange Semiconductor Index, up now by 3.2%. The VIX holding below 15. 2-year on a CPI Wednesday, 4.18%. The 10-year, 4.66%. Your 30-year, 5.23%. We did see an inline inflation reading this morning. That is spurring the gains in stocks and bonds. It's also easing concern about an imminent Federal Reserve rate hike. Right now, spot gold is at $44.08 the ounce, up 0.9%. A retreat for West Texas Intermediate crude, but holding just above $83 a barrel now. WTI down 0.2%. Barrel of Brent, 88.52, lower now by 0.4%. Investors are gobbling up shares of restaurant chains after earnings. The Mediterranean chain Cava Group sales rose faster than expected. Cava right now up by 14.4%. And Brinker International higher after earnings. It owns the Chili's Grill and Bar chain, among other names. Ticker EAT right now. Brinker International up by 10.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellett. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellett, thank you very much for that check on the markets. I wanted to check on prediction markets as well as we work our way through the aftermath of yesterday's primaries, because of course there's a lot of political bets that take place on forums like Kalshi and Polymarket these days, and they got a lot wrong yesterday, it seems, specifically in the Wisconsin gubernatorial race. As of 11 p.m. on August 10th, the day before the primary, Francesca Hong had 95.5% odds on Kalshi of winning that nomination. David Crowley only had 4.6. David Crowley, of course, won.
You wagering over there? You would
I don't place bets myself on politics or anything else, but someone lost a lot of money, and I guess anyone who was in that 4.6% camp probably came away with
no doubt. So it's not just the pollsters, is what you're saying.
No.
Prediction markets.
Money follows it too.
We're pretty far off. Amazing, by the way, that not only she lost, but by only 3,000 votes.
A couple tenths of a percent.
Yeah, there's a lot to talk about from these contests last evening, and it's kind of hard to draw trends because there were progressives who had a great night. Maybe it was an anti-incumbency kind of evening that we could draw that trend. But let's get into it with our panel. Bloomberg Politics contributor Rick Davis is with us, our Republican strategist and partner at Stone Court Capital, alongside Laura Fink, founder, CEO, Rebel Communications, Democratic strategist. Rick, what is your thought on another busy primary night? We'd like to tick through some of the states here and the races more specifically, and I want your take on South Carolina as well, which is going to resolve into a runoff. Were there any trends that you could pick up off the board other than the pollsters having a bad night?
Yeah, well, first of all, I don't think the pollsters had that bad a night. I mean, one of the things that was very obvious, in that Wisconsin race was that that Hahn had a very high floor. Polling had her at like 45%, but she had a very low ceiling. I mean, in other words, pollsters had a hard time finding other voters who were left to make up their mind who wanted to have her as the nominee. And Crowley had a very low floor, right? I mean, like in the 30s. And yet he had very high ceiling. In other words, there were a lot of voters who hadn't decided or either would choose ultimately to vote for him. And so what do you want? You want a high ceiling. You don't want a high floor. And that's exactly how the thing was determined. It was a close race, but he was able to grow and Hahn was not. And so that's what the polling told us. Now, it's not a predictive model. It's a snapshot in time. I can't speak to predictive models. I think the trends, older incumbents, I mean, as you pointed out a couple of times, 7 have already lost their elections in the Democratic Party. I mean, that's a lot of incumbency turnover in a pro-Democratic year. And so in with the old, or out with the old, in with the new seems to be part of the theme of this thing. And I would say, too, Trump still is having a lot of control over the outcome of the Republican primary. I mean, obviously, his support for South Carolina, Darlene Graham, put her into the lead spot. Still got a task of beating Ralph Norman in a couple weeks. But you know, you wouldn't bet against Donald Trump in this cycle,
unless you were betting on the My Pillow guy, because Mike Lindell did not win the gubernatorial Republican race in the state of Minnesota. I'll leave that one on the side. If we could just talk about Francesca Hong for a minute longer, Laura, as Rick talked about how she had a low ceiling. I wonder if you think that the outcome of this, which again was only a few tenths of 1%, might have been different if she had actually won the backing of some of the kingmakers of the left. If Bernie Sanders or AOC had come out for her as they did Abdul al-Sayed, would that have changed this outcome?
You know, I think she got every vote from that side of the party, and I think she also did a tremendous job organizing voters in far-flung areas in the rural counties, and I think that showed in her total. I think I agree with Rick that there is a ceiling on support, and I think that voters in Milwaukee County had a choice. They had a guy who was their county executive, who they knew, and who looked like he could win, and she failed to penetrate that vote. I think in particular that urban Milwaukee vote in a way, the sort of, and I wouldn't even call them moderate voters. I would say sort of the kind of people outside of that strong progressive wing of the party. And we know that the progressive wing drives party turnout, et cetera, but there is a large block of voters that she did not really penetrate. But I think she ran a campaign that you could follow the playbook of, in that she was organizing, she was an underdog, she was underfunded, and she managed to almost eke out a victory. So a lot to be learned here from a real solid effort by Francesca Hong.
Well, okay, so what did Peggy Flanagan do right then to get those important endorsements from the likes of Bernie Sanders? Lieutenant Governor here won by some 20 points in Minnesota, beating Congresswoman Angie Craig. What's the difference in the playbook? You've got an anti-establishment platform, universal health care. Was it the lack of the social media posts or some of the more wild things that Hong said?
I mean, electability is definitely an argument, and AOC and Bernie want to see victories across the board, not just in primaries, but also in general. So I would imagine they're responsive to that. But Peggy Flanagan is just an entirely different case. She is establishment in the sense that she is the lieutenant governor, and where she won her race was really drilling down on the crisis that was ICE in Minnesota. And so by making sure that Angie Craig was seen as on the wrong side of history there, she really galvanized Minnesotans who were, and when I talked to my friends from Minnesota who were deeply, deeply damaged by the work of ICE and by the prospect of government intervening in their communities in the way that it did. And I think Peggy Flanagan was able to capitalize on that and really make it unwinnable for Angie Craig.
Well, Rick, as we consider what is not going to be winnable, let's talk a little bit more about the runoff that's now going to take place in South Carolina in 2 weeks. You alluded earlier how Trump is backing Senator Darlene Graham, as he thinks it's the best way to honor her late brother. She only beat out Ralph Norman, who also is advancing to the runoff by 8 percentage points. Ultimately, Ralph Norman, of course, also has the backing of Nikki Haley, the former governor of the state. And I wonder how you think the Trump pushing for one candidate, Haley pushing for another, might ultimately shake out less than 2 weeks from now.
Yeah. Can I just say, too, Peggy Flanagan maybe had the best tagline of the entire campaign so far: the many versus the money. I mean, I could go all day. Pretty good. But South Carolina, look, I mean, it's a rock rib Republican state. Ralph Norman supported Nikki Haley over Donald Trump. That started a lot of his problems with the president during the primary in 2024. And so it's not a surprise that she would be out campaigning for him. And he'll do well in the Low Country as a result of that, because she's still wildly popular. Lindsey Graham, he was from the center of the state in the Hill Country, and that's where the conservative base of the state is. And likely that turns out strong for his sister. And behind that, the president's organization and money. So Look, it's always a mystery to me how Republicans vote in South Carolina. I've won some and I've lost some, and I've never been right. And so the reality of it is it could be a close race, but I would really can't imagine a scenario in South Carolina where the party doesn't turn to Trump and therefore support Darlene.
Rick Davis had some wild times in South Carolina with John McCain. Google it. Yeah, Laura, go ahead.
I was just going to add one thing. There's also what I would call the widow effect here, and we know that Darlene is a sister and not a wife, but the empathy for Senator Graham is really in play here. Widows, daughters, relatives of elected officials who pass in office often have that advantage, and particularly in the truncated campaign, in addition to the Trump endorsement, is very powerful. I'd be surprised if she lost.
So let's talk about anti-incumbency. Read the names: Green, Johnson, Goldman, Espaillat, DeGette, Thanadar. 7th now becomes Larson. Rick Davis, 78 years old, in office since 1999, loses the seat last evening to a 47-year-old former mayor of Hartford. And again, it wasn't close. 22-point spread. What's the message?
You know, look, I think that voters in general are getting worn out on sort of geriatric politics of our country. I mean, we've seen it in leadership in the House and Senate, in the presidency, and it's been happening for a long time. This is not a new issue. And it used to be that you got credit for time in office, you know, for being a senior member of the leadership, for being a committee chairman. And those days are gone. I've not seen a single poll that actually says, hey, great stuff for our state. You're doing a great job for us. You know, stay in as long as you possibly can because your seniority is what really matters to us. And that has turned its head upside down. And so anybody who's been in office in the House, you know, 6-7 terms, or in the Senate, the equivalent of that these days, I think is a target. And we're seeing it in the primaries, and I think you'll see it in the general election.
Well, and most of those names that Joe just ran through, Laura, were Democrats. Why is this mostly happening on that side of the aisle?
Well, let's start with the fact that Joe Biden's age was such a significant drag on the party. And really, a lot of people blame his age and his unwillingness to stand down for our loss in 2024. And I think the idea that having a continued generation of politics where we respect people for their level of power while watching Congress get absolutely nothing done, particularly the younger wing of the party is wildly dissatisfied with that, because so many of them have seen that they've only grown up with a politics of gridlock. And so the fact that individual Congress members can't make the case that they're bringing home the bacon to the district is a real drag.
All right, Laura Fink and Rick Davis, our political panel, thanks for joining us on Balance of Power on Bloomberg TV and radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. A tame CPI report this morning. Stocks and bonds are rising. Right now, we have got the S&P advancing to 77.51, higher by 23 points, up 0.3%. Potential record there, 77.57. Right now, the 77.52 on the S&P. The Dow up 33 now, up under 0.1%. NASDAQ is up 0.6%. The NASDAQ 100 index up by 1%. This is CoreWeave soars 19.3%, and shares of Super Microcomputer are up by 17.7%. Right now, the 10-year currently yielding 4.62%, the 2-year 4.18%, and the 30-year 5.23%. Gold is at $44.03 the ounce, up $33, up by about 0.8%. A retreat for crude, down 0.1%. WTI 83.15 a barrel. As for Brent, 88.86, the global benchmark down by 0.1%. Goldman Sachs will pay as much as $2.25 billion to buy Neos Investments, expanding its asset manager's reach in the actively managed ETF market. Goldman Sachs shares, they're gaining now by about 0.3%. And Blackstone and a group of Canadian pension funds are buying a 25% stake in Air Canada's Aeroplan loyalty program for $1.8 billion. Shares of Blackstone down now by 1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and Kaylee and Joe, that's a Bloomberg Business Flash.
All right, Charlie Pellet, many thanks. Charlie will be back coming up at the top of the hour, 2 p.m. Eastern Time, as we kick off Bloomberg Business Week Daily with more on the Wednesday trade here. Of course, we're keying off CPI. That's been a big factor in the decisions being made on Wall Street and here in Washington. Although, strangely, Kaylee, we haven't seen a statement from the White House or a post on Truth celebrating what was the lowest pace for inflation since March of 2021.
Yeah, the day is still relatively young.
I suppose.
So keep an eye on the True Social feed. But yeah, there's no declarations of victory over inflation at this point yet. And it makes you wonder as well what the Fed is thinking, as we're not hearing directly from Fed policymakers on this today, either ahead of their meeting mid-next month, we're just a few weeks away, that they may or may not feel pressured to hike at, given today's relatively tame print, as Charlie characterized it. But let's get more insight and analysis now as we turn to Christopher Smart for more. He's Arbroath Group founder and managing partner, former special assistant to the president at the National Economic Council during the Obama administration, former Treasury official as well. Christopher, welcome back to Balance of Power. How would you characterize the inflation report today, and how do you expect the Fed is reading it?
I think there really wasn't much news in it, unfortunately, because I think it was more or less in line with expectations, both at the core level and at the headline level. I think, on the one hand, everybody is sort of watching what's going on in the Gulf and whether that might give some relief to energy prices. On the other hand, they are seeing core numbers slowing down ever so gradually. But I think we're still stuck with the same structural problem that we've had going back 5 years, which is that the Fed's preferred gauge on inflation is still not meeting its target of 2%. And I think it was Christopher Waller who said recently, we can't now expect it just to go away by looking at it. We may have to do something here. And I think that's going to sharpen the debate, regardless of today's data, when they convene again, I guess first in Jackson Hole, but really at their September meeting.
You do get a sense, Christopher, and it's great to see you, of exhaustion. You look at the bond market, yields are barely moving on this. Stocks are kind of floundering, and we've had a big move when you look at what happened in the markets last week. Are we in a world where a single indicator like this is unlikely to move the markets?
It's a weird time. I don't mean to use technical economic jargon with you, but it's a weird time.
No, same.
I think we're seeing a jobs market, if you just look at the numbers, right? We're growing at 2%. We've got 3% inflation. We've got 4% unemployment. We should all go home and feel good about the world. But I think we're all looking through these numbers to seeing maybe some weakness on the growth side, some very unevenness in the sources of growth, a lot of it going into AI and corporate spending, weakening job market, weakening consumer spending. And then on top of it all is the geopolitics and some sense that I think, that we all have when you talk about being exhausted by it all, is this conflict in the Gulf that continues on and on and on. And frankly, even if there is a deal that is struck, it's not going away. The uncertainty is not going to go away. And I think increasingly markets are starting to look through, we're going to be living with this uncertain supply of oil, gas, aluminum, other key commodities for a long time.
Mm-hmm.
Well, this is actually something we spoke about with Wendy Sherman, the former architect, the chief architect on the U.S. side of the 2015 Iran nuclear deal. She didn't suggest just a long time that this may be the status quo in the Strait of Hormuz. She actually went as far, Christopher, as to say this could last forever. Listen.
I think unless the United States is ready to either allow Iran and perhaps Oman to have voluntary tolls, or to give Iran so much relief from sanctions and frozen assets that it's worth their while, I don't think we'll get it open for any sustainable period of time. And I think the reality is, for the foreseeable future, if not forever, Iran will control the Strait of Hormuz.
Is this market right now positioned for that forever scenario, Christopher?
Well, as you know, forever is a long time. But I think it's not positioned. I think it is looking very much for some news of some kind of a deal and some ships starting to sail both out of the Gulf and into the Gulf. And I think Wendy, who has more experience negotiating with Iran than I think most people in the State Department or elsewhere in Washington, understands that not only is Iran now holding on to this new leverage on the Gulf, but we haven't even begun to talk about the other issues underlying this conflict, whether it is the proxy militias that Iran continues to support, or indeed the nuclear path of its program. So I think there are a lot of questions on the table, and we are realizing increasingly that we have very few levers to solve these problems.
Yeah. I want to point you to the Beige Book, which I read in my free time, Christopher, smart as I know you do, in the 1st District, which is where you are in Boston, and that includes the Northeast here. Community Perspectives. This is really something to read. Usually people tick through consumer spending, they look at manufacturing and see what some of the contacts are saying. All the way at the bottom, Community Perspectives, contacts serving low and moderate income households report increased demand for assistance along several dimensions as families struggle with persistently high prices of food, housing, and transportation. Reliance on food pantries, Christopher, is up. Nonprofits are getting more requests for help with housing payments, healthcare supplies, and lower income consumers are adding credit card debt to pay for essential goods. This is the definition of the K-shaped economy. What does it mean for the political dynamic going into these midterm elections?
Well, I was reading my Beige Book at the beach last week, and unfortunately a shark grabbed that out of my hands before I got to that section.
Hate it when that happens.
I think what you're highlighting is a problem we've been seeing in the macro data for the past couple of years, as both household balance sheets at the lower quintiles of households have been building up. Wage gains have been increasingly eroded by inflation. And then you just sort of see it, I think, when you go to some large cities, the number of homeless people, you hear more stories about people being evicted from their homes. And as you point out, or as the Beige Book points out, the increasing draw on food banks, charitable institutions, and the like. I think it's one of those things where we, for a long, long time, have not had a very robust safety net when things start to weaken. The problem in many ways is that we are living in an economy that may be overheating on the other side with this massive investment, with these stock market gains. And so if you're the Fed and you're trying to adjust, it's a really hard balance to strike. And that's where you really need fiscal policy to step in and say, maybe we're going to tax a little bit more here where things are overheating and inject money over there where they're starting to weaken.
Overheating, you say, Christopher. You're in the camp that we may be overdoing it on all of this investment?
I just don't know. Hundreds of billions of dollars for data centers just feels in my bones like, shouldn't we slow down a little bit? And well,
Does it feel in your bones like I've been through this before, .com-y?
Well, yeah, or and I wasn't around for the great railway boom, but it's one of those things where everybody is racing to build out more capacity. At some point, we'll need it, but making sure that the revenue lines and any hint of a profit, a wisp of a breath of something that looks like profit, looks like it's increasingly being pushed off into the future. So I do worry about that.
Well, it's interesting
and I
to
should
the
say,
extent.
and I'm sorry to interrupt. I should say,
Yeah.
I think the other piece of this is that AI has now become such a central portion, a central pillar of national security policy, that no government in Washington, whether it's a Republican or Democratic one, is going to allow the train to slow down anytime soon. And in fact, if there's going to be any kind of hiccup along the way, we're probably going to get government money coming in at some point or other.
Well, maybe you just answered my question, because it is interesting the extent to which the administration and at least Republican politicians are pushing the AI race and kind of holding off the idea of regulating this very quickly developing technology. And I know that there are political dynamics here to the extent a lot of Democratic lawmakers see it very differently. Bernie Sanders is calling for a pause in AI development. You've seen a mixed sort of political dynamic when it comes to data centers. But do you think that this AI spend outlives this administration, particularly if there's a Democrat in the White House?
Oh, absolutely. I think it will. I think it will. Even with this pushback, and I think people don't like the electricity prices, they don't like data centers, but they kind of like AI, and the economic gains from it, I think, are going to be irresistible. I mean, there are a lot of things in this world I'd love to pause also, but I think it's just unrealistic to expect that to happen, even within the U.S. What I think is also interesting is the dichotomy between how we are approaching things here in America, which is we need to build the biggest, best, fastest model possible, and approach whatever that artificial general intelligence line is called. Whereas in China, it's a much more, how do we get these tools that are pretty good, even if they're not the best, out into the economy so that manufacturing, education, healthcare, transportation, they become immediately useful, even if they're not, at their finished stages yet. So I think that's a very interesting difference between how two countries are approaching this so-called race and how we're really never going to declare a winner. It's really a question of how these tools, as they develop, become incorporated into people's lives, companies, business models, and investment returns.
Well, let's talk about how two countries are throwing money at something else, which is the United States and Japan throwing a lot of money at trying to shore up the yen. Obviously, Christopher, we're not too far off what was the first joint intervention we'd seen in decades, and yet the effects seem like they were short-lived. Dollar yen climbing back toward that 160 level. Are they going to have to intervene again? Was this ineffective, ultimately?
My goodness, haven't we learned some lessons over the past almost every single intervention in currency markets, that if the fundamentals aren't there, if the interest rate differentials remain, you can intervene for a couple of days and it feels good. And my goodness, if somebody should know this, it should be Scott Bessent. And so I think what we have accomplished, or what he has accomplished, is to flush out a lot of the shorts who had been driving the yen lower. But as you point out, the exchange rate is sort of back to where it is. And there has been very little progress in narrowing the differential between U.S. rates and Japanese rates. So you would expect those shorts to start picking up the pieces where they left off. And I just don't know what the next step is if you're the Treasury Secretary. And then this, of course, leads to the risk that, others have pointed out, which is that the real reason we're intervening with Japan is not because the president likes the prime minister or Japan is a great ally, but it's because Japan is the largest investor in U.S. Treasuries. And if there is a sell-off of U.S. Treasuries in Japan, that makes America's interest rate costs that much higher. Just all of those kinds of nefarious things that higher interest rates do to the U.S. So I think that's that's the Treasury Secretary's near-term gain, but I don't know what his next step is now that he has sort of fired this first bullet without a lot of return.
It's always a pleasure to cover the waterfront with Christopher Smart, our Broth Group, beige book in hand. It's great to see you,
Not a shark on it, remember?
Absolutely right. Alongside Kaylee Lyons, I'm Joe Matthew. This is Bloomberg.
Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, we are across Bloomberg platforms. It is Wednesday, August 12th, 2026. It's my Monday, but hey, half of the week is over already.
It's your Super Monday.
Yeah, it's actually
That's fair to say, right?
I'm going to be busy. Yeah. I'm going to be a little bit busy for the next 10 days.
Hey, we're excited to
That's
see you
good
on
stuff.
Bloomberg this weekend.
I'm excited.
Yeah, I'm
Joe,
looking
Matthew,
forward
and
to
I
it.
are going to be subbing in for Christina and David. So looking forward to that.
Okay, well, before that, we have some work to do.
We do.
Yeah, we do. We have a great program coming up today. Look, the focus over the last couple of days has been, what is this CPI report going to say? Well, now we know. The question, is it tame or is it lame?
I don't know. Let's see what Mike, is he going to go like this? Is he going to say lame? I don't know. So we're going to get into that. Also, the good stuff. Investors relaxing, though, I should say, off of this print. So maybe this is the good, tame stuff. I don't know. Kind of relaxing when it comes to the need for speed to maybe have the Fed do something on rates or raise rates. So we're going to get into that. We're going to get more on the trade in a moment. As we mentioned, Tom Keene actually this morning going boring when the CPI came out.
Okay.
Tom, I do listen.
We'll see what Mike says about that in just a minute. Also joining us, Dan Suzuki, Senior Investment Strategist at iCapital, on drowning in liquidity. Is that good?
I don't know. I think that's a bunch of risks possibly, especially if that liquidity comes to an end. Hey, Bob Diamond, former CEO of Barclays, he's going to join us to break some news on an announcement, his latest investment. So we're going to get into that in just a moment.
Yeah, first on Bloomberg, a Bloomberg exclusive. Excited about that. Also, from dirt to the consumer, the companies and their C-suites and what they are talking about when it comes to growing their companies. Is it AI?
Yeah, we're going to talk about that. Some things with Rebecca Humkist. She talks to CEOs all the time. She works with them on growth strategy. So some of what she has to say, I caught up with her a little bit earlier today ahead of this interview. Might surprise you. So looking forward to that. Hey, just a reminder, be part of our discussion. We love it. We love it. We love it. Just submit questions to our team, and we'll be answering them live on air. Just send them to Bloomberg.com/askradio. That's Bloomberg.com/askradio. And this is, of course, exclusively for our Bloomberg.com subscribers and also our Bloomberg Terminal clients. But we love when you weigh in. Brendan, we love your questions. Send us more. They're always on the money.
Shout out to Brendan.
Yeah.
All right. All that and more coming up over the next hour right here on Bloomberg Business Week Daily. First up, though, he's got his eye on everything happening in the trading day. Here he is, Charlie.
All right, I thank you very much. And here's what's going on. The CPI report, CPI Wednesday. You guys raised the question, tame or lame? I'm saying same. We've got the Dow, the S&P, NASDAQ all advancing. This morning's data bringing some relief to traders worried about geopolitical risks. S&P 500 index holding close to a record. Right now, 77.51. The record is 77.57, roughly 6 points away. Looking at a gain right now of 0.3%. Dow Industrials little changed on the day. Higher by 16 points, up under 0.1%. NASDAQ up 152. That is a gain of 0.6%. The Bloomberg Mag 7 index, though, trading lower, down 1.1%. All of this with the SOX, the Philadelphia Stock Exchange Semiconductor Index, up by 3.4%. Two-year yield, 4.19%. The 10-year, 4.68%. The 30-year, 5.24%. Gold, meanwhile, up $27 the ounce to $43.97, up by about 0.6%. West Texas Intermediate crude, lower little change, 83.15 a barrel, down under 0.1%. Barrel of Brent, 88.85 now, also down by under 0.1%. Earnings news, specifically tech. CoreWeave after earnings up 18.8%. CoreWeave is a provider of computing that powers AI systems. Last night we also heard from Super Microcomputer. That stock surging by 18%. It delivered a revenue forecast for the current quarter that topped analyst estimates. After the close of trading today, all eyes will be on Cisco. Cisco up ahead of earnings by 2.6%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Carol and Tim, they're reunited. That is a Bloomberg Business Flash.
We are back. We are back. Just for a few days, though.
It is vacation.
That's how August works.
You know,
that's just how August works.
It gets to August, and our bosses are like, are you going to take some vacation? Because September gets busy.
Well, it gets to August, and we start thinking about Jackson Hole also.
Oh, we do indeed. And that brings us to Mike McKee. Also this morning's CPI print, but yeah, also Jackson Hole. Mike is, of course, Bloomberg TV and radio, international economics and policy correspondent. He's here in studio. Yeah, what's more important, this inflation print or Jackson Hole?
Jackson Hole, I think, to the markets.
Yeah. Because this inflation print, you were asking whether I'd hold up an L or a
Would
T.
you? Is it lame?
No, I think it's like okay.
Well done.
It's not good, it's not bad. There's good and bad in it for both sides, the Hawks and the Doves. But what everybody wants to know is, what is Kevin Warsh going to do about inflation? And
does he have to do something about inflation?
Well, if he's going to reach his goal, which he insists upon, that they're going to make the 2% target, they're going to have to do something. Now, that something could be saying we're just going to leave rates where they are because they're restrictive enough, or it could be that they're going to raise interest rates. So he doesn't have to give forward guidance, the term he hates. He doesn't have to say we're going to raise rates at the next meeting. Right. But he could say, if this doesn't come down fast enough, then we would have to consider raising rates. That would give people at least the sense that he's on board.
That's not his jam, is it?
Well, it hasn't been so far, but that's why the people on Wall Street have been upset with him and concerned about what he's been saying. So this is his opportunity at Jackson Hole, not to give forward guidance, but to say, here's how I look at inflation, and here's what I think how the Fed should be looking at it. Yes, I have task force, but for right now, this is what we're thinking.
Mike, on this print, though, energy and gasoline prices coming down. Is that even accurate to think about right now, given what's happening in the Strait of Hormuz, given that this is backward looking?
Well, it was accurate for July, but this is August.
and consumers are still paying over $4 a gallon now.
Well, what ended up happening was roughly speaking, they compare the average in July to the average in June. And because prices came down so much in June, the average in July still went down, but not as much. But now in August, so far, gasoline prices are higher than they were in July. So this could all reverse.
The cost of lettuce, we got to talk about this one. This was really interesting in the report. Cyclospora has an effect on grocery prices.
Yeah. Nobody wanted to buy lettuce.
Okay.
Well,
I go to the supermarket.
There's a lot of kind of one-offs in this.
There's a ton of lettuce just sitting there.
Yeah. Well.
Right?
What about jalapenos?
Also, you know, and yet it's expensive for a lot of people still. I heard Tom talking about going for some fish or something this morning, and he was like blown away by the price of it.
It wasn't a Filet-O-Fish, was it?
It wasn't a
from
Filet-O.
McDonald's? Because he's brought me those before.
You know, it's Tom Keene.
Okay. No, I know. He brought me a Filet-O-Fish from McDonald's.
Oh, okay. Well, this sounded a little she. It sounded like he walked away. I mean, prices are still high.
Well, prices aren't going to go down.
Right.
They go down for individual goods, but not the overall price level. And that's the difference, is economists and the Fed look at the change, the month-over-month change, and how that affects the year-over-year annual rate of inflation. But consumers go to the store and say, well, I paid, $10 for this item last month, and I'm still paying $10 now. It's not going down, and that's why there's a decline in consumer sentiment, and that's why there are political implications to this whole thing.
Sir, go.
Well, I mean, Mike, you brought the political implications. Of course, just at this point, we can say a short time away from the midterms. There was a little bit of relief in uncooked ground beef prices. Is that a one-off, or is there a reason that we're seeing beef prices come down ever so slightly, 1.6%?
There were some. That's actually
most since 2020.
It's actually a fairly big move for 1 month, but there were a couple of grocery chains that cut prices for ground beef and hot dogs and things like that, which they said was, their effort to help America because it was the summertime and everybody's cooking out. Okay. So do those prices remain? Probably not. We're still watching the cattle people try to build up their herds, and prices are still high. So I don't think that's going to be an ongoing event.
By the way, have you ever had a brisket burger? We did.
Oh, yeah.
They're really good.
Yeah.
Right?
Yeah, well, there's a restaurant here in New York, which shall remain nameless, that, makes one for about $35 a burger.
It's a good $35.
How come Tom never brings me one of those?
I don't know. We'll have to talk to him. Hey, one thing I am wondering, and we're going to talk a little bit, I feel like over the next hour or so, about the cost of tariffs, and Rebecca Humkes is on later in the hour. We're going to talk AI with her. But there's a lot of factors that are coming on that may ease prices, increase prices, and I do think about just whether or not growth is there to support a healthy economy, or whether we're starting to see any concerns that might slow down. I'm thinking about tariffs, whether that's kind of frustrating CEOs. I think Rebecca Humkus is going to talk to us a little bit about that.
Well, we have retail sales tomorrow. Is this your way of asking me back to talk about that question?
I don't know.
I mean, it depends on how people keep spending, and we don't really know. The Fed doesn't really know. There are some people, some economists who are concerned because the rise in gas prices earlier in the year was sort of offset by the fact that people were getting the bigger tax returns, and now that money is gone. So if we don't see any relief at the gas pump and in the grocery store, then it's going to be harder to maintain momentum going forward. At the same time, we have all this AI spending that's propping up the economy on the business side. So it's kind of hard to say where the economy is going from here. But what we can say is that inflation is at a point where we're basically back to where we were on a year-over-year basis before the war.
Okay.
And the hawks on the Fed, that wasn't good enough for them at that time. So one presumes it's not good enough for them now. So that kind of leaves us, that's why I say it's okay. It kind of leaves us where we were, and everybody looking to the next CPI report to see if we've got a trend going.
Which we have a bunch, right? We have, is it two more or not?
We
One more?
One
and then
more
a jobs
CPI,
report?
two more PPIs, because we get PPI tomorrow.
Okay, so it's not L.
Maybe we will have you back.
Yeah, but it's O. Oh.
Okay.
Michael McKee, thank you so much for breaking it all down for us. He's Bloomberg TV radio, international economics and policy correspondent right here in studio. Quick check on the markets. Don't forget, we've got some earnings coming also after the closing bell, including Cisco and a few others. Having said that, we've got a market trade where we're seeing tech names certainly outperforming, up 0.9% on the NASDAQ 100. Tim, that's good for a gain of about 271 points.
Okay, you're looking at equities. I'm looking at what's happening in the oil market over the last couple of days. I know you were out driving around a little bit.
I paid up at the pump.
Okay. Do you remember how much it was?
Well, you know, whenever you're close to I-95,
you're going to get it.
Doesn't even matter if you're just off the
Tri-state
highway.
area. Enjoy.
Yeah, you get,
well, it was 407 for me the other day. But the last 2 days we've seen oil prices
rise. Are you
rise.
buying premium?
No, that's the 87 or 89. I don't know. Whatever. It's fine.
Whatever.
It is what it is. Oil prices, though. A little bit of a relief right now, but ever so slightly, 0.3% lower for Brent. But still, we're knocking at $90 a barrel for futures of Brent right now.
Yeah, keeping our eyes certainly on the Middle East, that's for sure. And let's get a market read while we're talking markets. In the words of our next guest, why liquidity is flooding markets and the risks that could drain it. Back with us is Dan Suzuki. He is a senior investment strategist at iCapital. It's an end-to-end platform for alternatives, structured investments, also annuities. They've got about $1.2 trillion in active global platform assets. Dan, back with us in studio. How are you?
Good, guys. How are you? Now, the big question is, what kind of Porsche or Ferrari are you driving with your super?
The kind that has room for car seats. That's the kind.
How's it going, guys?
Good to see you, Dan.
Yeah, good to see you.
We like liquid markets, but then there's a point when there can be too much liquidity, and we know that can get us into troubles. We've seen that certainly before. It's led to past crises. Your report about drowning in liquidity, it doesn't feel good. Walk us through what's on your mind.
Well, it's not that it doesn't feel good. It feels great, right? I mean, it's very rare that all the sources of liquidity are rowing in the same direction. I mean, we have basically supportive monetary policy, fiscal policy, banking, lending standards, and animal spirits are very much intact. So everything's good. It's just the question is, you look forward, are those going to last, and what could cause that to change? And I think there's a few things. I mean, interest rates are, multi-year highs. You have the oil story, which could turn into a Fed story. I mean, and we talked last time I was on here about the potential for tailwinds fading and turning into headwinds, and so there's a lot going on, and things are amazing right now.
Well, of those things that you mentioned, which one is most concerning to you right now?
I'd say probably. I mean, it's hard to disentangle the interest rate story from the Fed and the oil story, but I think those are the most. I mean, we're basically, our range has been 4 to 4.8% on the 10-year. We're pretty darn close to the high end of that range, and I think that the longer that this goes on, the more likely you're going to start to see the Fed move on a hiking cycle. More likely the bond market's going to have to price that in. And I think as you get closer to 20-year highs on the 10-year, I think the market's going to start to wake up and volatility will pick up.
Did you say everything is awesome?
Awesome, amazing. And we should cue the song if you guys have the rights, and we'll play the.
I don't know.
Awesome
I
song.
can only play. So
Carol can sing it.
I don't mean to be. I can. You don't want to hear it though. I don't mean to be a skeptic, but I mean when everybody's so enthusiastic, when there's so much money floating around. I've seen this movie before.
100%.
Yeah. So why would this be different?
I don't think
every cycle has an end. Some go longer, some dips are shorter, but
I don't think it's going to be different. I mean, the stat that I cited in the report is basically, if you use the Bloomberg Financial Conditions Index and there's been a few articles about this, we're basically at, levels you haven't seen in 30 years, right, on that level. So, and I think that things are great. Earnings are surging.
But the comparisons now get very tough. To assume that these earnings growth are going to continue, we have a story in the Bloomberg that's among the most read that questions all of that.
I mean, we're at like close to 50% earnings growth.
Yeah.
Those are very hard numbers to beat. I mean, it's very unlikely you're going to see higher numbers than that. So that means we're going to be in a decelerating part of the earnings cycle. Yeah, I 100% agree with you, Carol. This is why I think that we're factoring a lot of the good stuff, not necessarily factoring all the risks here. I think we're probably at or close to peak liquidity. Doesn't mean that liquidity can't stay high, and that's the big question.
Right.
But peak liquidity is not. I mean, it's asymmetric, right?
Yeah.
It's not going to get much higher than it is today.
I just think about you teach a kid just because you got $10 in your pocket doesn't mean you need to spend it. I do think about even though there's so much money out there, it doesn't mean you got to put it to work.
Yes, but people are.
I
This
know.
is why. People have talked about the P multiple for the market coming in, and that's a sign of sort of more rational spirits coming through. But that's largely a function of sort of the disconnect between EPS and free cash flow that we're seeing. If you look at price to free cash flow levels, or what we look at trend adjusted, it's kind of a better version of CAPE. The markets are basically still at close to the highs. So it's not a cheap market.
So what does it mean for asset allocation?
Yeah, I think asset allocation, I think we talked about this last time. I think one of the big ones is diversification. I mean, every market you look at is basically playing off of the AI trade, and it's a very concentrated AI trade in some cases. And I think having, things that are levered to other things. And also, defense is cheap because, it's been such a good time that having stuff that's been left behind, no one wants that, right? Who wants to pay? Go ahead.
No, finish, please.
I mean, when it's been a long time since you had an accident, you don't want to pay for insurance. I mean, every time we have a catastrophe, people have realized, catastrophe insurance makes sense and premiums go up. I mean, I think this is kind of the normal thing. So I think having those things in an environment where earnings growth might be slowing, in an environment where liquidity might start to be, coming down, that makes sense.
One last question I want to ask you. We've got a chart from Bloomberg Economics showing the real tariff rate. You expect tariffs to raise again. What will that do to inflationary pressures? And we got about 50 seconds here. And we'll bring the chart up for those who are watching on TV and YouTube. And again, it shows the higher rate back in April, the real tariff rate. We've come down from that, but you expect them to go up.
Yeah, I mean, I'm not making an outlandish forecast, right? I mean, they've already been announced, and so we basically, on an effective tariff rate, we went basically from 10% to 6%. We're going to go back up to 10 or 11%, and so the Fed tells you they'll look through tariffs, they'll look through oil, but when you get dual oil shocks that are sticky, it's hard to look through.
Yeah, and hard for, I would say, the C-suite to look through when it's up and down or there might be new ones coming out. That's
100%,
right?
100%.
You're smiling, right?
I'm smiling. I mean, Dan always brings good energy. So.
He does bring good energy.
And he says there's a lot to smile about.
It takes a lot of Red Bull, but I try.
Everything is amazing.
Yes.
I'm getting the T-shirts
It's amazing.
made.
Yes,
and the
please.
shirts made.
I'll send you my address.
Deal. Dan Suzuki, Senior Investment Strategist at iCapital here in studio. When we come back, a treat. Former Barclays CEO Bob Diamond on his latest investment in the world of financial services. He breaks the details right here.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We're on record watch once again for the S&P 500 index. Stocks higher. The S&P currently trading at 77.53. It is up by 25 points, up 0.3%. The current record on the S&P, 77.57. Right now we got the Dow higher as well, up 14, 53,807 on the Dow. Little change there. NASDAQ is up 0.6%. The NASDAQ 100 index up 0.9%. NASDAQ 100 getting a lift from companies such as CoreWeave and Super Micro Computer after earnings. CoreWeave, by the way, up 19.5% right now. Super Micro up by 19.7%. Two-year yield on this CPI Wednesday, 4.19%. The 10-year, 4.68%. The 30-year, 5.24%. Tomorrow, Thursday, we get the PPI report. Spot gold up $39 the ounce to $44.09, up 0.9%. West Texas Intermediate crude, 83.01 a barrel, down 0.2%. Brent, 88.80, a drop there of 0.1%. So again, the Dow, the S&P, NASDAQ all higher, up by 0.3%. We are looking at double-digit moves there on the menu for several restaurant chains. Wendy's jumping to the highest in 7 weeks after the FT reported that Nelson Peltz's Trian Fund Management is preparing to take the struggling fast food chain private. Wendy's shares right now are up by 11.7%. Mediterranean chain Cava Group sales came in better than expected. Shares are surging after earnings. Cava right now up by 14.2%. And Brinker International also higher after earnings. It owns the Chili's Grill and Bar chain. Brinker trading higher now, 13.1%. The ticker on Brinker, by the way, EAT. Recapping, S&P up 25, up 0.3%. Carol and Tim, that is a Bloomberg Business Flash.
It is indeed. All right, Charlie Pellet, thank you so much. Well, today and really just moments ago, Bob Diamond's Atlas Merchant Capital announcing a minority equity investment in Edge Focus. It's a firm that delivers technology, capital, and access to consumer credit. So we wanted to get the details right from the sources, the main sources. Bob Diamond is founding partner and CEO of Atlas Merchant Capital, a global private equity and alt asset management firm focused on the financial services sector. He's also chairman of Hyperliquid Strategies. Welcome, welcome.
Might know a thing or two about running a big bank, too.
Yes, I bet he has some stories. Also with us, Elliot Lorenz. He is co-founder and CEO of Edge Focus. They, as the company reminds us, delivers technology, capital, and access to consumer credit. Welcome, welcome to both of you. Thank you for bringing this to us. I want to first get to the investment. And Elliot, let's talk about this investment. What does this equity investment specifically do for you? It has to do with like operations, doesn't it?
It does. The important thing for us is being able to go into more asset classes and really invest alongside of our partners. What we do, as you mentioned, Carol, is provide capital as well as access, as well as several different things to the consumer lending market. And what we're ultimately looking to do is to connect.
A massive market, by the way.
Huge market. $200 million in unsecured consumer last year. We're trying to connect, at the end of the day, big investment firms like a Fortress with really large consumer lending firms like a SoFi.
Yeah, Bob, come on in on this investment. There's a lot of noise around credit markets, around private credit right now in particular. You have a very diverse portfolio at Atlas Merchant Capital. Why make this investment right now?
You know, we have seen a real unbelievable development in the credit market since 2008, the great financial crisis. And I think so much of credit ended up on bank balance sheets prior to 2008, particularly outside the U.S. You know, the big banks in France, the big banks in the U.K., all the credit was on the bank balance sheets. And we have seen a real development. Some call it private credit. You know, it's Edge Focus. It's Fortress. There's so much diversification. And I think that's why we have had such a long period without a real blip in credit. It's become, you know, it's a real credit to the U.S. capital markets. I think in terms of consumer credit, and I saw this, you know, through the lens of Barclays. I saw it very much through Barclaycard, which dominated the credit card and consumer credit market in the U.K., is, again, it's much more diverse. It can be spread a lot. And I think we have originators of consumer credit like SoFi in Edge Focus. We have capital that likes to invest in consumer credit like Fortress. And I think one of the things that we can do together is we can find more originators. We can find more investors. And, you know, When we look for an investment, you want to have someone that has a unique position in their market. That's Edge Focus. You want to find someone that has strong leadership. That's Elliot and the team. You want to find a business that's profitable, but most importantly for us, you want to find a business that has both a willingness and ability to grow. And this can be a significant increase over the next 3, 4, 5 years with access to capital to grow this business. So it's unusual in financial services to look at investments where they can be multiples of where they are today. But what Elliot and the team have built can be multiples of this. It's a big market.
You mentioned unique focus that Elliot has and his team. What is that unique focus, Elliot? Because the consumer credit market, a lot of players, a lot of folks in there. What is it that you guys are doing differently? And I'm curious then, like what you think they're doing differently that's appealing.
We do 3 things really well. We have access to a ton of data, our modeling approach, and then access to various other consumer lenders. From a data standpoint, hundreds of billions of data points in the U.S. consumer across lots of platforms. We know really well at all times what the consumer is
Where's that data
like.
coming from?
2 main sources, from platforms themselves who issue loans, as well as the credit bureaus. Lots of other alternative data sources as well. From a modeling standpoint, we have PhD researchers where all they do every day is research how to model the consumer, see what the latest trends are, and then finally access. None of this matters unless you have really good access across lots of different platforms.
Bob is, they have one more thing. They have incredible.
This is someone who did, I assume, the due diligence.
We did a lot of work on this. They have incredible discipline. And both the originators and the providers of capital love what they see here because of the discipline with their own capital, but also with their advice and counsel. So it's in underwriting, but also in advising.
Does that mean only certain types of consumer credit that you're going to, like certain categories, certain types of, like tell us, is it top tier? Like what are you going for?
We look across the board. Generally speaking, we can provide the most value in near prime and subprime credit.
Near prime and subprime. Okay.
So on that, Elliot, SoFi and Happy Money are 2, existing deals that our Bloomberg News team has reported on. Would you think about expanding to, I don't know, other places like buy now, pay later firms, for example?
Absolutely. I think it's part of the reason for the investment. We want to grow beyond unsecured, which we're really big in right now. We're getting much bigger in auto. We want to be in point of sale medical. We want to be in home improvement. There's a ton of areas for us to grow into.
What are some, are you talking right now to any specific buy now, pay later firms or any of those firms in the spaces that you just mentioned right now?
Many of them, absolutely.
So we should expect deals. We should expect deals to be announced
absolutely.
soon?
Our LPs are asking for it as well.
Okay.
It's got really unique characteristics.
Do you think that?
We're actually going to have a pretty big announcement in about 2 weeks. So.
I love this.
So, okay,
all right, well, you guys got to come back.
Mark the date. But that's appealing to you, that part of the market.
Carol, as I said, it's about a unique position which they have. It's about strong leadership. It's about profitability. But most importantly, what we love is we're not just great investors, we're great operators. We love to roll up our sleeves, go out and visit clients, help them think about expansion. And when you look at a business that is this disciplined and this profitable and this focused with the market out there in consumer credit and beyond consumer credit, this is exactly the kind of investment that gets us up in the morning.
Well, so then what are you going to do, Bob, for Elliot and his team? You said you guys like to roll up your sleeves. You're making this injection of capital. You're now a minority owner in the firm. That's just the beginning, right?
Do you have an office there yet?
First and foremost, when Carol and Tim call, I come here to Bloomberg.
I like that. And maybe, they're out in Denver, so maybe you could go do some skiing this winter, too.
It's out in the ether now, so... but yeah, how involved? Like it sounds like good old-fashioned...
So Fortress is a great partner.
Yeah.
There are other institutions that David Seamus and I and Brian Saunders have been very close to over the years in other investments or in our career. And, David was with J.C. Flowers in my time at Barclays. We know a lot of people that would be interested in being capital providers, but until now, they have not heard about Edge Focus, and they have not heard about the business model.
Who are the investors already involved with you? What other investors might be coming in? You talk about the capital providers. Like, who are we talking about?
All the really large private credit firms you've probably heard of. Like I said, we've talked about Fortress publicly quite a bit, several others as well.
Okay, so more.
Yes.
More.
I noticed in the press release that this is focused on hiring efforts. Part of this injection of capital, partly focused on hiring efforts to build out a big part of your team. I'm curious about talent that your firm is targeting in a market that's really, really competitive.
Incredibly competitive market. The biggest thing for us is hiring researchers. especially in the age of AI, making sure that we can find folks who really understand the data, can use AI tools effectively, efficiently. It's one of the most important things for us. Over 2/3 of our firm is technology-based.
What goes further? You're already very technology focused, AI focused. I'm curious, like, what's the next step? Where do you go with all of this?
New asset classes. We've done a lot in consumer unsecured. We have a long way to go in subprime auto. We have a really long way to go in point of sale, and there's several other asset classes for us to get into.
Bob, provide some context here, given your history in banking, and you know how what Elliott's firm is doing, in your view, is different from the way that a big bank can profile a consumer.
I think it's a number of things, but I think first and foremost, you know, the traditional banks prior to 2008 just had a very, very different approach to managing what was in their portfolio. You'd see the quarterly earnings, and you'd see a little bit of provision here and provision there, but it was not really asset or loan specific. Even in Barclaycard, which was really consumer credit and unsecured consumer credit, it didn't have the depth of this. So it's the incredible discipline and the incredible technology that they've brought to understanding credits, so that the separation from kind of near prime to prime and subprime and things like that, the number of gradations on that continuum are incredible, and that's what they've done. So they're much, much better at managing access to credit and the return that comes from credit. And I think we've seen it broadly in the market. Like, since 2008, we haven't had a blip in credit. We've never had a cycle quite like this, and I don't think it's about to stop. Because there are so many more participants, so much more technology, artificial intelligence that's being applied to analyzing the risks associated with every single piece of credit.
Are you saying this time is different?
I am saying the cycle is very different.
This cycle is different, okay.
Because of technology, because of AI, because of firms like Edge Focus,
Okay.
Meaning that...
But by the way, it doesn't mean there won't be mistakes.
Right.
For people that don't use that technology, for people that don't use Edge Focus, you know, there will still be mistakes, but I don't think they'll be systemic. They're not going to be across the piece. They're not going to be a crisis for the industry. They may be a crisis for an individual fund.
So in other words, not just that the risk is spread, but if somebody who doesn't have the great oversight or risk...
There'll still be mistakes made, Carol. Absolutely. And I think what will separate Edge Focus is more and more people are going to want to have access to people like Elliott and his team, so they can move into that echelon without trying to build it themselves.
So let me ask you, there are always cycles, and I'm just curious how exposed Edge Focus is specifically to consumer credit, and how will you guys be protected if ultimately we see financial conditions tighten? Things go through cycles, and then we start to see end user delinquencies increase significantly. I mean, these things happen.
Absolutely. We're very long consumer credit. There's no question about it. At the end of the day, we need to...
But what do you do to mitigate risk? Like how?
It's all about having that loan level selection where we can use all the data we have at the individual borrower level to ultimately buy better portfolios of assets for investors.
So you're saying the data, the algorithms, the AI,
and we also have to monitor it really well too. We've built out tons of proprietary internal platforms where we can watch this stuff in a real-time basis and understand exactly how the consumer is evolving.
And so far, in terms of issues that have gotten you into trouble, like what percentage?
I mean, look, there's no investment that's ever perfect, right? We go back to 2022, 2023, for example. Inflation was really challenging on the consumer, there's no doubt. But you learn a lot from that. You add into your algorithms, you add into your models, and ultimately you create a much more sustainable, defensible platform.
Well, Carol brings up a good point, and you know, what I heard from you just now speaks to what it sounds like you have this, what you think is a very solid real-time view of how consumers are doing. We try to figure that out each and every day on this program by looking at data that we get from the Fed, data that we get from different bureaus, alternative data as well. How is the consumer doing?
Yeah, we have a lot of really cool insight into how the consumer is doing. What I can tell you is that applications continue to increase across all the platforms we have. Applications are up year over year on the
Is that a good 20%. Thing?
You know, we're actually seeing delinquencies stay very, very consistent.
But consumers need more credit.
They are, and we're actually seeing an increase overall in debt-to-income ratios across consumers. So although the consumer looks to be needing some more credit, and that's being shown in the applications, delinquencies are being pretty constant right now.
Why is that? Bob, like, what do you, like when you look at that cycle or that data, those data points?
Which part of it? The fact that
Where you said that debt to income, right, is rising, and yet delinquencies are low. How do we explain that?
You know, I think it's more discipline in the system and more providers of capital. So I think the same thing I talked about since 2008 on the investor side or the bank side in terms of their portfolios, I think consumers are much more mature, much more sophisticated. So it's not surprising that you would see less of an increase in delinquencies than you would in the amount of outstanding credit. That would be unsurprising.
So, Bob, this is a minority investment in Edge Focus right now.
Are you going to ask when it's going to be a majority?
Yeah, that's exactly what I was going to ask.
Sorry.
Is this the beginning of something?
Perfection is never.
Is this the beginning of something, or is this
absolutely the beginning of something?
Is there going to be more money coming from you, or do you think this is enough for them to go out, do their thing, and then there's an exit at the end?
I think the beauty of being Atlas Merchant Capital is a couple of things. One is our investors are very, very patient. If we go to them in 3 or 4 or 5 years and say, this isn't going to be a normal cycle, we want to stay in this longer. We have a number of large sovereigns. The biggest issue they face every day is reinvestment, not exit. So we have that option in terms of the relationship we have with our investors. But I think most importantly, if there was need for more capital, because the business is growing and valuations are going up, that's a good presentation for us. It doesn't mean we would go to majority. That would be unusual, and that might be in a distress situation, which would be the furthest thing from our mind in this situation. But if we have opportunities down the line to add additional investment at higher valuations because the business is growing, both in terms of products and in terms of customers and clients, that's fantastic.
So we'd be remiss. We've only got about a minute or so left here, Bob. You have seen, iconic for anybody who's watched Wall Street and financial markets. You've seen a lot of different cycles, good, bad, different. What do you make of this market cycle, which is there's angst, and yet we hit records? And how do you make sense?
Well, I think two things, Carol. And I think on the one side, and I see this, I've been very, very fortunate to be the chair of the advisory board for the U.S. Export-Import Bank with John Jovanovic and the team. And they, for the first time in decades, are profitable. They are really driving performance with middle market companies across the U.S. And what shocks me is how profitable they are. What shocks me is how excited they are at the tailwinds coming from this administration in terms of less regulation, more pro-business. And so the CEOs of middle market companies across the states are pretty excited. I think in terms of the cycle with AI that people are talking about, and I suspect that's the other piece that you're asking.
It is.
I think there'll be a correction. There'll always be a correction. Every technical innovation we've had, from railroads, from electricity, from the internet, will have a massive correction at some point. It doesn't feel like it's going to be tomorrow. But you know what, with any technical revolution like this, there's going to be corrections. It's not going to be one. It doesn't feel like it's around the corner, but I can assure you there'll be a correction. I just can't assure you when it's going to be.
I don't know. Everybody keeps talking about it's good till 2030. And then it's like a big question.
I feel like that's just what the hype.
Hope's not a strategy.
That is so true. Gentlemen, when you have more news, please come back. We really enjoyed this, and thank you for giving us this opportunity.
Thanks for having us.
Yeah.
Bob Diamond, founding partner and CEO of Atlas Merchant Capital. Also, he's chairman of Hyperliquid Strategies, among many other things. Also here, Elliot Lorenz, the co-founder and CEO of Edge Focus. Guys, thanks a lot.
Thank you. All right, guys, let's get back to the markets on this Wednesday. Back over to Charlie Pellet.
Thank you very much, Tim and Carol. Here's what's going on. The Dow, the S&P, NASDAQ, they're all higher. In fact, right now, I can tell you that we are looking at an intraday high with the S&P 500 index, indeed trading at a record 77.58 right now. We're up 30. That is a gain of 0.4%. 77.57 and a decimal is the old record on the S&P right now, 77.58. 758. Got to keep it locked into Bloomberg Radio and Television, and of course our online platforms as well to find out how things will shake out at the close. Dow higher as well, up 41 right now, not even close to a record, up by 0.1%. We've got NASDAQ up 190 for the NASDAQ Composite Index. That is a gain of 0.7%. The NASDAQ 100 Index up by 1%. That index getting a lift from the likes of CoreWeave, up 19.5%. Also, Super Microcomputer up 19.7%. Both of those companies surging after earnings. Right now, the 10-year on this CPI Wednesday, the 2-year, 4.19%. It's the 10-year at 4.68%, and the 30-year currently yielding 5.24%. Gold, meanwhile, up $41 the ounce to $44.11, up by 1%. West Texas Intermediate crude, $83.30 a barrel, up 0.1%, and a barrel of Brent, $88.97. Brent up by 0.1%. Small gains there, but perhaps the key takeaway, we are seeing a turnaround for crude. Have been trading lower, little changed and lower for much of the day, but right now up by under 0.1%. After the close of trading today, we're going to be all over this. Cisco Systems, the world's largest maker of networking equipment. It will deliver quarterly results, also providing an update on its push to capitalize on AI spending. Now, ahead of earnings after the bell and part of a broader tech rally, we do have Cisco shares up now by 2.8%. What a deal in the sports world today. Thrive Capital's Josh Kushner and former Disney CEO Bob Iger are buying the LA Lakers basketball team for a record-breaking price of more than $12 billion. Shares of Knicks owner Madison Square Garden Sports also moving on the news. MSGS on the ticker symbol. Right now, it is trading higher by 4.85%. So again, recapping here, we've got the Dow, the S&P, NASDAQ all advancing. S&P 500 index is trading at a record 77.58. That is a gain right now of 0.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get right to it because there's lots of things we can talk about. We mentioned about earnings growth and earlier in this hour and how it's going to be tough to beat the numbers we've got. I do wonder about what's on the mind of CEOs. Maybe they are worried about earnings growth going forward. Someone who has some insight into that is Rebecca Humkes. She's lecturer at the London Business School, faculty also at Duke Corporate Executive Education, previously served as a fellow at the White House's President's Council of Economic Advisors, and she advises companies on high-growth strategies. She's the founder of her own boutique consultancy firm, author of Survive, Reset, Thrive, Leading Breakthrough Growth Strategies in Volatile Times, and she joins us in studios. Good to have you back. We caught up a little bit earlier today. Let's go right to it, though. What are CEOs concerned about right now? Because we had a market guest. Everything is
Dan Suzuki from iCapital. I'm really glad. That's exactly what, as you were reading that, I was like, well, Dan just said everything is awesome.
Amazing.
It's fine.
Is it?
So there is definitely an optimism in the environment, which I think is warranted. I mean, one thing is that uncertainty is very damaging for our brains. And when we're facing a lot of uncertainty, as we really did last year, we frame uncertainty as something negative, right? And then we automatically think, oh, things that are uncertain, that's going to be a downturn, that's going to be a recession. And I think what we're seeing now is almost bringing uncertainty into the day by day rather than adjusting for it, which is allowing some of this optimism to come in the market, which is good, right? I want CEOs to reframe that uncertainty is neither good or bad, it's just the future. So I would say, Carol, that CEOs are relatively optimistic, but the crude way that I'm looking at it, and it is crude, is if you draw a continuum of do you touch dirt or do you touch consumers?
I love this.
The closer you are to dirt, the more bullish you are right now. So if you're in infrastructure, mega projects, ports, anything touching the data center, you're seeing the next 1 or 2 cycles as an outsized growth opportunity. If you're kind of touching something that goes through someone else that eventually gets to the consumer, it's pretty good, but you're still looking at the margins. If you're closer to the consumer, you still have a growth story, but it's a little bit more cracks under there because there are certainly cracks in the consumer economy right now, and every CEO will admit they're concerned about the consumer.
Every CEO.
That's interesting.
Every
I mean,
CEO.
Yeah.
Like this,
we just heard from Elliot Lorenz and Bob Diamond, and they're saying they have the signals, and they're saying although consumers are looking for more credit, which you can interpret that however you want.
Well, you can't fight that, right? The numbers, but what they.
But if their delinquencies are down. then consumers doing pretty well, right?
The consumer, the K-shaped economy is still here. And I know that, some people in the White House would like it to go away. The data is pretty clear. The K is here to stay. Now, what we saw from the Bank of America data this week was that the lower part of the K is increasing spending, and we're seeing a little bit less, which is great to see. But that doesn't mean the shape goes away. It means the shape is not steepening at the same rate as it was before. We're seeing personal savings rate at the lowest that they've ever been. We're seeing the number of discouraged workers who are just out of the workforce very, very high. Labor participation
worrisome.
is
The
the
not
lowest
in
that it's
labor
been.
force,
Not
right?
in the labor
the
force.
NILFs.
Right.
And we were talking inflation today at jobs last week. And so again, if you want me to paint you a happy consumer story, I can find the data. Tell me the story you want to tell. I'll make the data tell that story. But a small percentage of consumers are having the time of their life. The majority of the consumers are still going on this day to day. And what we have to remember is that chaos has a cost, and consumers pay that cost too. They are exhausted. Shopping for value is hard. Waiting, if you don't like your job, but you're afraid to get a new one, so you're sitting in it, that's emotionally draining. So when we say worried about consumer, it doesn't mean the consumer is going to fall off the cliff. It means that the consumer is living in day-to-day chaos, and that's placing a tax on our day-to-day American consumer.
I love that concept. I mean, I don't love that concept, but this idea of a chaos tax.
But does it stay like this? Because I don't know, we've been talking about this for a long time. It hasn't gotten any better. I mean, like you said, you can pick the data and figure out which story you want to tell, but what changes this?
So there's policy intervention. There is no CEO, and we'll go back to the CEOs, no CEO is ever going to ask for certain times or stability, right? If you're the CEO of a company, you are prepared for uncertainty. We would like less chaos, though. What we're seeing right now is we've normalized system shocks every couple of months, but this affects policy, right? If we think about the Federal Reserve, they're supposed to look through supply shocks. How can you look through something that's going to happen every 2 to 3 months? So all of these tried and true things we have are getting affected by this level of chaos.
Carol, this is what Con Davis told us, the CEO of Byrna Technologies, just last week, right? They make, they're in the U.S., they do manufacturing of these, you don't want to call them guns, but they look like guns, and they shoot sort of pellets, and they're, defense technology. He's like, we just want less chaos.
Yeah, right, exactly. Just
and let's
pick a
more
policy.
stability.
Yes,
Right?
yes.
It's like
not
making
less
a decision.
Uncertainty. It's not being immature and asking for less uncertainty. It's less chaos. Because for an organization, chaos has a cost. You have paralysis in decision making.
Right.
You hold off on hiring. You hold off on sometimes making M&A. You hold off on big investments. So chaos has a systemic cost because you have a lot of investment dollars in people and decisions sitting on the sidelines. And constant paralysis actually weakens this growth and performance muscle that teams have.
It's like not making a decision, right? You sit there and you just
But what you don't realize is
stir
you're
in it
not
and
just
stew in
moving
it.
slower because you didn't make the decision. Growth is a muscle. So as a team, when you're executing in the market, you're getting insights on your customers and consumers, you're bringing those insights in, you're building this muscle as a management team. When you go into this constant paralysis, that muscle actually atrophies, right? And so if you have entire systems where industries are just sitting in a bit of this paralysis, that's going to become system-wide pretty soon. So that's why we're saying chaos has a cost. Uncertainty is great. Uncertainty can be a great time to grow. It's a great time to learn, but chaos places a real tax on us.
It's funny. I was going to talk about AI. Sorry, team, and we didn't get there. But what's interesting is what you say is that companies are building in to their muscle shocks, right? Because we've had so many. Just got 20 seconds.
If I look at the beginning of the year, what CEOs will tell you is, I'm expecting to see more uncertainty, but I think I'm better at it now. And that's good news, but we shouldn't need to have built that muscle on top of all the other muscles.
Yeah, that is so true. Next time I want to talk Detroit, and I want to talk agentic shopping and so much more.
Got a whole long list. That's for next time.
Come back soon. Rebecca Humkiss, thank you.
My pleasure.
Always appreciate it. Lecturer at the London Business School, faculty at Duke Corporate Executive Education, runs her own boutique consultancy firm, advising companies on growth strategies. Great.
She does it all.
She does do it all. When we come back, we're going to get a check on trading and also some stocks on the news. Stick around. This is Bloomberg.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody. Hello?
Hello.
Is my mic on?
Your mic is on. I
Hello,
can hear
hello.
you. Yeah.
Okay, just checking. Audio, video. We can do this. All right, let's take a look at the market, folks. We're heading into the last hour of trading. And off our highs and lows of the session, we're up not even quite 30 points, but almost 30 points on the S&P 500. That's good for a gain of 0.4 of a percentage point. NASDAQ 100 up 284 points. That's good for a gain of almost 1 full percentage point. And I meant to look at the S&P. I know you're going to probably go to energy.
You know I will. You know me by now.
I gotcha.
Yeah.
266 names higher in the S&P 500, 235 to the downside, 2 unchanged.
All right, energy. No, nothing happening.
All right,
That's it. We're still just shy of $89 a barrel for Brent futures, WTI above $83 a barrel. The real story is this is up 46% this year.
I just remember the Persian Gulf War when it went up to was it 140 a barrel or so?
Wow.
Yeah. I don't believe I'm wrong.
No, I don't either.
I remember
All right, here we go. Okay, we don't have time for this part,
This
Carol.
is why
I know she was going to do what she was going to do.
I have this handy-dandy little thing. It's called the Bloomberg Terminal. But I think it was 140 when it went up to.
Carol gets an idea. Here's I'm just going to narrate a little bit. Carol gets the idea of some sort of thing that she wants to look up in the terminal, and she's like, I need to go back and I need to find this right now. And then you can watch her brow furrow as she looks at the data and tries to find it go back to the early 1990s. Okay. In the meantime, I'm Tim Stenovec, along with Carol Masser. Let's take a look at some stocks on the move today. We're joined by Bloomberg News cross-asset reporter Denitsa Seikova. Denitsa, let's talk about a company that we just heard results from late yesterday.
CoreWeave, it's been the talk of the day. The ticker, of course, is CRWV. We've been talking a lot about AI spending frenzy, and this has been the proxy of it. We're seeing very fast sales growth, and investors are pretty excited. The stock jumped as much as 23% in earlier trading. Now it's about 20% up. It was an interesting name that was caught in a lot of volatility. We've been talking a lot about situational awareness, but around that leverage sell-off, that was one of the names that was under a lot of volatility. That said, even before today's jump, it was already up 26%. So clearly, big winner. The sales number was very strong, projection around 3.536 billion. The street was expecting lower than this. So pretty impressive. The backlog number, that's what everyone is looking. Over 100 billion of backlog. This was a quarter end. Really impressive. And, we don't have many public companies that are neo-clouds, and we don't have a good proxy for that.
Nebius, too, is another one that's higher, too.
Exactly,
right? That came out with results.
Okay, but you go back to what happened last year with CoreWeave. I mean, this stock in June of last year was trading at $183 a share. Now it's down to still higher by 18% today, but $107. So it's still down 37% since then.
Last year was very volatile. This year was very volatile, but this is definitely promising. All the numbers are very strong. The revenue number actually doubled in the second quarter. So it seems like the street is very impressed with this earnings report so far after a few pretty difficult weeks.
Okay, that is ticker CRWV, CoreWeave. How about some pomegranate glazed salmon?
Exactly.
That's disgusting.
Oh, really? You're the only person who thinks that.
Pomegranate
too much,
should
too
not,
sweet.
Yeah, wrong.
Well, I don't know. What did Kava say about the pomegranate glazed salmon?
Excited, and this is where they actually make profit. It's the pomegranate glazed salmon. We're talking about pita chips flavor with sumac, sour cream, and onion. All those extras and all those things are paying off. People love to pay for more protein.
Remember Tom Hanks in Big when he ate the caviar and he was like rubbing his tongue off?
Well, I don't know. It's working. The ticker is CAVA. Stock is up more than 14%. Earnings are going great. The company saw a 9% jump in sales at established locations. We obviously had a parasitic outbreak that weighed on sales, but necessarily it didn't disrupt supply chain, so the company is doing great.
But they don't really do salads, right? They do more.
Yeah. It's
more,
kind of a healthy slop bowl.
I've had a salad.
Healthy slop bowl. I like that.
It's like a Mediterranean.
I mean, okay, they do salads, but that's not like their core. That's not their
you
core
throw
product,
a couple
right?
olives in, and it's a Mediterranean
a
salad.
few dips and everything. I like it. It's fun. And you know who's splurging on the dips? It's lower income guests. They're paying for the add-ons.
Okay.
So that's interesting.
All right, if you don't want that, you can go to Wendy's.
Okay, you can do the greens bowl too. So yes, they do have salads, of course. But.
If you're not about healthy Mediterranean food, you can go to Wendy's. Which is also great. The stock jumped about 12%. The ticker is WEN. We've been talking a lot about the company going private.
Yeah.
Of course, Trian Fund Management has been the firm associated with this. The firm already holds about 16% stake in the company. The company has been under so much volatility. Just generally, fast food companies have been struggling. But this is the first time this is not the first time Trian has explored this. It's been going on for a few years. And their last earnings report wasn't great. They say traffic, value, franchise economics are not working great. So a lot of pressure there.
Now I'm just hungry for a little Neocloud sandwich. That's what I'm going to put out.
Square patty on that burger.
Num, num, num. All right, Denisa, thank you so much. Check out our Stock Movers podcast, episodes, 5 minutes, big winners, losers. You can find it on Apple, Spotify, anywhere you get your podcast. More than $140 a barrel oil. That was back in 2008.
Okay,
July.
so that was not the port.
Just before the GFC.
Okay, there it is. Okay.
All right.
Okay.
I just want to get it right. Stick around.
From ABC News, I'm Michelle Franzen. A grand jury indictment has been unsealed in the case of Nick Reiner and the alleged murders of his parents, Rob Reiner and Michelle Singer Reiner, at their California home last December. ABC's Alex Stone is in Los Angeles with details.
The charges in this indictment are essentially the same as what he was originally charged with, the murder of his parents. They added one special circumstance of lying in wait. He was already charged with multiple murders and using a knife as special circumstances. Essentially what this does is allows the prosecution to bypass a preliminary hearing and go right on to the trial. Not much else changes in this, but he has now been indicted.
Nick Reiner is scheduled to return for a pretrial hearing September 15th. In Colombia, rescue efforts continuing days after a massive earthquake rattled the Choco region, killing at least 240 people. The city of Cali, one of the hardest hit, dozens of buildings collapsed there. Officials say more than 200 are trapped in the rubble. Thousands of others are still listed as missing. Ongoing hostilities with Iran, keeping the pressure on Americans when it comes to prices for most goods. Inflation cooled slightly by 0.1 of a percentage point from June to July. ABC's Elizabeth Schulze says it was not enough to reverse high prices in many sectors, including groceries, transportation, and services.
This is pretty much in line with expectations. That 3.4% inflation rate is about where analysts thought it would be when you look at kind of across the board prices in the economy. It's a good thing that we don't see that number going up, that inflation isn't accelerating, but it is still above where the Federal Reserve and overall households want inflation to be.
In northern Spain and Portugal, crowds turned out in town squares and beaches outfitted with special protective glasses to view the total solar eclipse this past hour. The Northern Hemisphere event delivering the best view to portions of Russia, Iceland, and Greenland earlier today. You're listening to ABC News. Attorney General Todd Blanche holding his first press conference since being sworn in earlier this week. Blanche in Washington, D.C., announcing that the Justice Department uncovered a marriage fraud scheme involving Chinese nationals.
This scheme was not a quick fly-by-night operation, but rather a years-long, multi-million-dollar cottage industry to criminally assist people who would not or legally could not otherwise become citizens of the United States.
Blanche says the investigation continues. Here we go again. The Powerball jackpot has ballooned to $1 billion. No one has matched all winning numbers after weeks of drawings. It marks the lottery's largest grand prize ever. And that has many people wishing that they will win and dreaming about how they could spend all that money. ABC's Rena Roy has more on the possibilities.
The lump sum payout of that huge jackpot is $433 million. That could buy more than 118 million grande cups of Starbucks coffee or nearly 394,000 new iPhones. Or you could invest in 36 million packs of Pokemon cards. Of course, you'd have to pay taxes first. And a reminder, your odds of winning the big jackpot are just 1 in more than 292 million. Rena Roy, ABC News, New York.
Major hoops news. Multiple sources tell ESPN the Los Angeles Lakers are being sold to American businessmen Josh Kushner and Bob Iger for a record-breaking $12.5 billion. Michelle.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
All right, everybody, we are just about 55 minutes away from the closing bell on this Wednesday, August 12th, 2026. Carol Master along with Tim Stenivek. You're looking at a market where kind of an even split in the S&P, about the same number of names higher today as well as the same number lower. There were a lot of names, though, for me to choose from when it came to gainers.
I'm still looking for another decliner. I got 2. I need 1 more.
For solar?
Okay. Well, let's take this offline.
I'm going to do a win.
Let's take this offline. I know you just had. I know you just had 4 days to relax.
I'm a little
a little quick.
It's amazing when you get a good night's sleep.
I'm glad. I'll let you know the next time that happens.
Or crazy.
For me.
Okay.
Hey, we got a great program coming up over the next couple of hours.
We do.
Carol's talking about the markets. We're always talking about the markets. We heard it from Dan Suzuki over at iCapital a little earlier that everything is awesome. Here's the latest challenge for markets right now.
What?
Well, earnings growth has been too strong. We're going to get to that.
That's what we want to talk a little bit about, and the comparisons certainly get tougher going forward. So we're going to get into that. We're also going to go all in on AI today. A former global vice president at Amazon with a book on generative AI. It's called The Trust Algorithm, which already... Is that an oxymoron?
Yeah.
We're going to have to talk to her about that.
I was doing some ChatGPTing earlier.
And?
I'm impressed.
I'm blown away. I was doing something with it last night. But then it told me I maxed out in terms of my image creation. I wasn't like...
Okay, I don't know what...
I wasn't like, say, draw me a horse. It was constructive.
Okay, so we're also going to, on AI, we got Dan Ives in here. We're doing a special thing in the 4 o'clock hour.
Yeah.
Dan's going to be joining us for quite a bit of time. He's formerly of Wedbush, now partner and senior managing director over at Yorkville Ives, a well-known tech bull he is. Yeah. We're going to talk about whether there's anything out there to be concerned about.
Yeah, what could go wrong? We're going to ask. And it's the $12.5 billion deal that's shaking up the NBA. We're talking about Randall Williams. Well, he's not doing the deal, but he's going to talk about it. Bob Iger and Josh Kushner buying up the LA Lakers. So we'll see what Randall has to say about all of that. Listen, the price tags on these deals, these sports teams and franchises, pretty impressive.
Also impressive is Charlie Pellet, who's just already sending me decliners right now. He's standing by in the Bloomberg Interactive Brokers studio.
What a great colleague.
He's a great colleague. Hey, Charlie.
Hi, thank you very much. And here's what's going on. For Dan Ives, got to ask the question, how do I get his tailor? Who dresses him when he leaves the house? Hopefully we'll get some answers when he appears right here on Bloomberg Business Week Daily. We got the Dow, the S&P, NASDAQ, all advancing right now, very close to a record, bouncing around at record levels on the S&P, 77.55 where we stand right now, up 27, gain near 0.4%. 77.57, and the decimal would be the record on the S&P 500 index. We got 52 minutes to go ahead of the closing bell. Dow higher by 61, up 0.1%. NASDAQ up 180 for the NASDAQ Composite Index. That is a gain of just about 0.7%. The SOX, the Philadelphia Stock Exchange's Semiconductor Index, up 3.1%. We're also seeing the 2-year on this CPI Wednesday, 4.19%, the 10-year 4.68%, with a 30-year 5.24%. That inline inflation reading spurring gains in both stocks and bonds. Spot gold up $45 the ounce, higher now by 1%, 44.15 on the precious metal. West Texas Intermediate crude oil 83.10, down 0.1%. Has been bouncing around, little changed, both higher and lower. Barrel of Brent 88.76 right now, down by about 0.2%. Underlying inflation was subdued in July, likely easing pressure on the Fed to raise rates. Sarah Malik is Chief Investment Officer at Nuveen Asset Management, and she was a guest this morning on Bloomberg Open Interest.
I don't think the Fed will hike at the September meeting, and this gives them permission to stay on pause for a while because this CPI number follows a soft payroll number. The number I will be watching to perhaps change my mind will be PPI tomorrow, particularly watching non-housing within PPI, but that likely will not be enough for the Fed to raise rates at the September meeting.
Nuveen's Sarah Malik interviewed on Open Interest, and of course surveillance going to be all over the PPI with our Michael McKee and Tom Keene, Paul Sweeney tomorrow morning bright and early right here on Bloomberg Radio. CoreWeave, a provider of computing that powers AI systems, surging after last night's earnings report. Right now we do have CoreWeave up by 19.6%. Super Micro also reporting earnings last night up by 19.7%. Tim and Carol, I got your back. That is a Bloomberg Business Flash.
Hey, thanks, Charlie, for that update. Dan Suzuki was sitting in this seat just about an hour ago, and he kind of said it. Everything is awesome. He said it over and over again. We're drowning in liquidity.
Amazing, all this good stuff.
Okay, well, our Bloomberg Markets Live team writing that the latest reason to worry about the stock market is quite the doozy. Earnings growth has actually been too strong. We've got with us Michael Ball, Bloomberg News macro strategist. He's got a great background. He was at the New York Fed during the crisis. That was 2006 to 2013 is when he was there. So I think it's fair to say he's seen some stuff. He was a consultant. He was a macro analyst advising institutional clients. He was doing some trading. And now we get him here at Bloomberg. Welcome. Good to have you.
Thanks for having me, guys. Good to be on the show.
So I want to start with this idea that earnings growth has actually been too good. Like, why is that a bad sign?
Yeah, again, it's what is the next catalyst for the leg higher, right? We've been pinned at the SPX. We've seen a healthy rotation within that as July really saw a lot of the prior AI winners come off. And then the earnings picture just improved throughout July. It broadened. And now we have that 20 to 30% change in how much we're seeing forward EPS growth. Now, we can't get too much more given the macro backdrop, meaning, like, where are we going to lean again on for leadership? Is it going to go back to AI, or is it going to be continuing breadth of earnings improving? And the actual economic growth story, although very strong, given the uncertainty we're constantly dealing with tariffs, with the war, with the general state of the consumer, there's not too much more that we can kind of squeeze out. And when I go through all the earnings calls, it's really this margin expansion story because they've been able to hold pricing power. And now you're asking yourself, like, what's the next driver for things? So it's not like a bad thing. I'm not trying to say you should be getting out of stocks. But if we want to get to the next leg higher, let's say 8,000 on the SPX, it's like, how do we get that extra, 5-10% now in earnings growth into the year end? And that's the question.
Well, didn't JP Morgan come out this week and say that's what we're going to see?
Yeah, I mean, this is
8,000?
it. This is the argument, though.
Yeah.
The consumer has to, basically, now it can't just be AI CapEx.
Okay.
Now it has to be a broad, the earnings story did show the consumers there. The data was better for Q2. We saw that in the GDP. Yeah. We're going to get retail sales tomorrow. That's expected to be a little weaker. But overall, the consumer is not as bad. Now, you got B of A saying it's a C economy, not a K economy anymore, because they've seen strength in both the bottom and top. So is this real? Is this tangible? Is it going to equate to the earnings?
We just talked about
Scott Bessent says that too. He doesn't like the idea of the K-shaped
economy. Pick your letter here. But Rebecca Humkus talked about it, and she said kind of the K is still intact, but the lower rung is actually maybe outspending or doing more spending than the upper rung, but it's still there. Maybe the gap isn't as big as it used to be. Having said that, earnings are important in terms of economic growth, though, right? If we think about, so what does it mean? A normal correction, perhaps? Like, where are people?
No, I mean, we could tread water. I get your point. I think what I'm a little worried about, and just put this in the grander context, post-July FOMC, we had kind of a grab for upside. Basically, we also had that shakeout of what was going on in a lot of the AI laggards as we saw Citadel come in, stabilize the momentum trade, basically put a bottom in on the AI winners. Those guys have obviously done
was
quite
that thing, was situational awareness?
Exactly.
Was that considered as a stabilizer to the overall AI trade?
I mean, if you look at momentum, which is basically the
That's
SOX index or the AI laggards in July, they all sort of bottomed around the same day. Now, obviously, we also had the July FOMC, which was more dovish, give sort of a boost to sort of financial conditions, rates sort of stabilized, oil's being stable, everything basically flatlined, and equities have rallied. But we're up 10% on the NASDAQ since then. Call spreads, call skew, everything you see for grab for upside is all kind of at very high percentiles now, which means that people now are basically bulled up again. So again, to go higher now, we need a new catalyst. What is it? I don't know.
We're speaking with Michael Ball, macro strategist for Bloomberg News. He joins us here in the Bloomberg Interactive Brokers studio. So what does all this mean ahead of NVIDIA earnings at the end of the month? Because if you think about the catalyst that I think about in August, it's like, okay, yeah, we're getting a little bit of economic data ahead of a September Fed meeting, but really it's Jackson Hole is the next big event where we're going to hear Fed Chair Kevin Warsh communicate with us. The other big event is NVIDIA.
100%. And I think we're getting better at predicting NVIDIA because at this point we basically have all their customers telling us what they've done. We have TSMC, who they're a customer of, and ASML, all the kind of top guys telling us what they've already done. So there's better clarity as we've come to understand sort of the beast that is NVIDIA. And now, interestingly enough, it historically does quite well into its earnings, and it has done quite well. We're back at 220 on the stock price. That's sort of where the high is. 225, I think, was the high prior to the July pullback. So, I'm not actually expecting too much disruption. I don't know what the exact implied vol for the earning release is, but let's assume it's probably come off a little. But to your point, the Jackson Hole stuff is probably the bigger picture because we need stabilization in the rates market. We saw the long end kind of come unhinged as Warsh gave his FOMC presser in the July, and everyone got worried because he wasn't really committing to any actions. And he wasn't really even speaking words that made sense. So.
Like I said, you were at the New York Fed from 2006 to 2013, so you understand the Fed, and you spent a lot of time observing Fed communicators after that, I assume. Do you think he learned lessons in communicating from that press conference?
I think Kevin's been around a long time. He would have learned that already. I think he's got a game plan that maybe the markets aren't really hip to yet. And
this feels like a strategy.
Yeah.
Really? You think so?
I think so.
It's coordinated with Bassett in some ways, and it certainly has a deeper feeling where he does want to adhere some control back to the market, reduce the footprint of the Fed, which is admirable in a lot of ways because financial repression is a real problem, and that's how bubbles are created. We have the boom-bust cycles that we've had in the past. But he's yet to clarify that. And I think these task forces are part of that. But we're talking about a 9-month to 1 year sort of clarity. In the meantime, he's basically saying, I'm going to let markets do the work for me and tighten financial conditions if they think that's appropriate. The long end just said, okay, we'll pick up your job right now. And that's why we had the tantrum sort of right after that FOMC presser in July.
Interesting. We're going to have Dan Ives on in the 4 o'clock hour and talk about what he's up to. But I thought it was interesting, this NVIDIA story, where they are signing up 6 financial powerhouses in an attempt to bring more outside capital into the space and reassure investors. I don't know. My read, that, how am I supposed to read that? How are market watchers reading that? Because to me it says, we're trying to be calm down. Look at all these people who are willing to play with us financially.
Yeah, I mean, again, I've been speaking of this all day. Obviously, it's been 24 hours since I came out. It's an interesting concept because we are well aware of the physical restraints, whether it's electricity, whether it's even labor, electricians, whether it's the GPUs.
Right.
Now we have this financial constraint where you're trying to push a lot of capital through a tiny straw that needs to be a giant pipeline because the CapEx story every quarter gets bigger and bigger and the momentum's growing and we have no end in sight for capacity demand. So this is part of that. We want to grow the pie responsibly, and it can't all just be cash flow recycled back to a few people like NVIDIA who are really at the top of the food chain there. They need to figure out how to get the capital back in without looking too circular. So again, the devil's will be in the detail. I'm still not really sure either, so I hear your hesitation. I'm with you there. But I think overall, this is going to be something where you'll see a better financing option. And then when we looked at CoreWeave today, we had Nexius, we had the NeoClouds today. Yeah. They were saying the backlogs are looking good. They can kind of collateralize that into securities and get a better sense and a lower cost. The best thing out of CoreWeave today was that their actual debt, financing costs were coming down notably. And obviously their backlogs are growing. Great. So that alleviates some of this debt problem, because that was obviously the big thing with Oracle and CoreWeave going into sort of the sell-offs we see not only in July but prior to that as well.
All I would say is backlogs, great, but what if people cancel orders, right? Like there is always that, and people are starting to talk about power on data centers and multiple contracts.
And there's also reluctance to lock in longer term contracts because the prices keep going up.
Okay.
So you don't want to, you can actually hurt your future earnings growth because we don't know exactly where the, the demand goes. It's so inelastic right now.
All right, we got to run. Michael Ball of Bloomberg News, macro strategist, joining us right here in studio. Stick around, folks. We are talking AI.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We got the S&P 500 index flirting with a record. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. goldencrestmetals.com/guide. S&P 500 index right now at 7751. The record on the S&P is 7757. It is up right now by 0.3%. 38 minutes to go ahead of the close. The Dow up 20 right now, little changed, up under 0.1%. NASDAQ up by 0.6%, and the NASDAQ 100 index up 0.8%. An inline inflation reading spurring gains in both stocks and bonds. Right now we have got the 2-year 4.19%, the 10-year 4.68%, and the 30-year 5.24%. Gold trading higher now by 1.1%, 44.17 the ounce. West Texas Intermediate crude down 0.1%, 83.11 a barrel. Brent crude 88.79, down now by 0.1%. So this morning's data is bringing some relief to Wall Street traders worried about both geopolitical risks and the next Federal Reserve rate move. Tiffany Wilding is economist at PIMCO, and she was a guest this morning on Surveillance.
I think overall this plus the the softer CPI print last month has to be a little bit of a relief for Fed officials. Good news for them. At the same time though, some of the more hawkish members on the committee, we doubt it really changes their minds.
Tiffany Wilding of PIMCO keeping an eye on some of the airline stocks today. American down 2.2%. We've got United down 0.7%. Delta Airlines trading lower today by 0.2%. All of this with West Texas Intermediate crude down 0.1% right now, 83.12 a barrel. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Tim and Carol, that is a Bloomberg Business Flash.
Hey, thanks, Charlie. Appreciate that. Well, there's a great story in the issue of Bloomberg Markets Magazine. It's about how the number of employers who expect entry-level workers to be AI competent has nearly tripled since last fall. That's according to the National Association of Colleges and Employers.
Check this out. Policymakers in Washington are encouraging schools and companies to launch more AI training programs as part of a bid to boost workforce training. Colleges are offering training in AI tools and marketing to everyone, from C-suite execs and software engineers to the AI layman looking for a leg up in the job market. It is all the way from the top to the bottom.
This is Alice Pope's world. She's the author of the book. It was out earlier this year, The Trust Algorithm, How Leaders Build Trust with Generative AI. She joins us here in the Bloomberg Interactive Brokers studio. We should note that Alice spent more than 30 years navigating some of the biggest companies, from Eastman Kodak in the 1990s, okay, speaking of transformation.
Were you up in Rochester?
Yes.
Oh my gosh.
To Microsoft, Johnson & Johnson, Capital One, Visa, and most recently Amazon, where she was a global vice president of customer experience. You've seen a lot, I think it's fair to say. You've seen different cycles with regard to technology and huge transformations. What is the moment that we're living in right now?
Yeah. The moment that we are living in is revolutionary. I would say in the first era of generative AI, people wanted to know how smart was it? How intelligent was
When
AI?
was that?
I would say in 2020, 2021.
Okay.
How smart was it? And we weren't sure how much we could trust, but these tools are becoming more and more intelligent, smarter, and now it's not just how smart they are, it's how much authority we want to give them. They're agentic AI tools now, and for those tools, how much autonomy are we comfortable?
I mean, we spoke yesterday to the CEO of eToro on our program. And eToro, it's a trading platform. And this Yoni Asia, okay, he told us that people are now using agents within parameters to trade on his platform. We had a big take last week on this.
Well, listen, financial markets, algorithms, nothing new, right? And this just takes it to another level. So
I guess for retail traders, to me, it's new.
yeah, well, that's fair,
Yeah.
right, and stuff. Well, so, you talk about the title of your book, The Trust Algorithm. Like, what is it that you want people to understand about this environment?
Well, generative AI is here to stay. So first of all, we can't avoid it. But as we begin to use it more and more, what are the implications of privacy and trust? Corporations have so much of a consumer's information, their fingerprints, their biometrics, even maybe the types of keystrokes that they have. At what point does having that much information and data to make decisions, at what point do customers maybe feel there's some behavioral surveillance.
Well, let's take your company like Amazon. I mean, some would say, and I've been reading a lot of stuff, and Nobel laureates and others who say it's time for these unregulated tech companies that are so involved in so many parts of our world in terms of the content that's out there, the data that's out there, that it's time for them to be regulated. Is that what you would say based on your observations of some of the companies that you've worked with?
It's an interesting balance. Too much regulation will slow down innovation. We don't want that. But there needs to be some regulation. We see in Europe with the EU AI Act that in Europe, that AI Act, the regulators want companies to be more transparent with how customer data is being used and to ensure that customers' privacy is protected. In the US currently, we have many different regulations, different industries, and we don't quite have a standard yet.
Well, right. But is that likely? You know, I think about politics and money, and we are in an era where Silicon Valley is very involved in Washington and certainly in this administration, but I would say even in Democratic, administrations. And so they have a big seat at the table. Is it likely that that's going to happen anytime soon? I'm just curious what you're hearing.
There will be some regulation. I don't believe it'll be at the extent as it is in the EU. And it's just because we want to innovate. We want to innovate faster.
It is a balance, right?
There has to be that balance. Absolutely.
Does it feel like we've done a good job thus far from a policymaker's perspective to encourage innovation, but also make sure that not too much toothpaste is squeezed out of the tube?
Right.
Because as Carol, I mean, I love Carol when you always say this. We didn't do it right with social media.
No, we didn't.
And we're kind of paying for it now.
Right.
As a society. And investors are paying for it too with the way that these companies are being fined.
Right. Material impact. We saw that with Meta Platforms in terms of $2 billion for some of the lawsuits that have been levied against it.
And some people say that's just the beginning.
It is, exactly. And that this threatens kind of their business model going forward. But again, you're right. It's this balance. Talk to us a little bit more about your book and, what you think management in the private sector needs to be engaged in with their employees, with their customers when it comes to AI, generative AI.
That's a great question. We know that AI is here to stay, but we also know that more and more people are afraid of it. They're not sure that they can trust it. For instance, when a customer interacts with an AI tool, that information is out there. People in the past assumed it was on a one-on-one conversation. It really isn't. That data there's someone on the other side that can audit it, use that data to train their models. But the reality is we still use it.
Yeah, but what's different, Alice, these apps, I can't even read the things when I have to sign on to an app and agree to something that I'm basically giving away my data. Like, I know that. I keep asking, Tim knows this, it's like, when are we going to be compensated? Because the training of models, I actually said it, I think, to ChatGPT. I'm like, sorry, you've run out. And I'm like, I'm actually giving you data to make you better. Like, why do I? But I'm just wondering, like, when does that shift? I mean, either, okay, you've got my data, when do I get compensated? Or again, we're a society that we, because using apps and different things have made it so much easier, we're happy to kind of give away our data.
That's the point. We're happy to give away our data. I believe it gets dangerous when hackers start utilizing the data and their cybersecurity issues. And then it harms consumers. But I don't know. I know that there may be some risk to it, but I continue to use the data. I continue to use those applications because they make me so much more productive.
What? Give me just an example, because I think a lot of people are trying to figure this out. I mean, you and I play with this stuff all the time.
Absolutely.
I justify it by saying it's part of my job. But
it's pretty amazing.
Apart from like search on steroids for me, it's not doing what like at least for work.
But
it is helpful. It is helpful for research for me. But again, How much do you trust it?
No, I know, and you do have to check it. Like we all go through training courses, but I do talk to people who set up agents and they're doing lots of things.
The agents is where it gets tricky, right? Because if you're just chatting with it, generative AI, ChatGPT, Copilot, or Claude can give you a recommendation and you can decide you don't want to accept it.
Yeah.
It can edit a document for you and you don't want it. But what happens when a company uses an agent that makes a decision for your claim? What happens in a real example when a company decided they didn't need as many administrators and project managers, and they were working through a merger and an acquisition that was scheduling emails and scheduling meetings. And what happened is the agentic AI sent sensitive information to the employees of the company that was going to be purchased.
Are you telling us this is something that happened?
This is something very real.
Yeah.
What happens then? That information is out there, and you can't do anything about it.
It's called live and learn, right?
It's live and learn.
Maybe.
Yeah. Well, but right?
Okay. I'm so glad I get to talk about this.
People make mistakes.
I don't think I've told this story.
Okay.
So when I was trying to get, I try to get my car serviced when I go on vacation because it's easier than doing it in Brooklyn. Okay. I call the local place where I go and get it serviced, the dealership, and it's an AI agent. And I'm trying to schedule it, and it didn't work. And I was asking it questions, and it was asking me questions, and I just gave up.
Yeah.
2 minutes later, I get a call from a person, and and she said, "Oh, we can fit you in tomorrow." And I said, the AI person told me I couldn't do this. And she said, "We've been having a lot of problems with this new agent, and it's actually making more work for me."
Yeah.
That's a great point, because we want to launch these agentic AI solutions so that it gives us productivity and cost savings. But in some instances, it's not giving us the cost savings because, just like your example, it failed, it hallucinated, it got you in a loop, you gave up. We need to get to the point that we have a strategy for launching these solutions, and when we notice that the agentic solution or the AI solution is frustrating the customer or can no longer make it a seamless transaction to a person.
I'm just going to say I've talked to humans who are customer service agents who have totally frustrated me, totally given me the wrong information and the runaround, or have sat on the phone for 60 minutes. So I hear what you're saying. I think technology out of the gate, why are operating systems and updates sent out and there's bugs and stuff and we have to figure it out. But we're definitely living in an interesting world. Alice, thank you. Appreciate it. Alice Pope, she's author of The Trust Algorithm, joining us here in studio. Folks, we've got about 26 minutes left in today's trading session, up about 22 points on the S&P, up about almost 0.8% on the NASDAQ 100. Stick around. We're coming back, and we're counting down to the close.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story. Headline right now on the Bloomberg Professional Service. President Trump says White House Press Secretary Caroline Leavitt is leaving her post. In a post on Truth Social, the president said, quote, "Our wonderful White House Press Secretary and one of my most trusted aides, Caroline Leavitt, will be departing her role at the end of the month so she can spend more time with her beautiful young children and family, a decision I totally understand and respect." That breaking news right now, Caroline Leavitt leaving her post as press secretary at the White House. Now, let's head right over to the First Word breaking news desk for today's afternoon call. Here she is, Jordan Fitzgerald.
Thanks, Charlie. The main U.S. averages are climbing on the day on the back of strong tech earnings. The S&P cash is up about 0.3%, with the NASDAQ 100 up 0.8%. Taking a look at the Dow, Cisco, Merck, and NVIDIA leading to the upside as Home Depot, Salesforce, and Microsoft lag. Shares of CoreWeave, Supermicro, and Kava are all still up double digits after yesterday's earnings. Meanwhile, oil prices have fluctuated on the day as gas and diesel costs hit a seasonal record high. Meanwhile, the VIX Volatility Index has slid to a January low. Wrapping things up, gold is rallying as Bitcoin falls and Cisco reports after the bell. My name is Jordan Fitzgerald. All yours, Charlie.
And we thank you very much, Jordan Fitzgerald. Again, just repeating that top story, breaking news now. President Trump says White House Press Secretary Caroline Leavitt will be leaving her post. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the drive to the close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, TikTok. We've got about 27 minutes until we wrap up the trade on this. Is it less than that? 18 minutes to go. You take a long weekend and basic math out the window.
I love this.
It was good. It was kind of what I needed. All right, S&P 500 just up about 20 points. You heard Charlie, so call it little change. Up about 208 points on the NASDAQ 100, up 0.7%. We're seeing a little bit of selling as we get closer to the end of trading today. We got a CPI print. We just want to get to our guests. Let's go there.
Constance Hunter is here. She's chief economist and head of research at the Economist Intelligence Unit. She does macroeconomic and geopolitical forecasts, among many other things. Also Economist Enterprise now, so they're keeping you busy over there.
They're keeping me busy.
We are happy to have you
We
here.
got a lot of stuff going on.
We do, and you have a lot of stuff to keep track of. We're going to start with like the big picture stuff, and we got the CPI report today, and I don't know, what was the term you used earlier today?
What?
Lame or tame.
Yeah,
lame or tame. I love that.
What did you think?
Lame or tame? Oh,
the print.
I thought it was tame. And I think it's because it solidifies what we saw in June, right? On the other hand, I can see why certain Fed presidents, like Beth Hammack, she goes out to her district, she speaks to people, and they all say, yeah, but prices aren't coming down. And as economists, of course, what we look at is, well, what does this current data say about where inflation is going to be 3-6 months from now? And that, all the indicators show that it's moderating. It's still sticky, but it's less sticky, and it's softening where it needs to soften.
So the Fed doesn't need to cut rates or raise rates.
Yes,
Forgive me, raise rates.
Sorry, no. They can leave rates on hold.
Yeah.
And that's still a prudent policy. And I think what today's print provided, of course, that the August data continues along this trend. I think you're going to see Neil Kashkari move off being a dissenter. And I think you could even see Lori Logan move off being a dissenter because she's pointed to this combination of a strong economy and strong labor market, which, of course, we saw soften a little bit.
But is it a strong labor market in terms of people who've left the workforce? Like, is it a strong labor?
It is a very funky labor market because we've had an aging population leave the workforce. We've had people leave the country.
Right.
and then we've had people who are here get their temporary status revoked, so they can't work. So the Haitians and Syrians had their temporary status revoked. So that'll show up in the August report. So we have a smaller labor supply.
It feels like buybacks, with a stock. When a company does buybacks and they reduce the number of shares out there and all of a sudden earnings per share looks better. It does feel really funky in terms of the labor market.
Yes, and that's why the fall in the unemployment rate can't be read as a signal as great. We have this really strong economy. On the other hand, if you're looking at a lower labor supply with the same level of demand, right, you could say, well, could that be inflationary? So I think it is a very unusual time, and there are so many rolling one-off hits to be accounted for, whether we're talking about the government shutdown and how it's impacting the collection of rent prices and housing prices, whether we're talking about the supply shocks from the war, which of course wasn't in the July report and will probably show up in the August report because we've had a resumption of tensions.
Maybe this is my own problem, just because it sort of reveals my own anxieties about the future. But we're talking about a lot of demographic shifts in a very short period of time that are cause us to do a reset. And we talked about this last week a little bit with the jobs report. But if we have a smaller or shrinking labor force, what does that mean for when we all get older and we need a labor force to support us with Social Security? Like, there are some real fundamental questions about what this smaller labor force means in an environment where immigration was making up for the fact that none of us are having kids anymore.
So in a PAYGO system like the one we have, that is a problem, right? And in a PAYGO system, by the way, that only invests in U.S. Treasuries. So if we cast ourselves back to when George W. Bush was president and he wanted to change Social Security and have it begin to look a little bit like Australia's superannuation fund in terms of the way it invests,
right?
There was a huge amount of pushback. Oh, you're going to be giving money to Wall Street to do these investments, and so it was never enacted. But had we changed our asset allocation, right, along with increing the retirement age, we wouldn't be facing the solvency problems that I think you're alluding to with your question.
I haven't even thought about that math and what it would mean.
Spend some more time with me, Carol. I'll make you anxious about the future.
I know you. The thing is, Constance, are there not smart economists in the government that know when you do things like limit immigration? I mean, you need a healthy immigration system, right, in terms of growth? I understand about, illegal versus legal immigration. And most people would say we've got to have a system in place so that it happens well. But I do wonder if it's getting worse than that, where people don't even want to come to the country, and then what that means for growth going forward.
I mean, I certainly think if you look around the world, our image is not what it was.
No.
And people are scared to come because they hear these horror stories. And what I find interesting is when I travel for my job and I go to places and people say, oh, I went to the U.S. and it wasn't as bad as it shows up in the news, because, if it bleeds, it leads, right? With that said, I think there is a populist undercurrent globally, so not just in the U.S., right? This is not just the U.S. where this is an issue.
You're right.
And I think, look, if we look at social media, if we look at deregulation of media, we have a lot of misinformation out there. We have what drives clicks and hits is not, oh, this fabulous immigrant family came to the United States and look, they put their kids through college now and the business they owned is doing well. I mean, that hits the news in a different way than sensationalist reports that drive eyeballs and
so
in social media, I think we're driving populism.
Okay, so you think.
So I agree with you, but that becomes more than just a rational sell, right? You have to, our humans are hardwired to look for danger, to look for difficulty. And so when you have a storyline that says, well, here's the danger, here's the difficulty, you can sell what looks like a quick fix that may have longer term negative implications.
How's your anxiety now?
How much time? I'm sorry, we're out of time.
But all of us are communicators, right? We are professional communicators. We use data and information to communicate. And the trick is for all of us that are in this realm is to communicate facts in a compelling way so it lands with a broader audience.
Well, thank you. as you communicate really, really well. We really appreciate it. Constance Hunter, she is Chief Economist, Head of Research at the Economist Intelligence Unit, joining us right here in the studio.
Come back soon, Constance. We do always appreciate getting some time with you.
Always.
Coming up next on Bloomberg Business Week Daily is our cross-platform coverage of the market close, the closing bell, in just a minute.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio.
All right, everybody. Now it's less than 7 minutes to go until we wrap up the trade on this Wednesday, August 12th, 2026. Carol Masser, Tim Stenovec, live in our Bloomberg Interactive Broker Studio. Kind of a mellow day. We're starting to get towards the end of earnings. Having said that, we have a fair amount of earnings.
Okay, sorry.
No.
I thought you were going to say.
Was it hot this weekend?
Yeah.
Oh my God, there was one day.
And we're not even in Europe.
I just hosed myself down and the puppies down. It was just...
Really? Weren't you on water? Could you have just jumped in the water?
Yeah, you know what? I just took the hose and I was like...
I'll tell you what, having a friend who has a pool, that's key.
I know.
That's where we spend
I don't know
all day
why
on
I didn't just
Sunday.
jump in the water, but I don't know.
Yeah, we had a great time.
Okay, Cisco, StubHub, Cerebras, Virgin Galactic, Red Robin, just some of the earnings coming after the closing. I know.
Okay.
I'm hungry.
Jack in the Box too?
Jack in the Box. I didn't even know they're still around.
Carol.
Sorry.
All right, I'm going to...
Love you, Jack.
Maybe not in Europe, and that's where we're going right now. There's a heat wave and solar eclipse that are just sending power prices soaring. This is among the most read stories
this is
on the Bloomberg terminal. Power prices in Europe are continuing to soar as another heat wave pushes up cooling demand while also curtailing production. That means if you can, find somewhere that actually has an air conditioner.
Exactly, right? I mean, Europe, these are places that never had... There's the solar eclipse. This is really cool.
It is, I know.
That's happening, I guess, as we speak, or this was earlier in Spain. So
It's
forgive me
cool, but it's not
time-wise.
good for solar generation.
No, exactly. Well, first of all, a couple things that are going on. Right, the solar generation, it's a problem. France's nuclear fleet has taken a big hit this summer as high river temperatures have left some plants unable to use the water for cooling, forcing reactors to curb output or shut down. And then there's the eclipse that's blocking solar generation across much of the region, with Europe's output expected to fall by about 9.7 gigawatts between 7:15 and 9:30 p.m. So it is about, I guess we're through that. Isn't it 7 hours, 6 hours ahead?
Well, maybe you're watching and you're saying, wait a second, that's enough of my time in Europe. It's time to move to New York.
Oh, wow, boy. All right.
If you
moving
do
on.
that, good luck finding an apartment here. Renters are paying brokers thousands of dollars to learn which apartments are available in New York City's competitive rental market.
Yeah, a new kind of paywall has emerged where renters pay to see listings after a law barred landlords from passing broker fees on to renters. Man, when there's money involved or access, there's always a workaround.
Okay, the laws push more apartments out of public view. It adds pressure to the market.
Yeah.
Apartment inventory lower than a year earlier. That's according to listings data and interviews with agents and market analysts. This stuff, all of this has gotten out of control. I mean, there's a market for everything. You can look at getting a reservation at a restaurant.
That's what I thought of when I saw this story, right?
I mean,
to get access.
It's all supply and demand. And
Who hasn't gone to a concert to get, backstage access, right? Is that just another level of this?
I mean,
Just
forget
pay?
about backstage access at a concert these days.
Yeah.
Like, you want to pay for VIP treatment. It just means you're going to be closer to the stage and getting free drinks, right?
Yeah, which is kind of cool. I don't know. This is kind of wild. Last month, the mayor's office in New York City released a rental ripoff report detailing its crackdown on illegal broker fees. Under the FAIR Act, renters can still choose to hire and pay their own brokers, including for help finding apartments that never reach the public market. But brokers cannot use a specific apartment or identifiable group of apartments as leverage to make a renter hire and pay them. City considers it an illegal bait and switch if a broker lists an apartment for rent, then responds to inquiries by offering only rentals that require one. Yeah. Come on, just make something.
I remember finding my first apartment
Looking for an apartment in New York, right?
It's like a rite of passage.
It's not easy.
You can hear the cockroaches scurrying across the floor above the restaurant that you live in the East Village.
Was that your first apartment?
Oh, yeah.
Hey, they were sharing the space with you.
Yeah, it was a great spot. Nice, sunny, single window.
You're doing better, though.
Yeah. It's a rite of passage when you come to New York.
You have to live in New York and have cockroaches. Otherwise, you're just not a New Yorker. That's just the way it goes.
They were in the ceiling, not the floor. Yeah.
Oh, great. So when you're lying in bed, not fun. I don't like cockroaches. I don't like any of it.
We call them water bugs in New York, though.
Yeah. Ugh, they're just big. Stick around, everybody. The closing bell starts now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic here with Isabel Lee, taking you through to that closing bell. It's a global simulcast. We're joined now by Tim Stenovic and, look at that, Carol Massar actually decides to make an appearance this week. Welcome to our audiences across all of our Bloomberg platforms, television, radio, our partnership with YouTube, here on a day where Carol Massar, the S&P, at least briefly, traded above its most recent record high.
All right, so briefly, it's kind of like a meh trade, it feels like. Maybe it's just because we're getting to the tail end of earnings. However, having said that, what do we got? Cisco and a few other companies reporting. We still have to get through what? NVIDIA? We have to get through...
Jackson Hole.
Yeah.
Yeah.
Jackson Hole.
Everyone
keeps talking about Jackson Hole.
I am. Are you kidding?
He's been talking about it all afternoon.
Why wouldn't you want to talk about Jackson Hole? You go to the mountains in August?
Are you actually going? I thought you meant is there going to be some market-moving event out of this?
Oh, I don't know.
Who's
I'm just
filling your head
curious
with
about the
this?
fly
It
fishing.
sounds like Michael McKee.
The fly fishing and the cowboy hats. Yeah. The vests.
The vests? Is that a requirement?
Yeah, I think it is if you're a central banker. Okay, Isabel, take it away.
I want to talk about the inflation print because for me...
Oh, right.
Okay. She wants to do work.
Guys,
Okay.
like, a couple
Interesting.
of hours ago. What stuck with me is Diane Swank. She's the chief economist. And
Was it lame or tame? That's what I keep saying.
It was bang in line. I don't know. I mean, I guess
Bang in line. Wow.
Bang in line.
The lingo on this show.
Diane Swank said that it's still above the 2% target, and it's been
Keep it
5
clean.
years. So.
Yeah, I know. I got in trouble for saying none.
Yeah, well, as you should have.
It's like,
Wait, you just said it again.
Well, okay. Well, somebody on the other side of this wall is going to go run to the boss. So anyway, it's in the dictionary, by the way. All right, we get the closing bells here in New York, and it's going to be just shy of the record high for the S&P 500. It takes a while for these numbers to settle, but we're camped out right around 77.48 and change, up about 20 points or 0.3% on the day. The NASDAQ composite is going to add about 0.5%. The NASDAQ 100, 0.7%. The Dow Jones Industrial Average actually going to finish in the red, only down by about less than 0.1% on the day. And the Russell 2000 getting in on the action, up 18 points or 0.6%.
All right, back to the S&P 500. I've kind of been saying this all day. Isabel, kind of an even split. 262 names in the S&P 500. Higher today, 240 to the downside, 1 unchanged.
It may be even split, but when I'm looking at my iMap, it's a little bit more green on the screen. You're looking at a tech, of course, leading the rally up by 1.5%. Financials also higher by 0.3%. Some of the losers, energy down by, it's actually almost flat, down by 0.1%. Healthcare and consumer discretionary also in the red.
All right, guys, let's get to some of the individual gainers. I had some nice names to choose from. I'm going to go through to some of the neoclouds. Take a look at CoreWeave and also Nebius. CoreWeave up 19.2%, so just off its highs of the session. Nebius also an outperformer, up about 34%. We saw these names on the top gainer list. Are you guys okay?
Yeah, we're fine.
All right, come on.
Yeah, Isabel slipped.
Oh, are you okay?
Isabel, usually that's my move.
Or Isabel, were you pushed?
It's a secret I'll never tell.
All right. Let's go back to gainers. All right, so CoreWeave and Nebius, definitely some outperformance. CoreWeave surging after the AI spending frenzy spurred faster sales growth than anticipated. Sales expected to be $3.45 billion to $3.6 billion in the third quarter. The backlog was $104 billion at the end of the quarter. It inked more than $25 billion in new customer commitments after the period ended, suggesting that AI demand remains strong. Yeah, I would say so. And then you had Nebius, another neocloud, reported second quarter revenue that beat estimates. That stock, by the way, is up 193% year to date. CoreWeave is up 49% year to date. All right, let's go on over to kind of staying with the AI trade, some of those optical companies. Lumentum Holdings, Fabrinet, Corning, all outperforming. What's your problem there, Stenovic? All right, Lumentum is up more than 13%. Fabrinet riding the wave, up almost 9%, and up more than 4% is Corning. The reason we're talking about this is that Lumentum Holdings up about 150% year to date. Analysts are positive on the maker of optical equipment after it reported fourth quarter results that beat expectations and gave an outlook above analyst consensus, and then it just pushed other names in the space higher. Should I stop now?
No, go. I'm just jealous on a day where I had trouble finding decliners.
Oh, he's just jealous. I'm rushing through because I'm like, what's the problem? All right, then Vestas Wind Systems. I love this. The ADR is rallying up the most since about November of 2012 to its highest since March of 2022. That stock up more than 19%. Company lifted its profit guidance for the year and announced a share buyback following a jump in